Okay, welcome back. There's 30 minutes to go for the pre-open session, and a lot of stocks, single stocks, earnings, of course, bulk of them, but some, brokerage calls, etc. as well, which we will highlight as we go along. And now, one area I want to just pick up very quickly is a space which has been doing well is the PSU space, and it's within the PSU space, it's oil marketing companies. So there are two sets of upgrades for oil marketing companies today. One is coming in from Morgan Stanley, the other is coming in from Goldman Sachs, and they're both are calling for further gains here, saying valuations are still reasonable. Remember, from the time, which is about a little over a month back, when Hardeep Singh Puri, the oil minister, was in Mumbai making a case for higher valuations, stocks are already up between 15 and 20%. Deepan Mehta is with us, director at Elixir Equities. He's joining us to take us through what he makes of many of these names. Deepan, good morning. So my first question is exactly that, OMCs, what to do with them?
I think there's a fabulous trading rally taking place in the oil marketing companies, and certainly increased communication, transparency from the government is helping build investor interest and confidence. And the numbers also have followed through. The common underlying phenomena here is that all of them are expanding their refining capacities, which means they'll get more refining benefit and reduce the trading which they take place for refined products. So that certainly will be a kicker in the earnings for the next few quarters or so. The only real underlying disappointment or negative factor here is that the volume growth remains sub 5%. And it's great for these companies to, keep on increasing their profits through backward integration and through better margins. But end of the day, when volumes don't grow at, at least a high single digit or so, at some point of time, few quarters down the line, the earnings may flatten out. So that's something investors need to keep in mind. And therefore, such businesses can never command a very, very high P multiple, like say, some of the other PSUs, like the engineering companies or defense companies.
Okay, all right. Hi, Deepan. Good morning. I wanted to focus on the paint space. And the question everyone is asking is Asian Paints ready to take center stage yet again? The reason is that the 10,000 crore investment from the Birla Group has come in. And most brokerages now they're talking about, or case in point being a Nomura note that came in earlier today, they are saying that they believe the threat is behind now and things should look up from here on. So they have upgraded Asian Paints and Berger Paints as well. You think the time has come where the big boys take center stage yet again after seeing 20-25% correction in stock prices?
Yes, good morning. I think certainly that's a possibility. But end of the day, I think the valuations still continue to remain quite rich. And the competitive intensity is far higher than ever before. So it will not have the same pricing flexibility that Asian Paints had earlier. And slowly but steadily, I think a lot of these companies will start eating into their market share. So I think there's still some uncertainty around it. But no doubt, I think, I do agree that a lot of the competitive pressures have got priced in. It's just that if the stock price was significantly lower in terms of valuation, and secondly, if we saw improvement in the volumes for Asian Paints per se, that will inspire more confidence. But for the time being, I think the time to sell is gone. So I think investors remain invested. The time to buy would come when we see a trigger for volume uptake.
Got it. Okay. All right. So time to sell is behind at least.
No, I just wanted to maybe get a few other, run a few other names your way. Deepan, lots of earnings, right? You got Sun, which reported, Aurobindo, which reported, Indigo, as Sud pointed out. We were wondering what to do with it in terms of red or green. Anything stood out to you from the earnings over the last day and a half, Deepan?
I think, Prashant, the clear highlight of the earnings season have been these renewable equipment manufacturers, whether it is solar or wind power. I think exceptional set of numbers coming through across the board, the Vari group companies, the two listed companies. Then there is, Insolation, Vikram, Suzlon came out with a great set of numbers, Premier Energies, and down the line also a lot of the EPC players also did extremely well. So that within the capex space, I think that's one of the hottest and the fastest growing sector. And now valuations also are quite reasonable, and they're sitting on a multi-year order book position, which gives earning visibility. So I think that's one of the highlights of this earnings season is that the kind of numbers that have come through from the renewable equipment manufacturing companies.
Okay. All right. Deepan, what about Hindalco? such a tricky space, right? If you're tracking aluminium prices, saying that's going up, there's a shortage globally, the usage of aluminium is increasing, everything ticks the boxes, right? All right. Last 3 months, Hindalco's up 25%. And you wouldn't be wrong if you got on it, right? The hope was that Novelis as well, the worst is behind. Now, out of the blue, you suddenly had a fire in September, which is going to hurt the numbers in the second half of the year. You'll say most of that will get insured. But when the capex goes from around $2.5 billion to $5 billion, the street has got very, very uncomfortable. I've seen numerous downgrades that have come in there. What's your view on the stock on Hindalco? The stock is closer to a 52-week high. It's pulled back a little bit from the top. But you were sitting on big gains. Some of that will get diluted today. Your take?
Nigel, I think that, considering the way the tariff structure is and this make in USA is getting so much of momentum, I think Novelis is going to turn out to be really a great performer for Hindalco. You need to have a little bit more patience. Eventually, it'll get more competitive within the US market as import curves try to kick in. And expansion plans over there also will start to bear result as well. And, at the end of the day, there's reasonable consolidation. Another important thing is that within the metal sector now, the volatility in the end product prices has certainly reduced. So that's increasing the visibility for a lot of these companies, enabling managements to go in for expansion as well. So I'm not that pessimistic on Hindalco. And I think that, 25% gain is not necessarily a reason to sell. But you need to have a slightly longer term view because you have to pay out all these cycles which take place within the metal industry.
Got it.
Deepan, just very quickly, do you have a view on Novama? Numbers are solid. Despite that Jane Street, which is a big client for them, which is now not there anymore. And of course, Prudent reported numbers as well, the mutual fund distributor. But here, there are some emerging headwinds with all the changes which are being proposed by SEBI. Any thoughts?
Yeah, Prashant, SEBI has not yet touched mutual fund distribution margins or commissions. But if they start to tinker with that, then all of these companies, Anand Rathi, Prudent, Nuvama, 361, all of them will get impacted. So that's a new risk factor which has come through and that will play on the PE multiples. Although long-term growth trajectory is good because of secular growth in the wealth management industry.
Okay, all right. Deepan, a lot more questions. It's just that earnings season is underway. We're on an earnings treadmill, literally. So thank you very much for that for now. What we're going to do is come back and speak with the management of Allied Blenders. They reported numbers. Ascot's Kubota is the other one which we'll address as well. Stay tuned. Coming up.
Welcome back. Well, it's early in the morning, but time to focus on the alcohol beverage space. And allied blenders and distillers reported a very, very good set of numbers as they have been guiding good growth on the top line, margin expansion, as well as taking shape. We have with us Alok Gupta, the MD at Allied Blenders and Distillers, who joins us on the show. Hi, Mr. Gupta. Good morning and good to see you. And as always, another solid showing. Could you tell us on the revenue front, what kind of growth are you estimating for the year? You've done ballpark close to around 17% in the first half of the year. So for the year, what kind of growth are we looking at? If you could tell us how much will come in from prestige and above, in terms of your mix. And what about margins? Gradually, it's trending up because you're focused on the cost side. Where is it headed?
Good morning. Thank you for inviting me. I think our guidance has been a double-digit volume growth and a mid-double-digit value growth. H1 results are pretty much in line, and our guidance continues to be that we should be able to deliver a mid-double-digit growth in revenue terms. Of course, the focus will remain on profitable state brand mix and on cost as well, and that reflects on our gross margin expansion. Our capex program has also started to kick in, which will also see some further gross margin expansion. So I think pretty much our guidance hold goods, something that we've been maintaining for quite some time now.
All right. And in terms of the prestige and above mix, how much does it go to?
It's already at about 47% of our volume and roughly about 56% of value. We had said that it'll take us about 2 to 3 years to get to 50%, but quite happy to see the progress that we made on the P&A front. So I think we should continue on a double-digit volume growth for our P&A segment.
And on the margin trajectory, because of that, the PET bottle capacity that you'll have done, the better product mix as well, we'll gradually see 50 to 100 basis points improvement every year. For the next few years, 100 basis points should be factored in 27 and then another 100 in 28 as well?
I think our view is that by end of FY27, we should see a 200 basis point improvement because our second facility of ENA will also kick in. And thereafter, it will be fair to assume that we should have about 100 to 150 basis point improvement on back of the other capex program that is in pipeline.
Okay, just one final question from my end. Last year you did an EBITDA of close to around 430 crores or thereabouts. Now, going by all that you're saying, I was looking at a Jefferies note that came out earlier this month, and they're estimating that 430 crores of EBITDA effectively goes to close to around 770, 780 crores of EBITDA by FY28. Going by, the path that you all have selected, you think that's gettable? Because as of now, it looks like valuations are very expensive. But if you can get to 750, 800 crores of EBITDA, then it's not that expensive that the street is looking at.
So what I would say is rather than provide you a direct response, I think if we stay focused on delivering a mid-double-digit value growth along with margin expansion growing from 7.5% in FY24 to now roughly 13%, and FTA kicking in next year, we see no reason why EBITDA margin should not be north of 15%. So I think that max, whatever number it throws up, is something that what we are focused on.
Mr. Gupta, hi. Good morning. Good to have you in. So I just wanted to, move to certain issues which are more regulatory in nature beyond the numbers that we've discussed as well. First, let's understand what's happening in Telangana. From what we know, what Mangalam was telling us, that I think October onwards, there was some improvement. But what are your kind of dues like? What's really going on in the state now with respect to your operations?
So I think we continue to engage the state through the industry body CNBC. In October, we have seen money getting released against the old overdue. So we're quite happy with the sort of payment that we've seen in October. And if this trend continues for the next couple of months, I think the entire industry, including us, will be in a much better position as regard receivables are concerned.
And how much are you due? What's the total quantum pending in Telangana?
Telangana is our largest market. So when we talk about quantum, it will always be a large number. So I think our total due is nearly 700 crores, of which overdue is about 400 odd crores because it's come down in the month of October.
So now the total dues are 400 crores.
Overdue is 400 odd crores.
Overdue is 400 crores, but the total quantum is about 700. Now, just since the amount is so large, that's why just pressing on this. What has the recovery been in October and your engagement with the state government? What does that tell you? What will be the run rate of repayments that right now must be penciling in your own projections?
I think in October they've released north of 100 crores against the overdue. So that's been a good quantum release in our overdues. Like I said, I think we take each month in a stride. the dialogue that's currently happening with the government through our industry body, we stay optimistic that there should be release of money against the overdue. So I think the right time to reconnect on this would be in January, where hopefully we'll see considerable improvement in the receivable position. So I think with what has happened in October, we are quite optimistic that situation will correct now very soon.
Okay, that sounds good. One last very quick question with respect to your pending case in the Bombay High Court on Mansion House and Savoy. I think the last thing we know is the court had restrained you that had gone in favor of Tilak Nagar. Now, where is that matter pending?
The case is under sub judice, so for me to sort of talk, I will talk to the extent that I can. I think the Supreme Court only guided that in the next 6 months, the direction of the High Court wherein has been given, and they're saying in the next 6 months, this matter should get resolved. So I think we are abiding by the court's guideline. So hopefully in the next couple of months, we'll get a better outcome from the courts.
Okay. All right. We'll leave it on that note, Mr. Gupta. Thank you very much for joining in. Good to get that perspective, and we'll talk again soon. Well, let's quickly move on from spirits to the automotive space. Escorts Kubota reported a pretty good set of numbers for the second quarter. Growth was led by the tractor segment, but construction equipment remained under pressure. To talk about this and more, we have Mr. Bharat Madan, whole-time director and CFO at Escorts Kubota, joining in. Mr. Madan, good to have you in. So let's talk about the performance on the tractor side. Do you get the sense that this is going to be sustained? And what are your projections for the second half?
Well, yes, I think if you look at the demand momentum this year from April till August, before this GST cut was announced, the industry was growing at 10 to 11% sort of rate. And then the last 2 months, we have seen the growth has gone up to 26-27% for the industry. So obviously, this is one of the major impact other than the whole sentiment, which are positive. I think GST cut has a significant impact on the demand side. Whether this will sustain at this level looks difficult. I'm sure that the GST rate is going to sustain going forward too. But yes, definitely the momentum for this year has been good. And earlier our guidance for the industry growth for full year was something very mid-single digit. And now we expect it will be a low double-digit sort of growth which industry can experience.
So industry will grow full year at low double digits. And you'll grow better than industry?
We should be in line with the industry.
Okay.
What about the construction segment, sir? What's the outlook there? That business still remains a little under pressure?
Yeah, so that business has been under pressure, but if you look at quarter on quarter, there's been an improvement. I think first quarter, the degrowth was significantly higher, and this quarter, there's been a marginal improvement. The decline is only about 18% compared to, I think, 27-28% decline, which was there in the first quarter. But numbers are obviously under pressure right now because the infra spending has been low and the monsoon was extended this time, so the construction activity was not very picking up in this space. But we expect now from November onward, there should be a pickup happening on the construction equipment side too. So second half normally is better for the industry. So we expect they should be able to make up some of the losses we've seen in the first half.
Any guidance like you gave for the tractor segment here, construction?
We expect if it's a flat year, I think it will be good because that means you are growing almost 20% in the second half.
20% in the second half, okay. Mr. Madan, overall, what are inventory levels like? I mean, after the GST cuts and the brisk sales we've seen in the festive season, where are things now with respect to inventory?
So end of October, since the retail season was very strong and most of the places, at least at a company level, and many stocks were even actually stocked out. So at the channel level also, I think it's less than 4 weeks of inventory now, which is lower than the earlier normal average, also about 5 weeks average. So they're also sitting at a very low level of inventory today.
Okay. Just a word on your export markets. I think this quarter there's been a healthy growth there as well. I think about 26%. That's what you've done on exports. So just talk us through second half trends for your export markets. Which ones are looking, really strong to you?
So exports will continue to do better because we have already guided for the full year 25% growth in the export numbers, and I think so far the numbers have been very good in the first half, and we expect the similar momentum will be there in the balance of the year also. And the export has been another focus area for us, and we see that as a growing business even in the future years.
Okay. All right, Mr. Madan, we'll leave it on that. Or just a word actually on margins. Didn't track that, and you've done really well. I mean, at a blended margin level, you've seen a fair amount of stability and improvement as well. So what is the overall EBITDA margin trajectory for the full year?
So last quarter, EBITDA margin was, I think, about 13.1%, and we expect the margin will remain in this level. So one of the reasons, obviously, the softness which is continuing in the commodity prices. Even the last quarter, we saw some inflationary pressure was there, but I think in the next quarter, we're seeing it will likely be again subdued. So I think on full year basis, we think we should be able to be in this range only 13% around, for the full year.
Okay, all right, Mr. Madan, we'll leave it on that note. Thanks very much for joining in. By the way, that's a really interesting block trade in RBL that's happened. And Sudarshan's been alerting us in all probability. I mean, this cannot be certain right now till the final details are out at the end of the day. This could be Mahindra and Mahindra finally sort of selling off a chunk of its equity in RBL at a pretty decent profit, I guess, from the time they got in.
Well, that's right. Just to recap, 2 years ago when they made that investment, they put in around 417 crores. And the next day, Mahindra & Mahindra's market capitalization was down by 12,000 crores because they made this 400 crore investment.
It was like, oh, you're going non-strategic and all of that.
Things have worked in their favor because now they're making a whopping 260 to 70 crores of profit on that same investment. And, things have worked out for them. So sometimes the street, the knee-jerk reaction is a big negative. And from then on, actually the market capitalization in the last 2 years is up 2.5 times.
Yeah.
So kudos to them. I mean, all's well that ends well, I think, for them. And they got lucky because otherwise capital allocation, that return ratio is not going to around 18%. Street was not too happy. But as of now, it worked out well for them. You get lucky at times.
Yeah, no, absolutely. The thing with this is, what I understand is that, and this is actually something to watch out for other deals as well. Demand is largely from hedge fund type people. Very little on the other side of this trade, guys who are buying it. Very few long onlys, very few long only investors is what I'm given to understand. Not that it makes any difference to Mahindra & Mahindra. They're getting a price and they're out. I'm not talking about Mahindra. I'm just talking about a lot of the supplies which is coming into the market. There is. I mean, it's moved up from 200 to 300 quickly, right? So at 320 odd levels. And that's what a lot of people are now starting to feel, which is, values have moved up and then you really don't want to commit anything and sort of end up making mistakes or getting stuck. So it'll be interesting to see who's bought, and I think we'll get that data later today. Maybe Nimesh can help with that as we go through the course of the day. We take a quick commercial break here. We'll come back with the pre-open session. We'll also have the management of Indian hotels join in on the second quarter earnings. Stay tuned, coming up.
Welcome back. Well, we are rounding up close to 9 a.m. in another 5 minutes. Good time to bring in our technical experts to see what today's trading setup should look like. 31 points up. That's the implied open indication. So Sudarshan Sukhani and Mitesh Thakkar with us as always. Gentlemen, good morning to both of you. So the market took a bit of a pause on Tuesday, sold off a little bit. Wednesday holiday. Now what? So Sudarshan, what's your approach?
Good morning. My approach would be to avoid the Nifty today. It is possible that we'll stop falling now, build some kind of a 1 or 2 day base, but let that happen. So for today, the approach is focus on stocks and leave the Nifty alone.
Okay, leave the Nifty alone. Got it. What about you, Mitesh? Are you leaving the Nifty alone or do you have some trade in mind?
On the index, good morning, Subi. 25,600 was what I'd indicated as a good support there, and might see some kind of a bounce back. The idea is that to see how strong this bounce back is, does it give you a reversal sign on the hourly and 2 hourly charts, and then take a trade on the long side. Otherwise, I think, I've maintained that we might consolidate in a range with 25,600 as the lower end. And till we break that, I would want to see that, there is a chance of some kind of a reversal pattern or reversal indicator developing, which is missing as of now. But yeah, this is the level which I'm watching very closely.
Okay. All right. Let's also talk about stocks. Sudarshan, since that's what you're more focused on, what's the list like today?
Yeah, fair enough. See, State Bank is a buying opportunity with a stop under 935. It's also a positional trade, which means you make the stops a little wider and carry it on, not just intraday. It's a good place to be in. Titan is a buy with a stop under 37.35. Motherson is an intraday short with a stop above 106. And Hind Copper is an intraday short with stop above 335. So 2 buys and 2 sells.
Okay. All right. Got it. And Mitesh, stocks for you?
I have 2 buys and 2 sells as well. On the buying side is Hindalco. It's come down to support area. So keep a stop at 823, 822 half. Look for a target of 850. Similarly, Bajaj Finance has also come down to support levels. So buy with a stop at 1044. Look for targets of 1085. A negative or a short-term sell side call on CAMS India, which is a sell with a stop about 3850 for targets of 3700. And Power Grid, I think it's been a sell. It was a sell on Tuesday as well. Very clearly negative gap, negative indicators. The stock could see some more correction. So sell with a stop at 283 half for targets of 270.
All right, gentlemen, thanks very much, both of you, Mitesh and Sudarshan, for that. Just take a quick look at what's happening across the Asian screen. Yesterday, of course, was pretty brutal, actually. The Kospi yesterday was at one point down 6%. It, I think, finally ended with a loss of about 2.5–3%. The Nikkei was down about 3% as well. And like what's happening in Asia, what happened in the US, in Asia as well, there is some recovery which is underway. So Taiwan, Hang Seng, maybe we should just look at the Korean market and the Japanese market as well with what is happening. Both Japan and Korea, of course, are up big in 2025 so far. So by far, some of the biggest gains in Asia in those two markets. Well, Indian hotels reported numbers. And, it was second quarter, of course, was in line with what the consensus expectation was. So there's, of course, been weather, which has been a bit of a disruption. There was some travel disruptions as well, the shifting of the festive season. But also, Indian hotels has a lot of its inventory, which is being renovated. So all of that leading to, good numbers, in line with expectation numbers, but not a bumper quarter. Puneet Chhatwal is with us. He's Managing Director and CEO at Indian Hotels Company. Puneet, good morning. Great to have you with us here. Thanks very much. Just the basic numbers, Puneet, if you will. I think same quarter last year, there was the Taj Stats business was, in that sense, brought in. So there was a extraordinary gain for the same quarter last year. And that is the reason why that year on year, without adjusting for it, looks lower. And there's been some reportage around it. Just wanted you to address that, and then we will talk to you about the outlook.
Yeah, there was, thank you, Prashant. Good morning, everyone. There was a one-off exceptional item of 307 crores, which, if you look at last quarter, creates an extraordinary profit. However, the underlying business showed improvement by 15 to 16%. despite 250 crores of investment that we have undertaken in the first half. And some is also has gone into the month of October. So now the majority of those renovations, I would say almost all of them except for 30 rooms at Taj Palace, Delhi, they're all done. So yes, you're right. Last year, Q2, by consolidating TajSATS, we had an exceptional accounting gain of 307 crores.
And you're saying that bulk of the renovations is now behind. So third quarter will be all this inventory will be in, and by fourth quarter it should fully normalize.
Well, I would like to use your words, Prashant. You mentioned bumper. Bumper quarter is always quarter three.
Yeah.
Our hope as a sector and as a company, Indian Hotels Company, is that the next 60 days, nothing unforeseen comes our way, because typically the Q3 profitability is larger than Q1 and Q2 put together. So up till now, it's a good start, and we hope it keeps moving in that direction. Plus, our ability to charge would be higher with the renovated inventory that has come in.
Maintaining the double-digit revenue growth guidance for the full year?
Yes, it stands at double-digit growth guidance for the full year.
So morning, great to have you in. So since we all know second half of the year is so much stronger for your industry, right? We all want to travel and have vacations and there are weddings. So let's just talk about the outlook for the second half when it comes to, the average tariffs, room rates and the occupancies. What are your projections for Q3, Q4 vis-a-vis last year?
See, Q3, Q4, if we keep maintaining the same kind of rate increase as we have seen in the first half, it's very good because the base level is very high. So that's where the operating leverage kicks in. So I think if we keep going at around 10% RevPAR or top line growth, I would not say RevPAR, but the top line growth because of the F&B business, because of the number of weddings that are there in the second half is higher than last year, I think we should be able to get the double-digit growth for the full financial year.
And just to understand that, so what does that work out to at an absolute level, the average room rate across your portfolio right now?
With our growing brandscape every day, it would be fair to actually do it by brand. So
yeah, that's actually right. Yeah, let's go brand by brand. Actually, yeah.
Yeah, the brand which is the backbone of the company remains the Taj, and I think there we are looking at 16 to 18,000 as a pessimistic scenario, and a bit higher in an optimistic could go up to 20 in terms of RevPAR. And if with the Ginger brand we can cross 4,000 or 5,000 with the growing portfolio and footprint of Ginger, I think we would have done a good job.
And just the mix, sir, I'm talking about the revenue mix. How much would be purely Taj and how much are the non-Taj brands which are also growing? How much are they contributing? So what will your revenue mix be by the end of this year?
So this is another very nice question. It's never been asked before. So compliment to you for that. We have moved a lot of hotels which were downgraded maybe 10, 15 years ago back into Taj. So Taj revenue has gone up to more than 75%, and the rest of the hotel businesses and other businesses get to 25% of the revenue for the full year. And currently, because the first half is softer, as your screen shows, it's almost at 80%. But that's how these other businesses, because they are like the Ginger, Ama, Cumin, a Tree of Life, these are more like startups. So they have very high growth level. We are projecting a growth level in Ginger going forward close to 27% for the remaining 6 months of the year.
Right. Puneet, if I can just come in, there are a couple of, usually we don't have these, but as Mangalam is highlighting, there are a couple of deals perhaps in the fray as well. Taj GVK, of course, in terms of managing some of their properties, you're deepening that relationship, but is there any plan to, it's a joint venture, the GVK Group and Indian Hotels, is there any thinking that you want to divest that near 26% holding in Taj GVK?
This question, especially Mangalam, has been asking not now, but for the last 3 years. And nothing much has happened. It's related to other subsidiaries too. We are, as a part of Tata Group, we are very good partners for all our partners. We prefer that partnerships withstand any kind of test of time. Having said that, simplification is also very important, and we have been doing simplification. That's how we started simplifying and divesting in certain other businesses. We made Roots Corporation, which has the ginger and the cumin brand, as a wholly owned subsidiary. So if anything comes up, if our partners wish to grow more with us, and there are opportunities that come up, then obviously we will try.
That is for us. That is a yes.
For me also, it's always a yes. Anything which is positive helps the underlying business is always a yes.
So by when should we expect this, Puneet?
But nothing is happening. So
no, I'm just saying, in terms of thinking, obviously it'll happen when it'll happen, but just in terms of thinking.
Simplify some of these businesses, joint ventures, which we have for 3-4 decades, let's say one a year, we would be very pleased. And if it's 1 in 2 years, we'll still be pleased.
So Taj GVK, you'll effectively possibly look at selling that 25%, but continue as a managing partner, continue as an operational partner in the business. Is that correct?
See, we are a minority partner, so
Yes.
the decision-making is in a joint venture with the governance standards, lies with the board and mainly with Taj GVK. Where we would have a higher say is where we are a majority partner. So I think you picked up on a more difficult one for me to answer. This is not where we hold the majority or controlling stake. Having said that, we just signed up with them for another contract in Bangalore, which will be a very nice Taj branded asset about to open in less than a year's time. And we believe that is really the way forward. The growth in this joint ventures and companies is far more important and relevant than, divesting and investing and reinvesting.
Okay, all right. Strengthening that bond that you'll have. Got it. But you have to keep an eye out whether or not there is that 25% that comes to the market. Let's discuss that later. What about the New York property that you'll have? Is it possible that you'll sell the leasehold rights? There were various reports suggesting $1-2 billion or thereabouts. What's the view out there?
I wish a leasehold could fetch $1 or $2 billion. I think sometimes, we get carried away by reporting or kind of breaking news.
Oh, we are very, very responsible, sir.
I'm not talking about CNBC-TV18 is the publication that wrote that news first, and everybody then started calling. So we had to file with SEBI that there is nothing which is right in that kind of news. But yes, trophy assets are always in demand, and there are people who are willing to pay a price that one cannot imagine. And the Fifth Avenue, New York, that's what makes the Taj the Taj. And having the pier has been a matter of pride. And we have been running it for almost 20 years and see no reason why we should not be running it in the near term or in the mid and the long term too.
So you're not looking to sell your rights in that property, Fifth Avenue. And why should we be there?
I say it on this channel, 101%. We are not looking to sell, but we are not the owner of the asset. We just have a leasehold.
Yes.
And this kind of old contracts come with certain rights for the lessor if they choose to exercise that, which is very difficult because it's a co-op of 80 different high net worth individuals.
Sure.
This is a very difficult option to exercise, but should that miracle happen, then we may not be in this asset. But, miracles don't happen usually, but sometimes they do.
All right. And absolutely. But just one last question briefly, if I may. It's a different looking Taj, renovated, looking great, range of properties. My question is more pricing. Of course, pricing reflects demand supply. And there's lean season, busy season, all of that. But if you just generally overall draw a graph, room tariffs is kind of, it's basically a newer base, but every base is higher than the last one. Have we reached the limits of that, or is that, or this is still, it's still dynamic and it's demand supply still? Just in terms of maybe, I don't know, in your category, what is, if I should use the word affordability, but just your thoughts, Puneet.
See, we are with our very diversified brandscape in all kind of pricing segments. So we address the needs and wants of almost the entire population that would use hotels today. We may not be in all locations, but we are in most locations that are relevant. That's number one. Number two, demand is stronger than supply. You know, in all these discussions in the last 3 years, we said first it was revenge tourism, then they said it was discretionary, you know, the YOLO effect.
Yeah.
Now, why, like Prashant rightly said, the base keeps getting set higher and higher. This is a global trend. This is not just an Indian trend.
But sir, I had a related question. Actually, I'm glad Prashant asked that. Very quickly, we have 30 seconds because we're hitting market opening. Some people wonder if you've hit your peak margins. And, you know, Mangalam was asking us to check that specifically as well, because of exactly what you described, right? The base is really high. And you just told us that in the best case scenario, maybe, you know, second half tariffs could go up to 20,000 average. My question is on margins. Has Indian hotels already hit peak margins, or is there still more scope for growth?
In the last 3 financial years, we have been consistently increasing the margin, and that's again a consequence of growth by contract type and growth by brand. Brands like Ginger and Lean Lux could do margins up to 60%, and luxury, if it does 40% in standalone, then you are doing very well. But the growth in Ginger, the growth in new businesses, the scaling up of these businesses is going to keep increasing the margin. And if the contract type is based more and more on management fee-driven business, then the margins are stable. And if possible, they will keep increasing.
All right,
Okay.
Puneet, great chat as always. We wish you all the best of luck. Third quarter, next 60 days, as you said, right? Operative, and 3Q is more than first and second combined. Appreciate your time here as always, and good luck as you continue to execute at Indian Hotels. Thanks very much. All right, well, let's just quickly run you through the calls. Sudarshan is with us with what he wants you to do. Sudarshan, what do you have?
Well, it's SBI, buy SBI with a stop under 935.
Mitesh, what about you?
I also go with the buy call on Bajaj Finance, and we'll look at the target. Target in the range of around 1,085.
Okay, on Tuesday, we gave out that festive number, growth in festive sales. Stock ended about 1.5% higher. That RBL block has gone through. Sudarshan is here with some details on this one. Sudarshan, over to you.
So it was July of 2023 when M&M had announced that it's going to buy a stake in RBL Bank, and it had bought around 3.5% stake for a value of around rupees 417 crore. And that day, when it was announced, the stock had fallen almost 5 to 6%. And after that, company had announced the results in which management was grilled about this investment. And on the screen, you would see 2 quotes of Anisha. So first quote, I'll summarize that he had said that it's a long-term investment, and also it's not something that's done because the company wants to be a bank. The second quote, that he had bought 3.5% stake, and the question was asked if he will raise it to 9.99%. In that, he had said that it would be done only if there is a compelling reason for that. Now it's done in less than 3 years. Today, M&M is likely sold its entire stake, and the block deal is done of around 3.45%, and it's done at around rupees 321 per share. Good outcome for both. For RBL, overhang is gone. For M&M, in less than 3 years, it has made around nearly rupees 300 crore.
Right. Oh, yeah, absolutely. Sudarshan, we'll keep that in mind. Definitely keep both those stocks on our radar. By the way, just reminding you guys, today we have a listing as well.
Yeah.
Orkla Foods, right? The owners of the MTR brand, very well known. That stock's going to be listing.
It was complete OFS, right? From what I remember. It was the MNC parent selling stake.
Yeah.
From what I remember, the majority, if not all, was the offer for sale. The other one, of course, is Grow, which I think is the offer is shutting today, right?
Yeah.
And Lenskart, of course, 28 times demand.
Lenskart is closed, yeah.
So in a couple of days, we'll have those hitting the market as well. We've got the first, we got about 10 seconds to go, counting down to the market open. The indication is it's going to be a flat one. 25,600, 57,700 on the Nifty and the Nifty Bank respectively, and nothing very much on the small cap index so far. 11 points, 20 points. Sensex is starting as well, about 100 points. Is it? 83,600 plus on the Sensex and 25,630 on the Nifty. So it's kind of flattish, slightly positive bias. Bank Nifty is up about 0.1. Small cap index is flat to slightly lower, higher, nothing very much going on at all. The Nifty heat map gives you a quick sense of how we are stacked up on the Nifty, and then we'll look at individual stocks. Lots of earnings reactions to track, so we'll get down straight to it. On the one end, there is Asian Paints and Indigo. On the other end, there is Hindalco and Grasim. It's about 30 up and 20 down within the first 30 seconds. The market opened 57 odd points in the green, 25,645. Surabhi.
Okay, let's take a look at, Hindalco right away. This is what Nigel was alerting us on. That forget the numbers. More important is the kind of money that they're putting to work, and those estimates have gone up in a big, big way. 5% gone from Hindalco on their capex issues with Novelis. There's Grasim that's also open lower, 3.5% down. Eternal is down about 1.5%. There's Shriram Finance, which is down about 1%. But now let's see what's bringing up the positive side. Asian Paints, 4% higher. The executive changes at Birla Opus, that seems to be actually working well for Asian Paints. Is the market sensing lesser competitive intensity now? 4% up on that stock. Interglobe Aviation, the market has looked through the bottom line issues. The operational performance was pretty steady, as Sudarshan was telling us, and that's what the market is going with, 2.5% up. M&M is 1.5% higher. Reliance is contributing 1% higher. Sun Pharma after numbers up about 1%. SBI, L&T, Infosys, ITC, TCS, a lot of the big boys all chipping in between 0.5% to about 1%, which means the Nifty is looking at a tidy 50-point gain at the start.
Well, just take a look at these stocks. Hindalco, it's getting smashed down closer around 6% or thereabouts. The street doesn't like, you set out a capex of around $2.5 billion and then it goes to $5 billion in the matter of 3 years. Street doesn't like it at all. Yes, it's going to be a very, very profitable on an EBITDA per ton front. But otherwise, when your cost goes up so much, the pre-tax ROC only comes down to 6%. So why are you doing it? That seems to be the reasoning out there. Stocks, though, that are flying away. Let's focus on a few of them. From the broader markets first, Gujarat Pipavav. Good set of numbers. That stock is up 7.5%. Reddington, we'll have the management will be joining in shortly. That one, in fact, is up close to around 7.5%. RBL Bank, sometimes the streets waits by for some of these large trades to get out of the way, and then it resumes its uptrend. So RBL Bank, after that block trade getting out of the way, which in all probability could very well be the Mahindra Group, it's again, continued its upward trajectory. On the flip side, Ather Energy, stock is down 12%. Volumes are massive. I'm not sure whether or not there was a large trade that took place on Ather Energy. Volumes are very, very large. 10% downtick is what you're seeing on Ather. Utkarsh SFB, that stock is down 7.5%. And Delivery, there was some pre-positioning ahead of its numbers. The street seems to have got it wrong out there because the stock is now down close to around 6.5%. As we speak, big downtick.
Delivery's seen a block, but even Ather. So there are some large trades that have happened in the block window on both Ather and on Delivery, which could explain the sudden pressure on some of these counters. We'll see if they stabilize as we go from here. By the way, on the earnings reactions, let's just pull up the good earnings as well. Blue Star, 100 basis points margin expansion. Paytm has done pretty well. Gaurav was telling us contribution margins quite steady. They've been kind of building up. So 3.5% up over here. Apollo Microsystems, Metropolis Health. So some of these results, good results getting rewarded. Allied Blenders, we spoke to the management, still down about 2% on that stock. But yeah, I think the stock of the morning, Nigel, really is Hindalco, still down 6%.
Well, that's right, Surabhi. Those numbers are not very, the numbers were okay, but the street would have digested that. The problem is there was a fire as the Oswego unit in September. The negative impact will flow through in the second half of the year. And yet there's a counter argument that 70 to 80% is insured. So you'll get that money back in FY27. The problem is the capex. It's gone up too high. And that's what will keep the balance sheet, under stress. And that's why the stock is down 5.5%. Remember, it's very, very difficult to time these metal names, right? Because you got the trade right. You're tracking aluminium prices. You were saying that the Midwest premiums have moved up. It'll offset any kind of negative impact of tariffs. And woo, out of nowhere, capex goes up to such a large extent, and that's why the stock is getting knocked back. Let's welcome Anand Shah, CIO PMS in AIF at ICICI Prudential AMC, who joins us on the show. Hi Anand, good morning. Good to see you in as always. What are you making of a current market setup? There is a lot of optimism that we get a trade deal, that earnings pick up, and hopefully the market, gives up the recent underperformance. On the contra side, though, the market is still not very, very cheap. How are you feeling about the Indian markets?
Very good morning, Nigel, and thank you for having me. I think you're right to the extent that, one, we are dealing with global growth slowdown. I think the environment out there is as complex as it can get, and global trade obviously has been sort of disrupted. And on top of it, you also have slowdown in some sense in India as well. And I think we have taken some steps in the form of giving a little bit of a monetary stimulus and a little bit of a fiscal stimulus. And again, I'm using the word little bit because that will not take us through, and a lot might be required, but we'll wait for this trade deals. And I think as that uncertainty reduces, maybe the need for further stimulus in India might not be there. So with that background, I think I'm pleasantly surprised with many of the results because many companies have done a very well, a good job on bottom-up basis, especially if you see banks and others where they have surprised on the positive side on the results. Many businesses have shown very strong cash flow generation. Again, that tells you that they are conscious of the difficult times, the slowdown that we are in, and have taken some steps to improve cash flows, profits, and to some extent repair the balance sheets.
Okay. Anand, hi. So you sound quite optimistic on the results. So where does that leave us? I mean, the whole premise was that this is going to be a year of earnings recovery, at least 12-13%, if not better. So are we still on track with those expectations?
So I think the story ahead would remain, and I've been saying this for a year now, that will remain more bottom-up than top-down. I think we will have to deal with what we have today, which is lower global growth, impacting to some extent. Inflation is low, so the nominal GDP growth rate is also a challenge. That's below in a single digit in a long time. So all those will weigh down on the broader earnings growth rate. And you have to see that in the context that we had a very strong earnings growth rate for 4 to 5 years. So the base is very high. If you see corporate profit to GDP from the lows of 2.5% is now at 4.7, 4.8%. So I think there's very little room to further squeeze more profit out of the same GDP. So I think what we need is nominal GDP growth rate, which is a combination of a real GDP growth rate as well as inflation. And that remains fairly low, which you might not be complaining so far as long as it's still in the positive zone.
By the way, okay, got that. I just want to go back to Aether because Hormaz is pointing this out. This is really important. So the reason why we've seen some of these large blocks is because the lock-in period has ended for some categories of investors, and therefore we have seen those large blocks worth over 16 crores shares moving around and still down about 9.5% on Aether Energy. Anand, so walk us through last 2-3 months as you've seen this whole GST change and the market tilt its focus towards consumption. Autos have done so well. Walk us through your broad portfolio changes, if any, that you've made.
No, I don't think we've been more bottom up for almost a year now, more than that, and we've been more balanced. So prior to that, we had a lot more overweight in manufacturing allied, as we see recover in India in those segments. We were more overweight corporate banks. Now it's been more broad-based, except that in consumption, we have been more focused on services over goods. So this has been one, and we have upped our sort of exposure to the consumer services businesses while we remain underweight on FMCG and consumer goods in general. So that's been the only incremental change that we have made.
Okay, all right. Anand, if I get sector specific, I think the sector of the morning is paints. The question is, has Asian Paints and Berger Paints seen through the so-called Geo moment? Because the stocks were under pressure. You had a large conglomerate came in there, put in 10,000 crores on the table, said that they're going to be very, very aggressive. They have been fairly aggressive. But these guys have at least held their ground. And it appears, at least some brokerages are indicating, the dent hasn't been that big. Whether growth comes is another question, and valuations, whether or not you're comfortable in it, is another question as well. But what is your view? Asian Paints is one of the top gainers today because the street is now willing to look ahead after the recent price correction.
Sure, I think, look, one of the key element in wealth creation has been consolidation in sector, and we had a very long period of time when you had a limited competition in that segment, paint segment, and generally, if you ask me, in FMCG, in auto, in every areas, India has practically had a duopoly, sort of a 2-3 players in each segment of the market, and that worked out very well for that. And they were a stark outperformers for almost a decade, when actually everything else, particularly in manufacturing, was not doing well. So you had a situation where you had a strong earnings growth rate, peak margins, and the peak PE multiples. Since then, you know what happened in the last 4-5 years in these areas where stocks have been stark underperformers. As the economic recovery happened, the inflation came through as manufacturing picked up. The commodity prices also to some extent picked up. And that led to, but more importantly, what has happened in these areas is new competition. So it's been after a decade of a strong profitability, high ROEs, that you have seen new people coming into that business. Now, having seen the entry of new players with a strong balance sheet, I think there will be a time when there will be still muddling. I don't think we can have a clear recovery in growth and profit. Growth is also a challenge in that context, but nevertheless, if growth comes through, but still the margins will take time to recover as you have now more players in this area than less what we have seen in the previous decade.
Just a bunch of other names as well, right? Indigo is up. Indigo, by the way, is the #1 volume-led gainer. Sud was in the morning talking about how with that large forex loss, was unsure which way to go on this one. So, but it's up and about. Asian, of course, is up. Asian Paints is up 5% nearly now. So the big one as well. Paytm is up 4%. Paytm numbers look pretty good. And there is about 4% gain here. Britannia with the new boss at the top, 4% here, 6,120. Black Buck, which is, I think the FASTag data came out for the monthly numbers, 8% higher on Black Buck. It's up at about 705. It had corrected a little bit recently. And so on and so forth. Shipping Corporation of India is up about 6%. And by the way, on volumes, all of this stuff, right? Not small volumes. Nuvama reported numbers, so solid performance, 2.5% here. Sirma is up about 3.6%. Ixigo had lost about 100 rupees from the highs. Ixigo is coming up about 2.5% this morning. So that's where the gainers are at. And of course, I mean, on the downside, we've highlighted Aether with this lock-in ending. Delivery, of course, I think we've highlighted as well. 6% lower. Again, numbers. Stocks done very well, I guess. Remember, with all this stuff, stocks have run up so much across the board that pullbacks are, I mean, they seem sharp when looked at against recent performance. NetWeb, for example, right? Look at this one. I think 10% quickly after results, down another 3%, 3.5%. So it had a one-way move, and I think for the year it's still up 30%. Similarly, MTAR Tech is something that I've highlighted after that guidance that they provided here on this channel after the last quarter numbers, and from the highs of 25.70 is down to about 23.50 very quickly, 3 days. Right. So that's the kind of market we find ourselves in. Fair bit of profit booking as well.
Just one more stock, Infra, we were talking about it on Tuesday, Prashant, and the stock has already seen a big rally. But clearly the street believes that this is a redefining moment for the company on the whole, because after seeing such a big rally, I think it's up 20-25% in a matter of a month or 2 months or so. But clearly now the scale is increasing. And just to tell our viewers, we want further clarity from the management. And in the next 60 minutes, we'll have the management on the show as well. So that profit taking that we saw on Tuesday has got bought into, but clarity is awaited. So we'll get the management in the next 60 minutes on our channel itself. Yeah.
All right. Maybe, I don't know if, Anand, just a quick word, if you will, on and it's right up your alley, right? The capital market businesses. What do you own there, and what part of the capital structure across this do you own, and would you like to get behind or bet on?
I think one of the other, if you broadly see how the consumption is panning out, and I did say about services taking precedence over products in the consumption basket, I think financial services products and services are another thing which have been sort of lapped up by Indian middle class in general, and more and more penetration scope is still there. So I think that's one which is driving growth across the capital markets. I think the financialization of the savings and moving beyond just bank deposits, gold, and real estate. I think we are clearly seeing over the last 2 decades, and it's not yesterday, but for last 2 decades, we are seeing slowly and steadily the savings pool is now going beyond gold, real estate, and bank deposits. So I think the capital market plays in general, depending on whether it's life insurance, asset management, wealth management, broking, and others, are differently but benefited by this one particular theme, which has been ongoing for a while.
Okay. All right, Anand, we'll leave it on that note for this morning. Good to have you in and get that perspective. And we look forward to another conversation soon. You have a good day. With that, just a quick check on the market. Not too much changing, really. The Nifty is up barely 26, 27 points. And the broader market is about at an index level is down by about 0.25%. Just checking some stocks that are on the move, where the volumes are also fairly large. There's Ashok Leyland, there's Manappuram Finance. These stocks are moving on decent volumes. The South Indian Bank, again, where volumes are fairly high, at least for now. So these are some of the major movers and shakers. We'll do one thing. We'll take a quick break, come back on the other side, and we'll keep it with earnings. And lots of numbers have been coming through. We'll touch base with the management of Berger Paints and get their sense on the second half of the year. Welcome back. Let's, as promised, quickly look at Berger Paints numbers. The company did report a soft second quarter, and you could imagine that because we've had extended monsoons, heavy, flooding and rainfall in various parts of the country, and also, of course, competitive intensity. And that's the real question as we start off: is that competitive intensity coming down? Abhijit Roy, Managing Director and CEO at Berger Paints, is with us. Mr. Roy, great to have you in. Hopefully, you had a fantastic festive season. But before we talk about the numbers and the margins and the volumes, which are looking good, actually, you've done, I think, 8% volume growth. Let's talk about the changes in your industry. Now, because of the exit of the top executive at Birla Opus, suddenly the market's getting very excited. Today, Asian Paints shares are up, by the way, 4%. And I think the excitement is because the market is thinking, has this whole competitive pressure in the paint sector, has it finally come to an end? What would you say?
No, I don't think, it is coming to an end, but it is definitely reducing in the intensity that it had earlier, largely because, of the base effect, which is now going to kick in. So they had started from zero and, they were gaining value from the industry, and that was affecting the growth much more. Now going forward, they already have a, pretty strong base. On that, the growth rate that they will generate and the value, therefore, that they will take away, from the industry will be much smaller. So the impact of that competition will reduce, in the third quarter and reduce further in the fourth quarter.
But
unless something dramatic happens, therefore, the growth rate of the industry will get normalized to a large extent.
But, sir, what makes you confident? Because the group still has deep pockets. I mean, sure, there is a management change that's happened and there'll be a new person taking charge. But it's a deep-pocketed group. So what makes you confident? I mean, are you expecting that... I think you've done 1% value growth, for instance. So are you expecting more price hikes ahead now in Q3, Q4? Just describe this reduction in competitive intensity. In what nature will it really show up?
Let me try and explain with some figures. For example, in the quarter 2 of last year, since they had started just about that point of time, they had done about 450 odd crores as per their own analyst meeting, because it's not a published result, so we don't know. But it's around that figure. And this time they said that they have done about 110% odd growth. So we can assume that it's about 950, 960 crore, which is slightly below the first quarter of this year. And that's what they said, that they have done slightly below last year. Now, if you look at next quarter, and they have been doing around these figures, quarter 1 also was like that. Quarter 4 of last year was also similar. Quarter 2 of this year also is similar. So it's around that 900 to 1050 type of
quarterly run rate,
which they have settled down, right? So now last year in the third quarter, their sale had gone up substantially, to possibly around 800 odd crores, and then in the fourth quarter it had gone up further to about 900 odd crores. So now when they are doing, say, 1000 crores, the net gain for them will be 200 crore, which is the impact on the industry. The earlier impact in quarter 1, for example, there was zero nearly, or 100 odd crores, and they did about, say, 950 or 1000 crores in the quarter.
Got it. That's the sheer, I got your point, that's just the sheer quantum of business, which was going, suddenly from a zero base, suddenly 800 crores they took away, so it went away from the industry. So that's normalizing. What about...
was impacting the growth rate, but I'm not saying that their growth is, completely going away, or the CEO change is going to make, something substantially different. Business will carry on as usual. That will happen, but the tapering is also happening because, initially when they were coming in, they were adding a large number of dealers, from zero base, obviously, you will go somewhere, right? And you keep adding. They had done 2 years of homework and then they came in. And so they had a huge list.
That's what I'm coming to, sir. That's what I'm trying to understand, that when it comes to discounting to dealers, margins, dealer margins, which is where, any large incumbent, when they come in, that's where they disrupt. Has all that normalized? And what about pricing now from here?
So, the pricing is, more or less, I don't think they have been, grossly off that chart or something. It's not like, as people have been saying, this is Geo moment and all that, but that is not happening. You get away free, and then this is, it's a small discount over the leader. Anyway, we compete in the market by giving some discount to the leader as well. So it's not something which is very disruptive as far as we are concerned. So from that perspective, I don't see that, really impacting. They have also indicated that in 3 years they will become profitable. If they have to do that, they cannot, discount, massively from here on.
Okay, all right. I think we have spoken enough about the competition, and as you're saying, it's reducing, competitive intensity. So, Mr. Roy, let's get in a few numbers. By the end of this year, what kind of a growth can you give? First half of the year, you've done close to around 3% in terms of growth, with margins in that 14.5% to 15% vicinity. For the full year, what kind of a number are you looking at? Has demand perked up a little bit after the GST rationalization that we have seen? And what about margins? Let's talk about your business. For the next chat, we'll talk about how the competition is shaping up.
Sure. So in Q3, I think we believe that, we will be in the mid-single digit type of value growth. The volume growth will be near double digit or slightly ahead of double digit. As far as Q4 is concerned, we would be closer to the double digit mark or may cross the double digit as well in terms of value growth. So this is something which we are looking at. So if you have a 50-50, you can understand where we will be at the end of the year. Which is somewhere around the mid-single digit, slightly ahead of that. So that's where the value growth will be. The volume growth will be double digit, I think, most probably. As far as the profit is concerned, there are three levers which are going to kick in, this quarter and going forward again in the next quarter. Typically, the second quarter is the lowest, for the industry in general. This time it was even worse because of the excessive rains that we had. So, the sales came down quite a lot, and as a scale effect, it brought down the EBITDA levels as well. That is going to change in the third quarter. Typically, the base itself is higher compared to the second quarter, and on that we expect some good growth. So therefore, it will have an impact as far as the scale effect is concerned. The second part is typically after the monsoon, the mix tends to improve considerably because in the monsoon period, the exterior emulsion sales goes down. So that's something which is going to improve in the quarter, that is the quarter 3. The third reason is that in the urban areas that we have been investing money. One of the reasons why, somewhat the EBITDA margin came down.
Okay.
Now that is basically, institution projects dependent, slightly in the urban areas, and that got stalled in the rain. It's going to revive in this quarter and the next quarter even more so, and therefore we should see positive result there as well. So all of these three combined, and the other benefit which we are getting now is that the raw material prices have come down a bit. So that should improve the margin a little bit.
Okay, Mr. Roy, always a pleasure hearing your thoughts. Competitive intensity is reducing. I think that's the big takeaway. And you're guiding for better times in the second half of the year. Wish you a good day ahead, a good quarter ahead, and we'll chat up soon. Thanks a lot for joining in.
Thank you.
Let's focus on the next management. Suzlon. Mr. Chalsani, the CEO of Suzlon Group, joins us on the show. Hi, Mr. Chalsani. First of all, congratulations. Last quarter was good, on the profitability, on the margins, on growth as well. Now, you're way ahead of that, 60% odd growth guidance that you were talking about. Give us a fresh, concrete guidance, Mr. Chalsani. Don't, give us at least a band with regard to the revenue growth and the margins as well. Volume, value growth.
Thanks, Nigel, for nice words. The H1 obviously has been pretty good for us. As you said, that we gave a guidance of 60% for the year as a whole. At the end of H1, our revenue went up by about 70%, and both EBITDA and profit are doubled. Okay, but however, maybe it is disappointing to you, but I will still maintain that guidance of 60% at the end of the year. We're not revising that guidance at this stage. So therefore, when we talk in May, we will see where we reach. But currently, guidance remains at 60%.
Okay, got that. Mr. Chalsani, good to have you with us here, and nice backdrop behind with those windmills. Just a quick word.
That's what we do, Prashant.
No, we took a very short road trip recently, and there were lots of windmills along the way, and we don't know. It's nice to see. Picturesque. Now, what's the impact of the amended ALMM norms for Suzlon, sir? You're the sole integrated domestic player in many categories. What's the impact? What's the opportunity? Can it mean higher margins? Give us a sense.
Prashant, what it does is of course, the ALMM we discussed last time, which components are supposed to be indigenized, what is to get listed before you procure them. But the ministry has followed it up with, releasing an SOP that how do you need to do it. And in addition to that, they also came up with what is called a Renewable Energy Equipment Import Monitoring System, REMS, where, you can import only provided you register there. And also they're going to do next work is to also monitor from the import to which project it's going. So therefore, there is going to be strict controls in terms of import. Whole idea is to increase the domestic component and encourage the domestic manufacturing. We meet that. I mentioned that earlier. We have no issues on this because we are already at plus 80% domestic component. What it will help us is in terms of creating a level playing field and remove the disadvantage of, the cost disadvantage what we have with respect to some of the cheaper imports. So therefore, obviously, it would improve the competitive advantage to us. I don't want to talk about margins because we don't want to unnecessarily increase the margins and increase the end tariff, because tariff is most important for sector to grow, but significant competitive advantage for us with the ALM coming in. And in addition to that, Prashant, what it does is that this is going to increase the domestic demand for not just for the OEMs, including for components, sub-components. With that, the costs domestically will come down, and also we start becoming the export hub because of ALM. I think this is what will happen in the next 2 to 3 years.
Any worries with regard to cancellation of tenders, sir? I ask you this because, there have been some tenders that have got cancelled by the Ministry of Power in the first half of the year. For your business, do you see it as a risk or no risk whatsoever?
Entire 6.2 gigawatts what we have got, which is about 1/3 of that is through bidding auction. And none of those have this PPA issue because we only signed the contract after the PPAs have been signed. And even in the pipeline of projects what we're discussing, contracts we're discussing, none of them are impacted by this. And also, in my opinion, it is they have not cancelled those PPAs. They've only said that we need to relook at these PPAs, retry what PPAs can be signed. Otherwise, you can cancel. But that's a good step because that will actually release the connectivity, which got blocked because the awards. And then other projects will come in and they'll replace that with FDRE. In fact, it's good for us. There'll be more wind requirements in the future tenders.
Yeah, it seems solar came under a bit of heat and wind could be a potential beneficiary. Got that. For the industry on the whole, what about tendering? How much do you expect in FY26 and FY27 as well? The tendering has gradually started moving up.
Yeah, they're very clear. In our discussions with them is now they are going to give the tendering with respect to the grid requirement, grid stability, and all the entire tendering is going to be in terms of RTC and FDRE bids. And the tendering would continue to pick up even today as we speak about more than 11 gigawatts of bids are different stages. Some of them are bids submitted and the reverse auction has to happen. Some of the bids are to be submitted. I think that would continue. They quite keen, the government, that the tendering activity would continue. But more important for us is the C&S segment, which constitutes more than 50% for us. In fact, that segment now revised the requirement of total RE for 2030 from 78 gigawatts to 100 gigawatts. So there's going to be more demand. And then you're also seeing these data centers coming in, okay? Huge amount of renewable energy, what you need. And even you've seen that latest data center announced in Vizag, they said 80% is what they will meet from renewable energy. I think from that angle, the demand is not an issue. So right today, for the next few years, I see a clear visibility of, one is we have already 18-24 months order book, but future also, I don't think demand is an issue.
Okay, all right. Mr. Chalsani, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. So that's the Suzlon numbers and the outlook going forward. Stocks at about just under 60 rupees. Mahindra & Mahindra is the next management of the show. It reported a strong set of second quarter numbers. Auto volume boosted revenues. In fact, my colleague Sudarshan spoke with Mahindra & Mahindra's ED and CEO Rajesh Jejurikar. It began by asking him about the quarter gone by and, of course, their October sales data as well. Listen in.
Recently, you announced sales for the month of October, and those numbers looked very strong. For passenger vehicle SUV growth, you have seen almost 27%. Tractor, the biggest positive was you reported a growth of 13% while expectation was just flat year on year. So what exactly is working for you and how do you see the growth going forward?
Yeah. So Sudarshan, we're delighted with October. It's turned out to be a very good month. Just as a context to the viewers, last year, Dussehra, Navratra and Diwali were all in the month of October. This time it's got split between September and October, which is why the positive October numbers has even more meaning because it's been a split festival this year between September and October. We've seen a very strong demand through the festival periods. Depending on what you look at, retail or, April to September or April to October or only festival months, we've been along the lines with the mid to high teens that we had said in the SUV segment. So that's been a very positive factor. Like you said, tractors, we had a billing growth, in the month of September, almost 50%. and then a 13% growth on top of that is a very good sign of the kind of retail momentum we saw through Navratra and Diwali across the country. The first part of your question is around SUVs and what worked for us there. Demand from multiple different sub-segments. So, our EVs have done well. That's added a completely new set of customers into our portfolio, people who were not considering Mahindra earlier. Many of them coming from luxury car segment. The two new introductions that we did, we introduced a Bolero new upgraded version, and we upgraded the Thar 3-door as well. That's, worked for us. The 3XO portfolio, which is a sub 10 lakh, in the sub 10 lakh category, saw, the benefit of GST, and that grew. But our mainstream player brand, Scorpio, which is a very strong part of our portfolio, did exceedingly well. The XUV 700 did well. So, rock. So, it's, I think, a strong portfolio that's now playing out and giving us the numbers. On the tractor side, both Mahindra and Swaraj, have been strong. And in the first half of this year, our market share collectively was 44%. We saw the benefits of product upgrades, channel strengthening, all of that play out as we've got into this festival period.
So you are talking about the festive season, sir. This time, apart from the festive boost, so GST cut was announced.
Yes.
And after the announcement, you would have certain expectations from the festive season. Do you think that whatever the expectations were, have you met it, like from the demand side? Do you think that it has been met? And for the entire festive season, if I talk about, what is the growth separately for PV as well as the tractor segment? Entire, like by the end of the festive season, what do you think would be the growth rate?
Yeah, so that's what I was saying. So on the SUV, on the PV side, as you call it, we would expect to have seen mid to high teens growth. On the tractor side, again, strong double-digit growth. So both of these in the festival period have seen strong double-digit growths in retail momentum. Of course, this year is not comparable to previous years because there was some transition issues related to pre-GST starting on 22nd September, customers waiting and watching to see, and get the benefit post 22nd September. So this year had a little bit of abnormality, but overall, when we see it in a totality perspective, it's been a strong double-digit growth.
So where do you see to end FY26 with outlook for both?
Yeah, so for ours, in the SUV portfolio, we're talking here, our growth, we expect to be at mid to high teens, which is what we had said at the beginning of the year. Okay. Tractors, beginning of the year, we had said 5 to 7% growth for the industry. Yeah. We're now increasing that outlook to 10 to 12% for the full year. So tractors, we've changed our outlook because of multiple factors. Good rains, very good reservoir levels, government spending in rural, exports of agri-produce happening, which is bringing cash into the economy, and of course the GST cut.
Now coming to the quarterly numbers.
Yep.
So it was an operational beat. As I talked about in my opening remarks, the biggest positive surprise was the margins. You reported margin of 14.5%, very healthy set of margin. And apart from that revenue growth, like you have seen a growth of almost 21%. Now, what are some of the levers that you can talk about this improvement in the margin? And do you think it's sustainable going forward?
I won't comment on the sustainable going forward because we avoid giving margin guidance. One of the things that we've as an organization, I think we manage well, is doing the right level of trade-off between making sure we don't compromise on the ability to grow our volumes and managing our costs well in a way that we are able to get the benefit of that by way of decent margins. So we've done all the right actions, which is, the model mix, trying to sell higher end versions. In tractors, for example, we did see customers move up to higher horsepower, 40 to 50 horsepower segment. That improves the margin profile. Even on the auto side, we saw, people moving to higher end versions and variants. So that improves the margin profile. So I think it's a combination of multiple things, including managing costs, model mix, variant mix, and all of that.
So on the tractor side especially, the volumes were up 32% in this quarter. And there also you have seen a significant expansion in the margin.
Yeah.
Because in the auto part, there was a minor dip because of GST transition you have talked about. But in the tractor part, from almost 16%, you have seen a jump of almost 400 basis points, like almost 400 basis points to 20%. Now, with Rabi crop and everything happening, just on tractor part, do you think it's sustainable?
Yeah, so I want to clarify for the tractor part, the festival getting preponed is a big enabler, right? So, you know, if you go to last year, Q2 did not have any festival. The full festival happened in Q3, which means the Navratra, Dasera, Diwali went into early November, but basically there was no festival in September. This year the festival had started in September, so we got almost the full 9 days of Navratra within September. So that impacted September numbers as well. And hence you get operating leverage out of that compared to last year. So, you know, last year to this year, there is a little bit of seasonality shift, which is enabled this year. And I'm not going to comment on the guidance.
Perfect. So now shifting from margin to market share.
Yeah.
It's a huge gain across the board. In SUV, the market share has gained and it's now 25.7%. Similarly for LCV, less than 3.5 tons, even in the tractor part that you have gained market share. So in SUV, now with so many EVs coming up, and you are going to launch a new EV, that XCV9S.
That's right, yeah.
So how do you see the market share overall by the end of FY26? Or rather than by the end of FY26, if you can just 1 to 2 year picture, if you can talk about SUV and tractor part.
Yeah, so firstly on the SUV part, our aspiration or our goal is to be revenue market share one. I just want to clarify that as an objective. You know, and the reason we've said that as the goal is because our average price point is almost double that of any of our competitors. You know, our products are selling at much higher price points. The mix is skewing towards the higher versions. And which is why we believe that revenue market share is what we want to measure. So we hope to continue being number one by way of revenue market share without putting out a specific number. In the case of tractors, you know, we are already in a very strong position. And we've gained a 0.5% market share on top of that in the first half of this year. So I wouldn't want to give a guidance of whether in this year we're going to increase anything or not, but even staying at this market share for this year, I think is a very strong outcome.
Regarding some of the upcoming launches that you can talk about.
The exciting part of the launch is the new, what we are calling the big electric SUV, and we are calling it XCV9S.
Yes.
You'll learn more about that over the next few days as we lead into 27 November.
So with an increased focus on electric, what is the current booking like monthly or quarterly, if you can talk about?
You know, we have avoided sharing booking numbers, Sudarshan. So one of the things that we would want to be focused on, what are we doing? So we are in the region of 4,000 to 5,000 a month, which is what we had set out as our phase one objective. And then, of course, we have a new launch coming up.
Okay, welcome. That's the Mahindra & Mahindra management in conversation with my colleague Sudarshan. You know, we spoke with Suzlon earlier on the renewable side, wind specifically. We've got one more renewable power company with us, Acme Solar Holdings. Revenues have jumped more than 80%. Margins are healthy as well. We're now joined by Nikhil Dhingra, CEO of Acme Solar. I mean, if you just look at the renewable companies in the renewable space and look at earnings growth estimates, and these are estimates, of course, forecasted. I mean, estimates for Acme are right up there in terms of strong growth numbers going forward. Thanks for joining in. As I said, once again, Prashant this side, Nikhil. Just give us a sense of how much merchant power you sold in the second quarter. Give us a state of affairs right now as we stand as well, because I mean, we get the monthly data. Power demand is low. I mean, you know, there are unseasonal rains, etc. as well. So offtake, I guess, will also be impacted. So give us a sense of the merchant power, how much you sold, what are the rates like, and what is the situation now in the third quarter?
Right. So, Prashant, we are a company which does not sell merchant power. We are in most of our power is contracted through long-term PPAs. So in this quarter, we did not sell any merchant power. All of our power was sold through long-term PPAs, which have a constant tariff. So you are right that the power demand was weak given the monsoons and the rain, and of course the in terms of the cyclical part of this year. But we were not impacted because we had our power is sold. It's a must-run power, as you know. Renewable is a must-run power. So our realizations and revenue were constant tariffs. Of course, the generation varies quarter to quarter in a minor way for solar, as our portfolio is primarily solar and it is contracted in a long-term PPA. So we had a healthy revenue and healthy EBITDA this quarter. And that is our business model. We are only doing merchant power from, let's say, if we have early commissioning and if we have some scope. Like in the batteries, we are trying to do merchant from Q4 of this year. So that is something we are looking at. So merchant in today's time, the peak power merchant only makes sense. So because there is a difference between the solar tariff and the peak tariff. So that is what we are trying to do from next quarter onwards. We have got our battery capacities coming up of around 1 gigawatt hour next quarter. So we are trying to ramp that up and do merchant on that and not on the normal solar or wind.
Nikhil, what is the average tariff across portfolio? Is there anything coming up for renegotiation or in this quarter or the next quarter? And second, give us a sense of, so 1 gigawatt of storage, which means that much is what you'll be able to supply at merchant rates. Or no? I mean, that's just a battery capacity right now.
Yeah. So in terms of the renegotiation and PPAs, and all of our PPAs have been signed in you can say last 4 or 5 years. So they have a tenure of around 25 years. So none of our PPAs is coming for renegotiation or change. And of course, these are 25 years and these are all with the central government, like SECIs are 70% in our portfolio is SECI. So none of them are up for renegotiation. In terms of the battery 10 gigawatt hour, 1 gigawatt hour of battery installation. So this will be sold as the units. 1 kWh is 1 unit. So basically that much revenue. If I can give you an estimate, let's say if there is a 5 rupee differential realization between the you can say charging and discharging power, then we will make around, you can say, 170 crore of annual sort of revenue out of that. So that's the broad numbers. And in terms
so 170 crore merchant revenues.
Yes.
In FY27.
Let's say we install it in January 26, so I'm giving a 12-month number. So whenever it's a 12-month number because 12-month number starting from whenever we commission it.
Okay.
Nikhil, hi. Now on the question of signing fresh PPAs itself, just tell us, whether anything got done in Q2. What is the PPA pipeline looking like? Because there have been a lot of reports that because of slightly lower demand and perhaps overcapacity already in the system here in India, PPA, especially on the renewable side, apparently are also getting cancelled, or the government at least has been sort of withdrawing some tenders. So explain to us what's going on and whether you would be impacted in any way.
Right. So we signed 50 megawatts of PPA with Tata Power. That's our first PPA with the private discom. And of course, we signed 550 megawatt hour with NHPC. So this quarter we had these two signings, and we won around 750 megawatts of solar plus battery tenders. So we had a good run this quarter. Of course, there have been talks about delays in signing of PPAs, and you must have seen the MNRE has also responded to that there is no broad cancellation which is being pursued for these PPAs which have not been signed. Of course, they will review each and every bid in terms of the demand for that. What has happened was there was a lot of, you can say, bunching up of bids which happened in last couple of years. So government has rightly toned down the bid pace now. So very few bids are happening now because the earlier bids are yet to be signed for PPAs. We are seeing that the pickup for firm and dispatchable renewable energy and peak power, bulk of which our capacity is in that segment, is happening. Of course, the pace is lower than the inventory available. So you will see that it will clear over a period of time. but some PPAs which are pure solar or pure wind, which have not been signed for more than 2 years. So that is some, and if there is no demand for them currently, then only government will look at it, whether they need to free up the transmission capacity, because this is more being driven from freeing up the transmission capacities for for letting the you can say more eligible projects come up rather than cancelling the LOAs, because there is no intent to slow up the renewable growth or renewable capacity expansion.
But as you explained, that you did end up signing both on the private side with Tata Power and with government agencies like NHPC. So this whole PPA delay business or cancellation business, it's not impacting you in any way, right?
It is not impacting us in any way, and it is not impacting most of the players in any way. What is getting impacted maybe is the slow bid wins, but we also won 750 megawatts of bids in this quarter. So there is enough actually in terms of the bid wins and in terms of the PPA signing. We have already 2.2 gigawatts of signed PPAs with us.
Sure. Just a quick last point on the margins. This quarter, you were at I think about 85%. At the operating level. Just give us a sort of look ahead. Next couple of quarters, can you sustain these kind of levels?
So, see, Surabhi, our EBITDA margins are fairly constant because they are in this range of 85 to 90%. And of course, that is because we don't have any fuel expenses or any such expenses. So this will be the range where we will be for next few quarters. And we have been there for last few quarters as well. So margins will be in this range. Of course, the growth is what drives the key metrics for us. So we have to commission 450 megawatts of capacity this year. We have already commissioned 388 megawatts. We are seeing a lot of upsides from the interest rate reductions. We have been able to achieve AA minus rating for our company. So we are seeing upsides from that, which will lead to margin improvement because of that interest cost
savings.
Interest cost savings, because we are a very capex intensive sector, right?
Absolutely. Absolutely. Got that. Sorry, a little short on time, but we got the gist of it. And Nikhil, thank you very much and good luck to you for the rest of the year as well. So the going remains steady at Acme Solar. We have to take a quick break. On the other side, Manisha Gupta joining in with the latest from the commodity markets. Okay, welcome back. And those are the women in blue, triumphant, and they are the world champions meeting the Prime Minister. So some visuals of that meeting coming up over there. That's the winning captain, Harmanpreet Kaur, and she's sporting a new tattoo as well. I think we've got the sound now.
कंट्रोल करती है सबको.
नहीं सर, मतलब वेट था आपसे मिलने का और बस एंजॉय करा और इस चीज़ का वेट था कि आपसे मिलेंगे. बट मेरे को याद है आपने 2017 में मेरे को बोला था कि वही एक प्लेयर है जो उठ के चलना सीखे, उठ के अपने फेलियर से बाहर निकले, बस लगे रहो, मेहनत करते रहो, मेहनत करना मत छोड़ो. तो आपका वो एक वर्ड मुझे मतलब हमेशा मोटिवेट करता है और मैं आपकी स्पीच सुनती रहती हूँ. मतलब जब भी ऐसे टाइम मिलता है तो आप बहुत कूल एंड काम रहते हैं अपने उसमें, जो क्योंकि काफ़ी लोग बहुत कुछ बोलते हैं लेकिन उसमें भी आप इतना कामली चीज़ें हैंडल करते हैं, तो वो मुझे पर्सनली अपने गेम में हेल्प करता है.
आप ये टैटू लगा के कहीं घूमती रहती हैं तो हनुमान जी तुम्हें क्या मदद करते हैं?
सर वो भी मतलब उन पे ज़्यादा अपने से खुद से ज़्यादा उन पे बिलीफ रहता है मुझे कि जब भी ऐसा मोड़ आता है कि कठिनाइयाँ आती हैं तो मतलब उनका नाम लेती हूँ तो मुझे लगता है कि वो कठिनाइयों से मैं बाहर आ जाती हूँ. इतना बिलीफ है उनके ऊपर.
और आप तो अपने इंस्टाग्राम अकाउंट पर भी जय श्री राम लिखती हो.
जी, उस पर भी लिखा हुआ है. हाँ जी. जी.
श्रद्धा जीवन में बहुत काम करती है जी. उससे एक फायदा होता है कि भाई हम किसी को सुपुर्द कर दिया, सो जाओ, वो करेगा. लेकिन ये मैदान में आपकी दादागिरी बहुत चलती है, ऐसी जो बात है उसमें कितना दम है?
नहीं सर, ऐसा कुछ नहीं है. एक चीज़ का थोड़ा सा खौफ रहता है, वो मैं बोल सकती हूँ, वो थ्रो का रहता है.
Okay, so discussing their throws and discussing their maneuvers, Diti Sharma there, geniuses all of them, world champions, meeting the Prime Minister and sharing some much deserved accolades and of course laughs as well. For the timing, it's time to talk commodities. Let's go across to Manisha for the latest. Manisha, what's the big headline?
Well, can't match on what we've done in sense of cricket, but I want to talk about the crude oil prices because we have continued to decline onto this one. It's trading at a 2-week close right now. We've seen 3 constant months of decline, and this, by the way, is going to be a 3rd straight yearly decline coming for the crude oil prices as well. We're down by nearly 15% for 2025 as we speak. Well, the crude prices in the recent days have seen some support, especially after Russia's say port suspended fuel exports and refinery operations as well. This is after recent barge of Ukrainian drone attacks on various refining capacities within Russia. So that supply concerns have given some support to markets. But apart from that, there's nothing else which is holding the crude oil prices on the higher side. Because when you look at the US stocks, we are looking at 5 million barrels of a jump in the last 1 week itself. So US crude stocks have been much higher. If you look at the markets in sense of Chinese demand, that also has not been so strong. There's an estimate that in 2026, you could be looking at weaker Chinese demand as the EV segment there continues to grow. There are similar sentiments coming in from Europe as well. The third important point, of course, is the strength in US dollar index. We also have seen probability of almost no rate cut for the month of December. That seems to be bothering various asset classes, including commodities and especially crude oil prices there. And then apart from that, it's not just the US inventory is increasing, but the US production has hit a record high in the month of October at 13.64 million barrels per day. So there's enough and more crude. OPEC Plus also has been increasing, has increased to the tune of 2.9 million barrels per day in this current year itself. As far as the overall supply concerns, a supply surplus is expected. That is on the higher side as well. OPEC believes that you could be looking at 1.3 million barrels of a demand growth estimate in the next year. But when you look at IEA, they have a much lower growth estimate of around 0.7 million. So the demand growth for next year isn't so strong, but the supply growth definitely on the higher side. And that is the next number coming in on your screen there. So these are supply excess outlooks coming in from various agencies. Mercuria, which is the largest oil trader in the world, believes that 2 million barrels per day of an excess supply is what you could be looking at in the next year. 4 million barrels per day of of an excess supply is what OPEC and World Bank believe into. And CIBC says that 1.5 to 2.5 million barrels per day of an excess supply is what you could be looking at. So anywhere between 2 to 4 million barrels is a consensus coming in there. Now let's talk about the prices. And this year, as I said, it's a third straight year of decline in prices. And next year couldn't be any better as well, is what the belief is. World Bank believes that $68 a barrel is an average price that you could be looking at in next year. CIBC has a lower number at 50, and that really is a headline, really, because 7 Report research says that with the kind of supply increase that we're looking at, there's a possibility that you could be looking at crude oil prices declining all the way to $35 a barrel as well. And that is the most bearish outlook, by the way, till time there. The rest of them really are talking about in 50s and 60s at this point in time. You have Citi at 62, Bank of America 64, and then JP Morgan, Morgan Stanley anywhere between 58 to 60 as well. So we could be looking at lower averages of what we've done in this year. But well, yes, there are some headline grabbing numbers coming in too.
Maniju, thank you very much for that. So something to keep an eye out on, and some of those forecasts for especially oil marketing companies, very important, of course, the macros as well. Time for a quick commercial break here. It's our segment. It's the Economy Lata in conversation with Macquarie Suresh Ganapathy to assess the just ended second quarter earnings of banks and NBFCs. Stay tuned.
Welcome back. Almost all the banking results are out. NBFC results are out. And one key takeaway from the NBFC and banking results is that it was not as bad as the market feared. The expectation of the 100 basis point repo cut on margins was a big fear in the market. But many of the banks, large banks, reported higher margins than in Q1. To analyze the set of results and to check out which are still good buys at current prices, Suresh Ganapathy, the Managing Director and Head of Financial Services Research at Macquarie Capital joins us. Good morning, Suresh. Thank you very much indeed for joining us. Let me start with the ones who announced numbers last, that is, Paytm and State Bank. First with State Bank, it looked like it was a beat all across, but you're not impressed. I think you still have an underperform on the stock?
Yeah, so look, it was, of course, a pretty good set of numbers. More importantly, as you rightly summarized at the start of this call, that all banks seem to have done much better with respect to margins, and especially on the liability management side, where the cost of funds have, of course, fallen much sharper than expected, and therefore the overall eventual outcome on margins have been way better, and that's what has happened with SBI. The only point here is that SBI had an ROA of about 1.15% odd or so. A large part of it in the first half has got to do with a lot of treasury profits, Lata, which happened in the first half, right? First quarter was bond gains, and this quarter was Yes Bank stake sale. Now, these things are not recurring. So in the sense that you are more like a 1% ROA, and with some kind of an ECL related credit cost coming through your PNL, because currently they don't make really much amount of provisions on SMA 012 assets, you will of course see maybe the ROA is dipping below a percentage point or so in another 12 months' time. That's how we are looking at it, because some of these things are not sustainable.
No, fair point. But there was BOB announcing that there will be a 22 to 25 basis point impact on the credit cost. You think it has colored investor impact on all public sector banks?
I mean, look, see, not all of them have reported the ECL impact, but whoever has reported the rough impact on a transition basis on the net worth is anywhere between 7 to 10%, Lata. So you can go with that kind of a ballpark number. Some banks could be at the lower end of that number. But the sustainable increase in credit costs, because remember that the SMA 1 or 2, the RBI is saying you need to provide 5 percentage points, whereas currently these guys provide only 40 basis points, right? So it's a substantial quantum jump. Now, of course, the SBI management itself is saying that they're representing to the RBI that some of these floor rates recommended are a little bit higher at this point in time. But if I were to literally go by what has been prescribed very clearly, the 20-25 basis points given by BOB is something that will be applicable across the board. So the 20-25 basis points on credit cost is more like a 10-15 basis points on ROA, right? And about 200 basis points impact on ROE. That's something I don't think the market is fully factoring in, which is what I think we need to be really watchful about.
But this 2025 goes over several years, does it? I didn't understand what Mr. Chand was trying to say.
No, that
is it only in the starting year, or will it be in subsequent years as well?
So there is two impact, Lata, here, right? One is on
the net worth impact. That's different.
That is on the existing portfolio. Okay. Now the other impact comes when you do business in the normal course. In the normal course, you'll always have an SMA 012 assets.
Okay.
There currently are only providing 40 basis points. Now you have to take it up to 500 basis points. So this is 20-25 basis points annual increase, sustainable increase, which will be there for every year as long as you keep doing business.
Fair enough. Yeah. So that's that cost will come. Okay, right. Now Paytm, again, I thought the numbers were quite good, but you have an underperform again, probably because it's already a costly stock. But tell us your thesis.
Yeah, so of course on the valuation side, I mean, some of these new age companies are always going to be a bit tricky to value, and we not even on PB Fintech for that matter, we have a neutral rating. More from a valuation perspective, look, if you look at Paytm's numbers per se, the revenue line item was in line with expectations, right? So where they have done a really good job is on the cost control. They have been able to demonstrate good amount of operating leverage in the business. So maybe they're using AI. They have also, of course, cut their workforce over the course of last 12 to 18 months. So you can clearly see much better outcomes on the operating cost front, and therefore the profitability is improving, and they are generating accounting PAT, which could be sustained as long as they keep a very tight leash on their costs. Yeah, sorry.
Okay. Yeah, I can get absorbed in the HDFC versus ICICI debate, so I'll see if I have time for it. You have some outstanding comments to make on City Union Bank on the bank side and AB Capital on the NBFC side. Tell us why you like City Union Bank so much.
Yeah, look, I think you have to understand that, in today's times when there is a lot of story being spun around about some of these older private sector banks, whether they can generate 1.5% ROA or not, and what could be the path towards it. I won't like to take any of those names, but the expectations are running very high. Here is a bank which is already generating and delivering 1.5% ROA, which is a great outcome. Sustainably over the course of last several years, I would say, except during the COVID years, perhaps, and period post that. And also at the same time, growth is back, right? So they have grown their balance sheet, I know, of a small base, but one of the bigger concerns was whether growth can come back for them. So here is a bank which is growing well. ROA profitability is very good, and is trading at a pretty cheap valuation. In the peak, City Union used to trade even at 2 times price to book. So that's the kind of opportunity and upside that you still see in the name, which is already delivering that golden 1.5% ROA for the mid-sized ones. As far as AB Capital is concerned, look, I'm pretty much comparing with some of the new age companies, right, or new listings, sorry, for that matter. Look at the HDBs and the Tata Capitals of the world, which are currently listed, and they all trade at 2.5 times forward price to book. Here is a company which is trading at 1.5 times, right? And having an ROA which is similar to them and growth profile which is better than them or maybe equal to them, right? And that's a glaring gap. And that's the reason why it becomes a clear pick for us at this point in time. And numbers have been good so far. Yeah.
Okay. Is that also one of your super six or something like that?
Yes, that's right. So
it's in your up list.
So it's across all the sectors where we identify some of these mid cap guys where there is a longer term potential, and in the NBFC or in the overall, for that matter, in the financial services space, AB cap falls under that.
Okay. If you have to choose between HDFC Bank and ICICI Bank?
Look, I mean, both are good companies, good stocks. Valuations are still reasonable over the longer run. It really depends upon the time frame and the horizon that one has, right, from an investor standpoint, right? So if you're looking at the next 6 to 12 months, clearly you're going to see HDFC Bank getting its mojo back when it comes to its growth, and will be the sector leader in terms of its growth, in my opinion. And that is the reason why, as the growth convergence happen, one can argue that HDFC Bank can converge to ICICI. And the second thing, as we all know, that Mr. Bakshi is slated to retire on October 2026. And there are uncertainties surrounding his tenure. Typically, stocks don't perform that well whenever there is a CEO-related uncertainty. For all that you know, he could get another 3-year extension and things should be fine. But currently, we're going through in that uncertain phase, which is what we need to be a bit careful about.
Well, actually, his term ends and he's very much eligible, way below the retirement age. So I am still not believing this rumor. It was only a rumor which ICICI has scotched in no uncertain terms. So we will leave it at that. Let's see what happens in 2026. Just finally, Suresh, would you say in your overall, I mean, this is a head of research question. Where does finance figure in the bouquet of sectors that Macquarie recommends? Is it up there?
Yeah, pretty much. See, if you look at it in this way, Lata, we always start the year with a 15-16% broader market earnings growth, and eventually, unfortunately, the earnings keep getting cut for the overall market. But even if I were to really look at next year, maybe the overall market can grow potential to 12, 13, 14%. But financials, very clearly, there is a visibility of a 20% earnings growth. So it will outperform the broader market by a good amount of margin. That is only because the first half base this year has been very tough. You've gone through a margin compression. You have gone through, though banks have done a better job relative to expectations, but still YOY the margins have gone down for SBI, for everybody else in the system, right? And you've also seen credit costs being elevated in certain cases, like for Kotak and Axis. If you look at next year first half, and of course probably second half, you are going to see margins being relatively positive. That means in an upward movement, credit costs being down. And loan growth should be about 15-16% or 14-15% for the private. So clearly you're looking at a 20% kind of an earnings growth for the broader financial space, outperforming the broader market.
Fair point. So while the rest of the market may grow at probably 13% earnings growth, banks could report 20%. That's the big takeaway from Suresh Ganapathy. And very importantly, old private sector banks, the story is turning. This is a story for another day. First it was Federal, then now RBL, now CSB turned, City Union. That's a story to be narrated on another day. Thank you very much, Suresh, for joining us. We have to wrap up on Bazaar. Short pause just coming.
Hindalco, the top Nifty lows are down over 4% as subsidiary Novelis reports a weak second quarter on expected lines, higher estimated capital expansion costs, which now stand at 5 billion versus 2.5 billion. Earlier also play spoil sport for the stock.
Paint stocks surge on positive sentiment as the CEO of Birla Opus Paints resigns. Analysts suggest that growth for Birla Opus has slowed down in the last 6 to around 7 months. The management of Berger Paints tells CNBC-TV18 that the impact of competition will continue to reduce and the rival Opus will not be able to cut prices further if they want to be EBITDA positive. Brokerage Nomura, they have upgraded both Asian Paints and Berger Paints to buy rating.
Shares of Britannia gain after a beat on profit and margin in the second quarter. Rakshit Hargave from Birla Opus now joins in Britannia after, as the CEO. The management also highlights a short-term impact from the GST transition in the quarter gone by the street, betting on volume recovery in the second half.
Delivery trades under pressure as the company slips back into losses versus a profitable quarter last year. However, the revenue sees a 17% growth on a year-on-year basis.
And shares of Reddington rise over 10% on the back of strong September quarter earnings. Profits jump over 30% on a broad-based growth across markets, while revenue sees a 16% uptick.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. Well, Mangalam, market's a little under pressure, but I think we've got an MC Pro idea, I think, that's coming in there.
Yep, it's an idea for profit coming in, even as the Nifty is slightly below that 20-day moving average. And this one comes in from our colleagues at Money Control Pro. Sachin Pal joins in with the stock.
Okay, all right. I think we'll get that, idea a little bit later. But let's focus on a big deal that was announced earlier. That was with regard to Infra going ahead and, buying Tata Steel's ferrochrome unit. To help us out with a quick analysis on that, in just a while from now, we'll have Parthiv Jonsa, who will be joining in and, in fact, giving us his view. In fact, let's get Parthiv Jonsa and get his view with regard to the deal itself. Hi, Parthiv. Good morning. Good to see you win. Tell us, what's your view on the deal? How positive it is for Infra and your view on the stock?
Hi, Nigel. How are you?
All well, Parthiv. Initial take?
It's quite positive. Really excited because eventually, M5 is taking organic plus inorganic from 284 to 384, and then eventually this 150 from the acquisition will be added, taking them, basically catapulting them to being the 6th largest globally and the only Indian player who is, in the top 6 or 7. So the deal is very, it's really constructive, taking or practically doubling down the capacity in next maybe 6 to 8 months kind of a time frame when even their greenfield facility of 1 lakh ton comes on stream.
Okay, and your target price earlier was around 1,510. You're holding on to that, or you're waiting to hear in from Mr. Panda to see whether you want to revise that or not?
No, we'll definitely revise it. We'll revise it, post tomorrow's call. Right now, I'm holding it till 1,510. That's a substantial upside, even considering the current CMP. But definitely, this deal gives a lot of headroom to grow as far as your capacity and as far as your numbers are concerned.
Right. I don't think you'll have to wait for tomorrow's call, because on the call right now is Mr. Panda. So maybe you'll have to, revise that after this conversation itself. Mr. Panda, congratulations. Nigel.
Yeah, well, Mr. Panda, congratulations. This time, Mangalam and me don't have to, tickle you whether or not you're going to do it or not. The big deal has been announced. The marriage has been announced between Tata Steel as well as Infra. And it's going to be taking you all to a different scale. But we need to understand a few points. So congratulations on this inorganic growth.
Thank you very much, Nigel, and to Mangalam as well. Thank you.
Give us a few details. What is the net working capital that will have to be added to the cost of acquisition of around 610 crores? And also, what is the cost to effectively ramp up this acquired 1.5 lakh tons?
So, Nigel, as you know, what we have announced is the acquisition of the unit at Kalinganagar, which is operated by Tata Steel. And a lot of strategic synergies there because it is literally, I think, 500 meters away from our greenfield project. But getting to the specifics of the deal, the base consideration is 610 crores. There is a GST component to it being an asset transfer, but we will get input tax credit for that. And in terms of net working capital, while it is something that will be worked out on the last day, on the day of the deal closure, but we expect that to be around 50 odd crores. So in that range. And the other question you asked in terms of capex, as you know, there are 4 furnaces adding up to 66 MVA, which is operational, and a 33 MVA furnace, which is under construction. So as far as bringing that to commissioning stage is concerned, we expect it to be around another 50 crores. But I must mention here that we have done a due diligence, albeit a very thorough one. So it is only when we are in control of the plant that we will actually dive deeper into the details. But we are fairly confident that the outlay will be in the range of 50 crores.
All right. So, put everything together, 610, add another 100, 140 crores approximately. It will still be around 750 crores that you'll be spending for around 1.5 lakh ton capacity, which effectively, that will be lower than what you did organically itself. I think you did close to 900 crores. So it seems this inorganic deal seems to be good. But the crucial factor is going to be on chrome ore, because chrome ore globally itself is in short supply. So to run this unit, how much of the chrome ore will you be getting from captive sources, and how much will you have to buy from outside? And I've been noticing, in the last year or so as well, you mined a higher proportion of chrome ore. So you were bracing yourself for capacity expansion. Please go ahead.
So just to put any speculation to rest, we will be meeting all the chrome ore requirement for our current capacity plus greenfield plus acquisition entirely from our captive mines. We are not looking at buying any ore from the market. And as you said, for the last year and a half or so, we have been carrying a little bit of extra chrome ore, but that's because we were gradually stepping up the ore raising. As you know, we have gone from 6 lakh tons to crossing 7 lakh tons in FY25. And in FY26, we are targeting about 8.5 lakh tons of ore. So we do have about, I don't know the exact number, but we do have about 4.5 lakh tons of ore in stock, as well as some low-grade ore, which we can use for blending. So all in all, when we look to scale up our output, our steady-state production has been about 260,000 tons, give or take a little bit. In FY27, because we are, we will be ramping up both the acquisition as well as the greenfield. So we are targeting about 400,000 tons of production in FY27. And which will further go up to about 475,000 tons in FY28. Although there could potentially be a slight upward bias to that, depending on how fast we are able to ramp up our ore raising.
Mr. Panda, congratulations on this deal. I may not understand the specific modalities of where you get chrome ore from and what you do in terms of capex, etc. and stuff. But as a true blue Marwadi, the one thing that I want to know, 650 crores is what you are investing in increasing your capacity. What kind of incremental EBITDA do you get from this? FY25, your EBITDA was close to around 530 odd crores. Once your capacity doubles, will your EBITDA double or will it move faster than that because of the synergies that you will get here?
So, Mangalam, that's a very interesting question. So there are two things. I mean, EBITDA is obviously a function of the selling price as well as the costing. Now, selling price, as you know, we don't really look beyond a couple of quarters. But having said that, the market dynamics are such, South African ferrochrome production is sort of winding down at the moment in that tussle for better electricity rates and all that. So, net, it is winding down. And that is being compensated to some extent with Chinese output, which is higher cost than us for sure. So that being said, there is an element of cost savings here as well. Because keep in mind that Kalinganagar is logistically far more, attractive than our Therubali unit, for example, where we have a noticeable, both inbound and outbound logistics cost. And while in the near future we are not looking at sort of reducing capacity at Therubali, but as we ramp up output at Kalinganagar, both in terms of the acquired unit, we do have the capability and this to add yet another furnace in our greenfield site as well. To that extent, when we start shifting some tonnage towards from Therubali towards Kalinganagar, there will be further cost savings. But for the moment, you're going to see a significant volume jump. And as far as prices are concerned, you are seeing, prices have moved up significantly to about 1,15,000 to 1,18,000 rupees a ton, and around between 102 to 105 cents internationally. So that is in Q3 itself, you will see ongoing quarter itself, you will see a noticeable jump, which we couldn't quite get in Q2 because, as you know, a lot of our tonnage is booked on a quarterly basis, and even some of the other tonnage which is booked on a monthly basis. You really started to see the price move up in the in the month of September. But as far as the ongoing quarter is concerned, we are seeing both a higher benchmark price as well as higher spot prices. So that should lead to definitely better numbers. And for the in the near future, we are seeing that trend continue.
Yeah, I've seen in the past, you've normally done a rough EBITDA per ton of around 20,000 rupees. So if I put it mathematically, by FY28, your EBITDA, going by the current dynamics, should be approximately 1,000 crores. Is that doable? Things could fluctuate, but going by the ferrochrome, ramp up of production and the shortage of chrome ore, 1,000 crores of EBITDA looks possible by FY28?
So, without committing to that number, I would say yes. The reason, and let me be clear, I'm not, as you mentioned, our steady state EBITDA is probably in the range of about 18 to 20,000. But there are peaks and there are troughs, because in the recent past, you have seen the lowest is about 450 to 500. And not so long ago, we were at about 800. So there are peaks and troughs. But if you take a 18 to 20,000 rupees per ton EBITDA, I think that is doable, unless there are any surprises in terms of commodities or whatever. But I'm not the expert on that.
No. But would there be any structural advantage beyond this 18 to 20,000 which you've been getting, irrespective of the cycles, on holding scales and obviously having your own chrome ore? Can this 20,000 structurally improve to say 21, 22,000? And taking away the cyclicalities out here, that's what we're trying to understand.
See, structurally, there will be some advantage when we, because the capacity is, if you look at the weighted average EBITDA cost, the more we produce, towards the chrome ore, closer to the chrome ore mines, the better our margins will be. So, but that will take a few, 2-3 years to realize. So structurally, yes, we do anticipate some improvement in that, but, that's not going to be immediate. Okay. But as I said, there is some advantage of scale as well.
Got it. All right, Mr. Panda, so you have given us a preview. We have managed to give the street the trailer. The analysts call tomorrow. Maybe they get further details. But as of now, second half of the year profitability is looking better. Your aspiration is maybe going towards 1,000 crores of EBITDA, not a guidance, but an aspiration out there. And there are synergy benefits that will play out. Thanks a lot for joining in. Parthiv?
A doable aspiration.
Doable aspiration. Got it. All right. And any equity raising plans you have?
Nothing at the moment. As you
Everything will be internal accruals?
Internal accruals. We do have some undrawn term loans for our expansion. But depending upon how the markets play out, we have the flexibility to draw down on that term loan if required.
Okay.
But, we will evaluate that.
All right. Parthiv, very quickly, call on the stock now that you've had a few more details. If you want to tweak things.
Nigel, again, as Sir said that there will be strategic advantages coming in 27-28. I genuinely feel that achieving an EBITDA of over 20,000 is possible in this story. So at whatever the Sir has given a guidance at, say, 475,000 tons kind of a production number, and even if you just do a very simple back of the envelope calculation, it gives you a rough EBITDA of close to about 1,050 crores kind of a number. But leaving the cyclicality aside, if you see a long-term quarterly average, post 21-22 also, on a quarterly basis, they have done 22,000 kind of an EBITDA. So I'll stick to that 22-23,000 EBITDA per ton.
Take that point. Thank you so much, Parthiv and Mr. Panda, for joining us, detailing all the modalities of this deal and, laying it bare for the shareholders out there. That's about Indian Metals, currently seeing a wee bit of profit booking. But remember, the stock obviously has seen a rally of over 100% in the last 6 months. On the back of this deal, the stock sees some profit taking. We take a short break, come back on the other side. We have the management of Castrol joining in to discuss their September quarter earnings. Welcome back. You're watching us here on Chartbusters. It's earnings thick and fast. The one that is on our radar right now is Castrol India. Reported a decent set of numbers in the third quarter of calendar year 2025. Kedar Lele, the managing director at Castrol India, joins us now. Kedar, congratulations. 5.5% revenue growth. If you could tell us what the volume growth was, and at the same time, what is likely in the next couple of quarters as well, and also on the margins.
Right. Good morning, Mangalam. Always delighted to be here. And thank you very much for the kind remark. Indeed, this has been a very, very resilient quarter for us. When all of us have been complaining about the extended monsoon, fewer days of mobility, I'm delighted that we have been able to turn a 7% volume growth in a very mature industry like automotive, lubricant, and beyond. With that, our YTD volume growth is also 8%, and 5.7 adds up to about rounding up to 6% kind of a value growth, gives us a 10% profitability as well. So I've been really delighted that dynamic management of our resources, channels, and a few introductions that we did have worked out really well for delivering profitability while we have also delivered volume growth. So that balancing has worked really, really well. It augurs well for continued performance in the similar bracket. I've always maintained that this organization should be known for growing faster than the market, and we have been now showing this for multiple quarters. We're growing 1.7 times of the market in terms of volume, and we are maintaining our profitability in the guidance range. And this quarter, actually, it's come out towards the positive side of the guidance range. So I should be saying that I want to be cautious, and in the future won't go beyond 21, 23 that we keep saying as the frame within which we want to deliver consistent results.
All right. So you're saying that volume growth continues in high single digits and margins will be in that vicinity of around 21 to 24%. Is that correct?
That's right.
You want to narrow down that margin guidance is quite wide, right? 21 to 24%. If you hint, will it be closer to the upper end or to the lower end?
We have been closer to the upper end, but there are times when they are disruptive, as you know. And I must remind you that this year has been terrible for Forex. Every year we see a dollar INR ratios changing by a couple of percent points. This year has been really, really bad. We've seen now INR dollar conversion at 89, 90 sometimes. And with that, most of our products, we are a hydrocarbon derivative based organization. Most of it comes from outside, and import makes it really expensive for us to manage it. And as you would know, most of our consumers are in India. We sell in INR. I can't be taking pricing to set off the Forex hikes that I see. So we need to manage it prudently, manage it for a long term, and then make sure that our consumers do not see a price increase with dollar fluctuation. That, along with the crude oil changes, makes it quite volatile for us to manage the cost environment. And yet I'm able to deliver within the frame that we have advised. I think investors and stakeholders see no shocks in our delivery, and I'm very happy about it.
Take that point, Kedar. Thank you for laying the business out for us. High single-digit volume growth continues for you. Margins in that band. Not worried about fluctuations in oil prices, etc. as well. It's a wide band, but you've been at the higher end of that band, etc. No problems with the business, no problems with the brand equity, and no problems with the kind of market share that you have as well. And you do have a foray into the EV fluid business as well. So that keeps you at least, future ready for any sort of shift that were to be in the automotive space. But speaking about future ready, I have to ask you this. There have been a lot of management changes in the FMCG world. Yesterday itself, Rakshit left from, Birla Opus to join Britannia. And we know that you are, leaving from Castrol by the end of this year as well. You have, Shaugata Bashuroy joining in as the MD. Wanted to understand basically what caused this decision. And at Castrol level itself, BP has been wanting to offload their stake here. So what's the update?
Okay, so let me first answer the question on future fit of the portfolio and how we will tackle the future. You might have also seen that we announced a MOU with VinFast Auto. And now it's a new company, Vietnamese major coming in with EVs, and they've tied up with us where we have given them access to reliable and accessible after-sales service through Castrol Auto Workshop. We call them CAS. And that allows for Castrol brand to be available not just for lubricants and for EV fluids, but also for services. Similarly, this quarter was the time when we launched something called helmet cleaners. Now, there are millions, 240 million bikers in India, and all of us suffer from helmets not being clean, and grime and dust of our helmets actually makes it difficult.
I'm sure we'll ask these questions. We'll ask these questions to Saugata when we speak to him next quarter. But we have to ask you about where you're going.
Where are you going?
What does BP do with its stake?
So I have to absolutely be sure that I'm fixing the ground and building the foundation for Saugata to take it to the next level, and he will be able to. Saugata is a 26-year veteran of the company. We couldn't have found a better successor, and board has decided that he will be taking over from me as of 31st of December, end of business close. And I am yet to finalize what I want to do. You know, this is a completely personal decision. There comes an opportunity in your life when you want to do something that you're deeply passionate about, and that's what I might end up doing. So give me some time. Winter months are here upon us, and I'll take a call very, very soon.
And what happens to BP's stake in Castrol?
That's
or you want to leave that to Saugata as well?
That you have heard of. It's in public domain that the decision should come in very, very soon. BP's performance is increasingly looking better. You might have seen earlier this week the results came out. And strategic review of Castrol is a decision that has been made. So we are all waiting for the decision, and post that, Castrol will have an independent future in the world for automotive lubricants and beyond.
All right, Kedar, we appreciate you joining in. I think the last time in this jersey on this show. But wishing you all the best for the next innings, and best wishes to you. We'll wait by to hear which is the new.
Thank you very much. Look forward. Thank you very much.
Time to slip into a break. Come back, continue focus on markets. Don't go anywhere. Welcome back. Well, the markets continue to trade in the red. However, there's one index that's just on top. Well, that's moved into the green. That's the Sensex. But otherwise, some kind of pressure is what we're seeing in the breadth of the market in favor of the number of stocks that are declining. But we have run out of time on this edition of Chartbusters. Stay tuned. The team of Trading Hour is waiting by.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal, with me as always Hormis Fatakia and Reema Tendulkar. Good morning guys, we come back after a holiday, so fresh as we can be, but the Nifty a little tired I think, but yes, it has recovered from the lows again. So the Sensex has turned into the green after being in the red for a while. Nifty did see almost 100-point downtick from the highs of the day, but it is attempting some recovery as we speak. So 32 points lower right now after the recovery that we are talking about currently. The mid caps, they are underperforming, 0.4% down. The advanced decline ratio is in favor of the declines. So there are more declining stocks, around 2,100 of them versus 700 stocks on the advancing side. We have some stocks in the Nifty pack which are at the day's high. There's Ultratech Cement, there's Cipla, Dr. Reddy's, Wipro, TCS. So some of these stocks should be on your radar. But earnings, they continue to be the focus point, and a lot of action that we're seeing otherwise in the market as well.
Indeed, and Hormis will get to these individual stocks, but some that stand out. Look at something like an IGI. The street was so worried about IGI because of the rise in lab-grown lab-grown diamonds, etc. But this time, the numbers look good. 21% top-line growth, higher than the revenue growth we've seen in the last 2 quarters. And stocks like that are racing away. But for more individual movers and shakers, Hormis is now standing at the big wall. Hormis.
It's difficult to put a list of stocks when there are almost 100 reacting to results over the Tuesday and on yesterday's holiday as well. But there's some positive earnings reactions and some negative earnings reactions. Let's start with the positive ones though. CCL Products is up 12% as of now. We have already 40 lakh shares that have been traded. The 20-day average is less than 30,000 shares. Reddington also seeing double-digit gains today, but look at the volumes here. 2.5 crore shares have been traded. The 20-day average is just 13 lakh shares. And same is the case for Gujarat Pipavav. The stock is up almost 8 to 9%. And 1.5 crore shares have been traded compared to a 20-day average, which is just 6 lakh shares. There are a lot of negative earnings reactions that have come in today, and EPAC Durables is one of them, down over 10% now. 18 lakh shares have been traded. Here too, the 20-day average just 1.5 lakh. Delivery is down 7% after its results. Here too, more than 1 crore shares have changed hands. The 13 lakh is the 20-day average with almost 7x of that. And Grasim, of course, news flow, earnings, all of it coming together with the decline that's been seen in the stock today. 7.5 lakh shares have been traded. The 20-day average only less than 80,000 shares. And Rima mentioned IGI had more than 35 lakh shares that have already been traded, 8.5% higher on the stock. 20-day average less than 3 lakh shares. But despite this move, the stock remains below its IPO price of 417 a share.
Take that point, Hormis. Thank you so much for joining us. So let's talk about a corporate conversation now. Reddington reported their Q2 numbers. The company saw their net profit surge nearly 24%, while revenues rose 17% versus last year. V.S. Hariharan, who's the managing director and group CEO of the company, is joining us now on the back of these good set of numbers. 12.5% higher is where the stock is. Thank you so much for joining us today, Mr. Hariharan. Q2 was good and the stock price shows that as well. But what is the outlook on Q3? How has the demand panned out so far, and which geography is now expected to do well for you?
Thanks, Sonal. Thanks for having me at the show. I just wanted to correct the profit growth. Actually, is 32%. It's 388 crores. And so we had a really good quarter, a balanced growth across all geographies we are in: India, UAE, GCCL, we call the GCC countries, and Saudi. All of them grew 23%, India and UAE and GCCL, and Saudi was at 10% across all business units. SSG, the Software Solutions Group, grew at 48%. The mobility, the smartphone business grew at 18%. And the technology solutions and the PC business grew at 9 and 11. The outlook remains very positive still. All of the geographies we are in are experiencing good tech investments and growth. Clearly, cloud, the cloud business, cloud security, software solutions investments in all the geographies we are in. The infrastructure is growing. On the back of that, we are able to sell more of these. The data centers are also growing, so we'll get a portion of that. And it's exciting to see the PC business finally coming back. This quarter, we had a double-digit growth on the back of a bit of 10 to 11 refreshes, as well as a slightly higher AI PC penetration. And the second half, we expect more of that. So all of the businesses, software, mobility, and the PC business are all expected to grow. And we do have some big deals in the technology solutions as well in the pipeline and the funnel. So overall, second half looks positive while we have had a fantastic Q2.
What's the outlook on margins, Mr. Hariharan? I think last time you indicated that there could be some pressure on gross margins due to higher large deal wins. And you had given a guidance, I think, operating profit margin of 2.3 to 2.5% ex Arena.
Yeah.
Do you maintain that, or is there going to be a change?
Yeah, thanks, Rima, for the question. Yes, absolutely. So this the key driver is Software Solutions Group, which is growing at 48%. It's at a higher margins, coming at higher margins. It was 15% of our business last year. And this quarter, we reported 16% of the business comes from Software Solutions. So that's shoring up our margins. Mobility business also this quarter has delivered higher margins. We've had good growth, but there has been constrained capacity as well. So there is a good demand in the premium segment, particularly at higher ASPs. And the PC business with the higher AI PC penetration, we do expect to see a better ASP, average selling prices. So our guidance still remains at 2.3 to 2.5 in the EBIT part of the EBIT metric. Yes.
Okay. And Arena, which is, I think, the Turkish business for you. What is exactly happening over there? And last time you indicated that you are exploring options on what best to do with Arena. I think you're even open to the idea of divesting it, selling it.
All right. So, as you know, Turkey has been stressed due to a combination of reasons. Inflation rates were high. Interest rates on lira were about 50. They have come down to below 40 now. And the market is stressed because the business opportunity is declining. And because of all this, there are also concordat cases like bankruptcy cases, etc. So we've been progressively taking actions over the last few quarters. And this quarter, we actually exited from the Vodafone Arena Connect business. And that was a business which was largely centered around lira. High working capital requirement and at high interest rates, 40+% interest rates, it was becoming a drain. And so we exited from that. It'll take 2, 3, 4 months to execute this exit. We are increasingly focused only on the US dollar business in Turkey and focused on the IT business and really getting the good quality business focus. So we see progress. We're also working on working capital improvements, OPEX improvements. So progressively, we are improving our business there, and we should see our losses go down and turn to profit in the next 2 quarters at most.
Mr. Hariharan, your value business, you have earlier highlighted that you wanted to keep it at 35% as a contribution to the overall business so that to sustain those margins at higher levels. What was the contribution of the value business this time around, and what trajectory do you see for the second half?
You're bang on. So this quarter, the contribution was 35% between Software Solutions Group and the Technology Solutions Group. The contribution was close to 35%. The mobility and the PC business being the balance. And we expect that only to grow in the contribution because the Software Solutions business is growing very rapidly for us at 48%, as I mentioned earlier. And the Technology Solutions piece of the business, we see a lot of data center deals and a lot more deals. So we expect that contribution in Q3 and Q4 to increase only because typically second half we get more value business because of year ends and budgets and all of that. So we do see the contribution going about 35%. We're already at 35 and it'll go more.
Okay, we take that point, Mr. Hariharan. Thank you so much for joining us today with the insights on the business going forward and the growth plans as well. That's Redington, the stock up around 14%. But Ola Electric, that is the stock on our radar, post their Q2 numbers. Sudarshan is here with the detailed analysis. Sudarshan?
So 2 parts in Ola Electric. First, Q2 earnings are looking largely weak. And second, on the outlook front also, company has cut the guidance for FY26, not only for revenue, but also for volume and the margin part. So just if I can talk about the highlights, it was a weak Q2. Losses, company continues to report losses on the consolidated basis. In Q2, the loss was of rupees 418 crore versus loss of almost 500 crore in the same quarter. Revenue has seen a sharp fall of almost 43%. And on the EBITDA front also, it has reported EBITDA loss of around 203 crore versus loss of almost 380 crore in the same quarter last year. Now coming to the outlook. So for revenue, company was earlier seeing revenue for FY26 in the range of 4,200 to 4,700 crore. Now that has been cut to 3,000 to 3,200 crore. For auto business EBITDA margin, company had earlier said that in FY26 it's likely to be more than 5%. Now company is saying that it will be around 5%. On volume front, earlier it was around 3.25 to 3.75 lakh units, but now if you do the calculation in first part of FY26, company did the total volumes of around 1 lakh units. Now they are saying that it would be around 2 lakh units. So not only the earnings are weak, even outlook remains muted.
Weak earnings, weak results, guidance cut, and the stock now down around 2%. At 49 is Ola Electric, not only below its IPO price of 76, but also below its post-listing high of 157. Take a short break. The spotlight on the crypto markets on the other side. Manisha Gupta joins in with Mridul Gupta from CoinDCX.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and joining us now is Mridul Gupta. He's founding partner at CoinDCX. Mridul, hi, thank you so much for joining in. And what a start to the month of November. While we have seen an all-time high of almost 126,000 on Bitcoin, we've seen that 100,000 breach, even if for perhaps a few seconds, but the volatility has come back.
That's right. And, when it was at $125,000, it came to $115,000. We saw a lot of people participating in the market, and then it again tanked because Fed did not announce a rate cut. Time and again, what it keeps reminding us, Manisha, is that how the prices in the short run gets impacted by all the actions happening across the globe, be it geopolitical environment around various tensions on the cross borders, be it Fed rate cuts and how the US economy behaves, or be it anything to do on the crude oil price movement, etc. Right? So I agree, the market has been very volatile. Good time to start thinking about investing into the market,
Okay.
but at the same time taking a judicious outlook by investing small amounts recurringly versus bulk amounts in one go.
While, of course, there's a lot that's been happening crypto-specific through the year, Mridul, but how would you say, or how would you see, rather, the impact of all that's happening in sense of macro markets here? Is crypto a risk-on or a risk-off asset class? And how long before we see it happen as a mainstream asset class?
It's a 100% risk-on asset class when it comes to short-term, but it's a 100% risk-off asset class when it comes to long-term. So, tomorrow, if, for example, there is more chaos in the world, as a store of value, Bitcoin and other crypto asset classes will shine. But in the short run, when you see steep price movements up or down, it is completely based on the sentiment of the people, because the money is moving from the fixed income and the money market instruments to a more risk-on instruments like equities, etc. And Bitcoin does end up showing behaviors of a risk-on asset class, at least in the short run. So the fundamentals remain strong. So even if the price has moved from 125, gone to a 98, come back to a 103, the fundamentals still remain strong. The inflow of capital, the inflow of users, the inflow of different platforms building on top of crypto, and on top of it, all the regulatory developments happening, that remains strong. But it's very, very important, and thanks for asking that question. In the short run, if a person is investing into the asset class, he should think of it like equities. In the long run, if he's investing into the asset class, he should think of it like gold.
All right. I remember you telling me that it's a global investment asset class in sense of its manner. Mridul, how would you advise people investing within this? Would you say SIP is the best way to do it? And also with the kind of institutional adoption, corporate adoption, even treasuries getting into it in the global markets, how would you look at 2026 panning out for it?
Yeah, so I think the good thing about the markets is that it has room for every kind of investor. I would say that if you have not started your crypto journey yet, come and start it with a SIP product. We also have it on CoinDCX. A lot of platforms have it. It helps you make sure that you're not timing the market and you're always in profit. So we have seen a lot of people put SIP on our platform, and all of these people have been profitable over a longer run. Right? So if you're starting your journey, if you don't want to go into the technicals of the market, start with SIP. If you have evolved to a level above, and you are able to understand the dynamics of the market, you could try your luck with leverage products. If you don't like leverage, but you are deep into crypto, you could try with the newer projects coming on the blockchain and getting launched and getting traction. You could go into the fundamentals of these projects and start doing more long tail token investing. But I think different flavors for everyone. But the bulk of the people who have not yet started their crypto journey should definitely look at SIP. It's the single most useful tool on any platform to make the user profitable over a long run.
Mridul, as you mentioned that with the kind of correction that we've seen in prices, perhaps a good time to start investing within. Going forward, as we are talking about macros, if a US Fed rate cut does not happen in the month of December, and with the kind of moves that we're looking at as we get into the new year with dollar index slightly on the higher side, slight risk off in the international markets as well, how is all of this going to impact the prices?
So I would say that any risk-off sentiment does have the tendency of bringing crypto prices down, starting with Bitcoin and then moving into other tokens. I would say that a lot of it is baked into it already. We have seen 20% price correction over the last month. So a lot of it is baked in already. But if the market markets are markets, right? If the market is expecting a rate cut, but the Fed does not do a rate cut again, we will see some price correction happening again. And hence, especially in the volatile times, I urge investors to, number one, if they're trading on leverage products, reduce their leverage. Don't trade 10x, maybe trade at 3x or the 4x. Number two, don't trade in illiquid tokens. So focus more on blue chips, focus more on mid-tail, but don't go towards a long tail because the price movements there can be 100% up or down. And number three, if they don't know what to do, then instead of being completely isolated from the market, jump towards a spot portfolio and start doing SIPs. Because that way you are more tuned into the market. You keep understanding the fundamentals and the technicals, and you are not putting a lot of capital at risk on the trading platform.
All right, Mridul, thank you very much for that very, very sane advice. And with that, that's all the time that we have in this segment. Appreciate your time. With that, we'll slip into a short break. More on the markets on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Let's put the spotlight on the AI sector. Lim Wenlong from White Oak Capital is now joining us here in the studio. Thank you very much. for joining in here. So you're sitting in Singapore and you're making the investments for White Oak Capital in emerging markets ex of India.
That's right.
Right. So tell us what you like right now, first as a top down, and then we'll get chatting about AI and whether you fear that there is a bubble building up.
Sure. So at White Oak, the way we invest is very much bottom-up stock picking. So we're actually finding ideas all over the markets. So be it the sectors that you've just touched on, be it things like electric vehicles, humanoid robots, sectors like entertainment in Korea. So, companies that are involved in K-pop. So they're across emerging markets. We're genuinely finding ideas all over the place at the moment.
Okay, and how do you feel about AI? There is fear of a bubble building up. Where do you stand on it?
So I think it's a very interesting place to be at the moment. So if we think about past bubbles like the dot-com bubble that we've seen, the internet bubble back then, it was all about hype and there was no earnings growth to go along with it. But today in the AI world, yes, there is definitely some hype and some excitement there, but the earnings growth that we're seeing is actually real. So you're seeing NVIDIA and a lot of these other companies delivering numbers. So if we look at the supply chain for AI hardware, that's actually coming almost exclusively from Asia, particularly Taiwan and South Korea. So a lot of opportunities over there.
So which part of the value chain is looking very interesting to you, where you don't think there's a bubble or a valuation trouble right now?
It'd be fair to say that there is excitement in most parts of the supply chain, but I think if you kind of look beyond the obvious names. So one thing about White Oak is we have teams on the ground in a lot of places and a very big team. So we like kind of digging through the weeds for maybe the lesser known opportunities. So if you look at maybe the hardware that supports some of AI, so be it power supply or be it custom chip designers, we think in these more niche sectors, you might find better opportunities.
But there has always been this worry about, you mentioned there is earnings growth, but is it justifying the kind of numbers that are being thrown out, right? Every other week you see a $50 billion, $100 billion deal that OpenAI is signing with companies. Where are they going to get that funds to finance those deals? And when do you even start realistically expecting a return on such kind of investments?
So I think the second part of the question is the critical one, because the first part, if you think about the hyperscalers who are spending the money, Google, Amazon, Meta, they have a lot of cash on their balance sheet. So a lot of this spending is being funded by cash at the moment. It's when companies like Oracle who start funding things from debt get involved, that's when the risk level starts to tick up. So in terms of the return, that's the critical question, right? I think that's the harder question to answer, because at the moment, for a lot of these companies, AI is a winner takes most market. So this is something that they have to spend on. Otherwise, their future business model is at risk. But at some point, you're right, that return will need to be earned, and that's what we're all waiting to see, when and how that comes about.
So, when we talk about AI, is usually what's happening in the US, as Hormuz also mentioned, we are talking about those big deals that keep getting announced. How is Asia positioning itself when it comes to AI? We largely talk about China, but there's Korea, you named other countries as well. Where does Asia stand in that point of view?
I think at the moment, Asia is very much the picks and shovels. So there is no AI without the companies in Taiwan, without the companies in Korea. All these companies that supply the tech hardware that goes into AI, we actually think that they might offer a very attractive opportunity at the moment, because whilst we argue about, who's going to get a return on their capex, the companies who are supplying the picks and shovels, they don't mind because they're the ones benefiting from the capex spend.
Okay. So that becomes the opportunity as compared to the hyperscalers, is what you are trying to highlight.
Yes,
so it's more attractive in Asia versus the US markets right now?
I would say, if you're picking between the hyperscalers, you're kind of deciding who has a better model, who might end up being the winner, and you have to make a decision on that. And sitting here at this point in time in such early innings of the AI revolution, it's hard to do. Whereas within Asia, companies who are there in the supply chain, they're supplying to all of these guys. So to them, they're not so bothered with who ends up winning, because they'll be selling to whoever is left.
You will be comparing notes with your counterparts in India when it comes to technology. What do you all make of India's semiconductor aspirations at White Oak Capital?
Yeah, so this is a really interesting question. So I've had a lot of conversations with Neeraj, who covers that from Mumbai here. I think in the initial innings, if you talked maybe 12 months, 18, 24 months ago when semiconductors in India was first being announced, there was a lot of excitement that was going through the market, and maybe some of the deals that were being announced were maybe less realistic in terms of what could be achieved. But sitting in Singapore today, looking at what's happening in the Indian market, it's actually a lot more exciting because I think India is now playing to its strengths, a skilled labor force, abundant labor, entering the back end part of the semiconductor process where these kind of advantages make a difference. Then you build up the skill set there and then you start integrating into the more value added parts.
So, when we talk about, okay, the earnings growth that would come by or the opportunities that we have in the AI space, which Asia can build on, what are some of the risks in the immediate future that you think investors should be wary of?
I think within a sector where there is as much excitement as AI, it's always short-term volatility that happens. I mean, we saw it just last night, 2 nights ago in the US.
Yeah.
Just, a little bit of commentary and you see some volatility. So I think having the appetite to digest that kind of short-term volatility is one thing. But maybe the second part to think about is there are some companies where 80-90% of their revenues would come from AI at the moment. If that AI spending were to go away, these companies would be very badly impacted. But equally, there are a lot of companies where AI is a nice growth driver, but maybe 20-25% of revenues. If AI were to go away, those kind of companies would be more sustainable. So there are different ways to approach this, and it really depends on your appetite for risk and how you want to play it.
Interesting but short conversation. Long, thank you so much for sparing time and joining us today, and look forward to having you more often.
Thanks for having me.
A good stay.
Thank you.
Take a short break here on Trading Hour. Back with more on the other side. Stay tuned. At the lowest point of the day now is the index, but the one sector that has been in the spotlight all through the day has been the paint sector. That is our big story, and this is after the Birla Opus CEO Rakshit Hargave stepped down. Mangalam is here with more on this and the potential impact on the sector.
Never short of excitement and color, the paint industry. What was supposed to be an insipid quarter and a midweek holiday had a splash of management change, and that exactly has now caused a flutter among all the paint stocks in today's trading session. So the big news that came in yesterday was Rakshit Hargave has resigned as the Birla Opus CEO to pursue an external opportunity, which we were apprised of yesterday itself, where he will now join Britannia as the CEO for the next 5 years. Remember, Rakshit was, appointed at Birla Opus and stood through its launch 18 months into Birla Opus's launch, all the 6 factories coming on stream and them reaching a near 1,000 crore per quarter sort of run rate as well. Birla Opus on its part says that they continue to gain market share, and now their market share is double digits if you compare, with the organized decorative and putty industry, and the total capex that they've spent is close to 9,700 crore rupees as against when they started out the money that they had earmarked, which was close to around 10,000 crore as well. So a lot of good things done for Birla, and now this Rakshit Hargave's resignation has caught the street by surprise. But on its part, Berger Paints this morning said that the worst of competitive intensity is behind, because now Birla Opus for the last few quarters has stabilized at 900 to 1,050 crores per quarterly run rate, and they can't discount any further if they have to reach their stated objective of 10,000 crore revenue and EBITDA break-even by year 3 and of operations itself. And Nomura, on the back of that, they've turned positive on the sector. They've said that competition headwinds are now behind. Remember, Birla Opus's 10,000 crore capex is deployed already. If they want to further disrupt the category, they will have to put in more money. And at the same time, these stocks have already seen a correction as well. Last financial year, from the peak, Asian Paints had seen a correction of almost 30-35%. From a valuation standpoint as well, the last 5 years, Asian Paints was trading at an average of 60-62 times 2-year forward earnings, and now it's come down to around 50-51 times itself. So with the worst of competition behind, raw material prices being benign, and at the same time, the best of demand ahead after an extended monsoon that impacted performance, the street believes it's time to now get positive on the sector. Nomura's actually upgraded Asian Paints to a buy with a target price of 3,100 rupees, and that is explaining the sort of red and green moves that we're seeing on Grasim and Asian Paints respectively. A lot of excitement, a lot of color. Let's see where it goes.
Oh yes, in fact, thank you so much for that, Mangalam. In fact, earlier we spoke to Abhijit Roy, who's the Managing Director and CEO at Berger Paints. Let's listen into excerpts from that conversation.
Quarter 2 of last year, since they had started just about that point of time, they had done about 450 odd crores as per their own analyst meeting, because it's not a published result, so we don't know. But it's around that figure. And this time they said that they have done about 110% odd growth. So we can assume that it's about 950, 960 crore, which is slightly below the first quarter of this year. And that's what they said, that they have done slightly below last year. Now, if you look at next quarter, and they have been doing around these figures, quarter 1 also was like that. Quarter 4 of last year was also similar. Quarter 2 of this year also is similar. So it's around that 900 to 1,050 type of level at which they have settled out. The business will carry on as usual. That will happen, but the tapering is also happening. We compete in the market by giving some discount to the leader as well. So it's not something which is very disruptive as far as we are concerned. So from that perspective, I don't see that, really impacting. They have also indicated that in 3 years they will become profitable. If they have to do that, they cannot, discount, massively from here on.
Time for a short break. We'll get you excerpts from our exclusive conversation with the management of SRF on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour in a rare and exclusive conversation. SRF's top management tells us they are looking at a 15% growth going forward in their consolidated business year after year. And also, I spoke to Mr. Ashish Bharatram, who is the chairman and managing director of the company, along with Kartik Bharatram, who is the joint managing director on business, strategy, tariff impact, and long-term growth plans, and a lot more actually. Listen into what they had to say.
Yeah, I think there's no doubt about the fact that tariffs have created a lot of uncertainty in the system. This 25% penal tariffs on India, I think, was something that we didn't expect. While President Trump has been sort of, he says a lot of things, doesn't do that, and then says something else and does something else. But I think this really hit us badly. And for the last 3 months, there's no doubt that the exports to the U.S. have been impacted. The US is a very important market, not just for SRF, but I think for a lot of companies out of India. So we are sort of hearing that, there is some sort of a deal on the anvil, and, but, we've heard about that in the past as well. But till we finally hear the announcement, obviously, it doesn't mean anything, but we're all hoping that that does come around, because the US is the biggest consumer market in the world. And I believe that we need to find an answer there.
Okay, and that's about the tariff bit. What about what's happening with the chemicals industry before tariffs? You have been changing your tones. It was, okay, there's some issue. Then you became cautiously optimistic. There was a time when the understanding was second half of FY25 could get better. But now it's second half of FY26. What's the long-term strategy on chemicals business overall?
So I think it's a bit of a mixed bag. I think we all need to understand, first of all, that when it comes to chemicals, it's not the US. The big daddy in the room is China, right? And China, I think, just post-COVID added so much capacity across various sectors. And, their philosophy has been that even if it means bleeding for 8 years, 10 years, etc., they get the support from the government to deal with those downtimes. But they just want to grab market share everywhere. And, that's basically been what their philosophy's been. So companies like ours, for example, have to find niche areas of being able to compete with them and so on. One of the sectors that we supply to in the specialty chemicals business is the agro sector. The agro sector, unfortunately, has also got very badly hit because of the tariffs and so on, because the US used to sell a lot to China. They've had a lot of soya, etc., that's lying around. Nobody's buying. So the agro cycle in the US is just going through a really tough time. So there is chaos in the system. And, what we thought would be a recovery in the second half of 26, I still feel that this recovery is going to take longer for it to come back. But on the positive side, we are seeing a lot more traction on the refrigerant gas side, etc., because to some extent the quota regime has come in America, the quota regime has come in China, and that's something that is going to probably play out well for us in times to come.
You have films, which is a big business for you as well. That also went through that uptick during COVID. We had supply disruptions, but now there's oversupply in the market. How do you decide that you have to put capex in an already oversupplied market?
So I would put it differently. I mean, again, yes, you're right that business is more cyclical than our chemicals business, and we have less of a moat over there that's compared to the chemicals business. But I think at the same time, we've got to understand that there are many opportunities. So one of the reasons we changed the name of the business from packaging films to performance films and foils is also because we're moving into a new sector in films, where, for example, we're getting into what's called capacitor grade films. These are used actually in the electronic space as capacitor films. We are in the foil business, for example. While we started off with packaging, our longer term goal is to get into battery foils. Similarly, we're looking at some new opportunities over there as well to come into new segments. So the idea is to move beyond packaging and get into certain other sectors which are a bit more niche. Obviously, that's something that we have to see how India's electronics sector grows in the next 5 years. But I think the push that the government is making in that area will help. Will help us sort of be able to take advantage of that. And I think, again, where SRF is able to sort of differentiate is that we're very comfortable working with the organized sector. I think we're very comfortable working where there are stringent processes, systems required, and I think those are the customers that we'll be dealing with when we get into the space.
So coming to the electronics manufacturing scheme, SRF is one of the participants, right? So what's the role that SRF will play in that entire scheme? What kind of capex will you be putting there? When does that start?
So it's a two-stage capex. The first capex is actually going to be online in February, and the second will probably be, we'll go to the board sometime middle of next year. As soon as we've got that streamlined, it is a very new technology to what we've done in the past. So we just want to make sure that we get our hands wet, we understand exactly what it's all about. And once we figure that out, we'll go with the second plant. But the total capex there could be in the region of around 500 crores. Over, so around 270 crores are going in now, then we'll put in the next.
Okay. What is the general asset turn on the entire capex that the company has, trying to understand the return possibility?
So we don't look at the asset turn as much. And I'll tell you again, the point that you made earlier that, sometimes turnover could be a little bit of vanity, because a lot depends on what your raw material costs are. So in a business like packaging, if you're in a down cycle of the petrochemical chain, then everything falls. So your revenue falls as well, right? So on the other hand, if everything goes up, then suddenly you find your revenues go up and so on, but your EBITDA margins fall. So if the raw material is lower, you normally end up with higher EBITDA margins, and if raw material is high, you actually end up with lower EBITDA margins. So our focus is generally on ROCE, because I think at the end of the day, what we're really focused on is, listen, for the amount of money that we've invested, what is the sort of return that we can generate. And so for the performance films and chemicals, our goal has always been to look at something in the region of 16 to 17% ROCEs, and the chemical sector upwards of 20.
So when you said you have to create value for the 50% remaining owners as well, do you think that would happen by demerging the three segments?
That's a question that keeps coming up every now and then.
It had to come.
No, I think it's a tough one, because one major advantage that we get is the fungibility of cash. So, for example, the technical textiles business is much more of a cash cow. And for us, in that sense, if that business was on its own, the question would be what would we do with the cash that it generates? This way around, when you look at it from an SRF's perspective, we're able to use that cash to actually grow the chemical business and the packaging films business. So, it's just a question of what actually makes better sense for the shareholders. But I'm not going to say that it'll never happen. It is possible that down the line, the packaging business might just grow to a level where, if it is actually now self-sustaining, it doesn't need any support, and then one could look at it differently.
When you said packaging reaches a certain level in terms of revenues, that's when you could think of getting it demerged. What is that revenue level or capacity level?
I think once I'm comfortable that, on a perpetual basis, maybe they can earn more than 1,000, 1,200 crores of EBITDA on a annualized basis, maybe at that stage one will be more comfortable looking at it.
Oh, okay, all right. So chemicals will continue to be more than 60% of your overall business?
For sure.
And what kind of growth are you envisaging? I'm not saying short term, but with the kind of investments that you have?
Yeah. Our aspiration has always been to grow in the region of 15% per annum. I think, when you grow at 15% per annum, you're obviously, growing at a level which is much faster than where the GDP of India is. Even if you take nominal GDP, you're growing at a much faster pace.
There's a capex announcement almost every quarter from SRF. It's known to be doing that. How do you decide where will the next leg of growth come from? And between the three segments, where do you think will the growth come from for SRF in the next 3 to 5 years?
So, Sonal, I think it's definitely going to be to a large extent from the chemical sector. I think, what we've been able to do in the chemical sector is really create this strong, what we call the chemical technology group, which is our R&D, engineering, and so on, to be a differentiator. Okay, I believe that for a country like India, we are now getting to a stage where the economy closing in on $4 trillion is going to require a lot more chemicals to be produced internally if you really want to keep making the leap. When we spoke about China in the past, I think what allowed China to grow exponentially was the fact that they just had every basic chemical available in their ecosystem, that it could move from here to there, and they could develop newer things.
I just want to add something there, Sonal. China has 40% of the world's chemical market in terms of production. We have 2.5 to 3%. So India is still minuscule in the world thing. So even when you add 1% or 2%, that means a huge amount for India, while it may not amount to a huge amount in the global thing. So therefore, I really do believe that the potential that India has in the chemical thing, and Ashish mentioned, especially those who have the R&D, who have the teams to be able to develop these new products, it is immense. There are hundreds of thousands of chemicals. The number is just huge, right? So many opportunities in many areas in terms of where one can look at growth in the chemical sector.
A very interesting and exclusive conversation with the management of SRF. Take a short break, but here's a programming note. The final countdown for CNBC TV18's most anticipated event of the year, the CNBC TV18 Global Leadership Summit. This year, the summit spotlights the India advantage, the country's unmatched potential in a shifting global order. Catch business leaders, policy makers, explore transformative strategies and groundbreaking ideas. Starting 8:30 a.m. on the 7th of November, it will be a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Tell us why you love CNBC TV18 by sending a tagline on the email address flashing on your screen, and you stand a chance to attend this marquee event. Welcome back. Just before we call time on the show, some commentary from Blue Star on the earnings call, as a result of which the stock has now slumped to the lows of the day. The two important takeaways: the management believes that the second half will be better than the first, but they are doubtful that it will make up for the loss that you have seen in the first half, and FY26 will be seeing flat growth on a year-on-year basis. The stock now down 2.5% after starting off higher. Take a leave on this edition of Trading Hour. From Zonal, Rima and me, thank you for watching. Halftime report on the other side.
Stocks trade with soft bias. In fact, mid-caps are the ones which are a big drag amid a rush of earnings. Metals and utilities are lower as well. Well, there are some gains eked out by consumer durables and the auto sector.
Novelis takes a hit on cash flows and EBITDA in Q2 FY26 due to the fire at its plant. A significant upward revision in cost for its capex also upsets and trims the return equation, leading analysts to downgrade Hindalco.
Grasim Opus Paints loses its CEO Rakshit Hargave to Britannia after 18 months since launch, causing some uncertainty over its leadership. Berger Paints tells CNBC-TV18 that competitive intensity in the paint sector has eased and Nomura upgrades Asian Paints, causing a lot of colour in the paints space.
Diageo says that its Indian arm, United Spirits, will strategically review its stake in IPL team owner Royal Challengers Bangalore by December 2026. CNBC-TV18 had earlier reported that Adar Poonawalla is among those in the fray for this franchisee.
Tariffs have hit businesses badly and created a lot of uncertainties. The SRF top brass tells CNBC-TV18 in a rare and exclusive chat, adding that China is competing everywhere and SRF needs to find niches for an edge. Hello and welcome. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, Vinny Motiwala. For the Nifty, flitting between red and green, the good part is it is, very close to its 20-day moving average. 25,570 is where the 20-day moving average is. A closure above that would give bulls some sort of support after the decline that we've seen from near 26,000 levels on that frontline index. A lot of individual stocks on our radar. One on at the bottom of our screen is Blue Star. It's cut guidance, and as a result of which, it's taken all the other consumer sector stocks lower as well. So you have Voltas, which is lower, Whirlpool, which is lower, all of them because Blue Star has cut guidance.
Absolutely. So all these stocks surely are under pressure. And Mangalam, good afternoon to you as well. But yes, there are some gainers also in today's trading session, right? Reddington is one of them. We have seen strong gains, good performance coming in from the company. So that is keeping the stock a buzz, and a whole host of other movers. Our CCL products also continues to see that up move after its earnings as well. So interesting day coming in, a lot of earnings movers in today's trading session.
Let's talk about those earnings movers then. Chalet Hotels, that's the first management on our show today. Reported a good set of second quarter numbers. Obviously, the overall results, as has been the case for the last few quarters, boosted by the consolidation of the real estate business. But, the core business, which is the hospitality business, obviously had to wade through seasonal factors, which impacted the overall performance. And we heard that from the management of even Indian hotels this morning. So Sanjay Sethi, who's the MD and CEO of Chalet Hotels, joins in. Mr. Sethi, seasonally weak second quarter for the hospitality sector. But importantly, you go into the strong, third quarter and the fourth quarter, the strong H2. What does that entail for you? The first half, I'm looking at it, revenues of close to 1,600 crores, EBITDA of 650 crores. You obviously can more than double that in the second half because if you're looking at numbers, second half typically accounts for what, 65% of the revenues and earnings?
Well, good afternoon, Mangalam and Vinny. Pleasure to be here. Look, second half is always better than H1. Historically, on the hospitality side, we've seen a 45-55 mix, but give or take a few percent points. But there's a lot of addition to the portfolio also that's happening, which is, as far as Chalet is concerned, a lot of it is going to come into play in H2 more prominently than it did in H1. And then there are a couple of office assets that are stabilizing. So between the two of them, we are very bullish about H2. And not just about H2, I think for the next 3 or 4 years, things look extremely strong for the industry as well as Chalet Hotels. We don't give numbers, so I'm sorry, I'm going to refrain from giving forward-looking numbers.
Hi, Mr. Sethi. Good afternoon. This is Vinny joining in the conversation. So H2 is expected to be better. You said you're not giving numbers, but then ARR, how are we looking at that also? Because will we see that trend up a bit more? As of now, it's at around 12,170 for this quarter. So then how do we see that moving?
So really, the average room rate for the portfolio has grown at 16% for quarter 2 versus quarter 2 last year. So clearly, the double-digit growth on rates continue. The occupancy was impacted on 2 counts. One is that, of course, there were seasonal challenges and the heavy monsoons did let some of the properties down. But more importantly, we've added over 160 odd rooms to the portfolio. So the denominator has changed, and therefore the occupancies got impacted to some extent. It's almost a 5% impact on account of just the room additions. If you were to take that away, I think overall we've done fairly well, close to a little shy of double-digit growths. Overall, if you look at the business itself, let's exclude residential because the core business is hospitality followed by the office real estate. We've grown this quarter by 20% on revenue and 25% on EBITDA. By no means a bad quarter, but we've seen better quarters in the past. We expect to see better quarters going forward.
Take that point entirely. Mr. Sethi, just wanted to understand the expected metrics of Athiva because it's a new brand that you've launched. It's a premium brand. What's the kind of ARR that we're looking at? And it's the first property, which was basically the erstwhile Dukes, which is now converted into an Athiva, and you have 5 more properties coming in as well. So what is the kind of investment that this entails and the return that you're expecting here?
Sure. So, Mangalam, the investments we've shared in the past, so there's no change in that. These are not new assets that we are converting to Athiva. These are existing capital work in progress, which some of them will become Athiva. Some of the existing assets will become Athiva. As far as the metrics are concerned, each location and product will define its own micro-market positioning, which is largely at the top end of the micro-market. And therefore, the rates will be driven by what the market, that micro-market drives. We've seen that the resorts are likely to be between 10 and 25,000 K average room rates, and they'll vary around that when Goa comes into play. It might go slightly north of that too. For the business hotels, we expect this to be between 10 and 15,000 rupees as the price positioning, which is in line with the upper upscale and upscale sort of a positioning within the categories as defined by consultants.
Mr. Sethi, let's talk about the rental income as well as the real estate side as well. What is the outlook over there? In the past, you had mentioned that from the rental income side, you were expecting around 300 crores in FY26. Does that still hold? And what is the overall outlook?
I think it largely holds. We should get to there. Our exit rate for the month of September was just shy of 25 crores. So we're tracking that already. And going forward, it is going to increase for the balance 6 months in the year. So we still expect to hit the exit rate, a monthly rate of about 30 crores per month on rental income from these assets. So 300 crores is pretty much an achievable target as of now.
Things look great, Mr. Sethi, and even better in FY27. But what we want to understand is you're stepping down at the end of this year. Why is that? And what do you plan to do?
Well, very interesting question. This was 3 years back, over 3 years back, that I actually informed my board and the promoters that on January 31, 2026, I'd like to let go of all executive roles. So it's been a while in the making, and that post convincing the board, it took me 6 months to do that. But after that, we started doing a succession hunt. Shwetank's been with us now for over 2 years, so he's very, very deeply entrenched in the business of chalet for 2 years now, and will carry forward the principles, the values, and the shareholder value that we want to create. There'll be continuity and consistency in that. So from my perspective, having put in 37 years in the hospitality industry, I think it's time for me to look for different avenues and different passions that I want to pursue. And as of now, that's what I plan to do. I have had some very interesting reach outs for board and advisory positions. I need to make sure they don't conflict with chalet because I continue to stay on the chalet board as a non-executive director. I would like to consider some diverse opportunities in various industries for board as well as advisory positions. But I'm going to play it by ear as of now.
Okay, Mr. Sethi, we'll watch out for more updates coming in on where you are headed as well. But thanks so much for that. On that note, we're going to slip into a very short break. Up next, we'll connect with the management of Sun Pharma on their Q2 earnings, so don't go anywhere. Welcome back to Halftime Report on CNBC-TV18. Sun Pharma reported their numbers. Q2 was an operational beat that came in from the company. Revenues in line with their estimates. Growth mainly was led by India, emerging markets and rest of the world. Now to talk to us about their earnings, we have Jayashree Sattagopan, who is the CFO at Sun Pharmaceuticals, to talk to us about that. Jayashree, good afternoon. Thank you so much for joining us on the show. Let's start by talking about your India business. Obviously, you've seen a good growth coming in, 11% growth in the India business. Overall, what is the outlook for this side of the business? And do you see this double-digit growth now continue from here on as well?
We had delivered a good set of numbers for the India business, and you would have noted that over the past few years and quarters, the business has been growing consistently. As I have indicated in the past, the business in India has been pretty focused on certain therapies, especially on the brands, nurturing and building really strong brands, engaging well with all the doctors based on scientific inputs, improving the prescribers' base, and the sales force that we have added over the past few years have consistently helped us in delivering the numbers, and the growth has been above the market growth. We will continue to focus on the therapies that we have been prioritizing in the past, and our intent is to grow the business slightly ahead of the market even in the coming quarters and the years. I would say we would grow ahead of the market growth. I think that's the right way to look at this.
All right, and what about specialty medicines, the global innovative medicines that stood at what, a little over 330 million USD, that was up 16.5% and accounted for nearly a fifth of your sales. At what rate can it expect to grow and sustain?
I think the focus on the innovative business has been paying results. We expect the traction to continue with Lexilvi and Unloxit that are also going to get launched. This should add meaningfully to our portfolio in the coming years. We expect the innovative business to grow in a healthy mid-teens as we go along.
Mm-hmm. Okay. Also, Jayashree, then what about in terms of the two drugs that you mentioned, right? Lexilvi, that's launched, and Unloxit is something that is going to be launching soon as well. So with that, one, where will that take your contribution? Also, in terms of the approval that you've already received for Unloxetide, where does that head, and when is the launch pipeline as well?
So Lexilvi was launched in July of this financial year. For Unloxit, we are waiting for the FDA label approvals from the government, and the launch is slated for this financial year as well. Both these products will be complementary to our existing portfolio, and in the next couple of years, we expect them to ramp up.
All right, you expect that to ramp up. So with that increasing in your overall mix, how would margins shape up? Presumably better from here, if you could give us a sense.
We normally do not comment on the margin profiles of these product portfolios. Having said that, you would also appreciate that for all the innovative medicines, we are also working on additional clinical indications. There is an additional R&D that goes on, and one balances out. The product takes a few years to ramp up, and therefore, over a period in time, we would see that the portfolio actually balancing out pretty neatly.
Emerging markets, rest of the world, that's done surprisingly well in the last few quarters. Obviously, this is coming after you all have introduced that US specialty drugs and branded generic plays coming in here as well. What is the outlook on both these regions now?
I think both the emerging markets and the rest of the world have done pretty well during the quarter. As you mentioned, we have introduced or commercialized some of our innovative medicines in these markets. And these are the first or the second year of launch, and they've been receiving a good response. At the same time, some of our key markets, if you look at the emerging market side, like Brazil, Russia, Romania, South Africa, they've been doing pretty well. In the rest of the world, there are these developed markets which are also responding pretty well. So I think it's quite a balanced growth in terms of the regions. As far as Sun is concerned, India is doing well. US markets are strong. Similarly, the rest of the world and emerging markets have also been responding well and growing quite well.
You know, if you look at your margins, they're typically managed by taking the R&D spends up or lower. From an R&D spend standpoint, as a proportion of sales, what do you think is a sustainable number which is not variable? If you could give us a broad range as well.
I think this year we may end up in the lower end of the guidance, which will be around 6%. But I should tell you that on all the products that we are going through the clinical trials, this is going as per the timelines that we had initially considered. There could be some spends that have gone lower on specific projects, but all the projects that we have taken up are all on track.
Okay, Jayashree, thank you so much for that. R&D spends expected to be in the 6% range for FY26, and growth in India will outpace the industry growth. But thanks so much for that. On that note, we're going to slip into a very short break, but here's a programming note. It's the final countdown for CNBC-TV18's most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. This landmark event brings together business leaders, innovators and policymakers to explore transformative strategies and groundbreaking ideas. Starting at 8:30 a.m. on 7th of November, it will be a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment and a lot more. Tell us why you love CNBC TV18 by sending a tagline on the email address flashing on your screens, and you stand a chance to attend the marquee event. Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is at 25,555, down 43 points in the trading session as of now. Let's keep an eye out on that. Symphony also has reported the numbers. Revenues down 44%, and the stock is seeing a sharp decline as of now. EBITDA also a bit of a weak performance there. But PB Fintech, let's put the spotlight on that. Yash is joining in with us with some news flow that he's picked up, and this is on the commission cuts to Policy Bazaar. Let's get more details on this one. Yash, over to you.
Well, that's correct. So after a couple of weeks of discussions within the general and the health insurance industry, all general and health insurance companies have unanimously decided that they will reduce commissions or cut commissions which they pay to Policy Bazaar on sale of health insurance policies by an entire 18%. What we've been given to understand is that, health as well as general insurance companies have taken this decision, to support the deteriorating loss ratios. They don't want the loss ratios in the health segment to increase, for which it became very important for all the companies to pass on the entire 18% cut in commission to Policy Bazaar. This cut of 18% in commission was already done to other distributors like banks and agents, and now it has been decided that the same cut of 18% will be done to Policy Bazaar as well for the sale of health insurance policies. As far as this cut of 18% on health insurance commissions is concerned, it is expected to become effective starting December 1. It is important because health as a segment is a large segment and a profitable segment for Policy Bazaar. It contributes 20% to the revenue as well as 60% to the value as far as Policy Bazaar itself is concerned. And that's not it. What also we've been given to understand is that life insurance companies are also discussing, the discussions are still underway in terms of how much cut do they want to pass on as far as sale of life insurance policies is concerned. So that decision from all the life insurance companies in terms of commission cuts coming from there also still remains to be an overhang as far as life insurance business of Policy Bazaar is concerned.
Okay, Yash, thanks so much for that. PB Fintech in focus right now. Keep an eye out on that one. But let's move on and now get you the latest update in the world of F&O. We have Mangalam at the F&O desk now to give us those details. Good afternoon.
Good afternoon. So ever since its inability to cross convincingly that 26,100 mark, the Nifty has been grinding lower, and now it's consolidating at lower levels as well. So the Nifty Bank, as well as the mid-cap index, all of them lower. The mid-cap index is actually much worse. If you look at the advanced decline ratio, that tells you that your portfolio would perhaps be in a deeper shade of red than what the frontline index would have you believe. 2,200 stocks in the red for about 650 which are in the green. And the Nifty, after breaking today's lower levels, has actually gone below the 20-day moving average as well. 25,570, so the 20-day moving average is. And for it to actually sustain and resume its uptrend, it has to close above that 20-day moving average. So that is a mark that the bulls will be, tracking fairly closely. The FIs, they've got this right over the last few trading sessions. Their longs at the start of the series was close to 20%. They've continued to increase their short positions, and now their longs are at 15%. So where that goes from here on as well will determine where the course of the market is. And if they do not get further follow through from here on the way down, then maybe they will have to take the markets higher by virtue of short positions being covered itself. So that's something I'll be watching out for. What is that predicated on? That's predicated on what the Nifty Bank does, because the Nifty Bank, which had been earlier outperforming, is still about 200 points away from its 20-day moving average. The Nifty is below that. The Nifty Bank, if that falls below that, maybe there are further downticks which are there in the market. But apart from that, if it sustains and even the Nifty bounces back above that 20-day moving average, we could see a bit of a short covering pop. In terms of the near-term range, the street is not working with something very wide. In fact, at lower levels, the 25,500 put writers are fairly active. That tells you that closer to around 25,400 to 25,420, we will see some support. But on the way up, the 25,600 call writers are equally active, and they are writing those positions. So maybe around 25,650 to around 25,700, you would face some sort of supply. If the market sustains above those levels, then maybe there could be some short covering. Also, watch out for a bunch of stocks which have investors adding a lot of short positions on that, or traders adding a lot of short positions on that. So Delivery reported a loss versus a profit, but that's on a cash basis on account of Ecom Express consolidation has seen a lot of short positions being added. Hindalco increased capex. The street does not like that. Is seeing some short positions being added, and Grasim as well is seeing some shorts.
Thanks so much for that, Mangalam. Now shifting focus to the primary market action, Physicswala has said the price band for its 3,400 crore rupees IPO at 103 to 109 rupees. My colleague Rima spoke with the management on the use of the proceeds, the outlook. Listen into the slides of the conversation.
मैंने स्टार्ट किया था अपने होम टाउन प्रयागराज से. Why I did it? मैं जब क्लास 12 में था तो मेरे को भी बड़ा मन था कि मैं आईटी का एग्जाम लिखूं और उसके लिए कोचिंग जाऊं. पर वहाँ की जो फीस होती थी 1.5 लाख रुपए 2 लाख रुपए वो मैं अफोर्ड नहीं कर सकता था. मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा फॉर आवर एजुकेशन. इसलिए आई कुडंट मेक इनटू दीज कोचिंग्स. तो मेरे अंदर हमेशा रह गया था कि मेरे साथ फेयर नहीं हुआ है. मेरी गलती नहीं है कि मेरे पास पैसा नहीं है. मुझे फेयर अपॉर्चुनिटी नहीं मिली है एग्जाम लिखने की. वो हमेशा अंदर रह गया था सिंस क्लास 12. जब यूट्यूब पे आया पढ़ाने तब मुझे मेरे जैसे बहुत से बच्चे इंडिया में दिखे जो टैलेंटेड हैं, बट उनको फेयर अपॉर्चुनिटी मिल नहीं रही है बिकॉज दे कैन नॉट अफोर्ड 2 लाख की कोचिंग 1.5 लाख की कोचिंग. तो मुझे ऐसा लगा यार मुझे फ्री में पूरे इंडिया को पढ़ाना चाहिए. आई स्टार्टेड अपलोडिंग वीडियो ऑन यूट्यूब. 2016 से करता गया. अगले 4 साल के अंदर इंडिया का सबसे बड़ा यूट्यूब चैनल बन गया एजुकेशन का. क्लोज टू 35 लाख सब्सक्राइबर हो गए. ये 2020 सब फ्री था. एवरीथिंग वाज फ्री फॉर स्टूडेंट्स. आई वॉज जस्ट मेकिंग मनी बिकॉज ऑफ यूट्यूब एडसेंस. मैं बच्चे से 1 रुपए नहीं लेता था. मैंने कोई ब्रांड नहीं प्रमोट की, मैंने कोई प्रोडक्ट नहीं प्रमोट किया, कोई किताब नहीं बेची, कोई कोर्स नहीं बेचा. मैं सिर्फ पढ़ाता रहा. ऑफर्स आते रहे कि आप इतने करोड़ रुपए ले लो हमारे पास आ जाओ, इतने करोड़ रुपए ले लो हमारे पास आ जाओ. क्यों नहीं जाता था? मैं गरीब घर से था, जाना चाहता था क्योंकि उनकी कोर्स प्राइसेस होती थी 80,000 रुपए 1 लाख रुपए ऑनलाइन के अंदर. मुझे लगता था इसको बहुत अफोर्डेबल कर सकते हैं. एंड दैट इज व्हेन आई मेट प्रतीक इन 2020. और उसके बाद फिर हमने कहा यार आईआईटी की पढ़ाई को कितना सस्ता कर सकते हैं. 4,000 रुपए में आईआईटी की तैयारी करा सकते हैं. 7,000 के अंदर क्या हम सीए की तैयारी करा सकते हैं. लाइव कोर्सेज जहां से बच्चा सिलेक्शन ले रहा हो. सो दिस वाज द होल इंटेंट बिहाइंड इट. आज वो कम्युनिटी कुछ 12 करोड़ की होगी जहां हमारे 200 से ज्यादा यूट्यूब चैनल होंगे जहां फ्री पे पढ़ाई होती है. 200 के आसपास इंस्टाग्राम चैनल होंगे जहां मीम्स के थ्रू पढ़ाई होती है. आजकल बच्चे बड़े लेट करते हैं. स्नैपचैट टेलीग्राम पे नोट शेयरिंग होती है. तो आई थिंक इट्स नॉट ओनली अबाउट एजुकेशन. वी हैव द लार्जेस्ट सोशल मीडिया ऑफ एनी कंज्यूमर टेक अवेलेबल इन इंडिया.
Pratik, courses are very, very affordable, right? 4,000 rupees for a JEE. But your valuations are very high at 31,500 crore in terms of market capitalization. Price to sales is more than 10 times. EV to EBITDA is more than 70 times. How do you explain that?
See, in the history of consumer internet company, you will not find any single company जो कि पिछले 2 सालों में 97% रेवेन्यू कैगर पे थी, 90% इब्डा कैगर पे थी. लाइक यू नो, सो वी आर अ हाइपर ग्रोथ कंपनी. हमारे रेवेन्यूज 4 times हुए इन पास्ट 2 years. लाइक यू नो, तो लाइक यू नो, एंड द मार्केट अपॉर्चुनिटी इज वेरी वेरी लार्ज. लाइक यू नो, इंडिया में 30 करोड़ बच्चे हैं. अभी तो हम इसका फ्रैक्शन 4% स्टूडेंट्स भी नहीं पढ़ा रहे हैं. तो इतना लार्ज स्टूडेंट बेस जो कि इंटरनेट पे हमने बनाया है, वी कुड एबल टू मोनेटाइज इट. एंड लाइक यू नो, इट्स अ वेरी वेरी हाइपर ग्रोथ कंपनी. And like you know, valuation is an outcome of market forces, like you know, and like you know, if you ask me, I'm leaving a lot of value on the table, like you know, but I will have a bias because it's my baby. तो मुझे तो लगेगा कि यार ये तो बहुत ही undervalued है.
Okay, but what about break-even timeline? At the adjusted EBITDA level, you're positive, but bottom line, it's still a loss. More than 100 crore in Q1, 250 crore last year. When do you break even at the bottom line?
So, like you know, in the history of Physicswala, we have always generated cash from our operations. So, like you know, for last year, the cash from the operation was more than 500 crores. Like you know, it's a negative working capital cycle business. Like you know, students pay fees upfront to us, and like you know, and cash from operations is always been positive. Like you know, there are like and at adjusted EBITDA level also. Like you know, we are. Last year also we have shown 434 crores of adjusted EBITDA. That too also have grown by 90% CAGR in past 2 years. Like you know, so cash is not a challenge. Like you know, in history of Physicswala, we have only raised $200 million of primary capital.
Right.
Like you know, and we are sitting on a $300 million treasury. Like you know, so like you know,
cash on books $300 million.
Yes.
Welcome back. Joining us on the show now is Mr. Kirit Bansali, he's chairman at the GJPC. Mr. Bansali, thank you so much for joining in. You recently had the privilege to put out a strategy plan for the Viksit Bharat 2047, where a lot of numbers really have been put out. What really is the plan and for the Viksit Bharat, and what are you looking at in sense of global exports vis-a-vis domestic sales?
So, Manisha, first of all, thank you for inviting me. The important thing is, in spite of this geopolitical situation, in spite of tariff, we have maintained that 30 billion target. So far, domestic is also doing well. So we are exploring new market, and another thing, good sign for as far as the labor and job work is concerned, growing speedily this labor market, not only in India, globally also.
So, Mr. Bansali, you were saying whether it's about gold jewelry, lab and polished diamonds, lab-grown diamonds, studded, almost everything seems to be doing well. While, of course, I do understand that UAE always has been a very strong market, but how are you now looking at newer markets like Saudi, perhaps, the UK FTA? How is it working for you? And especially when it comes to the newer markets?
If I start talking with UAE, it's almost 4 years we did this FTA. In last 2 years, we have seen 48% growth in only plain gold jewelry. So we have seen and witnessed the good results in UAE. Same now, we have recently done FTA with UK. We have done one B2B show there. We have invited them. So we are looking forward. And recently, I met Piyush Goyal in Delhi also. So number of FTAs on the pipeline. And it looks good for German jewelry sector in the upcoming times to come.
Mr. Bansali, there has been a concern, of course, about the exports to US. But when you look at the data for the previous quarter, even for the month of October, doesn't really look like that the industry has suffered much there.
See, one good sign is, Manisha, that they have allowed, if we import castings from US, so tariff is not applicable. So a lot of my jewelry manufacturing in shapes, they have started importing raw material from US. So the result is that you will not see the impact. There is an impact on loose diamond, definitely, but we are waiting.
How are you looking at also Australia as a market? Because I understand last time when we spoke, you were also looking at that as a market. Also, Saudi, I understand there's a lot of work happening there too. What is the feedback that you're getting in from these two important markets also?
These are very small market, but now every market is a market. After this tariff war, we as a German sector, as chairman, we understood very well. And number of times, even Prime Minister, even Nirmala ji, even Piyush Bhai, taught us that you don't depend only on one market. If you want to grow, you'll have to explore new market. And we are trying very hard for that.
Is China as a market opening up as well for you now?
Little bit good, little signs are there, not as per the expectation. But yes, there are some signs. Natural diamonds demands are increasing from every sector.
You spoke about the lab grown doing well as well. I mean, we've seen prices kind of stabilize for that one too. Would you say that the market is doing well for most geographies?
So if I say you, we started growing this lab grown diamond 5 years back. The first year we have produced and export 3 million carat. Second year it was 7 million. Third year it was 10 million. Fourth year it was 15 million. And this year I'm expecting 25 million carats.
All right, that's becoming a huge market as well, especially with the natural diamonds as well stabilizing in sense of prices now, and with whatever gold and platinum seems to be doing as precious metals. How are diamond sales picking up, and what's your sense on prices therein?
So one thing is very clear now, these two segments are different. Lab-grown has created a new market, but I don't see any impact on natural diamond. So I think natural diamond is also a good future.
Also talk to us about the domestic markets, because you're putting out a very strong target for next year and for Viksit Bharat 2047 when it comes to domestic sales as well. What is it that you're asking government for you to be able to achieve those kind of numbers?
So number of initiatives we only started with the help of government. For example, we are starting Jemburs in Jaipur, where this Colorstone has a big market in Jaipur. We are coming with India Jewelry Park in Mahape, Asia's biggest jewelry park. You have seen in last year, we have opened this Bharat Ratnam by the help of our Commerce Minister. In a record short time, it was completed just in 14 months, 1 lakh square feet. We have said that the latest equipment and all the new upcoming new businessmen are taking the benefit of these Bharat facilities.
Right, Mr. Panchali, there was a big numbers over there as well coming in for the long-term vision. So, Mr. Panchali as well as Manisha, thanks so much for joining us and taking us through that conversation as well. Surely we'll be keeping an eye out of those export numbers and the numbers there as well. Thanks for that conversation. But on that note, we're going to slip into a very short break. After the break, we'll get chatting with the management of Mindspace Business Park REIT for the Q2 FY26 numbers. Stay tuned in. Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty is just down 30 points, 25,570 is what the Nifty is trading at. A bit of an up move from the day's lowest point is what we're seeing for the Nifty 50. But let's put the spotlight on one more company that has reported their numbers. Mindspace Business Park REIT reported a good set of numbers in Q2 FY26. Revenues, that saw a jump of 25%. Net operating income saw a jump of 26% as well. Now we're joined by Ramesh Nair, MD and CEO at the company, to talk to us about the outlook going forward. Mr. Nair, thank you so much for joining us on the show and a very good afternoon. I want to start by talking about your gross leasing, right? That's around 2.6 million square feet, and this is in the first half of FY26. For the rest of the year, what is the outlook there? What is the growth there that we're seeing?
Thanks, Vinny. It's great to be on your show. We've had a very good first 6 months, especially a very good second quarter, where we did leasing of 800,000 square feet. If you look at our parks today, in a park like Hyderabad, where we have 10 million square feet, we only have 200,000 square feet vacant. In our entire Pune portfolio, which has 3 parks, we have only 100,000 square feet in our portfolio, which is vacant. So gross leasing shouldn't be the right number to look at when you're looking at numbers where you look at our occupancy today, it's gone up to 94.6%. So the space which we have vacant predominantly is in our Airoli East and Airoli West campuses. And that's where we're going to be doing a lot of leasing over the next few months.
Okay, that's where a lot of leasing will come in over the next few months. So occupancy, right, you mentioned that it's, at around 94.6%, while including new acquisitions, it's at around 93.8%. So what is it for the newer acquisitions right now, the occupancy, and when will it come back to the normal levels of occupancy that you usually see in business?
So a few months back, we picked up a 800,000 square feet asset in Hyderabad. There is 250,000 square feet vacant there, which we hope to fill in the next quarter or so.
Okay, so that will be filled in the next quarter or so. So, okay, the numbers over there would also go up. In one of your micro markets, there has been, we see that the rentals over there are rupees 100 per square feet. Average portfolio rentals are rupees 74. Are you seeing higher rentals in any specific geographies, or this was one-off case? And will you be able to see higher portfolio rentals in FY26 overall for the whole year as well?
Definitely, Vinny. So I think the market which has seen the maximum growth in rentals in the country is Hyderabad. 1.5 years back, rentals in Hyderabad was around 75, 76. The same micro market today, the Madhapur high-tech city market, today has gone up to around 95 to 100. And we've been big beneficiaries there. We have 2 large parks there. We have close to 12 million square feet. Plus, we have another 3 million square feet, which is under construction. So that's the market we have bet on big, and that's kind of paid off also.
Right. Last quarter you had indicated that about 2.2 million square feet has been demarcated to date, and 69% of this has already been leased. If you could give us an updated number on that one, and also, the target for FY26 when it comes to DPU, which is 14% growth is what we saw in the first half.
So I'll touch the DPU growth. This used to be a concern a couple of years back, where people used to ask us, why aren't the distributions kind of going up? Look at this quarter where distributions have gone up 16%. And the 3 previous quarters, our distributions have gone up 18%, 38%, and 11%. So distribution is clearly going up. In terms of overall vacancies, again, look at a market like Airoli Gigaplex, where our occupancy used to be 72%. Today, the same park, since the SEZ demarcation, that 72% has become 94% in terms of occupancy. So different markets all doing well across the country.
And what about the demarcation?
Demarcation, 2.6 million square feet has been demarcated, of which we have leased 2 million out of this 2.6 million square feet.
Also, just the last word from me in terms of overall the IT side of the business, is there any lag over there or some muted rentals coming in from the IT sector?
We haven't started seeing any of those AI effects or Trump tariff effects. We haven't actually seen it. I was just looking at the numbers for the first 9 months. We're talking 40 million square feet. The market has actually gone up 29% in the first 9 months compared to the first 9 months of last year. Our portfolio today, 54% of our portfolio is GCCs. All of them continue to do well. And 8 out of our 10 top tenants have just taken space with us again in the last 6 months. So the market is doing well. Demand is an all-time high. Numbers are phenomenal. Every quarter, I see a new record being broken in terms of net office space absorption, despite all the global uncertainties.
All right, we take that point. Thanks a lot for joining in and giving us your views on this space. Wish you good luck, and I'm sure a lot of your REIT holders would want better, distributions that would come by from you, and also increased leasing for you as well. Take that break, come back. On the other side, we focus on the markets and a lot of stock-specific action. Stay with us. Well, what the bulls were hoping for has happened. The Nifty is back above that 20-day moving average of 25,570. In fact, it's moved right into the green right now, just about by a smidge, but that's a positive. Why do I say that? Because it's been led higher by a couple of important heavyweight indices. The IT index, which has been underperforming for a while, has now spiked up. So the IT index has taken the frontline index higher. And secondly, when we started the show, the Nifty Bank was about 0.5% lower. And now that too has cut its losses to just about 0.2%, and that is courtesy HDFC Bank. So these factors weighing in for the market. The Nifty Bank now at 57,700. 5 minutes ago it was around 57,600 thereabouts. So there is recovery that we're seeing. Now it is important, essential for the Nifty to close above the 20-day moving average, and that's what is something that the bulls would hope before we go into Friday's session as well. Take a short break, come back. On the other side, all things market taken forward by Business Lunch. That's all the time that we have on this edition of Halftime Report.
Stocks trade soft with mid-caps being the big drag amidst the rush of earnings. Metals and utilities are the big drags while consumer durables and auto eke out gains. Novelis takes a hit on cash flows and EBITDA in the second quarter due to the fire at its Oswego plant. A significant upward revision in costs for its capex also upsets and trims the return equation, leading to analysts downgrading its parent Hindalco. Grasim's arm, Birla Opus CEO Rakshit Hargave quit and he moves to Britannia 18 months after its launch, causing some uncertainty over its leadership. Berger Paints tells CNBC-TV18 that competitive intensity in the paints sector has eased. Diageo says that its Indian arm United Spirits will strategically review its stake in IPL team owner Royal Challengers Bangalore by December of 2026. CNBC-TV18 had earlier reported that Adar Poonawalla is among those in the fray for the franchise. And tariffs have hit business badly and created a lot of uncertainty, says the SRF top brass to CNBC-TV18 in a rare and exclusive chat, adding that China is competing everywhere and SRF needs to find niche for an edge. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia, counting down to the end of the earnings season, and it's a swath of earnings that we are seeing a reaction to, be it on the Nifty or on the broader markets as well. But there has been a significant recovery from the lows of the day for the index. It's back in the green as of now. It's almost an 80-point recovery from the lows of the day. We told you early morning that any further declines would bring about the October 17 low of 25,508, and today's low has been around 25,525, so it's reversed from those levels as the index and is back into the green. Of course, today is the weekly expiry of the Sensex contracts. Mind you, the Sensex has remained in the green almost all through the session despite the Nifty being in the red, and that is because of the fact that Hindalco, the biggest loser on the Nifty today, is not a part of the Sensex. So Hindalco is down around 7%, and that does not have any bearing on the index. Not that it has any significant weightage on the Nifty either, but among the top losers on the Nifty is Hindalco. Of course, we are seeing a plethora of earnings reactions coming in. Ather Energy, of course, is not an earnings reaction, but it was, of course, a shareholder lock-in ending, and of course, block deals taking place in the stock as well. BEML is an earnings reaction, that's down 7. But of course, the consumer durable names are the ones that are taking it on the chin as of now. Blue Star, after the management cut its revenue growth guidance in its earnings call, fell as much as 6%. There's been a recovery from the lows, still down 4. And the other one, of course, is Symphony, reported results just a few minutes earlier. At first glance, the net profits and EBITDA were down almost 70%. That stock was also down 7%, and that too has seen a recovery from the lows of the day. Flashes on your screen, SBI has announced the IPO for SBI Funds Management. The company is likely to sell up to 6.3% stake in that IPO. Of course, SBI also being in the news because of the price target revisions that it received after its results, and also crossing $100 billion in market cap today for India's largest lender. But the sector in focus today has been the paints sector. That's after Birla Opus CEO Rakshit Hargave stepped down. Mangalam is here with more on this.
But never short of excitement and color, the paint industry. What was supposed to be an insipid quarter and a midweek holiday had a splash of management change, and that exactly has now caused a flutter among all the paint stocks in today's trading session. So the big news that came in yesterday was Rakshit Hargave has resigned as the Birla Opus CEO to pursue an external opportunity, which we were apprised of yesterday itself, where he will now join Britannia as the CEO for the next 5 years. Remember, Rakshit was, appointed at Birla Opus and stood through its launch 18 months into Birla Opus's launch, all the 6 factories coming on stream and them reaching a near 1,000 crore per quarter sort of run rate as well. Birla Opus on its part says that they continue to gain market share, and now their market share is double digits if you compare, with the organized decorative and putty industry, and the total capex that they've spent is close to 9,700 crore rupees as against when they started out the money that they had earmarked, which was close to around 10,000 crore as well. So a lot of good things done for Birla, and now this Rakshit Hargave's resignation has caught the street by surprise. But on its part, Berger Paints this morning said that the worst of competitive intensity is behind, because now Birla Opus for the last few quarters has stabilized at 900 to 1,050 crores per quarterly run rate, and they can't discount any further if they have to reach their stated objective of 10,000 crore revenue and EBITDA break-even by year 3 and of operations itself. And Nomura, on the back of that, they've turned positive on the sector. They've said that competition headwinds are now behind. Remember, Birla Opus's 10,000 crore capex is deployed already. If they want to further disrupt the category, they will have to put in more money. And at the same time, these stocks have already seen a correction as well. Last financial year, from the peak, Asian Paints had seen a correction of almost 30-35%. From a valuation standpoint as well, the last 5 years, Asian Paints was trading at an average of 60-62 times 2-year forward earnings, and now it's come down to around 50-51 times itself. So with the worst of competition behind, raw material prices being benign, and at the same time, the best of demand ahead after an extended monsoon that impacted performance, the street believes it's time to now get positive on the sector. Nomura has actually upgraded Asian Paints to a buy with a target price of 3,100 rupees, and that is explaining the sort of red and green moves that we're seeing on Grasim and Asian Paints respectively. A lot of excitement, a lot of color. Let's see where it goes.
Let's see where it goes. Mangalam, thank you for that update. And earlier we did speak to Abhijit Roy, the Managing Director and CEO at Berger Paints. Listen into excerpts of that conversation.
Q2 of last year, since they had started just about that point of time, they had done about 450 odd crores as per their own analyst meeting, because it's not a published result, so we don't know. But it's around that figure. And this time they said that they have done about 110% odd growth. So we can assume that it's about 950, 960 crore, which is slightly below the first quarter of this year. And that's what they said, that they have done slightly below last year. Now, if you look at next quarter, and they have been doing around these figures, Q1 also was like that. Q4 of last year was also similar. Q2 of this year also is similar. So it's around that 900 to 1,050 type of level at which they have settled out. The business will carry on as usual. That will happen, but the tapering is also happening. We compete in the market by giving some discount to the leader as well. So it's not something which is very disruptive as far as we are concerned. So from that perspective, I don't see that, really impacting. They have also indicated that in 3 years they will become profitable. If they have to do that, they cannot, discount, massively from here on.
And that was the paint sector today. Asian Paints leading the gains, and similar reactions also seen in Berger Paints as well. But the big loser of today has been Hindalco. Multiple downgrades have come in on the stock after results from Novelis. Nigel is here to break all of that down for us. Nigel.
Well, that's right. Hindalco got knocked back in today's trading session as its arm Novelis posted a mixed quarterly set of numbers. The volumes were almost flattish on a year-on-year basis, but the EBITDA showed some sequential improvement even after taking a net tariff hit of close to around $54 million. The management, though, they say that the tariff mitigation efforts, they're underway, and that could start showing up in the results from the second half of the year itself. But the real concern is the fire at Novelis' Oswego plant. The company expects the impact to show up in the second half of the year, which means that the second half will be a washout. The cash flow hit could be close to around $550 million, and the EBITDA loss could be around $100 to around $150 million. Though they expect 70 to 80% recovery through the insurance, but that in all probability will only come in FY27. So near-term pressure on the balance sheet and the cash flows, well, that's something that the street will have to bear. Additionally, the net debt as well came at its highest levels we have seen in the last 21 quarters or thereabouts. That's what's prompted parent Hindalco to step up with around a $750 million equity infusion into Novelis. The biggest negative, though, is the Bay Minette expansion project. The cost has doubled from the original estimate, and the management says that inflation as well as execution challenges, that's what's led to this capex moving up. At the new capex, well, the returns will be muted at just around 6% pre-tax ROCE. Even if Novelis hits, that's the $1,000 per ton EBITDA guidance that they have been talking about. So the return ratios get diluted massively. And that's reflected in the street's reaction, right? You have Investec, you have Axis Capital, Nuvama, Equirus, all of them have downgraded the stock. They're citing rising cost, rising debt, the cost overruns, as well as the near-term earnings risk. Explains why stock is smacked today.
Among the top losers on the Nifty, Nigel, thank you for that update. As a slight recovery from the lows for Hindalco, if you could call it that. Still 6.25% lower on the stock. The other one, though, after their second quarter results is Ola Electric in a lower circuit now. Sudarshan is here to tell us more on that. Sudarshan.
It's not only weak Q2 FY26, but also the outlook that company has given for FY26 remains muted. So first, talking about the headline numbers, company continues to report losses on the bottom line. In Q2 FY26, it has reported loss of around 420 crore. There was a sharp fall in revenue. It's a fall of almost 43%. The reason is the decline in volume that company has seen in Q2. And also on the EBITDA front, it continues to report the loss. In Q2, it has reported loss of rupees 203 crore against rupees 379 crore. Now on to the outlook for FY26. Company is now expecting revenue in the range of 3,000 to 3,200 crore versus earlier target of 4,200 to 4,700 crore. For auto business EBITDA margin, company is now saying that it's expected to be around 5% versus earlier target of more than 5%. And on the volume front, earlier target was 3.25 to 3.75 lakh units. Now that has been cut to just 2 lakh units. So it's weak across the board. That's the reason you are seeing a sharp downtick in the stock, down almost 5% today, and it's down 45% 25. But from weak earnings to strong earnings, M&M had reported a very strong set of earnings, and also company has given a strong outlook for both SUV as well as the tractor segment. For tractor segment, it has even upgraded the guidance. I had sat down with Rajesh Jajurikar. Let's listen to what exactly he had to say.
The SUV on the PV side, as you call it, we would expect to have seen mid to high teens growth. On the tractor side, again, strong double-digit growth. So both of these in the festival period have seen strong double-digit growths in retail momentum. Of course, this year is not comparable to previous years because there were some transition issues related to pre-GST starting on 22nd September, customers waiting and watching to see, and get the benefit post 22nd September. So this year had a little bit of abnormality, but overall, when we see it in a totality perspective, it's been a strong double-digit growth. Yeah, so for ours, in the SUV portfolio, we're talking here, our growth, we expect to be at mid to high teens, which is what we had said at the beginning of the year. Tractors, beginning of the year, we had said 5 to 7% growth for the industry. We are now increasing that outlook to 10 to 12% for the full year. So tractors, we've changed our outlook because of multiple factors. Good rains, very good reservoir levels, government spending in rural, exports of agri-produce happening, which is bringing cash into the economy, and of course the GST cut. The festival getting preponed is a big enabler, right? So, if you go to last year, Q2 did not have any festival. The full festival happened in Q3, which means the Navratra, Dasera, Diwali went into early November, but basically there was no festival in September. This year the festival had started in September, so we got almost the full 9 days of Navratra within September. So that impacted September numbers as well. And hence you get operating leverage out of that compared to last year. So, last year to this year, there is a little bit of seasonality shift, which is enabled this year. And I'm not going to comment on the guidance.
Now, the MSCI's November index review will come into effect from the 24th of this month. 4 stocks, Fortis, Paytm, GE Vernova, TND and Siemens Energy are the stocks that will be included in the standard index. And analysts estimate that Fortis and Paytm could see inflows in excess of over $400 million, while GE Vernova could see inflows of around $370 million. And 2 stocks have been removed from the index, and those being Concor and Tata Elxsi, and the outflows here could exceed $150 million, according to the analysts. The MSCI India Small Cap Index will also see 30 stocks being deleted, while 6 stocks will be making their entry into the index. 2 of them, of course, being Tata Elxsi and Concor, which will be moved into the Small Cap Index. Now, from the sidelines of the Bengaluru Skills Summit, my colleague Meghna Sen spoke to Sanjeev Kumar Singh, the Chief Operating Officer of Ather Energy, about the trends in this festive season and the impacts of the GST cuts on the business. Listen.
I think it was pretty fantastic. We saw fantastic growth in all the markets. And I think that's something that the entire industry also saw. The overall electric growth also, if you look at during festive, was very good, as well as the overall two-wheeler sales. So I think also for the larger industry, the GST incentive, so GST reduction played a massive role in terms of giving a boost to overall spending, and hence the overall economy, I think, did very well during festive. Riding on to that, I think electric vehicles also did fantastic on let's say bank of various products that we have, that as I mentioned that the customers are liking it a lot. We also had a good festive is what I can tell you.
So any impact of GST? The recent GST cut has made the IC segment look a bit more attractive.
So if you look at, I think the story for electric and the story for Ather is upgrading Indian customers and the value that the customers get from when they buy the product. Of course, the GST cut has made, let's say, ICE slightly more cost effective than what it used to be. But I think in the long run, the customers who want a certain feature, the customers who want a certain upgrade, the customers who want a certain experience will come, and that's how we see, in spite of that reduction in GST making ICE cheaper, customers are not running away from electric in our vehicles.
6% lower today. Ather Energy, of course, a couple of reasons for that. The shareholder lock-in coming to an end, and of course, a block deal worth over 850 crores taking place in the stock. At one point was down almost 11%. So some recovery from the lows. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, the U.S. Supreme Court last evening heard the case against U.S. President Donald Trump's tariffs and seemed skeptical of the legality of these levies. CNBC's Dan Murphy joins in for more on this.
The US Supreme Court raising skepticism with the legality of those levies as it heard a case on Wednesday. The justices zeroed in on Trump's use of the Emergency Economic Powers Act to impose so-called reciprocal tariffs. If the court does break with Trump on tariffs, it would be the first time the mostly conservative court has pushed back on Trump's legal powers. It would affect billions of dollars that the administration has collected since April. It would not affect sector-based tariffs such as autos or metals. That said, the US Treasury Secretary Scott Bessent telling reporters that he remains confident the tariffs will be allowed to stay in place.
I think it went very well. I think the Solicitor General made a very powerful case for the need for the president to have the IEPA powers, and I believe that the other side, in a way, fell flat on their face. But that'll be up to SCOTUS.
Secretary Bessent, what's the plan B if the Supreme Court ultimately rules against the president's proposal?
We're not going to discuss that now.
I'll take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, polling in the first phase of the Bihar Assembly elections is currently underway. CNN News 18's Arunima is here with the latest ground report.
The lines are snaking as voting percentage goes up in Bihar at about 9 a.m. 13% average Bihari voters had come out and cast their vote. 2 hours later, by 11, it had gone up to 27.65% and steadily rising. You see these lines on both sides. On an average, these voters have been waiting, some women told me, for close to 2 hours to cast their vote. ये राघोपुर विधानसभा पड़ा।
राघोपुर विधानसभा में तेजस्वी जी के क्षेत्र में मुख्यमंत्री होए तो राघोपुर के विकास हो,
ऐसा सोच रहे हैं।
अच्छा,
अभी तक पिछले 5 सालों में इस क्षेत्र का क्या विकास हुआ है?
बहुत काम हुआ है सर।
हुआ है? सड़क वड़क बना है?
हाँ, बहुत बना हुआ
है। और क्या हुआ है काम?
बहुत लाइन बिजली सब उन्हीं को दिल है सर।
बिजली भी आ गई है
जी।
हाँ? और स्कूल वूल भी है?
स्कूल तो सब है, ये स्कूल है सर।
स्कूल है
जी।
अच्छा, और यहाँ अंदर से किसी तरह की कोई शिकायत, कोई बिजली कट गई है या किसी का वोट ना पड़ा हो?
नहीं वैसा शिकायत है
ऐसा नहीं है। ओके, दीज आर विमेन वोटर्स। आपने वोट दे दिया है? नहीं, वोट देने जा रहे हैं। हाँ। अच्छा, इस बार सरकार ने बहुत सारी महिलाओं को 10,000 रुपया दिया है। यहाँ गांव में किसी महिला के यहाँ आया है अकाउंट में पैसा? आप लोगों के अकाउंट में पैसा नहीं आया है? अच्छा, तो आप लोग जब वोट देने जा रहे हैं तो घर वाले बता रहे हैं कि खुद सोच के दे रहे हैं?
हाँ ना, हम अपने से देवे ललटेन,
अपने से देवे। आप खुद से देंगे? हाँ, खुद से देंगे। Okay, so very enthusiastic participation of voters here. Multiple issues. While the JDU, BJP combined, the NDA want people to focus on Vikas. And this morning too, Home Minister Amit Shah reminded voters about Jungle Raj. There are many others who think it is time for a change. They are looking, and Lalu Prasad Yadav's tweet was, तवे पे रोटी बहुत देर रखी रहे तो जल जाती है. So he is also advocating change to the people of Bihar. What are they really thinking? Like I said, so far very enthusiastic response, but exactly whose fate is being sealed in the EVM, that will be known only come 14th of November. With Rajesh Bhardwaj from Raghopur, this is Arunima.
Arunima there with the latest ground update from the first phase of polling at the Bihar State Assembly elections. Now, Prime Minister Narendra Modi met the victorious Indian women's cricket team at his residence and praised the players for their extraordinary resilience and comeback in the tournament after a string of defeats. The players gifted him a signed jersey bearing the name Namo 1. We leave you with these visuals. Thank you so much for watching Business Lunch. Midcap Radar on the other side.
How do you speak? अभी तो ये रोकेंगे नहीं खाने में। आपके लिए वेल आई है।
Good afternoon. Welcome to Mid-Cap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra and with me is Vivek Iyer. Hey Vivek, a barrage of earnings that we are tending to today, but the mid-caps under a lot of pressure, 400 points down. The advance decline ratio absolutely in favor of declines, though that ratio has improved in favor of advances for now. We'll see which way things go. But yes, a lot to track today.
That's right. Good afternoon, Sonal. Feels like a Monday, but it's not. We had a midweek break, but it's a barrage of earnings. Quite a lot of earnings even hitting your screen. We have a lot lined up on the show. A couple of very important management interactions as well lined up. So let's start off with the top headlines. Stocks trade soft with mid-caps being the big drag amid a rush of earnings. Metals and consumer durables are the big drags, while IT and auto eke out gains.
Astral surges following Q2 earnings. Morgan Stanley has an equal weight rating with a target price of 1489 rupees per share. Says revenue and earnings beat driven by strong pipe volumes.
Blue Star under pressure post Q2 earnings. Management says Q2 was a tough quarter, guides for a flat growth in FY26. Says room AC industry will see a 15% decline this year.
Policy Bazaar's parent firm PB Fintech under pressure after CNBC-TV18 learns that health and general insurers are likely to cut health insurance commission to Policy Bazaar by 18% to support health loss ratios after GST cut. The stock is down nearly 4%.
And shares of Redington rise over 12% on the back of strong September quarter earnings. Profit jumps over 30% on broad-based growth across markets. Management tells CNBC-TV18 that the outlook is positive and all geographies are seeing good tech growth. Maintains margin guidance of 2.3 to 2.5%.
Okay, there is some recovery which is underway on the Nifty. It was in the red when we started the show, but there's a swift recovery that we are tracking as well. For the mid-caps, that continues to be on our radar. 400 points lower on that one. And Bank Nifty is the one which is down around 110 points as we speak. Astral is the one which is up 6.5%. We have Shilpa Medicare sitting with gains of around 5.5%. SIS Limited, we'll be speaking to that management also in just a bit. That one is up around 2.5%. PI Industries also in focus, but other than that, some big movers in the broader markets that we have. Redington, for instance, are 14.5%. We spoke to the management earlier today. They did indicate that the growth levels will continue. There's something that they saw in Q2, and across geographies, they are seeing good growth that is coming in. CCL Products, the other one, which is up 11.5% in the session. Astral up 6%, which I spoke about earlier. IGI, that is a recent listing. That stock too is up around 6%.
That's right. Quite a few stocks. One stock I want to highlight is actually Zydus Life. The numbers came just a while ago. When you're talking about the US sales, the US sales this particular quarter has come in at close to $313 million. It's a miss, when you're comparing it a few estimates, and on the back of that, the stock that saw a bit of a spike post numbers has once again slumped to the day's lowest point. Some of the other stocks that continue to witness selling pressure today are the entire RE Financiers pack. Remember earlier we had highlighted about how there were a lot of PPAs that were getting cancelled, and on the back of that, you did see quite a few of these stocks, especially REC, PFC as well as IREDA. All three of these stocks taking a bit of a knock in today's trading session as well. The entire NBFC pack under quite a bit of pressure.
Yes, so that's about a particular sector, but Embassy REIT, that is the first management on the show today, reported a good set of Q2 numbers, reported its highest ever quarterly distribution since listing as well. Amit Shetty, who is the CEO at Embassy REIT, is joining us to discuss now in terms of distribution, their gross leasing, the pipeline going forward, and a lot more. Amit, good afternoon. Thank you so much for joining us today.
Good afternoon, and thank you for having me, and good afternoon, viewers.
So highest ever quarterly distribution since listing. We'll talk about what the guidance there is. You're at the midpoint already, but what was the gross leasing that you saw in Q2 and the first half as well?
Yeah, so the first half, we saw about 3.5 million square feet of gross leasing. The Q2 was again, stellar performance. We leased about 1.5 million square feet of that 3.5 million square feet on the backdrop of very strong GCC demands.
Okay, so it's coming from GCC, not so much from the, core IT sector that used to be the driver earlier?
Yeah, I mean, look, the ITES sector has been a little bit muted for quite some time now. The demand is typically driving from the GCC sectors. Yeah, but again, this quarter, about 38% of the demand came from domestics as well, right? So that's interesting.
Okay, so midpoint, would you be looking to hike the guidance, FY26 guidance at a little over 25 rupees?
See, look, we're actually in a very comfortable position today as we speak, right? So our focus is on increasing the occupancy as well as delivering a pipeline. We've just declared a 7.2 million square feet development pipeline, which will give us about 630 crores of annualized NOI.
Okay.
So that's where we are, yeah.
You know, interestingly, we spoke to Mindspace REIT today as well, and they indicated some of the micro markets are seeing exponential rise in rentals, 100 per square feet in one of the macro markets in Hyderabad itself. That's the case for you as well in some of the places. How are the rentals ongoing right now?
Right. See, the rental rates are actually firming up across the country. If you see across the country, the rental rates have firmed up anywhere between 5 to 12% at a minimum. But again, you know, flight to quality is all, is something which every customer is expecting. And I think, you know, we've always got a premium to the market, right? So the rental rates, the vacancies are declining and, you know.
How much higher are those premiums is what I wanted to understand.
So, you know, anywhere between 10 to 15% premium to the market, right? Plus there is a rental increase itself. So, yeah.
So what is the typical tenure of an agreement that you have, and what percentage of your portfolio is up for renegotiation?
Typically, these tenures are about 15 years contracts, 5 plus 5 plus 5. And the first 5 years or 3 years are locked in.
Okay, so FY26, 27, anything up for negotiation?
So a lot of that, see, across, I think, the next 4 years, we have about 36.1 million square feet of contracted escalations, right? But our expiries are coming down. Approximately about 1.5 million square feet is about for expiries. But then that's, you know, it's got a mix of exits as well as renewals as well, yeah?
Okay, so it'll be a mix at that 36 million square feet number that you saw.
So 36 million is a contractual escalation,
Got it.
right?
Okay.
And what will that number typically be? It will be lower than the market.
That number could be anywhere in the range of about 14-15% because, you know, typically the contractual escalations are about 15% every 3 years or 5% per annum.
And typically now when you go and onboard new assets, you know, what is the mode of capex? Do you take on debt or would you look at accruals itself?
See, look, we've always been very opportunistic on that sense, right? So, you know, if debt is cheaper, we'd like to fund it through debt. If equity is cheaper, you know, we continuously monitor the markets. So, you know, we'll be very opportunistic on our, acquisition strategy.
So, keeping aside the financials of it, you know, how you're going to fund it depending on whichever is cheaper, are you going to look at more micro markets? What kind of capex have you set aside in terms of new asset acquisitions?
Okay, let me begin with our development pipeline. So, you know, there is organic growth of about 7.2 million square feet that we'll be developing. I think we'll be spending about 4,000 crores on that, right? But having said that, you know, inorganic growth is predominantly based on, you know, a couple of criteria. The asset quality itself needs to match our asset quality, which is campus style, ESG grade. The second thing is that we want to operate in the top 6 cities of the country, right? So, you know, we'll be very opportunistic. We don't have a budget per se, but, you know, if it meets these criteria, we'll jump
What
at
is,
the
according to you, an ideal mix, commercial versus hospitality?
So, look, you know, hospitality is, you know, we are very focused office REIT, right? So hospitality has always been part of our total business ecosystem offering, and it's been a part of a central amenities, right? So, and having said that, you know, hospitality has always been very accretive. We grew our NOI by about 12% this quarter. So, you know, there currently is about 6%, and we want to hover around that.
Right.
Okay, so we'll touch base upon hospitality in greater detail, but that's it for today now, Amit. Thank you so much. Thank you so much for joining us and telling us about the future outlook of the business and a lot more. Always a pleasure speaking.
Thank you so much. Thank you.
All right, with that, we'll slip into a short break. Management of SIS will join us next to discuss their Q2 numbers and more.
Welcome back to Mid Cap Radar. Well, earnings are coming in thick and fast. The next management on our show is SIS. Delivered a good set of numbers, strong double-digit growth for the second consecutive quarter. Dheeraj Singh, who's the CEO at SIS, joins us now to discuss more. Thank you so much, Mr. Singh, for joining us. Well, first up, double-digit growth as far as Q2 FY26 is concerned. Do you hold your guidance for mid-teens growth? Along with that, you had told us that the combined revenue run rate on an annualized basis will be close to 15,000 crores. So do you hold on to all of these numbers?
Absolutely. I think on an organic basis, we have achieved a 15% year-on-year on the revenue side.
Right.
And if you look at our revenue growth, it's basically of three components. It's the organic growth that we have through volume increase. The second is what we get through the price wage increase, and which has not really increased in the past few years, and we hope that will happen in the coming year or so. And the third part is the inorganic. The deal that we did, AP Securitas, there's been no impact of that in the Q2 numbers, but it will come in the Q3 numbers. So as of now, the run rate without the AP Securitas for end of September was 1,300 crores. So annualized basis, it is about 16,000 crores. And then the impact of AP Securitas will also kick in from Q3. So we are well on track for a guidance of 15% plus on the revenue side. But the good part is the margin improvement. That is also improved. And now at the group level, we are at 4.5% with all three segments showing a significant improvement in the margin, both in absolute rupee value as well as the percentage terms.
So 4.5% will be the peak margins as well, Mr. Singh, because in Q4 of FY25, we had seen margins close to 5% as well. You are weeding out low margin contracts and low margin, overall segments as well. So what's the guidance there?
So the focus had been on the India facility management and the security. On the security side, we had achieved about the 5.4% margin for the past 1 or 2 quarters. Even in this quarter, it's about that number. The good news is on the facility management side, which we had given the guidance every quarter, we expect to see a 25 basis point increase in the margin. And on a year-on-year basis, it has increased by almost 1%, and we are at about 5.2% on the facility management side. So India is doing pretty strong on the margin front as of now. International, yes, we still have some issues to fix in 1 or 2 of our businesses. But there too, we have increased our margin from last quarter 3% to 3.3%. But there's still some headway to go there. And once that reaches the equilibrium of about 4.5% internationally, then we should be back at the group level of about 5.5% or so.
Okay, Mr. Singh, you also alluded to the fact that you're looking to take a certain amount of price hike. So what will be the blended price hike you will take across your portfolio, and which portfolio is expected to see the sharpest price hike? Any pushback from customers?
So our business is a cost plus model. It's a cost plus a percentage, and the cost is the direct function of the minimum wage. And as you might be aware, over the past 10 years, there's actually been a negative increase on a inflation-adjusted basis for the minimum wages. That definitely needs to be corrected, and I'm sure the government is looking into that. Over the next 2 years or so, we expect it to be averaged out. Typically, it's been about 5 to 6% on a yearly basis. And so if we do the catch-up, which some states have already started doing, but over the next 2 years or so, there should be about a 10% correction also.
Okay, when you're speaking about the overseas business, we understand that you also have a certain proportion of revenues coming in from overseas. We believe you do have some presence in Australia. Correct us if you're wrong. What is the outlook over there, and what kind of growth can you see there?
So it is a significant business in Australia. We are a dominant market share leader out there with 22% market share of Australia.
Right.
The revenue side, it's been very strong. It's grown about 18% on a year-on-year basis.
Okay.
And we are seeing some strong growth on the infrastructure side, steel, energy, railways. And the unemployment part in Australia, which had caused a slight issue on our prices, the economy is relaxing a bit. So that will ease on our wage pressure. So the margin should start seeing some improvement. Besides that, we are doing a lot of SG&A optimization in the Australian market. So the revenue is strong. Now we are focused on the margin side in Australia.
All right, take that point, Mr. Singh. Thank you so much for joining in today with the outlook on the business going forward and a lot more. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets on the other side. Welcome back. Well, in an exclusive conversation with the management of SRF, I spoke to them and understood how the company plans to execute on inorganic growth, whether they have any such plans and if it is on the cards as well. The management stated that they have been very careful in terms of growing inorganically. Listen into slides of that conversation.
Don't chew more than we can, don't eat more than we can chew. And I think that's been something that's been very important to us, because there is this whole thing of keeping up with the Joneses. There was this whole fad of going and doing international acquisitions, doing this, doing that. And we've realized that while we've looked at organic, we've done inorganic growth as well. But we've been careful in terms of choosing our targets or choosing what opportunities arise to make sure that as a company we can digest it and grow. And again, from a governance perspective, etc., sleeping peacefully at night is something very important to us.
So I was just going to add on to that. You rightly said that you have in the recent past not seen inorganic growth coming in from SRF. But is it off the cards completely, or will it happen someday if you talk about global expansion?
Yeah, you know, it's something that we're very careful about. And I'll tell you, when you start with some of the data from whatever I've read, 7 out of 10 acquisitions actually fail. Okay, it's only 3 out of 10 which actually create value, right? So when we look at an acquisition, either we get access to a market we can't get access to, or a technology we can't get access to, or it gives you consolidation or something. But I think we have to be very clear that there has to be a good reason to doing that. More often than not, we found that doing it organically is, you know, much cheaper. It might take a little bit more time, but it's actually much cheaper in the long run. Plus, you get the benefits of being able to create your own culture from day one, your own, you know, the SRF DNA comes into the system, your processes, technologies, etc. can all be much less cumbersome and less risk in that sense. To some extent, maybe, people say that we are a little bit more risk averse, but that is also us. You know, managing the balance sheet for me, for example, is extremely important. I would never bet the balance sheet on something that, would again give us sleepless nights.
So even from technical textiles business, if you can explain how is it so cash rich? Because even this would have some sort of commodity or cyclical impact sometimes, right? Or US tariff issues. So how does that work for you?
Not, to be honest with you, not really, Sonal. It's very much a domestic business. I mean, 95% of our revenue is generated in India. It's really a, sort of very structured business.
Annual contract.
It's an annual contract with the tire companies. Doesn't change very much. It's just cost, and that's what you play on. So if you look at the history of that business, it's basically generated an EBITDA of plus minus 300 crores a year, and that's where it's been. This year we're getting hit negatively because again there's a lot of dumping from China, and that happens sporadically. When that happens, then we probably have to fight for anti-dumping or this and that, but that business is just carries on at the 300 level, and then you may have replacement capex of 50-70 crores. The rest of the money is used for
other businesses. And what is the ROC on this business that you're managing?
Actually very high because it's all depreciated plants. So it's just old plants lying there. So if you look at it, ROCs would be high, but it's not. If you were to look at ROCs in the context of putting in new capacity, it would be terrible.
Oh, okay. For the old plants, it's high.
Yeah, because we're not adding anything really over there.
And there are no plans of adding anything.
No.
It's more replacement capex where there's an obsolescence of a machine or something where the efficiencies, etc., have become very poor. That sort of replacement is happening, but those are very small capexes as compared to what one invests in the other businesses.
Well, a very interesting conversation there with the management of SRF. Well, a few minutes ago, we had highlighted about Zydus Life and the US sales number. Zydus has now moved to the lowest point of the day, down almost 3%. Another company that just came out of its results was Cholafin. So Cholafin, that particular company, the numbers, looking at the P&L looks largely in line, but that stock too has moved to the low point of the day. So Chola Financial is the one that we are discussing. Pidilite, too, one particular stock that's cooled off completely from the day's highest point, now near the day's low. But with that, it's all the time we have on this edition of Mid-Cap Radar. Mutual Corner when we return.
Hello and welcome to MF Corner. I am Sonal Bhutra and with me as always is Vinny Motiwala. Well, you know, Vinny, today on the show we are going to be speaking about this NFO which is coming in from Bandhan AMC. It's a healthcare fund, so you would also be interested in this one because you track that so closely. But let's talk about the fund first up before we speak to the guest on the show today. It opens on November 10th and closes on November 24th. So these are the dates for this particular fund. The benchmark is BSE Healthcare TRI and the fund manager for the equity portion, it is Mr. Viraj Kulkarni, and for the debt portion, it is Mr. Brijesh Shah, and Ms. Ritika Behra and Mr. Gaurav Satra will manage the overseas portion of this particular fund. The risk factors that they have mentioned in their presentation include the valuation risk. We'll, of course, ask the fund manager about it, a volatility and concentration risk, and any regulatory risk which would come by considering the sector that they are investing in as well. But who is this fund suitable for? Investors who are seeking a high exposure to high potential growth sector fueled by structural mega trends. We'll discuss those trends in greater detail. Those who are looking to diversify with thematic strategies which will have both growth and defensive characteristics, and also investors which are comfortable with higher volatility because it is a long-term plan. Potentially higher returns is something that it would offer compared to broad market funds. So these are some of the aspects of this particular fund. So let's get in. The fund manager, Viraj Kulkarni, who is the Vice President Equities at Bandhan AMC, is joining us now to take a few questions. Thank you so much, Mr. Kulkarni, for joining us today. You know, the fund presentation says India's healthcare spend is only 5.4% of GDP versus 16.5% in the US. How soon do you expect India to bridge this gap meaningfully? What are the key triggers? And are these the triggers which are making you so bullish on this particular space?
Thanks for having me on your show. That's a very relevant question that you brought up front. So I think there is a broad trend that is playing out in India, which we want to capitalize on. It's the demographic aging of our society. So today, where our median age is around 28 years, in the next 20-25 years, our median age will be around 38 years. So median age is nothing but the average age of the population. And this trend is very obvious because our fertility rates have dropped below the 2.1 level, which is essentially the replacement level. Which means that going forward, there will be lesser young children that are being born than what are already there in the system. We live longer, our life expectancy goes up. That means that the average age of the society is going to go up. When the average age of the society goes up, the society ages, the nature of spends are going to dramatically shift from education, children's marriage, bringing up kids, etc., to other places like healthcare, discretionary consumption, travel, etc. And as societies age, as chronic ailments start much earlier in life and become very prevalent, the spends on some of these chronic ailments like blood pressure, sugar, etc. are also going to meaningfully increase over time. So that is why we see this as a structural trend playing out in not just in India, but also globally, because some of the global leaders have also called out that the world is aging and demographics is destiny. So I think that is the mega trend that we are trying to play over here in India and globally. If we take the example of the US, when the US aged from a median age of 27 to 37 in a period of 30 to 40 years, from 1975 to 2015, during that course of time, their healthcare spends as a percentage of GDP doubled. Also in India, even if we don't go from 5% to 15% or 16%, see, the US is far richer today than even the US was far richer in 1975 than what India is today. So their spends on healthcare will always be higher than what we do, even as a percentage. But can that 5 go to 7, 8, 10? That is the question. I think the answer is yes, because as we age and we become richer, our spends on healthcare are only going to go up. So that's the structural trend that we are trying to ride over here.
Okay, that's a structural trend that you all are looking to ride. But at these valuations also, Viraj, given that when you're looking at it, BSE Healthcare is somewhere times 37 times PE, which already seems a bit elevated, right? So then what will justify you starting this at these valuations, or how would you expect more growth?
Okay. So if you look at the BSE Healthcare Index, the trailing PE on a long-term basis has been close to that 35 ballpark as such. It's a stable sector that generates very healthy ROEs and cash flows. Such sectors, just like FMCG, always get a multiple which is higher than the market. because with FMCG also we see the same story as such. And if we compare the current valuations to the long-term averages, the valuations are not very far away from what a 10-year average was. In fact, the valuations have come off meaningfully over the last 1 year. Last year, the sector was at 20% premium to what we are today as such. So we look at it as a structural growth sector available at valuations which are close to fair value or slightly more than fair value for the sector. Also, healthcare being a defensive is a sector which typically tends to outperform market corrections. That has always played out in the past. Whether it will play out or not, we can't be 100% sure. So I think, yeah, sorry.
Oh, okay, no. So I just want to understand that you've said that given the underrepresentation of healthcare in Indian indices, that is around 6% of Nifty 500,
Correct.
is this more of a structural opportunity, or do you look at it as a cyclical opportunity and goes into the thematic theme overall?
No, so we don't look at, so that is where we are trying to be slightly different. We are not looking at this thematic fund as a cyclical opportunity, wherein we want to play a 1-2 year upcycle in healthcare. We are looking at it as a structural opportunity, wherein we think at 6.5% as a percentage of the index, the weight of healthcare is very low. With the healthcare sector now becoming more domestic focused, we see that this weight can only go up meaningfully. There will be cycles. It will not go up in a linear fashion. There will be ups and downs, but the broad trend will be upward. So we are trying to play this structural trend over a 5-7 year period, and we don't look at it as a 1-2 year thematic opportunity as such.
You've also mentioned a balanced 20-30% allocation across 4 segments: domestic, branded, hospital and diagnostic, CDMO, API and export side, right? What parameters will determine this tactical overweight? Is it more tactical or underweight calls among these? How will this be working out?
So we want to go bottom up, but while we go bottom up in a sectoral fund, we think that there are these 4 segments of the market, which is generics that we export largely, domestic branded pharma, hospitals and diagnostics, and CDMO. These are 4 distinct segments within the pharma space. Each of these segments, we want to have 20-30% exposure. We are reasonably bullish or reasonably confident on the long-term growth trajectory of these trends or these themes or these 4 subsegments. And each of these segments has a role in the portfolio as per us. So we are not building a fund which is skewed like we want to own only hospitals or only CDM or something like that. We want to build a balanced fund with a 20-30% allocation to each of these subsegments. Now, on a bottom-up basis, if we find a lot of ideas in a particular subsegment, say generics, we'll be closer to 30%. If on a bottom-up basis, we don't find many ideas, we'll be closer to 20%. But the idea would be to discipline, because it's very difficult to predict next year which of these subsegments will be the big outperformer or underperformer. So the idea is to be allocated within that 20-30% band at all times, and tactically being 20-30 depending on the opportunities that we can find.
Okay, all right. We take that point and we have a lot more questions to ask as well, but we have to take a quick commercial break. When we come back, we'll continue the discussion on the other side.
Welcome back to MF Corner on CNBC-TV18. We still have with us Viraj Kulkarni, Vice President Equities at Bandhan EMC. We are discussing the Bandhan's Health NFO fund, which is going to be launching next week. Viraj, how will this fund balance the exposure that one could see between defensive healthcare plays, maybe like hospitals, right, and growth-oriented pharma, CDMO, opportunity-wise? What will be that?
So the balance could be either in the defensive or aggressiveness could either be in terms of the market cap also, because you would have some large cap opportunities over there and some mid and small cap opportunities over there, as well as the defensive in terms of generics or domestic pharma, and the more aggressive in terms of CDMO. So if we just try to fit in, the idea is to find the stocks wherein the fundamentals match the valuations to that extent. We are not so concerned whether it's a large cap or mid cap or small cap, or if it's a defensive or an aggressive growth company. Anyways, we have put a broad framework wherein we will have a 20 to 30% allocation to each of these themes, CDMO, export generics, hospitals, etc. But within that, all the stocks where the valuations matches the fundamentals we like. If we find more such ideas than can fit in the fund, then obviously we have to filter down to the best ideas. But in the current market, it's not that the markets are so cheap that you find a lot of ideas out there. The handful of 25, 30 ideas where valuations match fundamentals, we are very happy owning those. Some of them could be lower growth but more defensive, which could be the mega caps or the generic companies or the domestic pharma companies. Some of those could be higher growth but higher risk in CDMO, some small hospitals as such.
Okay, we
Idea is to have a balance.
No, please continue.
No, that was the last thing. To have a balance, the idea is not to skew either too much on the risk or the defensiveness curve. Idea is to have a balance between these two.
Take that point. So in that case, I know you said that there is no particular allocation that you'll have for large caps or mid or small caps. But the general idea is that large caps have more stability, mid or small cap will have higher growth potential. Currently, how are you looking at valuations across the two segments in the healthcare space itself?
Yeah, I think for healthcare, it's largely true or similar to the rest of the markets. Because the broader markets, if you see, large caps seem to be reasonably valued and the earnings expectations also seem to be quite reasonable. So even if some of the mid caps or small caps have higher growth, the expectations are very high in terms of earnings, and some of the multiples are also not very attractive broadly. So in the current market, we would have a bias towards large caps, not because we like large caps, but on a bottom-up basis, we would find more ideas over there. But as the markets have been sideways for the last 1 year, there are a large number of, or there are at least few stocks in the pharma small cap space or mid cap space, which have corrected 20, 30, 40% from their peaks. And that opens up opportunities for stock picking over the next few months as such.
Okay, sure. That's interesting there. But Viraj, what about healthcare stocks globally? Because they have outperformed the S&P 500. Do you expect Indian healthcare to mirror that trajectory, and maybe then we could start seeing that outperformance now?
See, the global stocks have outperformed largely on the GLP-1 theme. And there are two companies that Novo Nordisk and Eli Lilly who are riding that theme as of now, and there are some ancillaries over there. In India, we do not have any of these innovator companies on that theme as such. And I think that is why we should keep our expectations reasonable. This is a sector that can give us reasonable compounding higher than the market for the next 5-7 years. We are not expecting some sharp re-rating in the next 1 or 2 years by any of these trends as such. It's like AI. AI is doing well globally, but in India, we do not have many AI plays. Similarly, GLP-1 themes are doing well globally. In India, we have few names, but they are very small and very few, so that the sector may not do that well as the global sectors have done.
Okay, so in that case, I know I'm not sure what exact answer would be to the next question that I'm going to ask you, but the investors would like to know what would be your 3 to 5 year return expectation relative to the BSE Healthcare TRI benchmark?
So the way we want to put it is, without giving an actual return expectation, the way we want to run a fund is, if the market can compound at a certain level, we hope or we are expecting the healthcare index itself to compound higher than the market. If you take 20-year returns of the BSE Healthcare Index, it has given 2.5 percentage points returns higher than the Nifty. Nifty is some 12.5%. BSE Healthcare Index is some 14.9 or 15% compounding for the last 20 years. We believe that this can continue given the structural trends of aging population. So index itself should be able to give 2 to 3% delta over Nifty or the broader markets. And we would expect to generate anywhere between 2 to 4% alpha over the medium term. That would be the endeavor over the healthcare index.
Okay. What sort of investors should maybe look at this fund, right? Maybe could it be in the core holdings, or do you think maybe it's more like a satellite thematic exposure that one should view this fund as?
I wouldn't put it in a core holding, to be very honest, because core 70% of your portfolio would be the flexi or the large cap or the large mid or some of the hybrid funds. That would be the core of an investor's portfolio. This is a part of the 30%. Wherein you have exposure to sectors which can grow faster than the market. It could include mid caps, small caps, or some select sectors like healthcare. Okay. So within that 30%, maybe a 5-10% exposure would be ideal.
That's very candid and honest of you to say that it should not be a core portfolio, but satellite, yes, it would work wonders for someone's portfolio. But, since this is a single sector fund, what internal guardrails do you have for volatility, concentration risk? Concentration is one thing that you have also mentioned into your presentation for this NFO.
Yeah, so I think it's a single sector fund, but within the sector, the 4 segments that we have identified, for example, what happens in hospitals in India is in no way connected to what happens in generics or generic exports to the US. So even though it's a single sector, the 4 sub-segments are largely uncorrelated with each other. So that's a good thing, because it means that if there is some tariff put on generic exports, it only impacts 22% of the index. The rest of the index is largely impact free to that extent. So that is, I think the sector itself is naturally diversified. That is good for us. On the guardrails, all our funds have a fund casing to that extent, wherein this 20 to 30% exposure to each sector will be one of the guardrails. Then the starting weight of mid and small caps is another guardrail, especially small caps. We will not start with, say, a 5% weight to a small cap stock. The starting weight has to be 2-3% or something like that. So I think those would be some of the guardrails that we put on ourselves as such.
Viraj, one big issue or a risk that comes in is regulatory risk, right? Because that plays an important role, especially in the pharma sector, the US FDA approvals or dependency over there. How do you assess this risk?
So this risk is something that we have to live with. Again, the lucky thing, see, if you go back to 2015, 70% of the index was export generics, wherein US FDA had a large say on what happened to the sector. Now only 22% of the index is US generics. So that regulatory risk is there, but then you work with it. So you look at companies which have more diversified manufacturing base. Because if one of their plant gets a FDA warning letter or FDA issue, or maybe some of their other plants can supply. Or if you look at countries or companies which are supplying to multiple countries, not just the US. So companies supplying to US, Africa, Asia, etc., diversified presence as such. So I think that is how we will diversify away the risk to some extent. Look at companies with diversified exposures. Look at the valuations, because if the valuations are cheap, and some negative news comes, the downside is always limited. So there are multiple levers to mitigate issues. The most important or the best thing for us is that 22% gets impacted by US FDA. Only 24% is hospitals, which gets impacted by domestic regulators. 36% is domestic pharma, which has a different regulator. So unless and until all regulators come up with a negative view at once, then it's a problem. But otherwise, only if one regulator comes up with some negative view, it impacts only one section of the fund, which will be between 20 to 30%.
US FDA continues to be that big, I would say, looming risk for any pharma company, right? There's a US FDA note and everyone's like, what the impact of that one? Last question before we let you go. India's share in the global CRDMO space, this is one space that's been heating up. It's around 3.6%, and the space is expected to grow by 9 to 15%. We still talk about that China +1 factor. So will you look at some of these exposure stocks which will be able to ride on that theme?
Yeah, we will definitely look at it. So, see, that China plus one theme has been playing out across sectors. Some places it has worked, maybe electronics. Some places it hasn't worked, something like a chemicals. Because that China plus one has been talked about, but we haven't seen big growth pickup in that space as of now. So we are not banking on the theme per se. If it works out, great. We'll work more on a bottom-up basis for these CDMO companies. We'll have exposure of 20 to 30% to even CDMO, but the idea will be to look at it on a bottom-up basis where we are looking at the pipeline of that individual company, what kind of opportunities it is working on with innovators or other companies. And if we think that the pipeline is good enough, we'll go and invest in that company. We'll not necessarily bank on a broad-based China plus one playing out as such.
Okay, Virat, surely thank you so much, for joining us today, because this is a very important space. Everyone's keeping an eye out on this one as well, the healthcare side, and a new fund coming in and starting on 10th of November. So that is what everyone's watching out for. But to hear what the details that were listed out of the fund or how they're planning to invest and going forward, what are the risks, challenges and the pros and cons over there as well. But thanks so much, Virat, for joining us. But thank you so much for tuning in as well, viewers, to MF Corner as always. With that, it's a goodbye from Sonal, myself as well as the team who put this show together. Don't go anywhere. Last hour of trade is still left and closing bell is up next for that.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwan index managing to hold on to gains of 0.8%.
I think the Solicitor General made a very powerful case for the need for the president to have the IEPA powers.
Bihar is voting after the SIR has happened.
Unlike the Nifty bank on Tuesday did not make a fresh low, so there is a bit of a positive divergence as far as the banks are concerned.
I think we should be able to get the double-digit growth for the full financial year.
M&M is likely sold its entire stake and the block deal is done.
83,600 plus on the Sensex and 25,630 on the Nifty. So it's kind of flattish, slightly positive bias.
The growth rate of the industry will get normalized to a large extent.
The SUV on the PV side, as you call it, we would expect to have seen mid to high teens growth.
When it comes to chemicals, it's not the US. The big daddy in the room is China.
We expect the innovative business to grow in a healthy mid-teens as we go along.
Hindalco got knocked back in today's trading session as its arm Nobilis posted a mixed quarterly set of numbers.
Barrage of earnings that we are tending to today, but the mid caps under a lot of pressure, 400 points down.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi, and Nigel is also there with us in the newsroom. A bit of a quiet and sluggish kind of a trading session. Markets have now been down for four out of the last 5 trading sessions. The bigger cut is seen in the mid-cap index, and that's down nearly about 500 points. But the story is about individual movers reacting to numbers, and there have been so many of those.
No, absolutely. And it's a bit of a disappointing session, you'd have to say that, Reema, because we're not only underperforming global markets, the Nifty is very well split between the gainers and the losers. So despite a couple of IT stocks doing well, despite something like Reliance doing very, very well today, you're still getting this kind of a sluggish movement on the way down. And the culprits actually are some of the big stocks on the other side. Hindalco has been a casualty right from the morning, and that hasn't changed. Grasim has been down from the word go, and this is no buy on dips. In fact, Grasim, the pressure has only increased as the day has progressed. So these two stocks have been, a bit disappointing. And again, the Bank Nifty, if you were expecting any kind of support coming in from there, well, it has flattered to sort of deceive, not too much, been down about 0.3% throughout. But like you're saying, the bigger issue is in the broader market, because there we are seeing some pretty severe result reactions wherever numbers have missed the mark.
Well, let's quickly run through some of them. For instance, Delivery, Aditya Birla Fashion, Blue Star, which has cut the revenue guidance. That's reacting adversely. Ola Electric is another one. But on the flip side, you've got quite a few winners as well. That's the performance there. You have Ola Electric down close to about 4%. On the positive side, you've got a Paytm. Yeah. You've got an Indigo. Reddington has been strong since morning, and the company, when we chatted with them today, held on to their margin guidance. So 2.3 to 2.5% ex of their Turkey business arena. So holding on to guidance. Nuvama has been a big star in today's trade. Yeah, absolutely. Nuvama is doing their bonus issue as well. So that kind of helps sentiment. And let's not forget the other big story of the day, obviously, has been excitement in the paints arena. Is the green color coming back to the paint market? The resignation of the top executive at Birla Opus has suddenly got the market excited. And we got confirmation because he spoke to the management of Berger Paints, and they indeed asserted that, yes, now Birla should actually stabilize at a run rate of about 900 to 1,000 crores per quarter. And they don't expect that kind of, huge intensity in terms of discounting, dealer discounts, etc. All of that should come down. So reduce competitive intensity, which is why you're seeing something like Asian Paints do so well in today's trading action. Well, let's see if we can go across to Nigel now. Nigel, what do you make of things?
Well, that's right. In the mornings will be when we were chatting, we had spotted out 2 stocks, right? Both of them from the Nifty itself. We spoke about Hindalco. The markets will not pardon. Capex going up by 2 times in around 3 years on the same project. And the other one we said was about the paint sector, and I think both of them are in focus. Grasim down, and Asian Paints, that one's bucking the trend. Remember, the stock is down 20% from the time that Grasim launched Birla Opus in February 2024. And valuations as well had corrected. But as Nomura pointed out in their note, they believe better times to come. Problem is that the markets appear to be a bit of a sell-on rise today. And that's why we're still down. Breadth of the market is not, that's telling you the picture actually, not the headline index. 3 stocks declining for 1 stock that's advancing, guys.
Okay, all right, got that. So with that, let's quickly tell our viewers what's lined up over the next hour or so. It's a packed lineup as always. We're putting the spotlight on OMCs. They have come in for some selling pressure today. This is despite Morgan Stanley actually sounding quite optimistic. Morgan Stanley's revised targets higher for most of these OMC players. We'll get you more analysis with Sonal in just a bit. And then we have PB Fintech Policy Bazaar in focus as well. Stock's been under a lot of pressure. Sources are telling CNBC-TV18 that insurance operators have cut commissions to Policy Bazaar by as much as 18%. So what's behind all this? We'll be back with that big story in just a minute. And then, of course, paints. That is a big discussion point like we just discussed. And there's a fair amount of green on some of these paint stocks. Is it going to last? What's the way forward? We'll discuss this with our guests as well. But before we get down to all this, and then, of course, the stocks that are reacting to numbers, Paytm on the upside, Delivery and NetWeb on the downside. More specifics on some of these counters coming up with our team in a bit from now. Let's get started, however, with Mitesh, as always, with some closing ideas. Mitesh, it's been a very sluggish day at the index level, no headway. What are you doing in the last hour now?
Yeah. Good afternoon, Surbhi. One, I think, very clearly, paints, you were just talking about that. I've got Asian Paints as a buy. Of course, there's a fundamental news over there. Also is the fact that last time the stock had failed to get past this 2580, 2590 zone, and today it's done that. Though it's marginally up, I think, but the overall setup, given the fact that it opened with a gap and then sustaining, is a positive sign. So I would take Asian Paints as a long with the stop just below levels of 2578 for targets of 2655. And the stock on the sell side is T-Tower Wagons with a stop at 875, sell for targets in the range of 820 to about 815.
Okay, let's talk about oil marketing companies. They are in focus on the back of multiple brokerage notes. Sonal joins in with more. Sonal.
Bullish notes coming in from brokerages on oil marketing companies. Let me start with Morgan Stanley. They have an overweight rating on the stocks. All three of them have increased the target price on all three names substantially from the current levels. That number will come up for you on the screen. Now, why are they so bullish on these names? They say fuel retailers' free cash flow will be as large as third of their market cap over the 3 years cumulatively after the $20 billion of investments come on stream by FY27. Half of this free cash flow that will be distributed, and the 20% return on equity and 10% dollar earnings CAGR of over the 3 years will make these stocks very attractive for shareholders. They prefer HPCL over IOCL and BPCL as well. $65 to $70 per barrel. The crude levels is a sweet spot for OMCs, but we've seen in the past that crude price movement hasn't impacted them so much on a daily basis. Reduced intake of Russian crude has limited earnings impact for Indian refiners. They do not think it will be a big impact, and they will continue their growth CAGR going forward as well. Even Goldman Sachs has increased OMC's EBITDA by 3 to 9% for the next 2 fiscal and 12 months target prices by 9% on an average. They estimate there's still a 5 rupee buffer in the marketing segment to cut prices before the margins can drop to normalized levels. They have high levels of spreads around 11 to 12 rupees on gasoline and diesel. They reiterate their buy rating on HPCL and BPCL, where they think valuation, the current valuation, have good risk reward for stakeholders, and LPG losses have narrowed over the past few years, so that will also bode well for their marketing segment. That's why Goldman Sachs is also very bullish on these names.
Thank you, Sonal, for explaining that so well. Ramesh Kant, head of research at Chola Securities, is also with us. Ramesh, stocks of oil marketing companies have been moving up in anticipation. The numbers were good and anticipation of better prospects. Now brokerages are turning bullish. Where do you all stand on oil marketing companies, and is it attractive at this juncture?
Yeah, good afternoon, Rima. There was a trade and it has played out. Maybe a last leg of the rally is still pending out there. If you look at oil marketing companies, Q2 numbers were good because most of these companies had in Q2 have imported Russian oil. So there's that leverage was there. The window was there to get into play, and that has played out. Plus GRMs, I think, has topped out. Q3 and Q4, the GRMs will see a slight decline rather than where they are as of now. For each one of them, they have a different set of GRMs playing out. Port is definitely under pressure. So if you're looking at a long-term 3 years, 5 years, 6 years kind of a span, then I don't think the Port which they are enjoying right now is likely to be there. It's a deceleration kind of environment out there. So having said all this, it's not a structural growth story into play or a wealth creator kind of a place. Trading plays where there, I think maybe 5-7 percentage point still you may get, but that should be the end of it. So we are not, invested into OMCs from an investment perspective.
Absolutely. And we'll sort of come back with more in just a bit, but not invested in OMCs. But I mean, stocks have done well. Today, of course, there's a bit of a pullback after the 15-20% moves over the last little over 1 month since the oil minister was here in Mumbai speaking with investors. Well, the other big story, right, is PB Fintech. Now, Yash, my colleague, is picking up that there are commission cuts afoot for Policy Bazaar. This is on the back of the GST changes, GST cuts which had happened. And we reported this about an hour and a half back. Stock is down 3.6. It had fallen almost 5.5%. Yash is here. Yash, take it away.
So after a couple of weeks of discussions within the general and the health insurance industry, all general and health insurance companies have unanimously decided that they will reduce commissions or cut commissions which they pay to Policy Bazaar on sale of health insurance policies by an entire 18%. What we've been given to understand is that, health as well as general insurance companies have taken this decision, to support the deteriorating loss ratios. They don't want the loss ratios in the health segment to increase, for which it became very important for all the companies to pass on the entire 18% cut in commission to Policy Bazaar. This cut of 18% in commission was already done to other distributors like banks and agents, and now it has been decided that the same cut of 18% will be done to Policy Bazaar as well for the sale of health insurance policies. As far as this cut of 18% on health insurance commissions is concerned, it is expected to become effective starting December 1. It is important because health as a segment is a large segment and a profitable segment for Policy Bazaar. It contributes 20% to the revenue as well as 60% to the value as far as Policy Bazaar itself is concerned. And that's not it. What also we've been given to understand is that life insurance companies are also discussing, the discussions are still underway in terms of how much cut do they want to pass on as far as sale of life insurance policies is concerned. So that decision from all the life insurance companies in terms of commission cuts coming from there also still remains to be an overhang as far as life insurance business of Policy Bazaar is concerned.
Okay, all right, got that. Yash, thanks very much. So PB Fintech still slightly lower today. And if you look at it, the stock has actually been sideways for the better part of this year. It hasn't done too much. Very, very range bound between, say, 1,600 on the lower side to about 1,800 on the upper side. Dharmesh, quickly, PB Fintech and, if indeed the commissions are lowered by this amount on an ongoing basis, then what?
Yeah, so I mean, too much volatility out there and too much push and pull happening around regarding the commissions. How much should go and how much should be, borne by the distributors like PB Fintech of the insurance policies. So I think it's better to avoid it, not to forget the valuation multiple they are sitting in. So they were just, so wafer thin kind of a margin business. So volumes are the only key player out there. And if some chunk goes away, so it's a difficult time. So my advice would be just to stay away from the stock. Let the thing settle down and then calculated, again, investment bet can be taken.
Okay. All right. Got that. The other stock to focus on, actually, which came out with an interesting set of numbers, is UPL. The quarter has been looking good. UPL posted a profit of over 550 crores versus a huge loss, 400 crore rupee plus loss same time last year. Their margins are looking good at 18.3, and they've actually increased their EBITDA guidance as well. They expect growth of 12 to 16% now versus 10 to 14% earlier. Now, again, Dharmesh, on UPL, and the stock's reacting quite well. The question is sustainability. I mean, we've had these flash-in-the-pan kind of quarters even earlier, which seem to indicate the worst is behind for chemical companies. But is it? Your thoughts?
I mean, going by last 2 quarters number, most of the specialty chemical companies specifically did well. Even agrochemicals did well. But again, the caveat is always out. You never know when these companies are going to stabilize, and things in the European market has still not normalized to that extent. If you look at soda ash, the volume of take was very low, the prices have been falling, and all these chemical molecule plays is always a dicey game. As long as managements are not sounding very confident about the future growth trajectory, it's very difficult to take a call. And none of the management, to my mind, were very super gungo or confident about the chemical plays. Specialty and CDMO, yes, there has been a good commentaries coming around, and the plays numbers have also been encouraging.
Okay, stay with us. I want to address Asian paints as well and just a bit 5% higher. But the finance minister is speaking at the SBI, State Bank of India conclave. CNBC-TV18, of course, is partners. Listen in.
Themselves going through a disruptive phase. But where we are talking about resilient interdependence, we are also sure that we keep that integrating with global value chains alive. So it envisions an India that designs, produces, and innovates for itself and for the world. So an economy which will be rooted in self-confidence, powered by enterprise, and also guided by compassion. So it is the coming together of these things, the economic strength, the technological capability, and also the social empowerment and environmental responsibility, all aligned with the larger goal of Vikasit Bharat 2047. But I see 5 broad dimensions of Atmanirbhar Bharat. So it's a expansive kind of a landscape that we imagine when we're talking about Atmanirbhar Bharat. But 5 milestones or 5 pegs can be placed so that it is laid on strong footing. Economic self-reliance is the first I would place. So you need to have Atmanirbharta in your economic affairs. Social self-reliance, Samajik Atmanirbharta. Technological self-reliance. Strategic self-reliance. And finally, environmental, but yet mix of energy, sufficiency, and so on. So environment, not just in the cause of green, but also self-sufficiency in those very critical essentials for growth. So it will be on these 5 pillars that I would be placing my narrative to say what is it that we are thinking in terms of when we are talking of Atmanirbhar Bharat and also reaching Vikasit Bharat by 2047, giving a picture under each of what work has already happened. The call for 2047 Vikasit Bharat may have been just a few years old, but the work towards achieving Vikasit Bharat through an Atmanirbhar route had commenced even from 2014. So even as I lay these 5 pillars before you and talk about Atmanirbharta in those areas, I'll equally place before you what foundational work has happened in order that what we need to do for the next 20 years is going to be built on those foundational work. So when I talk of economic Atmanirbharta, it means the nation's ability to generate its own prosperity. And that too through diversified production, internal value chains and value chain creations, and sustainable wealth creation. So India is a vast and uniquely diverse nation. There is no single model before us for us to copy or to replicate. And therefore what we are going to do is essentially build on those lived-in experiences and also the models which will be adaptable for India's own futuristic growth. So it should be shaped by our own realities. And when I therefore say of economic Atmanirbharta, it will definitely mean food security, It'll definitely mean energy security, which will also be a part of what I'm finally talking on, environment-related issues. Giving full steam and full energy for MSMEs, because they contribute more than 40% of our economic export. Also the contribution to GDP through various sectors in which MSMEs are present. And also the labor-intensive and traditional strength-carrying textiles, and unique for India, underwhelming exploitation which has happened, the area which gives immense potential for employment, and an area which should have been naturally our strength, tourism. So I will look at these broad-based progress in these areas, achieving across these sectors, and here blending traditional sectors, modern technology, and innovation-based work. So there is definitely too many variables coming into this calculation for economic Atmanirbharta, but that's the beauty of it, and that's where the Samajik Atmanirbharta, which is also one of the pillars about which I will talk, have a overlap. So in all this, and since it's a gathering of SBI's invited guests, the first thing I would emphasize on is financial inclusion. The more number of people who are brought to the formal financial inclusion process, and the more number of people who are going to benefit in their economic activity through banking extensions, the economy is going to be that much more robust. So for that, we need a robust banking and financial ecosystem. That will be my second emphasis. And the third, above all, which exclusively comes to the state government's domain and the central government's domain, is fiscal prudence. So economic Atmanirbharta will be achieved only when we keep all these factors in our mind. So what efforts have gone? Since I started by saying from 2014 itself, there have been a lot of attempts to do the foundational work for the achievement of Vikasit Bharat. You might have heard these statistics before, but I'm just giving you the nuggets. It tells you where consistency in policy, stability in governance, and pursuing every particular money that is going down to the last post, welfare or infrastructure creating, you are looking at taking the money allocated in the budget to the last point. So infrastructure creation has been our major focus in order that our self-reliance really stands on proper footing. So your economic self-reliance is not going to be realizable without adequate and also proper infrastructure. So look at what has happened in the last decade. The capital expenditure allocation has increased nearly 5 times, where it was closer to 2013-14. It was actually at 2.30 lakh crores. And where is it today? 11.21 lakh crores. So that is the proverbial putting the money where the mouth is. We've actually shown it in the last 10 years. And I closely monitor how much actually gets spent much before my RE numbers are fixed. So it is with that seriousness that allocation is followed till the last post where it has to reach. So national highways therefore grew by 60%, and where it was 11.6 kilometers per day in 2014, it has reached 34 kilometers per day in laying of these national highways. So is the metro rail connectivity. 23 cities in India now have metro. Some of them complete and up and running, a few where the work is still on. So from about 250 kilometers, which was in 2014, today India has 1,000 kilometers of metro lines in operation. So if you look at then port capacity, It doubled to 2,762 MMTPAs. Overall vessel turnaround time, which is very important in terms of trade facilitation, has improved from 93 hours to 49 hours now. So we have undertaken countless path-breaking ease of doing business reforms since 2014. I don't need to remind this August gathering that 1,500 archaic laws have been removed, 45,000 compliances have also been removed. The goods and services tax reforms, new generation GST, is something about which we've spoken severally in the last couple of weeks, essentially focusing on rate reduction, you would think, but I would think rate reduction, yes, but process simplification, classification clarity are also part of this GST next generation reforms.
Okay, welcome back. Lots of movers. Actually, today, lots of movers on the downside today, right? I mean, Hormuz is here with basically the top, stocks which are moving and volumes, etc. I mean, the entire stack. Hormuz, over to you.
On days like this, when you are spoiled for choice, when you're trying to make a list of 3 or 4 stocks, when there are 30 or 40 that are moving around, you've been in a bit of a dilemma. So you start off with one that is bucking the trend, if you would call it that. Reddington is that stock, 17% higher now. It snapped a 4-day losing streak today. And you may wonder if this 17% up move is coming after the stock had gained only 4 times in the last 4 weeks. So big up move seen in Reddington today after its results. The volumes are the highest in over a month. We've had almost 7 crore shares that have been traded on Reddington today. The 20-day average is only 30 lakh shares. And as a result of today's move, the stock has moved above all of its key moving averages, has had a fairly decent year so far, is up 45% year to date, courtesy of today's gains as well. On the downside today, among the top losers is delivery, and the biggest single day fall since May last year. Today's volumes have already crossed Tuesday's volumes, and delivery is the best example of so close yet so far. The stock had tested its IPO price of 487 on Tuesday, and yet again it has failed to sustain those levels has delivery. And today we have had close to 2 crore shares that have traded, and the 20-day average here too is only 30 lakh shares, and the stock is now nearing its 100-day moving average, which is a very important level at 443. It's just within touching distance of that, and on the upside it's broken below its 50-day moving average, which is at 467. And lastly, the other top mover on the upside today is CCL Products. Another 4th straight day of gains for the stock, the biggest single day gain since May. We've had almost 1 crore shares that have traded today on the stock. The 20-day average is just over 70,000 shares. It shows the kind of volumes on which the stocks have moved, both on the upside and on the downside as well. The stock has done fairly well, positive annual returns for the last 5 years now, and since the start of 2021, the stock is up almost 4x in value.
Thank you very much for that. There's one more stock, even IGI. This is a company, again, which is up close to about 9.5%. Revenues have seen a pickup. Revenues in the current quarter were 21%, which compares with 15-16% the quarter prior. And the quarter before that, it was a top-line growth of about 6%. So the street was worried about the surge in lab-grown diamonds hurting the rating business of IGI. But this quarter, they've done well, 21% top line, 18% at the bottom line. Aman Chauhan, fund manager at Abacus Asset Manager, is now with us on the show. Aman, overall, what's the read on the earnings season so far? Have you all done the number crunching? Where have the beats versus the misses, and how have you changed your portfolio in accordance to that?
The beats, predominantly it was the metal sector that has done well. Some of the consumer names have done well. Cement, as expected, on a low base has done well. So these are some of the sectors that have done well so far in the result season. We have increased our metals exposure in that way. Cement is where it is. We have trimmed some of the IT exposure that we had because the growth rates there is slowing down. And that's been the key changes in the last month or so.
All right. Hi, Aman. Good afternoon. Good to see you in. Aman, I wanted to ask you about the paint sector. It's been the sector not to look at because you had a large, corporate that's coming in there and challenging the incumbents. They're corrected, 15-25% in the last 18 months or so. Suddenly you're seeing Asian Paints fighting back, Berger Paints as well as fighting back. And now the hope is that maybe the color of the paint changes for the incumbents because the challenge that's coming from the new player has more or less played out. Your view?
I think for that to happen, the stocks to do well, the volume has to pick up. So once the industry level volume picks up, both the challenger as well as the defender will see volume growth. And that is when I believe the investor interest will come in. Today, it's not just the challenger, which is impacting the margin. It is also that the volume growth is pretty subdued. So in spite of a decent, you can say, consumer uptake, the volume growth in the paint industry has been low single digit kind of numbers, right? So we are all hoping for that number to come in. So hopefully, monsoon has been good, though it is pretty elongated as of now. If the current season or the next season volumes pick up, and even if they reach high single digit or say low double digit, that is the time I think the paint sector will get re-rated, both the incumbent as well as the you can say challenger.
There's only one.
Aman, you mentioned about metals, and you all have normally been the niche players. Sarda entry is something I can see. And you all have done quite well on that one. I don't know whether this is a re-entry because I recall you all had it earlier as well. Jindal Stainless was something that you liked, and Imfa as well. If you could just tell us what you like from the metals pack.
We like both the ferrous as well as non-ferrous. Within the steel, the preference is on stainless steel versus carbon steel because it's more B2C and better margins as well as better pricing power there. we are also like the other metal companies, which is mainly the aluminum companies or the zinc companies or the other metals and mining companies. So as we speak, it's broad-based that we are positive on the metal space.
Hi, good to have you with us today. Aman, just to talk about some of these, chemical names, we were having this discussion just a while back as well. While the likes of SRF, for instance, are still very cautious and they're talking about the disruption that US tariffs have kind of led to the business, there are others like UPL. UPL just reported numbers a while back. They're looking pretty good. They're sounding a little more confident as well. So if you're looking at diversified chemical companies or even specialized chemical products, then are you looking at any part of it more favorably? It's also a very large sector. So maybe, narrow down maybe agrochemical versus, say, APIs. Just tell us how you're thinking about it right now.
So clearly, agrochemicals is doing well globally because it is coming off a low base, and that is what is benefiting UPL. In India, because of the monsoon being erratic, though it has been good, but it has been erratic, and hence there's a lot of sales return that has come in the industry. That's what we see. But overall demand is good. So the agrochemical sector per se is doing well. Some quarters plus or minus, depending on how the rains have been. Besides that, anybody exporting to US is facing the tariff issue. I believe investors are all waiting for the final tariff number to come in. Nobody is expecting this 50% tariff to stay for long. Hopefully this month we get a final number, and this number is anywhere between 15-20%. I believe all the other chemical companies that are currently facing headwinds in US will also come to be in the limelight, because this sector per se is now started to do well. So Indians are gaining market share versus the Chinese. The pricing issue which the sector faced last year is now behind us. So selectively, you can definitely look at this sector. Even if they are exporting to US, I don't think that should be a worry. Yeah, just that people will wait for a month or so for the final tariff number to come in.
Aman,
it's difficult to give you a broad, in the sense, which chemical sector, because all stock specific. There are some companies that have made M&A, there are some companies where new molecules are coming in, and there are some chemical companies which, from a very high base, will still not be able to grow this year.
Aman, big IPOs. Did you all participate in Lenskart at an anchor level, or how do you feel about the valuations of Lenskart? There's Grow, which has been fully subscribed already, and Physicswala opens next week. All big consumer tech companies.
As always, pretty selective on the IPOs. Out of the three names that you mentioned, we have invested only one of them. So the focus is always that if the company is decently profitable and at a value which makes sense to us, then we'll definitely look at these names. So these are new age companies. We understand they will not be trading at 10, 15 P or 20 P kind of thing, but the premium has to be reasonable. So of the names that you mentioned, one of them we have invested.
Pro, right? From your FlexiCap fund. And Lenskart, you gave it a pass.
Yeah.
Okay, got that. Thank you very much for joining in. Moving on now to what's happening in the futures and options space. Nigel is at the desk.
Well, that's right. It's a very, very interesting part of the market that we have joined in right now, because the Nifty Bank, well, it's very, very close to the 20 DMA, and it'll have to defend that mark, actually. So that's going to be the important cue. From here on, we're just 200 points away from the 20 DMA. Then on the Nifty, I was looking at the options data, and call writers have come back into play. That's why the PCR from around 0.9, it's come closer to around 0.8. And if you look at the 25,600 call, 25,700 call, both of them big open interest build up, and the premium is down between 40 to around 50%. However, if you had bought some puts, you've got the direction right, but you're not making any money, because the Nifty is down close to around 60, 70 points the last time I checked. And if you look at the premium out there, that as well is down by close to around 25%, which is telling you at around the 25,400 put mark, we are seeing writing, which means that the bulls don't believe that we're going to break that mark, 25,400, 25,500 odd mark. Individual stocks are in focus. Hindalco, massive shorting being seen on that counter. That stock was doing so well. It's come off the top. It's under pressure today. Big open interest build up, fresh shorts. Eternal, the stock has corrected close to around 18% now from the highs that we saw on the result day. So that stock is under big pressure and big open interest build up. So fresh shorts on that one. Britannia, though, that's come back into the buying list, and fresh buying is what we're seeing on that particular name, and a stock we don't normally talk about with regard to the futures market, but PI Industries, good buying being seen on that name as well. So Nifty at a crucial juncture right now, 25,400, 25,500, that's the mark you don't want to break. And importantly, the Nifty Bank as well, very close to the 20 DMA. Back to you guys.
Okay, thank you. Let's get into a break. On the other side, we'll get you a few BTST calls. Mitesh will be back with us.
Welcome back. So the market continues to move along, amble along, shall we say. But the mid-cap correction is the one that's actually a little concerning. And even the Nifty has broken the day's range. And it's looking at some fresh selling at this point in time. So not inspiring too much confidence given the global backdrop. All one can say is that US futures are a little cautious after the US Supreme Court hearing on tariffs. And the judges there raising big questions. There's a bit of a red around US futures. We'll have to see how the US market does tonight. But otherwise, I mean, this has been a disappointing session. One can say quite safely. Mitesh is back with us for some final thoughts. Mitesh, closing trades and then index levels as well to keep in mind.
Yeah. So index, one thing that now that we will possibly close below 25,600 is a negative, and I think 25,400, I think Nigel was also highlighting that 25,400 to about 25,380 is the next support area. So we might decline a bit more. On the stock side, I have a sell or STBT on Indian Hotels with a stop at 704 for targets of 690, 688, and a BTST on Dabur. That's closing towards the day's high. So Dabur is a BTST with a stop at about 519 for targets of 528, 529.
Got that. Let's talk about paints. That's the sector in focus. Mangalam is here to tell us why. Mangalam, there's so much leadership changes, numbers from Berger Paints. Fill us in.
Well, there's never a shot of color the paint sector right now. Just when we were talking about disruption in the paint space, the incumbents having a bit of a geo moment with Birla Opus coming in. Yesterday there was a sudden surprise that came in that Birla Opus CEO Rakshit Hargave has decided to move on and seek an opportunity at Britannia after 18 months, just 18 months after the launch of Birla Opus itself. Of course, he led through Birla Opus at a very crucial time when, 6 factories were brought on stream. They had about 24% of the installed capacity of the industry and double-digit market share as well. But, the incumbents actually now believe that Birla is not a disruptor anymore, and perhaps it's become more of an incumbent. And that's the word that came in from Berger Paints as well, where they said that earlier from 0 to 450, 500 crores that they would do every quarter, that was the incremental market share that they were taking away from the industry. But now that they've stabilized between 900 to 1150 crores per quarter, the incremental revenue growth that will come in will not hurt the market as much. So they've become more of an incumbent rather than a disruptor. In the meanwhile, what had happened was there was a big decline in the share prices and underperformance of all the incumbent paint players as well, be it Asian Paints, Berger Paints, or the others as well. So the valuations that these companies would be trading at were close to around 60, 65 times on a 5-year average basis, but all of them had come down to sub 50, in fact 48 for Asian Paints at one point as well. So brokerages are now saying that maybe the street is believing that the worst of competitive intensity is behind the sector. Why is that? Because one, Birla on its own accord has actually gone ahead and invested nearly 9,700 crores of the planned 10,000 crore capex as well. So they're not left with much more capex to actually deploy, in terms of a price war, etc. And then they have their own idea of turning profitable, EBITDA profitable by end of year 3 of operations as well. So if they were to continue to do that, then maybe the price war will not be as intense going forward as well. Add to all of this, the last quarter was fairly weak when it comes to demand, but the second half, post GST cuts and somewhat stable raw material prices, the demand environment looks a lot better as well. So demand environment is better, raw material prices are benign. We're also seeing valuations come off, and at the same time a disruptor is now turning an incumbent. All of that provided a perfect opportunity for brokers to go ahead and upgrade their view on the stock, and we had Nomura do that as well.
Thank you. And earlier today, we had a chat with Abhijit Roy, Managing Director, CEO at Berger Paints. Listen in.
Q2 of last year, since they had started just about that point of time, they had done about 450 odd crores as per their own analyst meeting, because it's not a published result, so we don't know. But it's around that figure. And this time they said that they have done about 110% odd growth. So we can assume that it's about 950, 960 crore, which is slightly below the first quarter of this year. And that's what they said, that they have done slightly below last year. Now, if you look at next quarter, and they have been doing around these figures, Q1 also was like that. Q4 of last year was also similar. Q2 of this year also is similar. So it's around that 900 to 1050 type of level at which they have settled out. The business will carry on as usual. That will happen, but the tapering is also happening. We compete in the market by giving some discount to the leader as well. So it's not something which is very disruptive as far as we are concerned. So from that perspective, I don't see that, really impacting. They have also indicated that in 3 years they will become profitable. If they have to do that, they cannot, discount, massively from here on.
Okay, all right. Well, that's Berger Paints. I just want to quickly highlight a bunch of other movers. Actually, one thing has got to be said. Even if market's down, actually Nifty's also moved down another 50 odd points. So we're down about 90 points, but market breadth is terrible today. I mean, some 3:1 in favor of declines. And it's lots and lots of 5, 7, 8, 9% cuts, which you don't usually see. Typically, even if market breadth is negative, the bulk of the volume is on the side of what is up, and it's a fairly robust list, but not today. Let's just actually address some of this, especially the ones which have reported numbers. Vinny is here with a compilation. Vinny, over to you.
Hi. So yes, in terms of the first stock that we're keeping an eye out on today, or I've seen a sharp fall, that's Delivery. They reported a net loss this time of 50 crores versus a profit last year. Revenue saw a growth of 17% and margins remain largely flattest at 2.7%. The other one is Reddington. This is buzzing away in trade and flying high in trade today. Strong set of numbers that was reported by the company on a year-on-year basis. Improvement is what the company has seen even on a sequential basis. Margins remain stable at 2%. The Software Solution Group as well as the Mobility Solution Group, that's saw very strong growth of around 48% for the Software Solution Group, and the Mobility Group saw around 18% growth. So that is why a strong set of numbers that came in from the company. Now, EPAC Durables, that's the next one we're keeping an eye out on. The revenue saw a sharp cut of around 44% this time. The room AC segment, that saw a decline of 76% sequentially. And obviously, the main reason was unseasonal rains, delay between the GST cuts that came in. And obviously, that led to a loss for the company this time of 22 crores versus a loss last year of 8.5 crores. The last one we're keeping an eye out on is Paytm. Good set of numbers that came in from this company. Scaling with operational efficiencies. They spoke about AI, and that could be a new driver for the company. Revenues increased across segments sequentially. Contribution in terms of margins fairly remained stable at 59% versus 60% last quarter. EBITDA margins improved to 7% versus 4% sequentially. So good performance there from Paytm, and that's why this stock was buzzing.
Okay, all right. Thanks a lot for that, Vinny. Well, by the way, we have JK Lakshmi Cement's numbers that are flashing for you on the screen. And on a year-on-year basis, it looks good, but it's come on a very, very low base. And that's why those numbers actually look good. We have to wait by to hear the commentary from the management, because now as well, if you look at these numbers, the margins have commented on 13.5%. The previous 2 quarters, the margins are 18 to 19%. So on a sequential basis, actually, there's a sharp contraction in terms of the profitability. Though on year on year, it's looking good. It's on a low base. But the last quarter, the base here actually is a washout. So just keep that in mind. For the time being, a spike up on the stock. But sustenance of this will be important because, on a low base, actually, these numbers look good. Mayuresh Joshi from William O'Neill joining us on the show. Hi, Mayuresh. Good to have you on the show. Mayuresh, what do you make of the cement numbers, and which is the stock you like out there?
Afternoon, Nigel. So I think on a comparative basis and on a peer-to-peer comparison, I think out of the large cap names, Ultratech is something that, as a clear disclaimer, we keep on holding in our global portfolios. But again, I think numbers were relatively better, and the kind of outlook that Ultratech probably has, both in terms of organic and inorganic growth, expected to add a significant amount of capacity over the next couple of years. Green energy is probably taking shape quite significantly, almost 32-33% in terms of captive energy consumption. Value-add products are also going higher. And therefore, I think the synergies that we've built in with utilization levels expected to go higher with calibrated capex, I think that will probably play out in terms of absolute EBITDA and EBITDA per ton that they'll probably report over the next few quarters. So I think out of the leadership stocks that we like, Ultratech remains right there at the top spot. With the mid-caps names, JK Cement, which is obviously a mix of white and grey cement, is something where the earnings growth should continue to be a key driver going forward as well. The expectations, again, in terms of capacity additions that are probably expected to happen, input costs are relatively benign as we speak for the sector as a whole. And therefore, I think input costs along with logistic costs moderating should probably play out effectively for well-managed companies. And our take is that within the mid-cap space, JK probably is one. So I think a couple of stocks within this space that we continue remaining optimistic.
Okay. All right, Mayuresh, stay on. We'll have more questions for you in just a bit. Need to take a quick break right now. We'll be back with more in a moment.
Welcome back. Well, we are still in, we're still in conversation with Mayuresh Joshi. Hi, Mayuresh. Wanted to ask you about Hind rectifiers. Is one of the numbers that just came out. Actually, year on year is looking very good. Margins as well are improving. Any view on the stock? It's been one of the big outperformers of the last 18, 24 months.
Nigel, I think, yes, I think the stock has outperformed quite significantly. And again, I think in terms of expectations of the product lines that they probably carry, the expectation largely is that it should benefit Hind rectifiers going forward as well. In fact, in the recent past, they have just commenced the line in terms of the copper conductors that are probably required for the transformer industry as a whole at their plant. And therefore, I think as new additions keep on happening, across product segments, the expectation largely is that these value-added products will start contributing meaningfully in terms of margin stability, but also expansion of margins going forward. So I've not looked at the numbers in detail, but I think the numbers so far have been very, very encouraging. And the tailwinds to follow might actually ensure that the numbers continue remaining sustainable going forward.
Mayuresh, Redington, CCL, IGI, EPAC, Astral, any of these stocks you like?
Afternoon, Viman. I think CCL Products is one very interesting story. And the large part here has been that even if green coffee prices had been moving higher, which have moderated a tad bit, a large part of the expectation here getting built in is the expansion of capacities that they're probably doing both in Vietnam and India. The second aspect in terms of their global aspirations of taking market share quite significantly higher, expanding capacities and markets in the US and the UK. And at the same time, introduction of more value-added NFDC products, NFDC packs that will probably come through, which will ensure that the 15-16% margins that they've been reporting can actually break out on the upside if they're probably successful in creating that operating leverage from a volume and a value play as well. Having said that, I think the kind of net debt reduction that they're consistently trying to achieve every passing quarter, if they're able to successfully reduce this quite significantly over the next few quarters and other things play out, I think there will be strong earnings growth that will come through. So I think it's indicative of very strong rating rankings as we see at markets in India. So yeah, I think CCL Products is something that can do what's that.
Okay, got that. So as we're coming to the final trades, it's still the same picture. Nothing much has changed. Grasim and Hindalco are, still the biggest casualties. Mayuresh, I mean, talking about what we've seen on Hindalco today, for instance, specifically, a lot of disappointment because of the heightened capex. Do you think this will linger on the stock for a bit? Or could this be a buying opportunity? Because otherwise, I mean, anything and everything in metals was going up.
Afternoon, Sylvie. No, obviously, I think Hindalco has also been a strong outperformer within the entire pack itself. I think the incremental capex news obviously is something that is bothering the street on two counts. One, I think the additional capex is coming at a time when global conditions, both because of Trump tariffs and demand, which is not picking up quite significantly, is pulling down the LME prices. And therefore, when will LME prices probably start sustaining itself? And when will demand itself start coming back? Is something to be observed. The second aspect, obviously, is that they've got a lot of greenfield industries to probably look at, both from an aerospace perspective, the EV battery ecosystem, and the car ecosystem as well. And therefore, I think the end user industries for Novelis probably remains very, very strong. But to what extent does it actually come into play? On a standalone basis, obviously, I think Hindalco has done relatively better. Demand still expected to remain strong. The access to alumina smelters back home in India, I think, obviously gives them the added advantage in terms of absolute EBITDA outperformance compared to what the globe is probably doing. But I think all these factors might actually pull down the consolidated numbers. So yeah, I think wait and watch. And the stock has done well. It's not that the stock has not done well in the past.
Okay, all right, Mayuresh, thanks for that. We'll just quickly recap today's action before we move on. And it will be classified as a bit of a disappointing day because, like we've been mentioning, India's kind of been singled out because if you look at the rest of the Asian screens, once again, there was robustness across Japan, across markets like Hong Kong. All of them have ended positive, but we have ended on the negative side of the screen. And pretty much at the lows of the day, the Nifty now back towards the 25,500 mark. So where was the weakness? Well, the stocks that we were just discussing, both Grasim and Hindalco. Grasim, the exit of the top management at Birla Opus not going well with the street, 6.5% down. Hindalco, because of the additional capex, 5% down. The other losers of the day included names like Adani Enterprises, Power Grid, Eternal has lost quite a bit of ground. It's about a 2.5% cut for Eternal today, down about 4% this week. And then you have a lot of financial names which didn't quite perform today. There's Bajaj Finance, Jio Finance, ICICI Bank, quite a few of these names on the downside. However, the counterbalance from the other side was Reliance Industries, 1.5% higher, taking the, at least counterbalancing the negativity. There was also TCS that was chipping in to an extent, SBI with a 0.25% gain. And of course, the big stock of the day was Asian Paints, on hopes that the worst of this competitive intensity in the paint sector is now behind the company, so up 4.5%. But that's a large cap picture. Bigger issues, Rima, in the mid cap space.
Yeah, mid-cap index down 1%, small-cap index down 1.3%. Look at the advanced decline ratio. We had more than 2,200 stocks declining. Out of time, so running you through some of the big drags today. Utkarsh SFB 14%, Finiotex Chemicals 12%, lower EPAC Durables 10% down, Delivery, NetWeb, Greaves Cotton 8%, Aditya Birla Fashion, earnings reaction, Blue Star, Sterlite Tech. Look at Indian Hotel. All these stocks declined on very, very large volumes. On the way up, you had quite a few winners too, like a Redington, IGI, CCL, Astral, Late Revenues, Tech, a Paytm. But on the whole, the mid-cap performance was disappointing. The mid-cap index ending down close to about 1%. We'll take your leave in closing bell. Thank you very much for watching. Don't go anywhere. On the other side is Markets Forward.
Broad-based decline on Dalal Street. Nifty and Sensex end a 0.25% lower. Nifty fails to hold to the 25,500. Around that market closes at. Broader market underperforms. The blue chip and mid-cap index sees cuts of nearly 1%.
Novelis takes a hit on cash flows and EBITDA in the second quarter due to the fire at its Oswego plant. A significant upward revision in costs for its capex also upsets, trims the returns equation, leading analysts to downgrade Hindalco stock. It slips in trade.
And paint stocks surge on positive sentiment as the CEO of Birla Opus Paints resigns. Analysts suggest that the growth for the Birla Opus company has slowed down in the last 6 to 7 months. The management of Berger Paint tells CNBC-TV18 that the impact of competition will continue to reduce and that rival Opus will not be able to cut prices further if they want to be EBITDA positive.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormuz Fatakia, and with me is Vinny Motiwala, who has had a very, very busy day of her own. It's a forgettable day for the bulls today, and yet another day where the recovery on the indices could not sustain. And we mentioned to you earlier in the morning that the 17th of October low of 25,508 is going to be pivotal for the Nifty. It has closed exactly at that level. We did break below the 25,500 mark temporarily, but somehow managed to close above that. But yet another day when the index ends at the lowest point of the day, and it is only courtesy of Reliance Industries that was the outperformer today, is that the Nifty's losses have been trimmed, Vinny.
Absolutely, that's the saving grace, right? We could say, at least for today as of now. But yes, apart from that, Hormuz, you know, when you look at the Nifty, IT, auto, these are some of these sectors which actually managed to hold on to some bit of a green in today's trading session. So that is what was at least on the positive side. Though media, metals, those continue to be under pressure. Banks also down almost 0.5% in today's trading session. But yes, that's how the market setup looked like. A lot of individual movers were mainly on the back of earnings and news flow related. Most of them were earnings related. But we have a very exciting lineup for you all on the show where what we'll start with is going to be the top movers and shakers of the day with Sudarshan, and then we'll move on and put the spotlight on Paytm and Hindalco after reporting the Q2 numbers. We saw a bit of a move coming in for both these stocks. PB Fintech also slipped after sources say that health and general insurers are likely to trim health insurance commissions. Last but not the least, we're going to delve into the key market events to watch out for in tomorrow's trading session.
Now to the first segment of the day. Sudarshan is here to tell us all the big movers and shakers of the day. And trust me, there were a lot of them. Sudarshan, over to you.
So market was under pressure, and let's start with the stocks that have fallen and have played big role in bringing market down. So first on the list is Delivery, fallen almost 9%, and after forgetting Q2 that company has reported. Second one was AB Fashion. Continues to report the losses. Even brokerage firm like Motilal Oswal believes that over FY25 to 28, there is hardly any chance for AB Fashion to turn profitable, and it will continue to report losses. And that's the reason you have seen a big downtick, fallen more than 7%. Blue Star, earnings were not that bad, but in the con call, company has revised the guidance not only for revenue, but also for margin, and that has weighed on the stock. And at the end, the stock closed with a cut of almost 7%. Chola Investment, top line was almost in line, but asset quality has deteriorated, and that has played on the stock. At the end, it was down almost 4%. Ola Electric, earnings were not only muted, but even company has gone ahead and cut the guidance on 3 fronts: revenue, volume, and the auto business margin. And that's the reason you are seeing a big downtick, closed at the lower circuit, fallen almost 5%. Now come to the stocks which have moved higher in the trade. First on the list is Astral. Earnings were almost in line. Despite a fall in PVC prices, company has seen a big increase in the volume growth. In Q2, volumes were up almost 20%. That's the reason we have seen stock gaining as much as 7%. Paytm, there were 2 reasons. First, operationally, it was a strong set of funding. Second, stock is being added to the MSCI index. That's the reason, again, it has been gaining continuously over the last few weeks. And today also it was up almost 4%. Indigo, it was an operationally strong set of earnings for Q2. Despite a sharp increase in the forex loss, Indigo at the end, it was up almost 1%. Redington and Nuvama. Redington both on a sequential basis as well as YY earnings were very strong. That's the reason up almost 16%. Nuvama Wealth has increased net flows guidance for FY26. That's the reason stock, despite market being under pressure, stock was up more than 2%. Lastly, some of the stocks have reacted to the news. First one was Hindalco because Novelis has increased the capex, and that's the reason it has played on Hindalco. Stock is down almost 5%. Top Nifty loser. Grasim, its paint business, that is Birla Opus CEO, has resigned after 18 months of the business of the paint business. That's the reason stock was down more than 6%, but it has turned out to be positive for competitors like Asian Paints and Berger Paints. Asian Paints was amongst top Nifty gainers. It was up 5%. PV Fintech, we have reported that as per the sources, general and health insurance companies are looking to cut the commissions by as much as 18%, and PV Fintech being one of the biggest had gained from the commissions, and that's the reason today, because of that news, stock was under pressure, has fallen 4%.
Okay, so Darshan, thank you so much for that. Really, a whole host of these companies moving on the back of their earnings. But let's take this discussion forward with Mayuresh Joshi of William O'Neill as well as Richard Jain of Motilal Oswal Financial Services. Thank you, gentlemen, for joining us on the show as always. Richard, before we dive into individual stocks, today the market also has not done anything exciting. Or even this week, it has not been anything that great, right? 25,500, we're just managing to hold on to that today. What are we keeping an eye out on in terms of levels now?
Yeah, hi. Very good afternoon, Vinny. Very good afternoon to everyone. Well, it seems a corrective phase within an uptrend itself, although the mid to long-term charts are not negative, but on the short-term charts, we are witnessing a pullback move in the index, which could get extended towards that 25,350 to 300 zone, where the 50-day exponential moving average for Nifty is placed. And especially the negative thing was the market breadth. If you look at the market breadth, the overall was very negative. And the mid-caps and the small-cap names have started witnessing a decent price-wise correction. In fact, the Nifty mid-cap 100 index for third time in the recent past had resisted around that 60,000 mark. If you look at the recent past, then in the month of June as well as July, the index resisted around that 60,000 mark. So this clearly indicates in the short-term markets are going through a corrective phase where price-wise corrections could continue in certain mid-cap and the small-cap segment. But on the index front, it seems it would be more of a time-wise correction. A dip towards 25,350, 300 cannot be ruled out. And in case if we get such dip, maybe next 1 or 2 trading sessions, those would be good levels to look for buying opportunities on the index.
Interesting. Look for buying opportunities at lower levels on the index. But the stock that did well today, of course, there were a lot of other such earnings reactions. One was Paytm. Gaurav is here with some of those earnings highlights. Gaurav.
Well, as when we look at Paytm, despite PAT falling almost by 83%, when we look at the stock performance, it was up almost by 4%. And the reason being that it was actually operationally very strong quarter for Paytm. So first, let me take you through revenue. When we look at revenue, that increased almost by 7.5% on a quarter-on-quarter basis. And across the segment, we saw this growth. Now, there was some fall in marketing services, but this was because they sold its ticketing business just in second quarter of FY25. And that is the reason why we saw a fall in the revenues. When we look at operationally, the contribution margin, that remained fairly stable at around 59% versus what it was at 60%. And at the same time, when we look at EBITDA margin, there we saw a jump of around 300 basis points. It increased from 4% to 7% on a quarter-on-quarter basis. And apart from that, when we look at profit, if we exclude the one-offs, the profit increased almost by 72% on a sequential basis. But there was a one-off of around 190 crores because they took full impairment of one of the businesses, First Game Technology. And that is the reason why when we look at profit, that declined almost to around 21 crores. But all in all, when we look at operational performance, first is that they are actually focusing more on reducing their expenses. And that is the reason why we saw EBITDA margins increasing. Second is that they are also focusing on AI. In fact, they are also coming up with the first ever AI soundbox. And at the same time, they are also optimistic that AI can be a revenue driver. And at the same time, they can also decrease the cost because of AI. So that is something which management also gave a confidence around. And that is the reason why when we look at stock performance, they have taken it in very much in the stock performance. It is up more than 4% in a trade today.
Okay, yes, absolutely, Gaurav. Surely keeping an eye out on Paytm. But Mayuresh, what's your view for Paytm as well? From here on, do you see more upside? Are you finding it comfortable in terms of valuation as well?
Afternoon, Vinny. I think two things. As Gaurav mentioned, I think the numbers were supplementary in terms of the price action that Paytm probably witnessed. But a couple of factors that will come into play as we head into the second half. I think a worst in terms of all regulatory and other non-regulatory actions which had probably dampened the stock a year back. I think the worst probably seems to be behind. The second, I think the kind of additions that they're probably making, including the soundbox addition, I think that can be a huge value add if it kicks off quite significantly and starts contributing to the revenues as well. And let's not forget, I think if numbers keep on accelerating as the management probably feels over the next few months and the next few quarters, I think the momentum upside that the stock is probably witnessing might very well continue. Obviously, I think from a valuation perspective, I think it is penciling in the best that has come so far. But I think if they continue to outperform themselves in terms of numbers, I think the outperformance might very well continue. So from a rating rankings perspective, I think the stock looks very, very strongly placed as we look at it in markets within.
Indeed, up almost over 4x now from the record lows that it had made in February of 24. But yes, 1300 now on Paytm. Novelis was the other one, and Novelis' results had an impact on Hindalco's stock price performance today. And it was an increase in capex, an increase in costs, and rise in debt. All of it weighed on the performance of Hindalco today. Nigel tells us more on this. Nigel.
Well, that's right. Hindalco got knocked back in today's trading session as its arm Novelis, posted a mixed quarterly set of numbers. The volumes were almost flattish on a year-on-year basis, but the EBITDA showed some sequential improvement even after taking a net tariff hit of close to around $54 million. The management, though, they say that the tariff mitigation efforts, they're underway, and that could start showing up in the results from the second half of the year itself. But the real concern is the fire at Novelis' Oswego plant. The company expects the impact to show up in the second half of the year, which means that the second half will be a washout. The cash flow hit could be close to around $550 million, and the EBITDA loss could be around $100 to around $150 million. Though they expect 70 to 80% recovery through the insurance, but that in all probability will only come in FY27. So near-term pressure on the balance sheet and the cash flows, well, that's something that the street will have to bear. Additionally, the net debt as well came at its highest levels we've seen in the last 21 quarters or thereabouts. That's what's prompted parent Hindalco to step up with around a $750 million equity infusion into Novelis. The biggest negative, though, is the Bay Minette expansion project. The cost has doubled from the original estimate, and the management says that inflation as well as execution challenges, that's what's led to this capex moving up. At the new capex, well, returns will be muted at just around 6% pre-tax ROCE. Even if Novelis hits, that's the $1,000 per ton EBITDA guidance that they have been talking about. So the return ratios get diluted massively. And that's reflected in the street's reaction, right? You have Investec, you have Axis Capital, Nuvama, Equirus, all of them have downgraded the stock. They're citing rising cost, rising debt, the cost overruns, as well as the near-term earnings risk. Explains why stock is smacked today.
Absolutely, Nigel, thank you so much for that. But Richard, on the charts now, what's the indication as well? Do we see this continue now, given that, fundamentally it's not looking that great?
I think the only problem was that the stock had already seen a good run-up over last 6-7 months. So if you look at the April lows, the stock made a low of around 550. From there, it rallied towards 850, 870, which is an up move of about 50-55% in 6 to 7 months time frame. And for a large cap stock like Hindalco, after such an up move, this news I think led to a good profit booking. So while the mid to longer term trend remains positive, in short term, because of this recent run up, the momentum readings were overbought, and this could lead to some further corrections towards 750, 740 zone. But yes, those who are looking for long term investment, dip towards 740, 750 could be a good opportunity to accumulate.
Okay. Surely keeping an eye out on those levels over there. But let's move on and talk about Ola Electric, because that also slipped in trade after they reported their Q2 numbers. Weak set of numbers coming in here. But what more were the details in terms of the margins, EBITDA performance, revenue? We have Sudarshan here to give us those details. Back to you, Sudarshan.
It's not been a great year for Ola Electric. Stock is down almost 50% in 2025, and today also the stock has fallen almost 5%, hit the lower circuit. And now the reason is that company has reported Q2 earnings, and the earnings were weak. And beyond that, it has cut the guidance for FY26 for revenue, volume, as well as the auto business EBITDA margin. But first, talking about the headline numbers, net loss was rupees 418 crore versus rupees 495 crore. Revenue has seen a big fall of 43% as company has seen volumes decline both on a sequential basis as well as year-on-year. Even EBITDA loss has come at rupees 203 crore versus loss of almost rupees 400 crore in the same quarter last year. Now, talking about the FY26 guidance, as per the earlier guidance, company was expecting revenue in the range of 4,200 to 4,700 crore, but now it is lowered and it's expecting in the range of 3,000 to 3,200 crore. As far as the auto business EBITDA margin is concerned, earliest guidance was more than 5%. Now it's been cut to around 5%. And lastly, on the volume picture, earlier guidance was in the range of 3.25 to 3.75 lakh units. Now company is just expecting 2 lakh units. So weak earnings, muted guidance lead to a big downtick in the stock.
Indeed, Sudarshan, thank you for that. Mayuresh, Ola is at a point now where you may be forced to think what more worse can happen now for the company, right? Below IPO price, 70% below the post-listing high. Would you be a braveheart and take a bet on Ola after the kind of commentary that the management has given?
No, at least we at Markets for India don't have the heart of us to probably get in. So again, I think the logic and the rationale here is that we obviously at Markets with follow companies which are growing their earnings consistently, not so over the preceding 2 or 3 quarters, but consistently on an annualized basis over the last 2 to 3 years. So I think if you find companies and pockets which are consistently doing that, the confidence and the conviction probably increases in both the managements as well as the companies to probably deliver results that will ensure steady earnings going forward. Ola has all the missing ingredients in terms of steady state earnings, where earnings remain extremely volatile. The commentary has been extremely soft. And therefore, the future outlook, even if one assumes some element of hope, if you head into FY27, FY28, it's long drawn out and full of uncertainty. So I think we don't want to bet on stocks or sectors where uncertainties probably play a major part, which might affect the risk-reward ratios. So better stocks within the same sector to probably look at.
Okay, absolutely. Can look at other stocks as well in this sector. But let's move on and talk about PB Fintech, because sources tell CNBC-TV18 that health and general insurers are set to cut health insurance commissions paid to Policybazaar. The move is aimed at supporting health loss ratio following the recent GST cuts. Yash is joining us to give us details on this one.
So after a couple of weeks of discussions within the general and the health insurance industry, all general and health insurance companies have unanimously decided that they will reduce commissions or cut commissions which they pay to Policybazaar on sale of health insurance policies by an entire 18%. What we've been given to understand is that, health as well as general insurance companies have taken this decision, to support the deteriorating loss ratios. They don't want the loss ratios in the health segment to increase, for which it became very important for all the companies to pass on the entire 18% cut in commission to Policybazaar. This cut of 18% in commission was already done to other distributors like banks and agents, and now it has been decided that the same cut of 18% will be done to Policybazaar as well for the sale of health insurance policies. As far as this cut of 18% on health insurance commissions is concerned, it is expected to become effective starting December 1. It is important because health as a segment is a large segment and a profitable segment for Policybazaar. It contributes 20% to the revenue as well as 60% to the value as far as Policybazaar itself is concerned. And that's not it. What also we've been given to understand is that life insurance companies are also discussing, the discussions are still underway in terms of how much cut do they want to pass on as far as sale of life insurance policies is concerned. So that decision from all the life insurance companies in terms of commission cuts coming from there also still remains to be an overhang as far as life insurance business of Policybazaar is concerned.
PB Fintech ending 3.5% lower as well. We're running short on time. So Mayuresh, Ruchit, thank you for sparing time and joining us today with your views on the index and on stocks as well. Take a short break, get you all the top corporate voices along with some key market events to watch on the other side of this break.
Welcome back to Markets Forward on CNBC TV18. Now let's take a look at the key corporate voices that we had during the day today. First up, we spoke to Berger Paints. The company says that the competitive pressures will continue to ease going forward, and adds that Birla Opus has now stabilized at around a 900 to 1,050 crore rupees quarterly run rate. Berger Paint expects a near double-digit value growth in Q4, while Q3 is likely to see double-digit volume growth and mid-single-digit value growth. The company also expects margins to improve in the second half of the year. On peers, Berger notes that Birla Opus can't afford to discount further if it aims to stay EBITDA positive.
Indian Metals and Ferroalloys is up next. The company is set to acquire Tata Steel's ferroalloys plant for 610 crore rupees. The management says that the base consideration plus GST is included in this. The company is anticipating input tax credit. The management also said that it will need to make an additional outlay of 50 crore rupees. It anticipates production to reach a steady state at around 2.6 lakh tons with EBITDA at around 20,000 crore rupees.
And we also spoke to Redington. The company expects double-digit growth in its PC business in the second quarter of quarter of FY26 is what they saw. Further, it expects momentum to continue. The outlook for Redington is positive as it sees strong growth in the tech segment across all geographies. It also maintains, I beg your pardon, margin guidance at around 2.5%, this including Turkish subsidiary. Additionally, the company has exited from Vodafone business in Turkey, although the full exit will take place in the next 3 to 4 months. It's anticipating its software and tech solution business to increase in the second half of FY26. The stock was perked up in trade after this.
And we bring you some key events to watch out for, joined by who else but Sudarshan, whose links are an event in itself. Sudarshan, over to you.
So I'll start with the Nifty companies which will be reporting earnings tomorrow. We have 3 companies. First on the list is two-wheeler maker Bajaj Auto will be reporting Q2 earnings, followed by Hindalco, which was top Nifty loser today after Novelis has increased the capex. Tomorrow the company releases Q2 FY26 earnings, and the last on that list is Trent, that also comes out with earnings. Some of the F&O companies will be releasing earnings: Divi's, Kalyan Jewellers, Nalco, Petronet, PFC and Torrent Pharma. In economic data, we'll have forex reserves. You would have seen that over this week, RBI has been interfering in the currency market. Last week, we had seen an increase in the forex reserves by almost $5.5 billion. We'll have to see exactly what's the current forex reserves. Last one, IPO rush continues. Pine Labs will be launching IPO, and through fresh issue, companies looking to raise as much as rupees 2,100 crore. And lastly, how can we forget, we have the big leadership event that is CNBC-TV18 Global Leadership Summit. And we have lined up for you from who's and who of the corporate world, government, to the biggest thought leaders of the world. And that event starts 9:30 a.m. tomorrow. Make sure you don't miss out on anything.
We do have our appointments booked for the GLS for sure. Winnie is all geared up and ready for the event tomorrow. We take a leave.
I'm pumped up for it.
More so because tomorrow is a Friday as well. So you need to keep that in mind. We take a leave on this edition of Markets Forward from Winnie and me. Thank you for watching. News and updates continue on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Market remains weak amid broad-based decline. Nifty and Sensex end 0.25% lower. Nifty fails to hold on to 25,500. Broader markets underperform the blue chips. Finance Minister Nirmala Sitharaman confirms exclusively to CNBC-TV18 that work is already underway on PSB consolidation and discussions are on with RBI and the banks. Also clarifies that government is not here to shut the door on FNO but remove the roadblock. Says it is the investor's responsibility to understand risks. United States Supreme Court expresses skepticism on the legality of Trump's tariffs. Observed that imposition of taxes on Americans has always been a core part of the U.S. Congress observes that no other president except Donald Trump has made use of these emergency powers to impose tariffs since it became a law in 1977. M&M sells its 3.5% stake in RBL Bank for 678 crore rupees, books a 63% gain on its investment. M&M's exit comes weeks before Middle East banking giant Emirates NBD's open offer to acquire a majority stake in RBL Bank. Birla Opus CEO Rakshit Hargave resigns 18 months after Grasim Industries launched its paints division, will join Britannia as its new CEO from December 15th. Hargave's exit sparks a relief rally among other paint stocks. Grasim Industries slumped 6% today.
मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा for our education. Still I couldn't make into these coachings.
Physics Wala's 3,480 crore rupee IPO opens for subscription on November 11th, sets a price band in the range of 103 to 109 rupees a share. Co-founder Alak Pandey tells CNBC-TV18 they plan to expand to 500 offline centers in 3 years, says their pricing reflects a vision for free and affordable education. India's startup IPO wave opens floodgates for private equity exits. Over 13,000 crore rupees already unlocked, marks strongest year yet for investor liquidity. 121 constituencies in Bihar go to polls in the first phase amid tight security. Over 1,300 candidates in the fray. Voter turnout stands at over 53% till 3 p.m. Chief Minister Nitish Kumar, RJD Supremo Lalu Prasad and opposition CM candidate Tejasvi Yadav cast their vote in Patna.
Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Shot in the arm for Democrats and a reality check for Trump and Republicans ahead of next year's congressional elections. Democrats sweep first major elections of Trump's second term. Zohran Mamdani makes history as New York's first Muslim and South Asian mayor. And the Philippines declares a state of emergency after Typhoon Kalmegi leaves over 100 confirmed dead and nearly 130 people missing. This is the nation's deadliest natural disaster of the year. All right, let's start with the day's market action. The Lal Street remained weak amid a broad-based decline. Nifty and Sensex fell 0.25% each. Nifty failed to hold on to the 25,500 mark. Prashant Nair is here with the day's trading action. Prashant, markets failing to hold any sort of recovery.
Well, it was not as if global markets were bad or anything, but the point is today was a pretty poor session all told. On the Nifty, it's just about 100-odd point cut. But the small cap index and the broader market, I think, is where you essentially had a pretty sharp sell-off. Mid and small caps, right? I mean, market breadth was some 3:1 in favor of what was down. So the Nifty comes up on your screen, the Nifty Bank, mid and small cap indices up on your screens as well. You know, straight away, just start with just to look at sectoral and sectoral stuff in terms of where there was maximum pressure. So consumers as a pack, the index was down 2%, defense was down 2%, the metals index unwound some of the gains, recent gains, 2% loss there. And you also had the PSC index, the public sector enterprises index, which was down about 1.5% today. Coming to the large cap space and, looking at where there was maximum pain, Grasim, 6% on the back of earnings. Hindalco was down 5.5%. There was Adani Enterprises down about 4.5%. And so these are basically the top 3 losers in trade. Asian Paints was by far the biggest gainer with a near 5% pop. The next big one is Reliance which kind of stabilized things and prevented a bigger fall in the Nifty because it was up about 1.5%. The third and the only name, the third name, which was up over 1%, Mahindra and Mahindra, which did quite well.
Right. Thank you, Prashant, for that. Moving on, Finance Minister Nirmala Sitharaman has exclusively confirmed to CNBC-TV18 that work has commenced on PSU bank consolidation and talks are on with RBI. In response to a question by Shireen Bhan at the SBI conclave, the Finance Minister also clarified that the government is not here to shut the door on F&O, but to remove the roadblocks. She added that it's the investor's responsibility to understand risks.
I know that you've previously said that India needs not just world-class banks, it also needs world-sized banks. So, ma'am, is the government actively looking at further consolidation in the Indian banking sector? And is the government also actively looking at enhancing the FDI limit as far as public sector banks are concerned to 49%? Thank you very much.
No, I repeat that line. India needs a lot of big banks, world-class banks. And for that, of course, we will have to sit and talk with the Reserve Bank and also with the banks themselves to see how they want to take it forward. And also discuss with RBI about how they have an idea of taking or idea of building larger banks. So there's a lot of work to do prior to my saying, yes, I've taken a call or government is looking at this way or that way. And in that, work has already commenced. We are discussing with RBI, we are discussing with banks. It's not by creating from among those which exist today just by amalgamation. That can also be one of the route. But you need an ecosystem and also an environment in which more banks can operate and operate to grow. So that environment is actually well established in India, but I need it to be a bit more dynamic. So some work is happening on it. उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है. जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी. सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं. मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूँ, क्योंकि पैसा उनका है.
Now, State Bank of India's strong second quarter performance propelled the public sector bank past the $100 billion market capitalization milestone as the stock hit record highs. SBI is the sixth Indian company to enter the coveted $100 billion market cap club. Robust credit growth and festive spending also pushed the value of SBI's total business past the 100 trillion rupee mark. The US Supreme Court has expressed skepticism about President Donald Trump's tariffs in an ongoing case examining the legality of the sanctions. Now, both conservative and liberal justices questioned the solicitor representing the Trump administration about the scope of the president's authority to impose the sanctions. If the tariffs are invalidated, the US government could owe tens of billions of dollars of refunds to businesses that have paid them already. Now, Mahindra & Mahindra has sold its entire stake in RBL Bank via a block deal. In an exchange filing, the company said that it offloaded stake worth 678 crore rupees, representing around 62.5% gain on its investments. Britannia has appointed Rakshit Hargave as its next CEO. Hargave will take over from the 15th of December. He resigned from his position as CEO of Birla Opus yesterday. He will succeed Rajneet Kohli, who quit Britannia in May. Meanwhile, Grasim has said that the day-to-day operations of Birla Opus will now be overseen by Aditya Birla Group veteran Himanshu Kapania. EdTech services company Physics Wala has set its price band for its upcoming 3,400 crore rupees IPO. The band has been set between 103 to 109 rupees a share. The public issue will open for subscription from the 11th of November. Speaking with CNBC-TV18, company's CEO Alak Pandey recounted his journey as an entrepreneur from starting a YouTube channel to prepping for a Dalal Street debut.
अब मैंने स्टार्ट किया था अपने होम टाउन प्रयागराज से। वाई आई डिड इट, मैं जब क्लास 12 में था तो मेरे को भी बड़ा मन था कि मैं आईटी का एग्ज़ाम लिखूं और उसके लिए कोचिंग जाऊं, पर वहाँ की जो फीस होती थी 1.5 लाख रुपए 2 लाख रुपए, वो मैं अफोर्ड नहीं कर सकता था। मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा फॉर आवर एजुकेशन, इसलिए आई कुडंट मेक इनटू दीज कोचिंग्स। तो मेरे अंदर हमेशा रह गया था कि मेरे साथ फेयर नहीं हुआ है, मेरी गलती नहीं है कि मेरे पास पैसा नहीं है, मुझे फेयर अपॉर्चुनिटी नहीं मिली है एग्ज़ाम लिखने की, और वो हमेशा अंदर रह गया था सिंस क्लास 12। जब यूट्यूब पे आया पढ़ाने तब मुझे मेरे जैसे बहुत से बच्चे इंडिया में दिखे जो टैलेंटेड हैं, बट उनको फेयर अपॉर्चुनिटी मिल नहीं रही है बिकॉज दे कैन नॉट अफोर्ड 2 लाख की कोचिंग, 1.5 लाख की कोचिंग। तो मुझे ऐसा लगा यार मुझे फ्री में पूरे इंडिया को पढ़ाना चाहिए।
You know, when you started, Byju's was the poster child of EdTech. It was already a well-established company. Its peak valuation, I think, was more than $20 billion. It raised top dollar from the top funds. I mean, what were your learnings from the way Byju conducted its business and then the eventual downfall?
What these players were targeting, I don't want to take any name, he is a fantastic teacher first of all, but what these players were targeting is top 3% of India जो इतनी फीस दे सकता है, 80,000 रुपए, 60,000 रुपए, और इस 80,000 रुपए के कोर्स को बेचने के लिए आपको 40,000 रुपए की मार्केटिंग कॉस्ट लगेगी हमेशा, क्योंकि इट्स अ हाई आरपू कोर्स। किसी के पास कोई सोशल मीडिया नहीं था, कोई फ्री नहीं पढ़ा रहा था। हम उनसे बहुत डिफरेंट है, हमारा कोर्स उनसे 1/20th कॉस्ट पे बैठा हुआ है। हमारे पास नीचे वाली 97% वाली जनता है, जो कि बहुत बड़ा टाइम है अगर इन्वेस्टर अपॉर्चुनिटी से आप देखो, और मेरी नज़र से देखो तो बहुत बड़ी जिम्मेदारी है कि आपको एक बच्चे को वहाँ पढ़ाना है। सो वी आर वेरी डिफरेंट फ्रॉम दीज प्लेयर।
Physics Wala is the first company in the consumer internet reached $300 billion of revenue in just 5 years. Like, you pick any consumer internet company, average time they took to reach $300 million of revenue is 5 years.
India's startup IPO wave has opened the floodgates for private equity exits, with over 13,000 crore rupees already unlocked. This marks the strongest year yet for investor liquidity. Rachna Dhanrajani joins us now with more details. Rachna, is it the year of redemption for those early investors?
That is correct, Archana. India's startup IPO season in 2025 has reached a defining phase marked by large private equity exits and a surge in investor appetite for new age businesses. The cycle began with Ather Energy, where early backers such as Tiger Global, GIC and NIIF booked partial exits with returns ranging from 1.6 to 8 times their original investments. Urban Company's 1,471 crore rupee IPO was entirely secondary, giving investors like Y Capital, Tiger Global and Steadview exits of up to 29 times their entry price, while Accel and Elevation Capital earned around 29 and 19 times respectively. Bluestone Jewelry followed with strong market participation as Iron Pillar, Peak 15 and Accel trimmed stakes in its 1,236 crore rupee IPO issue, where Accel realized a 9x return. Now the next phase centers around Lenskart, Pine Labs, Grow and Shadowfax, which together account for more than 13,000 crore rupees in planned offer for sale value. Lenskart leads with 7,278 crore rupee IPO featuring 5,318 crore rupees in secondary sales by SoftBank, TPG and Premji Invest. Pine Labs follows with 3,900 crore with exits by Sequoia, Temasek and Actis. Grow's 6,632 crore IPO includes a modest OFS of 574 crore rupees but sees participation from Tiger Global, Peak 15 and Ribbit Capital, while Shadowfax will raise about 1,000 crore rupees entirely through secondary sales by Eight Road Ventures, NGP Capital and Flipkart Internet. Now, adding to this momentum, Physics Wala has filed 3,480 crore rupee IPO, which includes 380 crore rupees in offer for sale. Founders and early investors such as Westbridge, GSV Ventures, Lightspeed Venture Partners and Hornbill Capital are expected to partially exit, marking one of the year's most significant edtech listings, with confirmed secondary proceeds already crossing 13,000 crore rupees and more offerings in the pipeline. 2025 is shaping up to be India's strongest year for private equity and venture capital exits through IPOs. For investors, it's a long-awaited liquidity window after years of patient capital. And for startups, it's a sign of a true market maturity as public investors reward scale, profitability and governance in real time.
All right, thank you, Rashna, for that. Let's talk about earnings now. Payment aggregator Paytm reported a sharp drop in net profit, coming in at 21 crore rupees versus 928 crore rupees from a year ago. The company's revenue rose over 24%, and this was driven by sustained growth in financial services and merchant payments. Margins expanded to 6.8%, nearly doubling from 3.8% in Q1. Now, shares of Ola Electric came under pressure after it slashed revenue guidance for this fiscal to up to 3,200 crore rupees from 4,700 crore rupees earlier. Now, this after the electric two-wheeler makers' revenue in the second quarter declined over 40%. However, net loss and EBITDA loss narrowed on an annual basis. All right, it's time for a short break. Coming up next, shot in the arm for Democrats and a reality check for Donald Trump and Republicans ahead of next year's congressional elections. More details when we return. Welcome back. The big national story. 121 of the 243 constituencies in Bihar went to the polls today. Several top leaders, including opposition CM candidate Tejasvi Yadav, Deputy Chief Minister Samrat Chaudhary and Vijay Kumar Sinha are contesting in phase 1. In international news, Israeli forces continue to pound Gaza despite the ceasefire. At least 2 Palestinians were killed in the central part of the enclave. Hamas has released 20 Israeli captives and handed over the remains of 22 of the 28 killed in Gaza since the temporary ceasefire came into effect on the 10th of October. On to the United States, where Democrats swept the first major elections during President Trump's second term in a night of historic firsts. The winners included Zohran Mamdani, who made history by becoming New York City's first South Asian and Muslim mayor. The city's youngest mayor since 1892 secured 50% of the vote. However, it was the women of the Democratic Party who stole the night. Virginia elected Abigail Spanberger as its first female governor. Similarly, Mary Sheffield became Detroit's first mayor, securing 77% of the vote. Democratic candidate Ghazala Hashmi also created history by becoming the first Indian American and first Muslim to win statewide office in Virginia. In a social media post, US President Trump said that unnamed pollsters, because of the ongoing federal government shutdown and the fact that he was not on the ballots. So that is the big update coming in from the US. The US government, however, the shutdown is now the longest in its history. It's entered its 37th day today, beating the previous record of 35 days that was set during President Donald Trump's first term. The US Senate has rejected the funding package 14 times so far. The lack of an agreement between Republicans and Democrats has disrupted the lives of millions of Americans, with federal program cuts, flight delays, and federal workers nationwide left without paychecks. The U.S. Transport Secretary has said he will reduce flight capacity by 10% at 40 major airports from Friday due to the government shutdown, as per a Bloomberg report. Analysts estimate that the shutdown is costing the economy $15 billion a week. So that is the big story on the US government shutdown that we are tracking. Shifting focus now, at least 114 people have died and over 120 have gone missing in the Philippines after Typhoon Kalmeki tore through the region. The Cebu province was hit the hardest, with flash floods causing extensive damage in residential areas. This comes just months after the Philippines was hit by Super Typhoon Ragasa and a 7.4 magnitude earthquake. The storm is now moving towards central Vietnam, where evacuations are underway as the region braces for impact. Philanthropic donations in India in FY 2025 crossed 10,300 crores. That's 85% more in the last 3 years. According to the Edelgive Hurun India philanthropy list, traditional donors like the Shiv Nadar and family and Mukesh Ambani and family top the list. Education remains the most preferred cause for philanthropy, with 40% of donations. This, as most top donors to education also have educational institutes associated with their name. Speaking with CNBC-TV18 Shraddha Tiwari, Edelgive Foundation CEO Nagma Mullah said that there is a shift from corporate CSR funding to a foundation-based model.
A little less than 800,000 millionaires, and we are a 1.4 billion country. So we're talking about that kind of income and wealth gap. Like I said, there is a realization that influence and wealth can do a lot more. So I feel consolidation has come from there, and role modeling has started to come from there. That I feel is at the center of a lot of those actions that we see. There is a deep need to deep dive. You will see that focus on education and healthcare does stay, but there are 3 new sectors that seem to be competing now to be in the top 5, which is the rural transformation, arts and culture, environment and sustainability. These were not topics people spoke about 5 years ago.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18. Thank you for watching.
Hello and welcome to another episode of IPO KYC on CNBC TV18. Now this is a story worth telling. Alak Pandey was a physics teacher, a college dropout from Prayagraj in UP. In 2016, he started uploading free educational videos on YouTube, and in 2020, along with Pratik Maheshwari, he decided to start a business. And today, that company, PhysicsWala, is coming to the markets with an IPO. Revenues of almost 3,000 crore last year, with an estimated market capitalization of 31,000 crore rupees plus. Gentlemen, thank you very much for joining in. Alak, tell us a little bit about yourself, your backstory, where you started from to get to where you are.
मैंने स्टार्ट किया था अपने होम टाउन प्रयागराज से. Why I did it? मैं जब क्लास 12 में था तो मेरे को भी बड़ा मन था कि मैं आईटी का एग्जाम लिखूं और उसके लिए कोचिंग जाऊं. पर वहाँ की जो फीस होती थी 1.5 लाख रुपए 2 लाख रुपए, वो मैं अफोर्ड नहीं कर सकता था. मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा फॉर आवर एजुकेशन. इसलिए आई कुडंट मेक इनटू दीज कोचिंग्स. तो मेरे अंदर हमेशा रह गया था कि मेरे साथ फेयर नहीं हुआ है. मेरी गलती नहीं है कि मेरे पास पैसा नहीं है, मुझे फेयर अपॉर्चुनिटी नहीं मिली है एग्जाम लिखने की, और वो हमेशा अंदर रह गया था सिंस क्लास 12. जब यूट्यूब पे आया पढ़ाने तब मुझे मेरे जैसे बहुत से बच्चे इंडिया में दिखे जो टैलेंटेड हैं, बट उनको फेयर अपॉर्चुनिटी मिल नहीं रही है बिकॉज दे कैन नॉट अफोर्ड 2 लाख की कोचिंग, 1.5 लाख की कोचिंग. तो मुझे ऐसा लगा यार मुझे फ्री में पूरे इंडिया को पढ़ाना चाहिए. आई स्टार्टेड अपलोडिंग वीडियो ऑन यूट्यूब. 2016 से करता गया. अगले 4 साल के अंदर इंडिया का सबसे बड़ा यूट्यूब चैनल बन गया एजुकेशन का. क्लोज टू 35 लाख सब्सक्राइबर हो गए. ये 2020 सब फ्री था. एवरीथिंग वाज फ्री फॉर स्टूडेंट्स. आई वाज जस्ट मेकिंग मनी बिकॉज ऑफ यूट्यूब एडसेंस. मैं बच्चे से 1 रुपए नहीं लेता था. मैंने कोई ब्रांड नहीं प्रमोट की, मैंने कोई प्रोडक्ट नहीं प्रमोट किया, कोई किताब नहीं बेची, कोई कोर्स नहीं बेचा. मैं सिर्फ पढ़ाता रहा. ऑफर्स आते रहे कि आप इतने करोड़ रुपए ले लो, हमारे पास आ जाओ, इतने करोड़ रुपए ले लो, हमारे पास आ जाओ. क्यों नहीं जाता था? मैं गरीब घर से था, जाना चाहता था क्योंकि उनकी कोर्स प्राइसेस होती थी 80,000 रुपए, 1 लाख रुपए ऑनलाइन के अंदर. मुझे लगता था इसको बहुत अफोर्डेबल कर सकते हैं. एंड दैट इज व्हेन आई मेट प्रतीक इन 2020. और उसके बाद फिर हमने कहा यार आईआईटी की पढ़ाई को कितना सस्ता कर सकते हैं. 4,000 रुपए में आईआईटी की तैयारी करा सकते हैं. 7,000 के अंदर क्या हम सीए की तैयारी करा सकते हैं. लाइव कोर्सेज जहां से बच्चा सिलेक्शन ले रहा हो. सो दिस वाज द होल इंटेंट बिहाइंड इट. आज वो कम्युनिटी कुछ 12 करोड़ की होगी, जहां हमारे 200 से ज्यादा यूट्यूब चैनल होंगे जहां फ्री पे पढ़ाई होती है. 200 के आसपास इंस्टाग्राम चैनल होंगे जहां मीम्स के थ्रू पढ़ाई होती है. आजकल बच्चे बड़े लेट करते हैं. स्नैपचैट, टेलीग्राम पे नोट शेयरिंग होती है. तो आई थिंक इट्स नॉट ओनली अबाउट एजुकेशन. वी हैव द लार्जेस्ट सोशल मीडिया ऑफ एनी कंज्यूमर टेक अवेलेबल इन इंडिया.
Pratik, courses are very, very affordable, right? 4,000 rupees for a JEE. But your valuations are very high at 31,500 crore in terms of market capitalization. Price to sales is more than 10 times. EV to EBITDA is more than 70 times. How do you explain that?
See, in the history of consumer internet company, you will not find any single company जो कि पिछले 2 सालों में 97% revenue कैगर पे थी, 90% EBITDA कैगर पे थी. Like you know, so we are a hyper growth company. हमारे revenues 4 times हुए in past 2 years. Like you know, तो like you know, and the market opportunity is very very large. Like you know, इंडिया में 30 करोड़ बच्चे हैं. अभी तो हम इसका fraction 4% students भी नहीं पढ़ा रहे हैं. And we have created a very unique product which is India's mega live classroom जहाँ पे हजारों बच्चे एक साथ पढ़ते हैं. This is AI powered classroom जहाँ पे doubt solving होती है, mentorship होती है, like you know, and everything in just 4,000 rupees for entire year of live learning, doubt solving, mentorship, revision, everything in just 4,000 rupees. तो इतना large student base जो कि इंटरनेट पे हमने बनाया है, we could able to monetize it, and like you know, it's a very very hyper growth company, and like you know, valuation is an outcome of market forces, like you know. And like if you ask me, I'm leaving a lot of value on the table, like you know, but I will have a bias because it's my baby. तो मुझे तो लगेगा कि यार ये तो बहुत ही undervalued है.
Okay, but what about break-even timeline? At the adjusted EBITDA level, you're positive, but bottom line, it's still a loss. More than 100 crore in Q1, 250 crore last year. When do you break even at the bottom line?
So, like you know, in the history of PhysicsWala, we have always generated cash from our operations. Like you know, be it FY22, FY23, 24, 25.
What is that?
Like you know, see, fundamentally, like you know.
No, what is the numbers? Your cash flow and the cash in the books?
So, like you know, for last year, the cash from the operation was more than 500 crores. Like you know, it's a negative working capital cycle business. Like you know, students pay fees upfront to us, and like you know, and cash from operations is always been positive. Like you know. There are like and at adjusted EBITDA level also, like you know, we are last year also we have shown 434 crores of adjusted EBITDA. That too also have grown by 90% CAGR in past 2 years. Like you know, so cash is not a challenge. Like you know, in history of PhysicsWala, we have only raised $200 million of primary capital.
Right.
Like you know, and we are sitting on a $300 million treasury. Like you know. So, like,
cash on books, $300 million.
Yes.
But you're still raising 3,100 crore of fresh issue.
You have to raise 10%. You have to dilute.
Okay, got that. So adjusted EBITDA in Q1 dropped. Last year it was 15% margins. This quarter in Q1 it's 3%. What led to the drop, and what are the normalized adjusted EBITDA margins you're targeting?
So, like, Q1 adjusted EBITDA is dropped because the nature of business is very different. Like, see, student pays the fees in Q1 and Q2, but revenue gets accrued through the year. So normally for business like us, Q3 and Q4 are the highest revenue and the EBITDA making business. But that's not how we look at the business. We look at for the entire year, like, So quarter on quarter view is skewed view. Although, like, the revenue jump is quite significant in Q1 from last year to this year.
33%, I think.
Yeah. But, like, at a normalized level for the entire year, it will be much more higher than this.
Alak, what is the ambition? You're today at 300 centers. When do you hit 500 centers, for example?
I think in a couple of years we will hit 500 centers. 70 centers we are opening each year from here. So you can calculate it. 3 years from here.
3 years from now.
We will hit like
500 centers. You've always said that your pricing is a strategy. It's not a discount. 4,000 rupees is your average ARPU for online. And I think for offline, it's about 40,000.
Average
right?
ARPU.
Is the average ARPU per year. Are you looking to increase the pricing now that you're going to be publicly listed?
No, of course not. So the aim is कि कितना ज़्यादा बच्चा पढ़ा सकते हैं. The first aim we always chase. What we chase is not top line, bottom line. सबसे पहले हम चेस करते हैं कितना ज़्यादा बच्चा हम PW से टच कर सकते हैं, कितना हम Tier 3, कितना विलेजेस में पहुंच सकते हैं. वहां पहुंचने के लिए इस प्राइसिंग को आप ऊपर नहीं कर सकते हो. आपको ये 4,000 ही रखना होगा. Actually, ARPU is 3,600. Actually, it's less than 4,000. And these are live courses जहाँ doubt solve हो रहे हैं, test हो रहा है, सब कुछ हो रहा है.
So no increase in pricing. That's you.
So of course वो 6-7% तो आपको करना पड़ता है. Inflation adjustment तो आपको करने ही पड़ेंगे, तो आपको हर साल करना होगा. But beyond that हमारे पास ये है कि अगर कोई बच्चा पे कर सकता है, एक्स्ट्रा फैसिलिटीज चाहता है, तो हम उसको प्रोवाइड करने के लिए बोलते हैं कि आप हमें 2,000 रुपए एक्स्ट्रा दो, आपके डाउट सॉल्व हो जाएंगे, आपके टेस्ट पेपर बन जाएंगे, आपको और वीडियो लेक्चर्स मिल जाएंगे, किसी को 1-on-1. तो एक पूरा पिरामिड है कि जो जितना पे कर सकता है उसके हिसाब से पढ़ सकता है. पर मोस्ट ऑफ द लर्निंग इज हैपनिंग इन दिस 4,000 कोर्सेज.
Okay. And what is competitor? I mean, say an academy, for instance. What are peers charging for similar courses?
So all competitors put together, they charge 10 times more than us.
10 times more.
See, pricing is not a strategy. Pricing is a vision of the company. Like, we stand for free education, affordable education, and we want to teach every kid of Bharat.
But do you fear that you'll get stuck in this low cost, low margin cycle with pricing being where it is?
It's low cost, high margin business. It's not a low cost, low margin business. See, like, in our online product, like, these are mega classrooms where thousands of students study together, like, and if you see my FY22 EBITDA levels, like, I was pure play 60% EBITDA in FY22, like, and then we went into a hyper growth where we had like 97% CAGRs of revenue, 90% CAGRs of EBITDA. So it's a very, very low cost, very high margin product.
ऑनलाइन में आपकी कॉस्ट फिक्स है ना. देयर इज अ टीचर, देयर इज अ टेक्नोलॉजी एंड सर्वर कॉस्ट.
ऑफलाइन में तो है ना बहुत इन्वेस्टमेंट्स.
देयर इज कॉस्ट ऑफ कोर्स, राइट. सो ऑनलाइन इज वेरी हाई मार्जिन. वो 4,000 रुपए का कोर्स हमारे लिए बहुत प्रॉफिट मेकिंग भी है.
Now from this 3,100 crore of fresh issue, about 710 is for marketing. Right? So far you've not spent big on marketing. So why now? What is the reason behind this marketing push, and what is your current cost of acquisition per student?
ये कॉस्ट ऑफ एक्विजिशन हम लोग के मॉडल में आता नहीं है. क्यों नहीं आता है? क्योंकि बहुत प्लेबुक अलग है जो आपको समझनी पड़ेगी फ्रॉम एनी अदर एडटेक और एनी अदर कंज्यूमर टेक. हमारा कॉस्ट ऑफ एक्विजिशन नहीं, हम फ्री पढ़ाते हैं यूट्यूब के ऊपर कि फ्री में हम सब कुछ पढ़ाएंगे. आईटी की तैयारी फ्री है, यूपीएससी की तैयारी फ्री है, सीए की तैयारी, सारी तैयारी फ्री करा रहे हैं. वहां से बच्चे को हम पे ट्रस्ट होता है. फिर हम बोलते हैं 4,000-7,000 रुपए का कोर्स है, अगर आपको और एक्स्ट्रा कुछ चाहिए तो आप ले लो. तो हमारा एक सेगमेंट बच्चा आता है जो खरीद लेता है उसको. तो हमारी पूरी मार्केटिंग होती है यूट्यूब पे पढ़ा के. अब आपने कहा मार्केटिंग का जो 700 डाल रखा है, पहली चीज तो दैट इज 3 ईयर का है, वो 1 साल का नहीं. वो 3 साल में उसको डिवाइड करेंगे तो पिक्चर और क्लियर दिखेगी. सेकंड थिंग है उसको हमें अपने ही कंपेरेबल से देखना चाहिए. एडटेक के अंदर देखो, आप एजुकेशन के अंदर देखो. एजुकेशन के अंदर आप कोई भी बड़ा प्लेयर, छोटा प्लेयर उठा लो, द मार्केटिंग कॉस्ट इज क्लोज टू 40%, 30% मिनिमम. हमारा मार्केटिंग कॉस्ट 7% से भी कम रहता है, 7%, 8% के आसपास रहता है. अभी ये हमने क्यूएस के अंदर डाल रखा है. वी वांट टू गो टू साउथ जहां पे ऑफ कोर्स ब्रांड उतनी स्ट्रांग नहीं है. सो ऑफ कोर्स वहां हमें इवेंट्स करने होंगे, मेगा इवेंट्स करने होंगे जहां पे बच्चे आएंगे. सो दैट स्पेंड जस्टिफाइज देयर.
So far, how many acquisitions have you done? I mean, has growth come courtesy acquisitions like Utkarsh, etc.? And what is the acquisition playbook going ahead?
See, playbook is very simple. Like, acquisition we have done just to do category expansion and geographical expansion. For example, Utkarsh was a category expansion. We were not present in government exam categories. We wanted to learn that market. Utkarsh is a proud partner with us, And the second acquisition we did with Xylem, which is a very good edtech company out of Kerala. Both brands works independently. The contribution of the revenue, of these acquisitions is less than 15%, But fundamentally, for a geographical expansion or a categorical expansion, we have done these acquisitions, and we haven't spent more than, $50 million to do those acquisitions, in
both
past.
These acquisitions are loss-making. Xylem and Utkarsh. When do they turn around?
But Xylem is in hyper growth phase, just like physics wala, And again, they have delivered great outcomes. They have delivered great revenue growth, and the next year they will become profitable. And Utkarsh is also next year will become profitable.
You said 170 centers in the last 3 years.
Last 2 years.
Last 2 years. So what is the break-even per center? I mean, how long does it take? 12 months, 18 months?
So second year is the year of break-even for these centers. First year, since we have to invest in capex and we have to run center for initial 6 months without students. Second year is the year of break-even for the centers, and there's a huge headroom in India. And my offline is completely linked to online.
Actually, we are improving in this metric. FY24 के अंदर हमें 24 months लग रहा था break even करने में. FY25 में हमें 18 months लगा. FY26 में it will take 12 months. तो वो लगातार बॉक्स की जो यूनिट इकोनॉमिक्स है ना, वो हम फिगर आउट करते गए. तो ओवरऑल जब सेंटर हम ईयर ऑन ईयर खोल रहे हैं तो हमारा ब्रेक इवन टाइम पीरियड हमेशा शॉर्टन होता जा रहा है वो, और वो दिख रहा है नंबर्स के अंदर दिखेगा वो.
And as you push south, down south, and do all these marketing extra, spends, what will the geographical breakup of your centers look like? And will it take longer for you to figure out the south market than it did? Because
it didn't. तो हमने पहले साल के अंदर साउथ के अंदर गए और हमने 6% स्टूडेंट्स ऑफ कंप्लीट IIT नीट फर्स्ट ईयर के अंदर जाके पढ़ा दिया। मैंने पहले साल जाके साउथ में एक सेंटर खोल दिया हैदराबाद के अंदर। 8000 किड्स आर देयर इन हैदराबाद सेंटर्स। तो हमें नहीं टाइम लगेगा, क्योंकि हमारी जो जब आप YouTube पे एक वीडियो डालते हो उसकी लिमिटेशन नहीं है कि बच्चा साउथ से देख रहा है कि नॉर्थ से देख रहा है। सो एवरीवन इज वाचिंग आवर वीडियो। हमारे जो 11 डिफरेंट लैंग्वेजेस में होते हैं, बंगाली में भी हैं, मराठी में भी हैं, तमिल में भी हैं, तेलुगु में भी हैं। तो हमारी रीच ऑलरेडी थी। इट वाज जस्ट दैट कि नॉर्थ इंडिया हमारे लिए इजी था और हमारी आंखों के सामने था, तो हम यहाँ पे थे। लास्ट ईयर हमने पहली बार साउथ किया। 6% वी आर इन आंध्र प्रदेश, तेलंगाना वी आर 18% इन दी फर्स्ट ईयर मार्केट शेयर हम लेके बैठे हैं। So it won't be that difficult. Let's see कि कितना मार्केटिंग बजट उसमें खर्चा कर पाते हैं।
Faculty attrition is very high. Is that a risk?
No, not at all.
But it's 50% plus ना?
हाँ, let me tell you. So what happened कि हमने जो ये सारा attrition किसकी वजह से आया? हमारे ऑफलाइन से। ऑनलाइन के अंदर फैकल्टी attrition is less than 2%. तो ऑनलाइन के अंदर इट्स नॉट अ प्रॉब्लम। ऑफलाइन के अंदर when we started हम बहुत हाइपर ग्रोथ में थे और हम खटाखट सेंटर 170 सेंटर्स। तो you have to arrange faculties anyhow. तो हम फैकल्टीज अरेंज कर रहे थे। तो उस टाइम पे मुझे लगता है कहीं ना कहीं उस क्वालिटी के फैकल्टी उस स्पीड के अंदर नहीं आ पा रहे थे। उसके बाद we sat down, we designed a program called faculty training program, जहां हम इन हाउस ट्रेन करके अपने टीचर सिस्टम के अंदर आने लगे। जो हमारी ही डोरस फॉर लास्ट 18 मंथ्स हम उनको पढ़ाते हैं, सिखाते हैं, टेस्ट लेते हैं, फिर उनको पुश करते हैं। इससे हमारी ओवरऑल टीचर रेटिंग इंप्रूव हुई। तो हमने स्टार्ट किया था, हमारी ऑफलाइन की टीचर रेटिंग 3.2 थी आउट ऑफ 5। टुडे वी स्टैंड एट 4.2 आउट ऑफ 5। कल हमारी ये 4.4 होगी।
5 साल में you took the company, you started the company 5 years back, and here is where it is. The next 5 years, what will be the number, say, in terms of the number of students you are coaching? Will you be the largest company in terms of offline centers? Vision क्या है from here on?
लार्जेस्ट तो हम ऑलरेडी थे, पहले साल से सबसे लार्जेस्ट हो गए थे एजुकेशन के अंदर।
मैं ऑफलाइन सेंटर्स में 5th हो अभी।
हाँ, ऑफलाइन में इट विल टेक टाइम। ऑफ कोर्स यहाँ से वी विल टेक 4 to 5 years टू बिकम द लार्जेस्ट प्लेयर इन ऑफलाइन, इफ वी टॉक लाइक दैट। विजन हमारा ये है कि जहाँ जहाँ मोबाइल है, जहाँ जहाँ इंटरनेट है, वहाँ वहाँ बच्चा फिजिक्स वाला से पढ़ रहा हो। मुझे सबसे ज़्यादा बच्चे पढ़ाने, आई एम वेरी श्योर ऑन दैट। चाहे वो क्लास 3rd का बच्चा हो, चाहे वो बीटेक करने वाला बच्चा हो, चाहे वो पोस्ट ग्रेजुएशन का बच्चा हो, उसके मोबाइल में PW का ऐप होना चाहिए, जहाँ से बेस्ट क्वालिटी की एजुकेशन होनी चाहिए। अब उससे बड़ा विजन है कि जहाँ इंटरनेट नहीं है, वहाँ कैसे फिजिक्स वाला होगा। और वो है एक चैलेंज हमारे लिए। इफ यू गो टू रूरल एरियाज, मैं यूपी से आता हूँ, आप वाराणसी के पास में गांव में चलो तो वहाँ बच्चों के पास मोबाइल फोन नहीं है। घर पे एक ही मोबाइल फोन है, पिताजी मजदूर है, ले गए, शाम को रात को घर लेट आ रहे हैं, कैसे करें। अब हमें उन स्कूलों के अंदर कुछ करना होगा। वी हैव टू एंटर इन दोज स्कूल्स। वहाँ पे हमें कुछ टेक्नोलॉजी, कुछ आप स्मार्ट बोर्ड लगाओ, छोटी स्क्रीन लगाओ, वहाँ पे कॉन्टेंट प्ले करो। हम कर भी रहे हैं। So the vision is to teach as many number of kids as possible in India कि fair opportunity मिले।
You know, when you started, Byju's was the poster child of EdTech. It was already a well-established company. Its peak valuation, I think, was more than $20 billion. It raised so many, it raised top dollar from the top funds. I mean, what were your learnings from the way Byju conducted its business and then the eventual downfall?
बहुत ही अलग हैं दोनों चीजें। मैं कह रहा हूँ ना,
आपके लेसन्स क्या थे?
मैं बताता हूँ। आपके लिए वो बहुत बड़ी कंपनी थी, इतना रेस किया, इतना रेस किया। आप स्टूडेंट पॉइंट ऑफ व्यू से देखो, हाउ मेनी पेड स्टूडेंट्स दे टॉट इन देयर एंटायर लाइफ। मुझे ये मैटर करता है। स्टूडेंट मुझे नहीं पता। स्टूडेंट गो टू स्टूडेंट कम्युनिटी एंड आस्क देम। मेरे मतलब आई डोंट थिंक वो मेरा 10% भी होगा। आप स्टूडेंट कौन ज्यादा बच्चे पढ़ाया, कितने बच्चे पढ़ाए? तो आई थिंक आपकी कम्युनिटी में what these players were targeting, I don't want to take any name, he is a fantastic teacher first of all, but what these players were targeting is top 3% of India जो इतनी फीस दे सकता है, 80,000 रुपए, 60,000 रुपए। और इस 80,000 रुपए के कोर्स को बेचने के लिए आपको 40,000 रुपए की मार्केटिंग कॉस्ट लगेगी हमेशा, क्योंकि इट्स अ हाई आरपू कोर्स। किसी के पास कोई सोशल मीडिया नहीं था, कोई फ्री नहीं पढ़ा रहा था। हम उनसे बहुत डिफरेंट है। हमारा कोर्स उनसे 1/20th कॉस्ट पे बैठा हुआ है। हमारे पास नीचे वाली 97% वाली जनता है, जो कि बहुत बड़ा टाइम है अगर इन्वेस्टर अपॉर्चुनिटी से आप देखो, और मेरी नजर से देखो तो बहुत बड़ी जिम्मेदारी है कि आपको एक बच्चे को वहां पढ़ाना है। सो वी आर वेरी डिफरेंट फ्रॉम दीज प्लेयर।
You raised less than $250 million अभी तक?
Right.
How did you manage to grow to this scale? Because again, comparables will be drawn to Byju's. वो ही हमारे सामने comparison है, which raised $6 billion.
Right.
आपने तो $250 million से इतना बड़ा।
हम कैश पॉजिटिव रहे हमेशा से। हमेशा से हमारे जितने भी ऑनलाइन बिजनेस थे कैश जनरेट कर रहे थे, और वो हम लोग कहते हैं कि हमारे ऑनलाइन बिजनेस इज अ प्राइवेट इक्विटी व्हिच फंड्स द होल कंपनी।
But ये $250 million भी यूज नहीं हुआ ना। I am sitting on $300 million treasury. And compare me with consumer internet. Physics Wala is the first company in the consumer internet reached $300 million of revenue in just 5 years. You pick any consumer internet company, average time they took to reach $300 million of revenue is 5 years. We are the only company जिसमें founder stake 80% है.
Yeah.
Like, you know, we are the only Indian tech IPO जहाँ पे none of the existing investors are selling. Like, you know, zero investors selling at this point of time.
Yeah.
मेरे 4 इन्वेस्टर हैं. None of them are selling. और आप किसी भी IPO में होता हुआ नहीं देखोगे. We hold 80%. हमने उनको push भी किया कि आप OFS कर लो. None of them are agreeing to selling. So
when was the exact moment that you knew that you are more than this free YouTube videos and you can make this into a business? What was that exact moment?
Never. I never thought कि ये business बनेगा, ये startup बनेगा, हम listing पे आएंगे. Never. ऐसा कोई dream था ही नहीं. Simple इतना समझ में आया कि COVID आया. बच्चों को ये था कि ऑनलाइन कोर्स से ही पढ़ना है, ऑफलाइन कोचिंग बंद हो चुकी है.
But free से तो you move to paid.
मैं उसी पे आ रहा हूँ. So free is what? मैं फिजिक्स पढ़ा रहा था. ना टेस्ट हो रहे थे, ना होमवर्क मिल रहे थे, तो कोई सिस्टमैटिक प्लान नहीं था. केमिस्ट्री कौन पढ़ाएगा, मैथ्स कौन पढ़ाएगा. वहां से जब हम ऐप के ऊपर आए तो यही था कि 3,500 रुपए में लाइव तैयारी कराते हैं. नीट के सारे सब्जेक्ट की टेस्ट होगा, होमवर्क होगा, डाउट होगा. सो दैट वाज द मोमेंट वी रियलाइज कि अच्छा ये प्रोडक्ट हिट है. 5 दिन के अंदर 50,000 बच्चों ने खरीदा.
Really?
And you are talking about what? CAC. Zero CAC. Zero CAC. I went on YouTube. मैंने बोला कि ये बच्चों में कोर्स लेके आए, उसके अंदर हम पढ़ाएंगे. Zero CAC. 50,000 बच्चों ने खरीदा.
What is the one business mistake you will never repeat, if there is?
So we have to be very careful in terms of M&A, like, you know, and buy versus build में what we believe is build is far more robust than buy. Like, you know, although we haven't done any large mistake in, but this is what we have learned from like, you know, others in the sector.
One business rule you will never break. है कुछ?
Student experience.
Growth should not come at the cost of student experience.
Got it. Okay. One industry practice that irritates you.
One नहीं है, बहुत सारी. कितनी बताऊं इसके अंदर?
So high marketing cost that irritates us, like, you know. Second is, like, you know, a huge counseling workforce, like, you know, sales workforce. That is again irritation for us, like, you know. Another is not focusing on academics, not focusing on teachers, their empowerment of the teachers. Like, you know, a founder, a chairman, a director of any education company has to be a teacher, like, you know. And not keeping learners at the center of your discussion, be it product, be it, like, you know, growth. Learners should be center of your discussions, and outcomes should be the core value of any education company.
Okay. You teach millions. Who teaches you?
My students always teach me. उसमें एक और मैं पॉइंट ऐड करूंगा. You hear any education company out there, सब ये बोलते हैं we want to create a teacher independent system. कि हम टीचर इंडिपेंडेंट कर देंगे सिस्टम, हम AI ले आएंगे. That is cool. बहुत बढ़िया है. मैं हमेशा टीचर डिपेंडेंट रहूंगा. आई विल बी वेरी क्लियर. मैं फेस डिपेंडेंट नहीं हूँ, पर मैं टीचर डिपेंडेंट हमेशा रहूंगा. तो ये एजुकेशन कंपनीज नहीं समझ पाती थी. उनके फाउंडर से मैं मिलता था. दे नेवर वैल्यू टीचर्स. टीचर्स को हमेशा बैकफुट पे रखा था कि टीचर एक कॉमोडिटी है, पढ़ा देगा, बच्चा काउंसलर लेके आएगा, टीचर उसको पढ़ा देगा, हाँ ठीक है. हमारे यहाँ द व्हाट इज द कल्चर? आप बैठे हो, मैं बैठा हूँ, मेरे इन्वेस्टर्स बैठे हैं यूएस के, एक टीचर का रूम में एंटर करेगा, वी ऑल स्टैंड अप सर. सो दैट काइंड ऑफ कल्चर वी वांट टू मेंटेन कि हमारे लिए सबसे पहली प्रायोरिटी हमारे स्टूडेंट्स हैं, सेकंड हमारे टीचर्स हैं, फिर कुछ एनर्जी बची तो रेस्ट ऑफ द कंपनी इंक्लूडिंग फाउंडर्स. दैट इज द स्टेटमेंट वी गिव इन ईच ऑफ द मेल.
Will AI disrupt your business?
No, that will empower.
ये तो
Sync. नहीं, let us give you what AI is doing for PW.
Yes.
4,000 रुपए के कोर्स में आप ऑनलाइन पढ़ा रहे हो लाइव. सबसे बड़ा प्रॉब्लम क्या है इसके अंदर? पर्सनलाइजेशन. डाउट कैसे सॉल्व होगा? तो हमने सोचा कि इसके लिए सब्जेक्ट मैटर एक्सपर्ट लगाते हैं जो डाउट सॉल्व करेंगे, पर वो कॉस्ट बिल्डअप होती जा रही थी और टाइम पे डाउट सॉल्व भी नहीं हो पा रहे थे. कितने लोग को बैठाओगे? हमारी एक क्लासरूम में 1 लाख बच्चा पढ़ रहा है, 1.5 लाख बच्चा पढ़ रहा है. इसका सोल्यूशन क्या था कि हमने सारे डाउट सॉल्व किए. हमको लगा था मशीन लर्निंग से सॉल्व होगा. थैंकफुली एआई की वेव आई, हमने एआई में उसमें इन्वेस्ट किया, हमारी सॉल्व की एआई की टीम है, पूरा एआई पॉड जो हमारा है. आज के टाइम पे हमारी 90% डाउट एआई सॉल्व कर रहा है विद एन एक्यूरेसी ऑफ 88%. ह्यूमन एक्यूरेसी 91 पे है, 3% और है, इंप्रूव करेंगे. सबसे अच्छा फायदा इसका कॉस्ट से ज्यादा टर्न अराउंड टाइम है कि टाइम पे डाउट आंसर होने लग गए हैं. सो अगर एआई इन एजुकेशन में आप देखोगे, वी आर बेस्ट इन दी वर्ल्ड एक्सेप्ट चाइना. टू बी ऑनेस्ट, वो लोग आगे हैं. एंड इंस्टेड ऑफ सिटिंग हियर सेइंग कि हम बहुत बेटर है, हमें लड़ना चाहिए एजुकेशन के अंदर उनसे. वो जिस तरह से वो एआई का इस्तेमाल करें, नो वन इन द वर्ल्ड इज यूजिंग
Have you gone to China and understood the?
I was there for good 10 days, like, you know, met all top education companies
And
there.
what was your learning?
So learning is, like, you know, we doubled our investments in AI. First AI product was AI Guru, a doubt solving product for our students 4 करोड़ डाउट्स बच्चों के वो सॉल्व कर रहा है। अब वो बच्चों का डाउट सॉल्वर से ज़्यादा स्टूडेंट कंपेनियन बन गया है। बच्चे उससे इमोशनल बातें कर रहे हैं, अपने रिलेशनशिप्स की बातें कर रहे हैं, लेकिन अपने पेरेंटल प्रेशर की बातें कर रहे हैं। सेकंड प्रोडक्ट वाज AI ग्रेडर, सब्जेक्टिव आंसर इवैल्यूएशन टूल फॉर द स्टूडेंट्स। अपने आंसर्स को स्टूडेंट्स अपलोड करके, लेकिन 95% एक्यूरेसी के साथ में इंस्टेंट सब्जेक्टिव आंसर्स को इवैल्यूएट कर लेते हैं। थर्ड वाज AI सहायक एंड AI बुक्स आल्सो वी आर लॉन्चिंग। सो वी आर अ AI फोकस्ड कंपनी।
Gentlemen, thank you very, very much for joining in. Wish you all the best. Thank you so much.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Market remains weak amid broad-based decline. Broader markets underperform the blue chips. Finance Minister Nirmala Sitharaman confirms exclusively to CNBC-TV18 that work is already underway on PSB consolidation and discussions are on with RBI and the banks. Also clarifies that government is not here to shut the door on F&O but remove the roadblock. Says it is the investor's responsibility to understand risks. United States Supreme Court expresses skepticism on the legality of Trump's tariffs. Observed that imposition of taxes on Americans has always been a core part of the U.S. Congress observes that no other president except Donald Trump has made use of these emergency powers to impose tariffs since it became a law in 1977. M&M sells its 3.5% stake in RBL Bank for 678 crore rupees, books a 63% gain on its investment. M&M's exit comes weeks before Middle East banking giant Emirates NBD's open offer to acquire a majority stake in RBL Bank. Birla Opus CEO Rakshit Hargave resigns 18 months after Grasim Industries launched its paints division, will join Britannia as its new CEO from December 15th. Hargave's exit sparks a relief rally among other paint stocks. Grasim Industries slumped 6% today.
मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा for our education. Still I couldn't make into these coachings.
Physics Wala's 3,480 crore rupee IPO opens for subscription on November 11th, sets a price band in the range of 103 to 109 rupees a share. Co-founder Alak Pandey tells CNBC-TV18 they plan to expand to 500 offline centers in 3 years, says their pricing reflects a vision for free and affordable education. India's startup IPO wave opens floodgates for private equity exits. Over 13,000 crore rupees already unlocked, marks strongest year yet for investor liquidity. 121 constituencies in Bihar go to polls in the first phase amid tight security. Over 1,300 candidates in the fray. Voter turnout stands at over 53% till 3 p.m. Chief Minister Nitish Kumar, RJD Supremo Lalu Prasad and opposition CM candidate Tejasvi Yadav cast their vote in Patna.
Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Shot in the arm for Democrats and a reality check for Trump and Republicans ahead of next year's congressional elections. Democrats sweep first major elections of Trump's second term. Zohran Mamdani makes history as New York's first Muslim and South Asian mayor. And the Philippines declares a state of emergency after Typhoon Kalmegi leaves over 100 confirmed dead and nearly 130 people missing. This is the nation's deadliest natural disaster of the year. Right, let's start with the day's market action. The Lal Street remained weak amid a broad-based decline. Prashant Nair is here with the day's trading action. Prashant, markets failing to hold any sort of recovery.
Well, it was not as if global markets were bad or anything, but the point is today was a pretty poor session all told. On the Nifty, it's just about a 100-odd point cut. But the small cap index and the broader market, I think, is where you essentially had a pretty sharp sell-off. Mid and small caps, right? I mean, market breadth was in 3:1 in favor of what was down. So the Nifty comes up on your screen, the Nifty bang, mid and small cap indices up on your screens as well. You know, straight away, just start with just to look at sectoral and sectoral stuff in terms of where there was maximum pressure. So consumers as a pack, the index was down 2%, defense was down 2%, the metals index unwound some of the gains, recent gains, 2% loss there. And you also had the PSC index, the Public Sector Enterprises Index, which was down about 1.5% today. Coming to the large cap space and, you know, looking at where there was maximum pain, Grasim, 6% on the back of earnings. Hindalco was down 5.5%. There was Adani Enterprises down about 4.5%. And so these are basically the top 3 losers in trade. Asian Paints was by far the biggest gainer with a near 5% pop. The next big one is Reliance, which kind of stabilized things and prevented a bigger fall in the Nifty because it was up about 1.5%. The third and the only name, the third name, which was up over 1%, Mahindra and Mahindra, which did quite well.
Right. Thank you, Prashant, for that. Moving on, Finance Minister Nirmala Sitharaman has exclusively confirmed to CNBC-TV18 that work has commenced on PSU bank consolidation and talks are on with RBI. In response to a question by Shireen Bhan at the SBI conclave, the Finance Minister also clarified that the government is not here to shut the door on F&O, but to remove the roadblocks. She added that it's the investor's responsibility to understand risks.
I know that you've previously said that India needs not just world-class banks, it also needs world-sized banks. So, ma'am, is the government actively looking at further consolidation in the Indian banking sector? And is the government also actively looking at enhancing the FDI limit as far as public sector banks are concerned to 49%? Thank you very much.
No, I repeat that line. India needs a lot of big banks, world-class banks. And for that, of course, we will have to sit and talk with the Reserve Bank and also with the banks themselves to see how they want to take it forward. And also discuss with RBI about how they have an idea of taking or idea of building larger banks. So there's a lot of work to do prior to my saying, yes, I've taken a call or government is looking at this way or that way. And in that, work has already commenced. We are discussing with RBI, we are discussing with banks. It's not by creating from among those which exist today just by amalgamation. That can also be one of the route. But you need an ecosystem and also an environment in which more banks can operate and operate to grow. So that environment is actually well established in India, but I need it to be a bit more dynamic. So some work is happening on it. उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है. जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी. सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं. मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूँ, क्योंकि पैसा उनका है.
Now, State Bank of India's strong second quarter performance propelled the public sector bank past the $100 billion market capitalization milestone as the stock hit record highs. SBI is the sixth Indian company to enter the coveted $100 billion market cap club. Robust credit growth and festive spending also pushed the value of SBI's total business past the 100 trillion rupee mark. The US Supreme Court has expressed skepticism about President Donald Trump's tariffs in an ongoing case examining the legality of the sanctions. Now, both conservative and liberal justices questioned the solicitor representing the Trump administration about the scope of the president's authority to impose the sanctions. If the tariffs are invalidated, the US government could owe tens of billions of dollars of refunds to businesses that have paid them already. Now, Mahindra & Mahindra has sold its entire stake in RBL Bank via a block deal. In an exchange filing, the company said that it offloaded stake worth 678 crore rupees, representing around 62.5% gain on its investments. Britannia has appointed Rakshit Hargave as its next CEO. Hargave will take over from the 15th of December. He resigned from his position as CEO of Birla Opus yesterday. He will succeed Rajneet Kohli, who quit Britannia in May. Meanwhile, Grasim has said that the day-to-day operations of Birla Opus will now be overseen by Aditya Birla Group veteran Himanshu Kapania. EdTech services company PhysicsWallah has set its price band for its upcoming 3,400 crore rupees IPO. The band has been set between 103 to 109 rupees a share. The public issue will open for subscription from the 11th of November. Speaking with CNBC-TV18, company CEO Alak Pandey recounted his journey as an entrepreneur from starting a YouTube channel to prepping for a Dalal Street debut.
अब मैंने स्टार्ट किया था अपने होम टाउन प्रयागराज से. वाई आई डिड इट, मैं जब क्लास 12 में था तो मेरे को भी बड़ा मन था कि मैं आईटी का एग्ज़ाम लिखूं और उसके लिए कोचिंग जाऊं. पर वहाँ की जो फीस होती थी 1.5 लाख रुपए 2 लाख रुपए, वो मैं अफोर्ड नहीं कर सकता था. मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा फॉर आवर एजुकेशन. इसलिए आई कुडंट मेक इनटू दीज कोचिंग्स. तो मेरे अंदर हमेशा रह गया था कि मेरे साथ फेयर नहीं हुआ है, मेरी गलती नहीं है कि मेरे पास पैसा नहीं है, मुझे फेयर अपॉर्चुनिटी नहीं मिली है एग्जाम लिखने की, और वो हमेशा अंदर रह गया था सिंस क्लास 12th। जब यूट्यूब पे आया पढ़ाने तब मुझे मेरे जैसे बहुत से बच्चे इंडिया में दिखे जो टैलेंटेड हैं, बट उनको फेयर अपॉर्चुनिटी मिल नहीं रही है बिकॉज दे कैन नॉट अफोर्ड 2 लाख की कोचिंग, 1.5 लाख की कोचिंग। तो मुझे ऐसा लगा यार मुझे फ्री में पूरे इंडिया को पढ़ाना चाहिए।
You know, when you started, Byju's was the poster child of EdTech. It was already a well-established company. Its peak valuation, I think, was more than $20 billion. It raised top dollar from the top funds. I mean, what were your learnings from the way Byju conducted its business and then the eventual downfall?
What these players were targeting, I don't want to take any name, he is a fantastic teacher first of all, but what these players were targeting is top 3% of India जो इतनी फीस दे सकता है, 80,000 रुपए, 60,000 रुपए, और इस 80,000 रुपए के कोर्स को बेचने के लिए आपको 40,000 रुपए की मार्केटिंग कॉस्ट लगेगी हमेशा, क्योंकि इट्स अ हाई आरपू कोर्स। किसी के पास कोई सोशल मीडिया नहीं था, कोई फ्री नहीं पढ़ा रहा था। हम उनसे बहुत डिफरेंट है, हमारा कोर्स उनसे 1/20th कॉस्ट पे बैठा हुआ है। हमारे पास नीचे वाली 97% वाली जनता है जो कि बहुत बड़ा टाइम है अगर इन्वेस्टर अपॉर्चुनिटी से आप देखो, और मेरी नज़र से देखो तो बहुत बड़ी जिम्मेदारी है कि आपको एक बच्चे को वहाँ पढ़ाना है। सो वी आर वेरी डिफरेंट फ्रॉम दीज प्लेयर।
Physics Wala is the first company in the consumer internet reached $300 billion of revenue in just 5 years. Like, you pick any consumer internet company, average time they took to reach $300 million of revenue is 5 years.
India's startup IPO wave has opened the floodgates for private equity exits, with over 13,000 crore rupees already unlocked. This marks the strongest year yet for investor liquidity. Rachna Dhanrajani joins us now with more details. Rachna, is it the year of redemption for those early investors?
That is correct, Archana. India's startup IPO season in 2025 has reached a defining phase marked by large private equity exits and a surge in investor appetite for new age businesses. The cycle began with Ather Energy, where early backers such as Tiger Global, GIC and NIIF booked partial exits with returns ranging from 1.6 to 8 times their original investments. Urban Company's 1,471 crore rupee IPO was entirely secondary, giving investors like Y Capital, Tiger Global and Steadview exits of up to 29 times their entry price, while Accel and Elevation Capital earned around 29 and 19 times respectively. Bluestone Jewelry followed with strong market participation as Iron Pillar, Peak 15 and Accel trimmed stakes in its 1,236 crore rupee IPO issue, where Accel realized a 9x return. Now the next phase centers around Lenskart, Pine Labs, Grow and Shadowfax, which together account for more than 13,000 crore rupees in planned offer for sale value. Lenskart leads with 7,278 crore rupee IPO featuring 5,318 crore rupees in secondary sales by SoftBank, TPG and Premji Invest. Pine Labs follows with 3,900 crore with exits by Sequoia, Temasek and Actis. Grow's 6,632 crore IPO includes a modest OFS of 574 crore rupees but sees participation from Tiger Global, Peak 15 and Ribbit Capital, while Shadowfax will raise about 1,000 crore rupees entirely through secondary sales by Eight Road Ventures, NGP Capital and Flipkart Internet. Now adding to this momentum, Physics Wala has filed 3,480 crore rupee IPO, which includes 380 crore rupees in offer for sale. Founders and early investors such as Westbridge, GSV Ventures, Lightspeed Venture Partners and Hornbill Capital are expected to partially exit, marking one of the year's most significant edtech listings, with confirmed secondary proceeds already crossing 13,000 crore rupees and more offerings in the pipeline. 2025 is shaping up to be India's strongest year for private equity and venture capital exits through IPOs. For investors, it's a long-awaited liquidity window after years of patient capital. And for startups, it's a sign of a true market maturity as public investors reward scale, profitability and governance in real time.
All right, thank you, Rachna, for that. Now, shares of Ola Electric came under pressure after it slashed revenue guidance for this fiscal to up to 3,200 crore rupees from 4,700 crore rupees earlier. Now, this after the electric two-wheeler makers' revenue in the second quarter declined over 40%. However, net loss and EBITDA loss narrowed on an annual basis. All right, it's time for a short break. Coming up next, shot in the arm for Democrats and a reality check for Donald Trump and Republicans ahead of next year's congressional elections. More details when we return.
Shri Shetty, Chairman SBI, Managing Directors of SBI, esteemed leaders from the government, fellow regulators, industry leaders, colleagues from State Bank of India, ladies and gentlemen. It's a pleasure to be here at the 12th SBI Banking and Economics Conclave. The theme, India's quest for self-reliance in a fragmented world order, truly captures the spirit of our present times. We navigate a global landscape marked by geopolitical shifts, trade complexities, and rapid technological change, all of which challenge established norms. Our journey towards self-reliance will require channelizing our nation's savings into productive investments in modern infrastructure, advanced manufacturing, and energy transition, as well as strategic sectors like semiconductors, rare earth metals, and defense. Capital markets will be crucial to fund these ambitions. There is a changing paradigm of household investments. The foundation of any self-reliant economy is its own people's capital. We are witnessing a fundamental shift in how Indian households save and invest. SEBI's investor survey tells us that investors are motivated by long-term growth, building additional income, and goal-based financial strategies. The numbers speak for themselves. The count of unique investors in our capital market has surged from just over 38 million in FY 2019 to nearly 135 million now. The number of unique mutual fund investors has jumped from 10 million a decade ago to over 56 million now. Household savings channeled into mutual funds grew at a CAGR of 24% between 21 to 25, far outpacing the 9% growth in bank deposits. This isn't just financialization, we are witnessing democratization of wealth creation. This shift has created a powerful domestic counterbalance to volatile global flows. The rise of systematic investment plans now crossing 280 billion rupees monthly provides stable capital. Individuals directly and via mutual funds now hold a record 18.8% of NSE-listed firms. Our domestic strength now provides stability in a fragmented world. In the current financial year alone, equity and debt issuances have crossed 7 trillion rupees. A strong IPO pipeline indicates continued confidence in our markets. Instruments like REITs and InvITs have channeled significant capital into vital real estate and infrastructure assets. AIF commitments channeling risk capital into the unlisted space have grown at a CAGR of 30% over the last 5 years. Municipal bonds, though nascent, offer a direct route for cities to fund their own development. Nevertheless, India still remains a predominantly bank-led economy. Outstanding bank credit to industry and services stands at 91 trillion rupees, while outstanding corporate bonds stand at 54 trillion rupees. This highlights our primary challenge and our greatest opportunity. Deepening our equity, bond, and alternative investment markets is imperative to diversify and provide an alternate source of funding for our ambitions. In a fragmented world, our markets have to be investor and issuer friendly. Investors will commit capital when they believe the market to be fair, transparent, well-regulated, and capable of withstanding shocks. Our enterprises need more than just a resilient market. They need an efficient one. This is where easing norms of doing business become crucial. SEBI's role is a dual one, to ensure market integrity and to be an enabler of efficient capital formation. Let me touch upon some of the key reforms taken by SEBI. Let me see the bucket of ease of doing business. Just a few of them. Fundraising timelines. IPO listing timelines have been shortened to T+3, while rights issue timeline has been reduced to 23 days from average of 317 days taken earlier. Simplifying documentation. The placement document for qualified institutional placement has been streamlined by eliminating duplication of information which is already public. Large issuer listing. Changes have been recommended to allow scale-based guidelines for issuers to list with lower initial public float, public offer, consistent with market absorption capacity and minority shareholders' interest. Timeline to meet MPS has also been rationalized with due regard to liquidity. Anchor investor norms. The number of permissible anchor investors has been increased. Registered now included in the portion reserved for anchor investors. Let me come to the other developments as well. AIFs. We have reduced the minimum investment for large value funds from 700 million to 250 million to facilitate higher investor participation. Steps are being taken to promote the adoption of accredited investor status in our ecosystem. Corporate bond market. SEBI has focused on opening this market to retail investors. Face value of corporate bonds has been reduced to rupees 10,000. Online bond platform providers have been introduced to facilitate online transactions in bonds. RFQ platform has been introduced for secondary market, and liquidity window facility introduced to provide exit options to retail. Regulatory framework has also been issued for green bonds, social bonds, sustainability-linked bonds, etc. However, much more needs to be done to deepen this market. REITs and InvITs. Strategic investor category has been expanded to allow REITs and InvITs to attract capital from institutional investors. Classifying REITs as equity is also expected to further enhance liquidity of these instruments. Let me come to some of the measures on market integrity. Cyber resilience. A comprehensive cybersecurity and cyber resilience framework has been mandated for all regulated entities. Smaller intermediaries will be supported by NSE and BSE by setting up a market security operations center. Governance in MIIs. These are first line of defense. Measures have been taken to ensure they always prioritize public interest over commercial considerations. Stress testing MF schemes. These norms for small and mid-cap MF schemes directly enhance market resilience, requiring fund managers to ensure prudent liquidity management. Secure payment modes. UPI has transformed payments in the securities market, we all know. But the valid UPI handles and the SEBI check utility of SEBI, which we have introduced from 1st of October, has created a secure digital pathway for investors, ensuring that payments go only to registered intermediaries. Around 440 billion rupees of investor funds have entered the capital markets since October 1 through these validated UPI handles. Surveillance. Our revamped in-house systems are using AI and data analytics to generate alerts for manipulative trading patterns. We'll keep our regulatory framework for algorithmic and high-frequency trading updated to ensure fairness and transparency. Social media platforms. Digital platforms are being actively monitored for misleading content. We have escalated over 1 lakh pieces of such content to be taken down by the platforms. I have to also acknowledge some of the steps taken by RBI for the capital markets. The increase in the IPO financing limit for individuals from 1 million to 2.5 million will enable deeper retail participation in larger public issues. RBI has also enhanced the limit for lending by banks against units of REITs and InvITs while removing the ceiling of lending against listed debt securities. This will make these instruments more attractive as investment avenues. The government has also recently specified municipal debt securities as eligible for repo and reverse repo transactions. They can now be used by banks and institutions for short-term liquidity management. Their increased demand will empower our cities to fund their own development. So let's look at the way ahead. Looking ahead, how do we position India's capital market for the next decade of growth and self-reliance? First and foremost, education will be the key to ensuring responsible participation, especially as millions of new investors join the market. We are shifting from basic literacy to targeted education, focusing on market-specific risks and dealing with unregistered entities. The outcome of our nationwide survey is helping us understand investor behavior, and our outreach program will be tailored accordingly. For IPO-bound companies, the existing contents of the offer document summary will be further rationalized. This summary will also be made available separately to investor from the offer document to encourage informed feedback from them. The process for IPO-bound companies whose pre-IPO shares are pledged is being streamlined. The proposed framework will ensure that lock-in requirements are automatically enforced even if pledge is invoked or released, thereby preventing listing delays. Consultation papers for these proposals will be out soon. For the corporate bond market, our way forward will be to make debt instruments more attractive for retail. We have floated a proposal to allow debt issuers to offer incentives to certain investor categories to encourage retail participation and other rationalization measures. A nationwide education campaign to make investors aware about this market will be rolled out shortly in consultation with all stakeholders. RBI and SEBI are consulting on introduction of bond derivatives too.
Hello and welcome to this special broadcast right here on CNBC-TV18. Now, the world of technology has changed dramatically over the last 48 months. What we've seen in terms of data, in terms of storage, it's become front and center. The fact that data is the new oil, it's become almost cliche to say that, but it only demonstrates, it only manifests how front and center data is to the modern reality. That's across sectors. It needn't necessarily be tech. And one company that's been providing solutions towards data storage, management and security has been NetApp. They've been doing it for 33 years. They're looking at penetrating here, the Indian market even further, using it as a hub. And to tell us more about it is in fact the man who leads the company, NetApp. And the fact that he's from India only gives us more color, more aspects to talk about. Mr. Kurian, thank you so much for talking to us. It's a pleasure connecting with you every time you're visiting here. The latest quarterly earnings, quite impressive, had beaten the market's expectations as well. So firstly, congratulations on that. I just want to draw from your target that you'd set yourself a couple of years back. You'd said, I want annual revenues of $10 billion. This time, the guidance that you've given is just shy of $7 billion. Give us a sense, what does this trajectory towards $10 billion look like? And what's driving this growth for you? What's driving this demand for you?
I think fundamentally, it's the increased importance of data in delivering business outcomes for our clients. We have always maintained that data is the foundation of intelligence in terms of understanding your stakeholders, being able to deliver better business value. And I think with more and more powerful tools like AI tools, you can analyze data and bring insight from it in more and more sophisticated ways. And we are adding value to our platform to do so. Advanced security mechanisms, advanced data processing and transformation mechanisms, so that it's really, really simple to use these advanced analytic tools with the wealth of data on our platform. I think the second is to bring that to more clients in more ways. We are accelerating our participation in new client organizations. We have reached the #1 position in India, for example, in our industry. And so we can penetrate more accounts, not only here, but in other parts of the world, through more ways, right? So we work with the big cloud providers, both US hyperscalers as well as domestic cloud providers, to make our technology easily consumable. And so
you'd said last time, 5 years is when I want India to become the largest market. Are we nearing that? Are we still in line for meeting that 5-year target?
Yes, if we stay on the trajectory and continue to accelerate, yeah, we should be very close to that target.
Fantastic. Let's talk more about India. When you talk of greater penetration, you talked about NetApp being the largest provider here. What are some of these areas that are driving demand for you? Specific sectors, specific industries that are driving this momentum for you? Or is it not just the private sector, is it also the public sector? Can you give us some guidance on how this demand picture looks like for you from India?
Yeah, I think we have built from the base of the large enterprise, meaning the big, financial services institutions. We now have expanded our footprint not only in a broad range of large enterprises, but a very fast-growing sort of what we call the corporate segment. These are enterprises that may not be the largest 30 or 40 in India, but still are materially large. And then we have a growing public sector business. It's smaller than our private business, but we are starting out again from the federal government and adding on some of the larger state governments. So feel good about the progress, lots of opportunity.
Mr. Kurian, one aspect that I also want to get your thoughts on has been the push that we're seeing from large AI companies looking at greater penetration here. In fact, in just the days leading up to your visit, interesting announcements. OpenAI announcing free access to ChatGPT Go. Gemini announcing a partnership with a leading telecom provider, Reliance Jio. Again, providing users there with free access. In the days prior, we've seen Perplexity tie up with another telecom major, Bharti Airtel, to allow, again, free access. Can you give us an understanding of this penetration that they're looking for using this free access, using the deep pockets that they have? What exactly does this then translate into? Is it a push for greater data? Is it a push for more usage? What do we make of this push coming in from large AI companies?
I think the primary objective is to encourage adoption. You know, the idea of a freemium model where it's free for a period of time to encourage trial is been prevalent for a long time. You know, Apple did that with educational institutions in the United States, where you can get the future professionals to learn to use your technology and then ultimately become fans of it and promote it as you go through your work life. And I think it's a way for a broad population like the large Indian population to learn how to use these tools.
While we're on the subject, very recently we'd also seen the US Fed cut rates by 25 basis points. What does that do? There's already a lot of momentum towards AI capex. Now we also have the US Fed supporting that by way of rate cuts. What momentum, what shape do you see this trajectory taking in terms of greater investments towards AI? Does that in any way perhaps exaggerate fears of a bubble? Again, references being made to the dot-com bubble.
I think with regard to the rate cuts, they are to stimulate the broader economy. I think if you look at the economic indicators, GDP growth beyond the AI set of investments have actually been pretty low, right? About a half basis point, about 50 basis points. And so I think the rate cuts are to stimulate the broader economy.
Let's get in a word on some of the other challenges that we're talking about. Jobs is something that we're actively talking about, especially here in India as well. Very recently, we've seen job cuts at Amazon. I think they let go of about 14,000 people. We've seen at Microsoft as well, 4,000 at Salesforce. You yourself earlier this year had to let go of a few people. Back home here in TCS, we've seen about 12,000 people in the latest quarter being asked to leave. Is there this conversation, while we're seeing conversations, of course, about greater productivity, do we also now need to have a conversation on what the very real impact could be on the ground, and especially at workers, at coders, at the bottom of the pyramid?
Yeah, I think, our view is that AI doesn't replace a human. A human that's powered with AI will replace a human that's not capable of using AI, right? I think that each of those institutions has their own prerogatives. Our own view is that we are actually trying to deliver more value for clients with the same employees by giving them AI tools. So we're trying to innovate at a faster pace. We're trying to serve clients with a better customer experience. We're trying to move our back office to being more agile and responsive in the way we serve clients. And so our view is, at least in our company, there aren't massive job losses or anything like that. It's adjusting the mix of the workforce with the, the AI-powered enterprise.
One more challenge is global uncertainty. Increasingly, because of the nature of conflict that it is, we're increasingly seeing an amount of, if I may use the word, nationalism of technology, where whether that's rare earth, semiconductors, data, cloud, supply chains, and all of these aspects, there's a inward push coming in from large markets, large countries. Is that a trend that worries you when you look at providing solutions to customers, clients spread across the world?
I think it makes it more complex when you have different countries having different technology standards or different predilections for how they consume technology. It certainly makes it the economies of scale and specialization that has driven global industry and has driven kind of productivity growth, gets more challenged, right? Because now you have different countries operating with different scale. And so it's hard to harmonize across all of them. In those transitions, the larger countries and the larger players always have an advantage because they already have reached scale or they have large populations like India does, where it's a large market. But you worry about what happens to the smaller countries and the less advantaged populations.
Sure. While we're on the subject, in fact, in terms of different regulations across different countries, India is in the process of coming out with its data protection framework. We're yet to see, it's yet to see the light of day, so we don't quite have a clear picture of what that may look like. Is there a concern on data localization norms. The reason I ask that is because anyhow, India has very limited capacity for local cloud storage, which is about 1 gigawatts. So a mandate from the government to ask for the data to be stored here with not enough data storage solutions capacity here, does that present issues for you?
It's a topic that we have dealt with across the globe, sort of data sovereignty, privacy, the proper classification and governance of data. What we have done with organizations across the globe is help them meet those requirements while being able to take advantage of all the innovation in the big cloud providers. I think that is a balance you want to get right, because if you kind of implement controls in a way that doesn't allow you to innovate, it will actually in the longer term harm domestic institutions. We feel good about our ability to do so. We've seen that across the globe, where we've been able to get that balance for our clients and for the public sector organizations just right. I was in Europe recently, and we are working with some of the governments there to help them implement advanced data sovereignty practices, but allow them to use innovation from across the globe so that they can bring citizen services, improve national security, strengthen cyber defense, and so on.
Just a couple more questions, Mr. Kurian. I just want to also get your thoughts on some of the policy decisions that have been taken by the US administration on H-1B visa. If this policy does in fact come to stay, that we are looking at $100,000 for every H-1B visa, what does that do, again, in terms of sourcing talent? I ask this especially in context of Indian workers who have aspirations of working for the US tech industry in the United States. Now do we have a situation where they move back here, the companies gravitate towards countries such as India to source for talent?
Listen, we have been in India now for a very long time, right? 21 years. And so we have always believed in having, going to where the talent is. We have development centers. I was in Australia right before I came to India. We have, an engineering group there. We have a group here. We have a group in Philippines. We have a group in Israel, in Ireland. So lots of different parts of the globe. And key to success in an industry like ours is to have the best technical talent, because they innovate on behalf of our clients. In terms of the US talent pool, there have been some positive steps for providing continued access to H-1Bs, for example, for college students graduating from universities in the US. And so we're hopeful that there'll be a more progressive perspective, especially for high-skilled global talent.
That's fantastic advice, Mr. Kurian. We'd like to thank you for the time that you've shared with us. It's a lovely conversation, as always, like in 2023, now in 2025. And just as back in 2023, when you had given indications of what the road ahead may look like, we're hoping some of those things come to pass. We'll, of course, look to connect with you soon on your next travel to India. Thank you once again.
Thank you. Thank you for having me.
Hello and welcome to this special broadcast right here on CNBC TV18. I'm going to take a name of a few projects. Tell me if it strikes a bell. The Delhi Metro, the Terminal 2 at the Bengaluru Airport, Burj Khalifa, the Shah Rukh Khan starrer movie Jawan, the mammoth hit that we saw recently Chhawa, the legendary game Call of Duty. The one common denominator across all of these different projects is the company San Francisco-based Autodesk. The company provides tools for imagining and building solutions across the spectrum of all the projects that we mentioned, whether it's infrastructure, whether it's manufacturing or media and entertainment. Autodesk is increasingly now looking at India as a part of the APAC region to focus more on it. The company calls India a strategic market. To learn more about the company, about the vision, is with us the global CEO, Mr. Andrew Anagnos. Mr. Andrew, thank you so much for joining us, being a part of this conversation. India, you've called it a strategic market. As far as the APAC region is concerned, give us more depth on it. Why is it a strategic market? What is your vision here for the India market?
Yeah, Ashmed, you did a great job of introducing Autodesk earlier. You know, one of the important things to know about us is we're a design and make company. So everything out there that you see in the world, the roads you drive on, the bridges that go over the rivers, the cars that drive over it, the cell phone in your hand, it's all been touched by our software in some way. And when you look at India and its big vision around Viksit Bharat and what they're trying to target, what are some of the key pillars there? Infrastructure development, manufacturing excellence, sustainable growth, skills and talent growth inside the Indian economy. So looking at India over the next 5 years, you're going to spend trillions of dollars on infrastructure. You're going to spend hundreds of millions of dollars, if not more, on manufacturing. You just recently spent $626 million. There was an announcement of $626 million for building components for electronic components. You need factories for that. This touches everything we do. So when you look at the long-term growth perspectives in India, there's huge opportunities in infrastructure, huge opportunities in manufacturing. Our first-generation tools are already widely used in India. Our goal in coming here and working with the Indian government, working with large Indian corporations, is to get them onto the most advanced and powerful tools we have. It's very expensive to build infrastructure. There's a massive capacity problem. Not enough money, not enough people, not enough materials to build and rebuild everything. Our goal in coming and working with India is to help them do this faster, cheaper, more reliably, and that's a huge opportunity for us over 5 years, and it's a huge opportunity for India because there's just so much that has to be built and rebuilt.
You mentioned two very interesting aspects. One is the infrastructure push, and there's this one report which mentions that in 11 years leading up to FY25, India spent about over $600 billion. You also mentioned the Make in India push. That's clearly something that's high on the agenda for the government. They're working towards electronics manufacturing here, and that's just, of course, one part of the total manufacturing story. Can you help us with some numbers? What is the scale of this opportunity that you're hoping to realize? Any targets that you've given your team here that, look, in 5 years, we need to be here, we need to have this percentage of the market share or this amount of revenue here from the India market?
Well, I can't give you exact numbers, Ashmet, but let me put it this way. You know, we see India as our largest potential growth market in Asia-Pacific, bar none. And the reason for that is the active investment and the talent pool here. You know, for instance, over the last 5 years, the number of employees we have in India has doubled. And it's now the second largest employment site for us after the U.S. So it's not only what's India's spending to modernize the entire economy of the country, it's also the talent that's here as well that's going to play a key role in building the global products that we bring everywhere. So there's huge opportunities for us. We see it as the largest potential market for us in Asia Pacific.
You talk about huge opportunities. You've in fact just you've narrowed down on one, at least, opportunity as a part of this visit of yours in India. We're talking about your partnership that you've announced with Adani. Give us more color on that. What is the nature of this partnership? How are you looking to monetize it going forward?
Yeah, I'm really excited about this partnership, and I'll tell you why I'm excited about this partnership. You know, Adani touches everything in India, from ports, infrastructure, multiple types of projects. There's 11 business groups inside of Adani that do amazing things. They have been longtime users of our early stage products like AutoCAD and the things associated with that. What they're working with us and the 3-year contract they've engaged with us is to modernize their processes and get up to what we call building information model, which is BIM, which is the modern way of building 3D models and then moving them through the entire life cycle from design, pre-construction planning, what we call 4D and 5D planning, which involves scheduling and cost, all the way out to the actual execution on the construction site with Construction Cloud. So they've engaged with us to modernize their processes to be best in class so they can solve this capacity problem, so that they can put fewer people on each project and execute far more projects. And that's what I'm excited about, and I think it's exciting for them, and I think it's a great engagement for India between us and Adani Group.
Any numbers you could share in terms of what is the timeline of this partnership, any specific projects that you'll be working towards?
Over the next 3 years, we're going to be working with them to develop competency in-house for the various groups that they work with. They're going to have pilot projects associated with this, but right now we're working with them on their internal expertise around what they call a BIM factory and BIM capabilities that allow them to move BIM-based processes into all the projects they're executing on.
Fantastic. Let's talk more about your GCC presence here. That's a big talking point here in India. A lot of talent, as you mentioned correctly, sits out of India. A lot of companies are gravitating towards looking at India in terms of setting up these global capability centers. More recently, there have also been conversations, for instance, Sridhar Vembu, a tech icon here out of India, he's of the view that GCCs, because they're coming here, they should be taxed here, they should be regulated here, the IP should rest here. That has led to some amount of debate. Are we ready for that? Is the tech industry ready for that, to be based out of here and to be taxed and regulated here? Or will that stifle innovation in any way?
Yeah, I mean, look, we're a global company. We operate in lots of different countries, okay? I think what's important is that the talent is being deployed to develop new next generation solutions and being leveraged in appropriate ways to do that. How we engage with the local communities on where the IP sits, that's a longer term discussion. I think what you don't want to do is, in the short term, stifle the amount of hiring and the amount of engagement that's happening right here at the cost of maybe some short-term political goals.
In having this pitch and having this conversation with public sector entities and assuring them on access to data, what are the kind of conversations that you have with some of your other clients? Is there a hesitancy within the Indian ecosystem to move and migrate towards these new digital tools? Do you see that? Do you find yourself making this pitch to them?
Look, I think every technology evolution that we've seen has these kinds of challenges, right? I remember very early on in the days of the cloud, when we started talking to people using the cloud, using applications in the cloud, people were very, very hesitant to do this because they were, what are you doing? Where's my data going? How safe is it? How secure is it? We care a lot about security, trust, and safety, and we invest a lot of money in it. So over time, what people discover is what they get back from using these solutions, because they're so much more powerful than the solutions they use today. The fact that the data is in the cloud means it's much more connected. It's much easier to connect it to new processes. It's much easier to connect it to new people. And as a result, they just get huge ROI from these things. So there's always hesitancy. There was hesitancy with the cloud in the past. People are getting past that hesitancy. There's going to be hesitancy with AI. Lots of interest in AI. 51% of our design and make executives in India are already using AI today to solve their sustainability and environmental challenges. But those same people, 62%, are concerned that AI is going to disrupt their entire industry. So there's a desire and a fear associated with all of these new technologies. And over time, as long as the vendors like us provide the kind of trustworthiness, security, accessibility that these customers are looking for, all of that stuff works itself out.
But while we're on the subject of AI, let me also just cite Bill Gates. Bill Gates is the latest addition to the conversations that are being had in San Francisco, in Wall Street, where he talks about how potentially we are in an AI bubble and AI frenzy. Do you subscribe to that view? That we're all building up towards this one big bubble which may pop and then could have severe consequences?
You know, every technology goes through a hype cycle. Every single technology. This is true. This was true of the PC. This was true of the internet. It's true of AI. And the hype cycle is always one that the technology gets hyped above its current capabilities, its current potential. You collapse into the trough of disillusionment. And what happens is you come out of that, you rise to a level of productivity that was really what was expected. So it goes up, it goes down, and it comes out. Every technology goes through this cycle. Where are we in that cycle? I don't know, but that cycle is unavoidable.
Speaking of that cycle, in fact, I was very recently in conversation with another global CEO. He mentioned that we have a tendency of doing that, where we overestimate the near-term impact and underestimate
the long-term impact.
Long-term impact. So, an interesting quotation I walked away with. But finally, just a couple more questions. We are today operating in an environment which has a lot of global uncertainties, whether it's on the tariff fronts, whether it's supply chains, whether it's data management. All of these aspects are giving cause for concern to a lot of global leaders. Does that come in the way when you look at your slightly mid to long-term projections in terms of what this does to the infra spend, to capex spend? How are you looking at that?
So we believe in global competition and cooperation. We absolutely think a global economy makes a huge difference for everyone. All right. So we haven't changed anything in our strategy. We operate in 180 different countries. We're going to continue to operate in 180 different countries, and we're going to continue to show up, enable our customers with the best and the latest technology. Because I think what you're seeing right now is just something that works itself out over time. You got to have the long view on all of this. And the long view is AI is going to change the way we design and make things. The global economy is going to get more productive and more powerful. There's going to be a shift in supply chains around the world, and it's going to allow a lot of economies to grow and thrive.
Fantastic. And that brings me to my one final question. I ask this to all the tech leaders that I speak to sitting out of San Francisco. You're sitting at the heart of innovation, of world innovation, a lot of pace activity there as well. One aspect I just want to also get your thoughts on is the H-1B issue. The US administration insists on having a fee, a large fee, that will make talent prohibitively expensive. I just want to get a sense, sitting out of San Francisco, what does that do to the pace of innovation? Does that get affected in any way? Or do we simply see the current approach of having GCCs and talent hubs like India, that trend will grow even further? Which of the two?
I think it'll be a combination of both. Our policies haven't changed in terms of immigration with regards to how we use talent domestically and where it comes from, and how we build talent outside in GCCs in other countries. I think it's going to continue. I think the trend will move in that direction. We haven't changed anything we're doing. And again, I think it's very important to have the long view here. We're going to get the talent to the right place at the right time, regardless of the costs, because it's important for us, for our innovation and for the capabilities we want to deliver to our customers. And that's what we're going to do, and we're going to continue to do that.
But in your conversations with similarly placed tech leaders, does that hurt you or the broader industry in terms of acquiring the talent when you have this large fee? Looking at your at H-1B visas, $100,000 makes the cost of operations very challenging to acquire talent from.
I'm looking forward to more constructive solutions.
Fantastic. And one final comment that you'd like to leave us with. Your vision for 2026, what would one key trend be that you'll be watching out for as we progress from 2025?
I think the key trend as we head into 27 is real productivity from AI. Right? People are going to be looking for real productivity. They're going to be looking for what this new technology can actually enable them to do more of. Our industry in particular, like I said earlier, has a massive capacity problem. Not enough money, people, or materials to build and rebuild everything. AI can help us solve that capacity problem. And it won't create an employment problem because there's too much that has to be built. Yes, we will have fewer people working on every individual project, but we will be doing a lot more projects, and the world needs to do a lot more projects.
Well, that was Mr. Andrew Anagnos, the global CEO of Autodesk, telling us about what excites him, what inspires him, not just about India, but also about AI as a technology and what it can possibly yield as we step into 2026. Thank you so much for being a part of this conversation, for being a part of this broadcast. For more news and updates, keep watching CNBC TV 18.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Market remains weak amid broad-based decline. Broader markets underperform the blue chips. Finance Minister Nirmala Sitharaman confirms exclusively to CNBC-TV18 that work is already underway on PSB consolidation and discussions are on with RBI and the banks. Also clarifies that government is not here to shut the door on F&O but remove the roadblock. Says it is the investor's responsibility to understand risks. United States Supreme Court expresses skepticism on the legality of Trump's tariffs. Observed that imposition of taxes on Americans has always been a core part of the U.S. Congress observes that no other president except Donald Trump has made use of these emergency powers to impose tariffs since it became a law in 1977. M&M sells its 3.5% stake in RBL Bank for 678 crore rupees, books a 63% gain on its investment. M&M's exit comes weeks before Middle East banking giant Emirates NBD's open offer to acquire a majority stake in RBL Bank. Birla Opus CEO Rakshit Hargave resigns 18 months after Grasim Industries launched its paints division, will join Britannia as its new CEO from December 15th. Hargave's exit sparks a relief rally among other paint stocks. Grasim Industries slumped 6% today.
मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा for our education. Still I couldn't make into these coachings.
Physics Wala's 3,480 crore rupee IPO opens for subscription on November 11th, sets a price band in the range of 103 to 109 rupees a share. Co-founder Alak Pandey tells CNBC-TV18 they plan to expand to 500 offline centers in 3 years, says their pricing reflects a vision for free and affordable education. India's startup IPO wave opens floodgates for private equity exits. Over 13,000 crore rupees already unlocked, marks strongest year yet for investor liquidity. 121 constituencies in Bihar go to polls in the first phase amid tight security. Over 1,300 candidates in the fray. Voter turnout stands at over 53% till 3 p.m. Chief Minister Nitish Kumar, RJD Supremo Lalu Prasad and opposition CM candidate Tejasvi Yadav cast their vote in Patna.
Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Shot in the arm for Democrats and a reality check for Trump and Republicans ahead of next year's congressional elections. Democrats sweep first major elections of Trump's second term. Zohran Mamdani makes history as New York's first Muslim and South Asian mayor. And the Philippines declares a state of emergency after Typhoon Kalmegi leaves over 100 confirmed dead and nearly 130 people missing. This is the nation's deadliest natural disaster of the year. Right, let's start with the day's market action. The Lal Street remained weak amid a broad-based decline. Prashant Nair is here with the day's trading action. Prashant, markets failing to hold any sort of recovery.
Well, it was not as if global markets were bad or anything, but the point is today was a pretty poor session all told. On the Nifty, it's just about a 100-odd point cut. But the small cap index and the broader market, I think, is where you essentially had a pretty sharp sell-off. Mid and small caps, right? I mean, market breadth was some 3:1 in favor of what was down. So the Nifty comes up on your screen, the Nifty bang, mid and small cap indices up on your screens as well. You know, straight away, just start with just to look at sectoral and sectoral stuff in terms of where there was maximum pressure. So consumers as a pack, the index was down 2%, defense was down 2%, the metals index unwound some of the gains, recent gains, 2% loss there. And you also had the PSC index, the Public Sector Enterprises Index, which was down about 1.5 odd % today. Coming to the large cap space and, you know, looking at where there was maximum pain, Grasim, 6% on the back of earnings. Hindalco was down 5.5%. There was Adani Enterprises down about 4.5 odd %. And so these are basically the top 3 losers in trade. Asian Paints was by far the biggest gainer with a near 5% pop. The next big one is Reliance, which kind of stabilized things and prevented a bigger fall in the Nifty because it was up about 1.5%. The third and the only name, the third name which was up over 1%. Mahindra and Mahindra, which did quite well.
Right. Thank you, Prashant, for that. Moving on, Finance Minister Nirmala Sitharaman has exclusively confirmed to CNBC-TV18 that work has commenced on PSU bank consolidation and talks are on with RBI. In response to a question by Shireen Bhan at the SBI conclave, the Finance Minister also clarified that the government is not here to shut the door on F&O, but to remove the roadblocks. She added that it's the investor's responsibility to understand risks.
I know that you've previously said that India needs not just world-class banks, it also needs world-sized banks. So, ma'am, is the government actively looking at further consolidation in the Indian banking sector? And is the government also actively looking at enhancing the FDI limit as far as public sector banks are concerned to 49%? Thank you very much.
No, I repeat that line. India needs a lot of big banks, world-class banks. And for that, of course, we will have to sit and talk with the Reserve Bank and also with the banks themselves to see how they want to take it forward. And also discuss with RBI about how they have an idea of taking or idea of building larger banks. So there's a lot of work to do prior to my saying, yes, I've taken a call or government is looking at this way or that way. And in that, work has already commenced. We are discussing with RBI, we are discussing with banks. It's not by creating from among those which exist today just by amalgamation. That can also be one of the route. But you need an ecosystem and also an environment in which more banks can operate and operate to grow. So that environment is actually well established in India, but I need it to be a bit more dynamic. So some work is happening on it. उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है. जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी. सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं. मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूँ, क्योंकि पैसा उनका है.
Now, State Bank of India's strong second quarter performance propelled the public sector bank past the $100 billion market capitalization milestone as the stock hit record highs. SBI is the sixth Indian company to enter the coveted $100 billion market cap club. Robust credit growth and festive spending also pushed the value of SBI's total business past the 100 trillion rupee mark. The US Supreme Court has expressed skepticism about President Donald Trump's tariffs in an ongoing case examining the legality of the sanctions. Now, both conservative and liberal justices questioned the solicitor representing the Trump administration about the scope of the president's authority to impose the sanctions. If the tariffs are invalidated, the US government could owe tens of billions of dollars of refunds to businesses that have paid them already. Now, Mahindra & Mahindra has sold its entire stake in RBL Bank via a block deal. In an exchange filing, the company said that it offloaded stake worth 678 crore rupees, representing around 62.5% gain on its investments. Britannia has appointed Rakshit Hargave as its next CEO. Hargave will take over from the 15th of December. He resigned from his position as CEO of Birla Opus yesterday. He will succeed Rajneet Kohli, who quit Britannia in May. Meanwhile, Grasim has said that the day-to-day operations of Birla Opus will now be overseen by Aditya Birla Group veteran Himanshu Kapania. EdTech services company PhysicsWallah has set its price band for its upcoming 3,400 crore rupees IPO. The band has been set between 103 to 109 rupees a share. The public issue will open for subscription from the 11th of November. Speaking with CNBC-TV18, company's CEO Alak Pandey recounted his journey as an entrepreneur from starting a YouTube channel to prepping for a Dalal Street debut.
अब मैंने स्टार्ट किया था अपने होम टाउन प्रयागराज से। वाई आई डिड इट, मैं जब क्लास 12 में था तो मेरे को भी बड़ा मन था कि मैं आईटी का एग्ज़ाम लिखूं और उसके लिए कोचिंग जाऊं, पर वहाँ की जो फीस होती थी 1.5 लाख रुपए 2 लाख रुपए वो मैं अफोर्ड नहीं कर सकता था। मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा फॉर आवर एजुकेशन, इसलिए आई कुडंट मेक इनटू दीज कोचिंग्स। तो मेरे अंदर हमेशा रह गया था कि मेरे साथ फेयर नहीं हुआ है, मेरी गलती नहीं है कि मेरे पास पैसा नहीं है, मुझे फेयर अपॉर्चुनिटी नहीं मिली है एग्ज़ाम लिखने की, और वो हमेशा अंदर रह गया था सिंस क्लास 12th। जब यूट्यूब पे आया पढ़ाने तब मुझे मेरे जैसे बहुत से बच्चे इंडिया में दिखे जो टैलेंटेड हैं, बट उनको फेयर अपॉर्चुनिटी मिल नहीं रही है बिकॉज दे कैन नॉट अफोर्ड 2 लाख की कोचिंग, 1.5 लाख की कोचिंग। तो मुझे ऐसा लगा यार मुझे फ्री में पूरे इंडिया को पढ़ाना चाहिए।
You know, when you started, Byju's was the poster child of EdTech. It was already a well-established company. Its peak valuation, I think, was more than $20 billion. It raised top dollar from the top funds. I mean, what were your learnings from the way Byju conducted its business and then the eventual downfall?
What these players were targeting, I don't want to take any name, he is a fantastic teacher first of all, but what these players were targeting is top 3% of India जो इतनी फीस दे सकता है 80,000 रुपए 60,000 रुपए, और इस 80,000 रुपए के कोर्स को बेचने के लिए आपको 40,000 रुपए की मार्केटिंग कॉस्ट लगेगी हमेशा, क्योंकि इट्स अ हाई आरपू कोर्स। किसी के पास कोई सोशल मीडिया नहीं था, कोई फ्री नहीं पढ़ा रहा था। हम उनसे बहुत डिफरेंट है, हमारा कोर्स उनसे 1/20th कॉस्ट पे बैठा हुआ है। हमारे पास नीचे वाली 97% वाली जनता है जो कि बहुत बड़ा टाइम है अगर इन्वेस्टर अपॉर्चुनिटी से आप देखो, और मेरी नज़र से देखो तो बहुत बड़ी जिम्मेदारी है कि आपको एक बच्चे को वहाँ पढ़ाना है। सो वी आर वेरी डिफरेंट फ्रॉम दीज प्लेयर।
PhysicsWallah is the first company in the consumer internet reached $300 billion of revenue in just 5 years. Like, you pick any consumer internet company, average time they took to reach $300 million of revenue is 5 years.
India's startup IPO wave has opened the floodgates for private equity exits, with over 13,000 crore rupees already unlocked. This marks the strongest year yet for investor liquidity. Rachna Dhanrajani joins us now with more details. Rachna, is it the year of redemption for those early investors?
That is correct, Archana. India's startup IPO season in 2025 has reached a defining phase marked by large private equity exits and a surge in investor appetite for new age businesses. The cycle began with Ather Energy, where early backers such as Tiger Global, GIC and NIIF booked partial exits with returns ranging from 1.6 to 8 times their original investments. Urban Company's 1,471 crore rupee IPO was entirely secondary, giving investors like Y Capital, Tiger Global and Steadview exits of up to 29 times their entry price, while Accel and Elevation Capital earned around 29 and 19 times respectively. Bluestone Jewelry followed with strong market participation as Iron Pillar, Peak 15 and Accel trimmed stakes in its 1,236 crore rupee IPO issue, where Accel realized a 9x return. Now the next phase centers around Lenskart, Pine Labs, Grow and Shadowfax, which together account for more than 13,000 crore rupees in planned offer for sale value. Lenskart leads with 7,278 crore rupee IPO featuring 5,318 crore rupees in secondary sales by SoftBank, TPG and Premji Invest. Pine Labs follows with 3,900 crore with exits by Sequoia, Temasek and Actis. Grow's 6,632 crore IPO includes a modest OFS of 574 crore rupees but sees participation from Tiger Global, Peak 15 and Ribbit Capital, while Shadowfax will raise about 1,000 crore rupees entirely through secondary sales by Eight Road Ventures, NGP Capital and Flipkart Internet. Now, adding to this momentum, PhysicsWallah has filed 3,480 crore rupee IPO, which includes 380 crore rupees in offer for sale. Founders and early investors such as Westbridge, GSV Ventures, Lightspeed Venture Partners and Hornbill Capital are expected to partially exit, marking one of the year's most significant edtech listings, with confirmed secondary proceeds already crossing 13,000 crore rupees and more offerings in the pipeline. 2025 is shaping up to be India's strongest year for private equity and venture capital exits through IPOs. For investors, it's a long-awaited liquidity window after years of patient capital. And for startups, it's a sign of a true market maturity as public investors reward scale, profitability and governance in real time.
All right, thank you, Rachna, for that. Now, shares of Ola Electric came under pressure after it slashed revenue guidance for this fiscal to up to 3,200 crore rupees from 4,700 crore rupees earlier. Now, this after the electric two-wheeler makers' revenue in the second quarter declined over 40%. However, net loss and EBITDA loss narrowed on an annual basis. All right, it's time for a short break. Coming up next, shot in the arm for Democrats and a reality check for Donald Trump and Republicans ahead of next year's congressional elections. More details when we return. Welcome back. The big national story, 121 of the 243 constituencies in Bihar went to the polls today. Several top leaders, including opposition CM candidate Tejasvi Yadav, Deputy Chief Minister Samrat Chaudhary and Vijay Kumar Sinha are contesting in phase 1. In international news, Israeli forces continue to pound Gaza despite the ceasefire. At least 2 Palestinians were killed in the central part of the enclave. Hamas has released 20 Israeli captives and handed over the remains of 22 of the 28 killed in Gaza since the temporary ceasefire came into effect on the 10th of October. On to the United States, where Democrats swept the first major elections during President Trump's second term in a night of historic firsts. The winners included Zohran Mamdani, who made history by becoming New York City's first South Asian and Muslim mayor. The city's youngest mayor since 1892 secured 50% of the vote. However, it was the women of the Democratic Party who stole the night. Virginia elected Abigail Spanberger as its first female governor. Similarly, Mary Sheffield became Detroit's first mayor, securing 77% of the vote. Democratic candidate Ghazala Hashmi also created history by becoming the first Indian American and first Muslim to win statewide office in Virginia. In a social media post, US President Trump said that unnamed pollsters because of the ongoing federal government shutdown and the fact that he was not on the ballots. So that is the big update coming in from the US. The US government, however, the shutdown is now the longest in its history. It's entered its 37th day today, beating the previous record of 35 days that was set during President Donald Trump's first term. The US Senate has rejected the funding package 14 times so far. The lack of an agreement between Republicans and Democrats has disrupted the lives of millions of Americans, with federal program cuts, flight delays, and federal workers nationwide left without paychecks. The U.S. Transport Secretary has said he will reduce flight capacity by 10% at 40 major airports from Friday due to the government shutdown, as per a Bloomberg report. Analysts estimate that the shutdown is costing the economy $15 billion a week. Shifting focus now, at least 114 people have died and over 120 have gone missing in the Philippines after Typhoon Kalmeki tore through the region. The Cebu province was hit the hardest, with flash floods causing extensive damage in residential areas. This comes just months after the Philippines was hit by Super Typhoon Ragasa and a 7.4 magnitude earthquake. The storm is now moving towards central Vietnam, where evacuations are underway as the region braces for impact. Philanthropic donations in India in FY 2025 crossed 10,300 crores. That's 85% more in the last 3 years. According to the Edelgive Hurun India philanthropy list, traditional donors like the Shiv Nadar and family and Mukesh Ambani and family top the list. Education remains the most preferred cause for philanthropy, with 40% of donations. This, as most top donors to education also have educational institutes associated with their name. Speaking with CNBC-TV18 Shraddha Tiwari, Edelgive Foundation CEO Nagma Mullah said that there is a shift from corporate CSR funding to a foundation-based model.
A little less than 800,000 millionaires, and we are a 1.4 billion country. So we're talking about that kind of income and wealth gap. Like I said, there is a realization that influence and wealth can do a lot more. So I feel consolidation has come from there, and role modeling has started to come from there. That I feel is at the center of a lot of those actions that we see. There is a deep need to deep dive. You will see that focus on education and healthcare does stay, but there are three new sectors that are seem to be competing now to be in the top 5, which is the rural transformation, arts and culture, environment and sustainability. These were not topics people spoke about 5 years ago.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18. Thank you for watching.
Hey, Shan, how are you? Shireen, nice to meet you. Nice to meet you as well. 9-minute standing ovation at Cannes. Was time slowing down? Was time speeding up?
All I know is that my sense of time was warped. Homebound has been maybe the most special film. I'm quite certain it's the most special film of my career. ये देखिए फिल्म जाके थिएटरों में बहुत प्यारी फिल्म है. मैंने देखी है बहुत अच्छी फिल्म है. I promise you. ये आपका वक्त ज़ाया नहीं होगा.
All set for the Oscars?
It does feel like a very important moment, and it's of course a seminal film in my career. So, but even that thought comes to me secondary because I'm just very proud of this film.
How different was this set from being on a set with Nicole Kidman?
Zameen Asman ka fark. Nicole was amazing, and it was so inspiring to see like her being as excited about working now as you would imagine her as a young actor. Neeraj's set is just a very, very unique and special place. He has a protocol called Code 360 where everybody has to start functioning in the tone of the scene. Not only the actors, but everybody is going method on this script.
Having come off a set like this and
Yeah.
having had the kind of
I'm
experience,
ruined.
how do you move to something that's less?
You just, say your prayers every day. I realized, I'm being associated as a star kid. But my parents were never stars. My brother became a star. It's a very different kind of influence.
You like being objectified.
It's good for the work. It's what...
From beyond the clouds to the perfect couple, and from the gullies of Mumbai to the red carpet at Cannes, Ishan Khatter's journey has been pure cinema. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. At just 29, he's earning acclaim. His latest film, Homebound, directed by Neeraj Khewan, received a 9-minute standing ovation at Cannes and is now India's official entry to the 2026 Oscars. Off-screen, he's making fashion headlines, becoming the first Indian face of Hugo Boss's global campaign. Today, we talk to the artist, the risk-taker, and perhaps the voice of a new generation of entertainers, Ishan Khatter. Ishan, thanks very much for joining us on the Young Turks Reloaded podcast. How are you feeling?
I'm feeling great. Thank you for having me, Shireen.
9-minute standing ovation at Cannes. I want to understand from you what that moment was like for you. Was time slowing down? Was time speeding up? What was that moment like?
I'm actually not quite sure. All I know is that my sense of time was warped in that moment. So it was also the first time that we all watched the film together, outside of an edit room, where I'd seen one cut of it. But it was the first time I saw the final film as well. And I had a similar experience when I saw my first movie, Beyond the Clouds, which was directed by the world-renowned Iranian author Majid Majidi, which also played at BFI in London. And the very first, so I wasn't even allowed to really look at the monitor on set, so I had no idea how my own work was or how the movie looked. And the first time I saw it was with a crowd of 1,000 people, like a, live audience at BFI. So this felt kind of like a homecoming, small circle moment for me. But Homebound has been maybe the most special film. Actually, I'm quite certain it's the most special film of my career so far. I'm incredibly proud of it. It's a very honest film. I think that it's a very rare kind of humane movie that we don't see very often nowadays. And if people have, compared it with the likes of... Actually, I should not be saying this.
No, go ahead.
But this is not a compliment to self, but to Neeraj, because, I think people have said that, it's reminiscent of the simpleness, but the profound beauty of the films of Ray. And people have taken its name in the same breath as Do Bigha Zameen. And I think we used to make a certain kind of social cinema, which we were known for because the 50s and the 60s, the golden periods were right after the independence. And we had this revolutionary thought and we would make social films, and we don't make so many of them anymore. Yeah, this one I just feel it's not agenda driven, but it's so profound and so meaningful and so relevant today that I feel like a fan of the film first. Other than it being the film I'm proudest of in my career, I champion it almost like an audience. Like, you know, एक हुरूर होता है actors में, कलाकारों में कि, you know, people come up to you and say, oh, we're a fan of this and that, and you feel like, oh, you know, humbled. And this one, I'm like, वो सब भूल जाइए, ये देखिए फिल्म जाके थिएटरों में, बहुत प्यारी फिल्म है. मैंने देखी है, बहुत अच्छी फिल्म है. I promise you, ये आपका वक्त ज़ाया नहीं होगा. So I feel like a champion for this movie, you know.
You know, you talked about the importance of social cinema, and you're talking about this in the context of the work that you've done at Homebound. Does it sometimes get overwhelming when you're dealing with issues that are complex, but also issues that are very real? Does it get overwhelming for you as an actor as you get into the skin of that character?
I've done a film called Pippa, which was based on a true event. But this is, I think, the closest to, especially the last act of this film, is completely borrowed from a true incident, which was reported in a New York Times article by Bashar Attir, on which, by which the film is inspired. So there is a sense of responsibility, and you do feel, for me, what it did is it made it very important for me to not feel like we're being manipulative of that, and we are correctly representing, or at least trying to be completely honest in our representation of that, and not paint it with the colors that we see it with. So you do feel a sense of responsibility, but at the same time, once you take something on, and especially when the process is as immersive as Homebound, you want to rely on your instincts. You want to let your instincts take over. Even the preparation, all the work that we do in preparation, for me, at least the way I see it, is I prepare so that I can let go of my conscious train of thought. Different roles require different things, but in general, I think it is to understand a character's thinking, their emotional makeup, their physicality, and then start working towards building that into your own personality, till the point where you can go in front of camera and feel comfortable that, you know, you can be that character and you don't have to consciously think it and perform it.
How different was this set from being on a set with Nicole Kidman? I mean, what was that like for you?
Zameen Asman ka fark. I mean, so first of all, I think it's always driven by the captain of the ship.
Yeah.
You know, the tone with which you work. And while it was incredible working with Susanna Bier and the likes of Nicole Kidman, who's an icon.
Yes.
And, you know, so many things were overwhelming on that set. It was a new environment. You know, I was all on my own. I didn't know anybody there. I was in a place as remote and isolated.
So you
and
were the outsider there.
I was completely the outsider, and I was shooting in Cape Cod for 3.5 months and never spent that long in America or any place outside India at a stretch before. And it was very unexpected, but I learned a lot, and they were all very generous. Nicole was amazing, you know, and it was so inspiring to see like her being as excited about working now as you would imagine her as a young actor or any of the young actors on set. Like, she was energized and she was sincere and locked in, and that was very inspiring, because that's how I would aspire to be 30 years down the line, hopefully, inshallah. Neeraj's set is just a very, very unique and special place, because it matters to him a lot how you function on his set. It's a protocol on his set to call everybody by their name. No matter what job, koi bhi kaam chota nahi hota. There is no hierarchy on his set. No one is a spot dada or a production dada. Everybody is encouraged to know everybody by their name. He has a protocol called Code 360, where everybody has to start functioning in the tone of the scene. So it's like not only the actors, but everybody is going method on this script. You know what that does is it puts everybody's energies onto the scene of the day. You know, nobody is off doing something else, you know, disconnected. And it becomes a very sensitive environment for an actor to play in, because it starts to feel that much more real. I mean, he cares about every last person on his set, how they're feeling. He'll take an opinion or an advice from anybody. It could be somebody working in the lighting team, in the production team, in the art team. He knows his material so well that he will eventually do what is right by it, but he listens to everybody. So he's the most collaborative filmmaker I've worked with, and it genuinely felt like a lesson in living and not just in making movies, you know? And I think you can see that ultimately in the film.
having come off a set like this and having had the kind of experience.
I'm ruined. Yeah.
So that's exactly what I was going to ask you.
Yeah.
I mean, how do you move to something that's less?
You just, say your prayers every day, and you just have to, I don't know, but it's like now I'm ruined because now I know it can be like this. And I think I saw an interview of the great filmmaker Paul Thomas Anderson speaking about this at some point. He said it doesn't have to be toxic, and it doesn't have to be aggressive, and it doesn't have to be, the set doesn't have to be a place where people are crying and, traumatized, and for it to be a great movie. It could just as well be.
Have you been on sets like that? Toxic,
sure,
where you had to cry at the end of the day?
Yeah. I try and save it for the camera. Those are the sets in which you see, that's what I bring to the fore. When I need to do a crying scene, I just think of those sets.
But as you look at what's happening in the world of cinema around us, and especially here in the context of Indian cinema, are we past the era of the single star film where, a star could command the multiplexes and the single screen theaters, whether it was the Khans or the Akshay Kumars and so on and so forth, including your brother as well? Are we moving more to sort of ensemble, it's an elegant word to use, but ensemble cast films? Is the era of the single star film kind of behind us?
I mean, I don't even know what a single star film is, really.
Shah Rukh Khan, Akshay Kumar, Amir Khan, Salman Khan, drawing, crowds.
These are massive stars.
Yeah.
Right? But I don't know if I could single out a film. Like, I was just thinking about this, and there's truth to what you're saying. When I think of a Jawan and a Pathan, they could arguably be Shah Rukh Khan-led vehicles, but those films also have such a big contributing hand from so many other wonderful actors, technicians, craftsmen.
Sure.
I don't think there is such a thing as a non-ensemble film, unless you're making a one-man show or something like that.
But weren't films positioned that way? I mean, they were positioned as one. I mean, it was the rest of it was the supporting cast, so to speak. It was positioned as a one-man show.
Yeah, I see what you mean. I don't think very much has fundamentally changed, to be honest. I think the definition of a star will keep changing. But, I think till somebody comes along and gets it right and gives a slew of blockbusters, everybody's going to say, it's the end of the age of stars, etc.
Yeah.
And then that will be the new thing. It's literally what works. It's nothing succeeds like success. That's the ultimate truth of it.
True.
But I don't think any film can be made with one person. I don't think any one person can make a film. At the peak of their powers, the greatest of stars, I'm sure will testify that it was not all them, and it can never be. That itself is very humbling to know. I think you're never, no one person is bigger than the sum total of, you're never bigger than the film. You're never bigger than the story that you're telling,
I want to get into this whole insider-outsider debate, right?
Yeah.
I mean, which has become the...
So which part of the debate are you? Do I get a choice in the matter?
Maybe.
Because
maybe.
I might surprise you.
We'll see. But interestingly, I watched a conversation that Matthew McConaughey and his son were having. And his son was basically saying that,
They did the lost bus together.
yeah, he's saying that, look, I got my foot in the door because you're my father, but at the end of it, if I don't have the chops, I don't have the chops, and it won't take me very far. How did that play out for you? How do you see the fact that your brother was in the movies, your mum was part of this industry as well? Did it made it easier for you to get in?
100%.
But then from then on, your own journey, carving your own niche, what was that like for you?
Yeah, so I mean, it's very interesting because when the nepotism debate kind of peaked on our part of the world, and now on everywhere, in Hollywood as well, it was around the time that I debuted with Dhadak, and it was a very interesting thing because everybody has their individual journey, right? And that is the only way you know life up until you're able to see it from a very objective lens, and that itself is a privilege. For me, I was never an industry kid. The one thing that I had was I had the exposure to the arts and culture world because my mom was the first artist in her family. And then my brother was born and he kind of had the gifts and the talents and the same passion as his parents. He became the first movie star, and I was about... So even before he became a movie star, it's all I knew and all I was passionate about, right? So it wasn't by watching him and his success that I fell in love with what I do. It was by growing up with music and growing up with listening to classical Indian music, watching Kathak, watching old, golden age Hindi cinema. Then I started getting exposed to foreign cinema. And then my brother became a movie star when I was about 10 years old. And then I saw that kind of success for the first time, but it's also the first time anyone in our family was dealing with it. So I saw that kind of from the sidelines, but I was never like in offices and in industry parties and all that till much later, And then when I broke out as an actor, coming back to this whole nepotism thing, I realized, I'm being associated as a star kid. But my parents were never stars, My brother became a star. But it's a very different kind of influence, right? Like I didn't, for example, even if I had the power to say, I want you to get me a movie, I would never do that and he would never want that for me. Because quite as simply as what you said, if I don't have the legs myself and if I can't, my whole thing was pehle kabil ban jao. That's the only way to, it wasn't even a thought of surviving. It was just like, I love what I do so much, what I want to do, that I need to be capable to do it. But my interest is not to start defending my journey and telling people ke, but mere liye to aisa tha, and ye meri hustle rahi, ye meri struggle rahi. That's not what I've come here for. I've come here to tell stories and engage people and entertain people. And when people like my work, they will be interested to know about my journey. Yeah. And that's when I would rather speak about my journey. I don't even like the word struggle because I think all of us are in the 0.1%. Just being a person being even an upper middle class citizen of this country, you're in the 0.1%.
Yeah.
And doing a film like Homebound really opens up your perspective to things like that, So no complaints and, you deal with what you have to deal with in order to be who you want to become. And that is a privilege in itself. So I like the hustle. I live for the hustle.
You said that you're an overthinker. So who or what lives rent-free in your head?
Honestly, I should start charging rent for things because it's overcrowded in there. It's like a Virar local, if you know what that
Are you
is
serious?
in my head. Yeah,
what is going on in your head?
I have 100 tabs open at the same time.
What is going on in your head?
I think people that I love that I can't live without live rent-free in my head often feel like I think like I had to learn to put myself first, and I still don't think I'm good at it. I still don't think like I've reached that place where I can do that. Like I'm very... The people that I love are very, very important to me, and I've been told I'm an empath and all of that, so I do put the priorities of people that I love before mine. So yeah, so it's hard for me to get them out of my head. They live rent free. So my family, my friends, my loved ones.
But what about insecurities? What about vulnerabilities? I mean, how much of that occupies mind space for you?
That though is in my cells now. It's not in my
Cells?
Yeah. How will it be? I have a very adventurous kind of nature. So I don't think I'm the bravest person in the world that I don't have fears, but I am quite courageous, and I'm happy to challenge my fears. So I don't think I leave a lot of space for insecurity.
Give me examples.
Like I saw a reel, I think Kobe Bryant was talking about this, where he said self-doubt is such a pointless emotion.
Yeah.
Because if you succeed, you have to get up the next day and do it again, all over again anyway. If you fail, you have to get up the next day and do it again. This is something I learned on my first film, when I think it was intimidating as a project to be on. And I've had a few of those in my career. And people often ask me, how do you not feel intimidated working in front of a veteran like Tabu, or standing in front of Nicole Kidman on a set, which is a huge Hollywood production, and working with la-di-da, whatever, Majid Majidi on your first film, and doing a role that is so tough and unconventional for a young actor, which I get a lot. And I realized on that floor, I was like, he has faith in me, an author or a legend, an amazing filmmaker that I consider a master, is putting his trust and his faith in me to pull this role off. So who am I to doubt myself? Just do the work. So self-doubt becomes you have it. It exists within you. You're vulnerable. You do question yourself. You do wonder, am I good enough? Am I... and that's a good thing. I use that to fuel me to push a little harder. But you have to park it at some point. You just have to do it. You got to go get what you want if you want it bad enough, right? You have to put it into action. You are not who you think you are. You are what you do, So you have to get out of your head at some point and do it. And maybe that's why I love what I do so much, is because it's the only thing that gets me out of my head. When I'm dancing or when I'm acting, I can't help but to be in the moment. I can't be in my head because I won't be able to do it. It's quite as simple as that. I won't do it. At least I won't do it well. So it's almost like my safe haven, my meditation, it's that for me.
Movement is medicine.
It is. Movement is medicine, truly is. By the way, that, unrelated to even this, in a physical sense, movement is medicine, because I've experienced it. I gave myself something called a labral tear 2.5 years ago, and I couldn't sit and walk without pain. And I did all of Perfect Couple and Royals and Homebound with this injury. Hopefully it doesn't show in the roles, but I didn't talk about it, but it was debilitating pain. The only thing that fixed it is movement. I had to move through the pain. It's like they say, the only way is through.
Yeah.
It was a huge insecurity for me when I got this injury, for example, because I felt like I'm a dancer. This is who I know myself to be. I don't know anything else. And the mental toll of that was far worse than the physical pain I used to go through every day. But I don't know, the body is miraculous, and
the mind is miraculous.
The mind is miraculous, because one route would have been to do surgery and then be out of action for a while and then hope that you kick back. And the other thing was just training your body all over again to move, almost like a baby, like a toddler walking again and going through that process. And I did that, and I did that kind of away from the public eye. I chose not to talk about it because I guess initially I didn't even know. I had no certainty. And then I kind of found myself physically, literally again. I was able to build back literally from scratch. And it's a small thing. People go through much worse. You have army vets and people who lose limbs and they come back to life with a renewed spirit. So there are lessons to be learned in these things. And I think it has made me a much stronger person and more confident in myself, and I trust myself more. And I think I'm less hard on myself now.
Speaking of confidence, and I saw something that you had said which was interesting, because you said you like being objectified. I've never seen it being framed like that. Why do you like
It's
being
good for the work.
Why do you like being objectified?
No, look, I think it comes down to, and there are lots of good conversations to be had about these things, because I think it's also refreshing for people, because we've just been so used to seeing cinema through predominantly a male gaze for so long that in the two installments of my work that I got objectified the most in The Perfect Couple and in The Royals, they were almost entirely envisioned by women. You know, the writer and director on The Perfect Couple were both women, and the entire team on Royals was women, you know, so I think it was like a subversion of the male gaze and seeing a man through a female gaze. I guess that was, maybe there was a freshness to that.
Yeah.
And if I may say so, it's like a slightly less, even in the objectification, it's like less titillating, less, you know, like it's slightly more tasteful, at least I would say.
Because a woman's
more
doing
often
it.
than
Because
not.
a woman's doing it.
And also a woman knows, for those many years, women know how they've been seen and how, you know, much of an eyesore it can be. So maybe that, but also I just said that in good fun. You know, I didn't mean anything serious by it. I don't mean that I love being objectified. I'm happy to do whatever the job requires. You know, Royals needed that kind of thing. Homebound needed something quite different. I would not so much as imagine that I will be playing to my sex appeal or something in a film like Homebound. In fact, the first thing Neeraj came and told me was like, I need you to lose all the muscles. He was like, I would reconsider casting you if you came in with the muscles. You know, it was almost down to that. Because he didn't want the role to be burdened with Ishan. He didn't want people to see Ishan before they saw Shoaib. That's the fun of doing what I do, is I get to disappear into different people and different characters. That's what I've always been fascinated by. That's what I've always admired in my heroes and my favorite actors.
All set for the Oscars?
Look, we've been in Cannes, we've been in TIFF, we've been at all these festivals this year. I know the caliber and the relevance of the kind of movies that have been made this year. You know, there are films from all over the world, from the East, you know, Iran and Palestine, and there are films from you know, Scandinavian movies and French films, and there's so many. It's stiff competition.
Yeah.
Okay, so it's gonna take a lot of work, and I'm here to champion this film in any way I can. But I'm just very proud that Homebound is the film that represents India, because it's a film that is talking about empathy and identity, and it's talking about compassion, and it's telling the story of these marginalized, disenfranchised characters that you don't see represented on screen very often. I'm just very proud that that is the film that has come out of India. And as an audience, I feel very proud that we have a film that can hopefully go the long haul and represent India in such a beautiful way. It does feel like a very important moment, and it's, of course, a seminal film in my career. So, but even that thought comes to me secondary, because I'm just very proud of this film first. So, yeah, we'll do whatever it takes to put it on the map and put it out there and get it to the Academy. But the rest is in God's hands, and yeah.
Yeah, you've done your part. You can't control the outcome from here, but we wish you the very best of luck, and we look forward to more conversations with you. Thanks very much for joining us here on the Young Turks Reloaded podcast.
Thank you so much for having me.
Well, with that, it is time for us to wrap up this edition of the show. If you do have feedback, send us your comments and your suggestions. We always like to hear from you. Till then, from all of us here on the team, goodbye. Thanks very much for watching.
Good evening, ladies and gentlemen, and thank you very much for joining us here again at the 12th Banking and Economics Conclave by State Bank of India. It is truly a privilege and an honor for us at CNBC TV18 to partner with State Bank of India. This is our 12th year of partnering with State Bank of India to bring you the SBI Banking Conclave. I think we just heard from the Finance Minister setting the context for the world that we live in, the uncertainty that we're faced with. I'd request Mrs. Sethi to please join us on stage as well. You know, she laid out for us the 5 pillars on which the government is attempting to chart out its growth path in this uncertain environment. And she talked about the economic self-reliance, social self-reliance, technological self-reliance, strategic self-reliance, and environmental self-reliance. What does India Inc. make of the uncertain world that we live in? And more importantly, what are the pathways for growth that India Inc. is going to position itself on? We have a very diverse but a very eminent set of panelists here who represent India in all its glory. So without further ado, let me start with our host today, Mr. Sethi. You know, congratulations are in order for the entire team at State Bank of India because you've hit 2 milestones, $100 billion in market capitalization and 100 trillion rupees in business. So 2 significant milestones there for State Bank of India. How do you feel, Mr. Sethi, and what do you believe has helped you power through both these milestones?
Thank you, Sherin, and thanks for all the eminent people who have joined this panel. It's always a pleasure to have this CEO panel in part of this banking conclave and moderated by, of course, Sherin. These 2 important milestones are also reflection, as I keep saying, is our commitment to the customer base, what we serve. The customer base of 53 crore customers, confidence had helped us to achieve this. The market capitalization is essentially the market would like to understand what is our business model, whether it is succeeding. I've been saying for the last 24 months that consistency is something what we followed and pursued. And I'm sure the market understood that and rewarding it as on that. The 100 trillion business levels is obviously is something what we are proud of. In this, we must realize that 67% of our loan assets come from the retail, agriculture, and MSME. It's not that the balance sheet is being built purely on the wholesale banking. And to that extent, I think it's a phenomenal growth which we have done in this particular segment. And this is only a couple of milestones, Sharon. I think we have many more to cross. Thank you.
What is the next milestone that you're hoping to achieve? You said that 100 billion in market cap and 100 trillion rupees in business. These have been 2 significant milestones. What's the next one you're attempting to cross, sir?
So I think, see, for India's ambition of becoming known to at least a couple of banks being in the top 20 is very important. I think we did have this discussion earlier also in your conclave, that what is so critical about being there? We have very large Indian market, domestic market, and which we are serving very efficiently. But I think to be recognized for our work through the being the top 10 global banks in terms of market capitalization is something what we look forward to, and we will definitely work on that. And I think, I personally believe that market capitalization is a reflection of a combination of factors what you're doing right. It may not really be very significant for anyone, right? But from an institutional point of view, our employees' point of view, stakeholders' point of view, the global recognition and the market recognition is equally important.
So top 10 by when? Top 10 in the world by when, Mr. Sethi? What's the timeline you're working with?
So there's no specific timeline, I think, but ideally we should be there even before 2030.
Even before 2030. So that's literally 5 years away. So that's an ambitious and an audacious task that you put forward for.
Since you mentioned audacious, I'll tell you how SBI thinks. In 2018 is the year where SBI posted loss for the first time in history. And we had a conference in Calcutta the conference theme was, how do you reach 100 billion market capitalization? Rupees.
In the year
$100 billion.
in the year that you posted a loss.
Loss.
Yes.
This is the audacity, I think, which we pursue, and I'm sure that the next milestone is easily achievable.
Well, we wish you the very best of luck with that milestone. Since we're talking about the audacity of hope, Anisha, let me come to you now. You've also come off a very strong performance as far as your quarter is concerned. And you know, when we talk about the uncertain global environment, we also have to look at the positive domestic environment which you're benefiting from today. What's the next audacious goal that you've set for the Mahindra Group, just to take forward where we left off from Mr. Sethi?
At the Mahindra Group, our aspiration is to be among the top 50 most admired companies in the world. So this has an element of purpose because we always lead with purpose. It has an element of scale because to be in the consideration set, you have to be in a certain fortune number that you need to be. And that's what we've been on a path, and we've done fairly well, I'd say, over many, many years now.
Yes, you have done fairly well, but is there a specific milestone in terms of numbers that you hope to achieve?
So Shireen, we look at it in terms of beyond financial numbers, and which is why there is a number which is top 50 most admired companies, but in many ways the bar is very high for that because there are a number of things that we have to do in terms of, one, who we are, how we serve society, how we meet our financial targets, and all of that will combine for us to meet that goal.
You know, speaking about meeting financial targets, and I want to digress for just a second before we get back to talking about the uncertain world that we live in. Your stake sale in RBL Bank, Anish, that's created quite the headlines. I mean, a neat 62% profit that you made over what you invested in RBL Bank, and it kind of puts to rest any possibility of what you intended to do with that stake. But is this kind of treasury business, investing that you're looking at actively now from here on the back of the gains that you made?
So Shireen, we were joking that if we had a rupee for every time there was a discussion on RBL Bank, we would have had more gains than we actually made in RBL Bank. So no, this was a one-off treasury action where we actually saw significant value, but we're actually creating a lot more value in our businesses, as you've seen.
So you're not going to be investing like you did in RBL Bank in other companies at this point in time?
We are not.
That was a one-off. Okay, so let's address the uncertain environment. I think the two individuals here on this panel who are perhaps dealing with the bulk of uncertainties given what's happening globally, Dipali Goenka as well as Sir here who's leading HPCL. So let me start by asking you, Dipali, 60% of your operations are dependent on the US. We don't know which way Mr. Trump is going to decide what he intends to do with tariffs. The matter currently being heard in the US Supreme Court. The hearings began yesterday. As a CEO today, what do you do? How do you diversify your risk given this uncertain mix?
So these indeed are very tough times indeed. I mean, if you look at even the numbers, you can look at the export numbers to United States of America from May, fell by 37%, 8 billion in May to 5 billion now. So indeed, and you know the thing that I have seen, and I can talk about India, and I can talk about Wellspun, we have our time in the sun now. The time when the world couldn't believe that we could make the best towels, or the best textiles, or the jewelry, or anything else to wear. There is that belief and faith in the products that we make. These are challenging times indeed. But I think the important things that we believe are diversify smartly, operate efficiently, lead responsibly. I think these are very important times where, where we make 1 million units of towels every single day. We deploy more than 25,000 people at all our textile plants. For us, the most important thing is to let our factories go on, to keep our, customers with us. And you'll be surprised that today, I've just come back from America, and we are in strategic partnerships with all the top retailers in America. So they all believe in us, they believe in India and the story of India. So I think these are times where uncertainty looms, but sure, something will definitely come through it. At the same time, for corporates like us to hold on and operate efficiently, look at what we can do better, innovate better, and really take care of your people this time is a very important aspect, and take care of our customers, I think, is going to be the key, Shireen.
For HPCL, in the context of energy security that we're talking about, it is an uncertain time. We've just seen sanctions being imposed on Russian entities like Rosneft. We're also seeing the US make it very clear that they want India to import more from the US, and that, of course, is now the stated intent as well. Run me through what is happening on the ground at this point in time. We understand that November 21st is the deadline after which ships are going to be sent back if they have any crude from sanctioned Russian entities. What does it feel like in the boardroom to navigate this uncertain environment?
Thanks, Shireen. I was anticipating that as the first question. Interestingly, journalists know more about Russian crude than oil refiners know these days. But I'll start off by saying, yes, it's a very uncertain world. It's uncertain on many ways, and you've focused on one aspect of which is sourcing of crude and the sanctions and related topics. In some ways, my world is different from Dipali's world. Her market is there, and that changes a lot for her. For me, the market is here. Yeah. We are primarily focused on supplying the Indian market. That changes the dynamics in some ways. Of course, the challenge for me is 85% of the oil we import in country is actually imported. It's imported from different sources, much less from US, a lot more from Middle East and Russia and all those places. What are we doing about it? 3 or 4 different aspects. First, of course, as a responsible citizen, we have to comply with all sanctions. So we will abide by international law, so we don't pick up sanctioned cargoes. Having said that, oil world is very diverse globally. There are multiple sources, and organizations like ours are expanding the sources where we have looked at. And this does not happen over like, oh, I buy a cargo and run it on my refineries. Thankfully, this has been done over the years. So in our refineries, we can process about 180 different crudes. So literally every crude which is available in the world, we can process it. We have the properties. We know what can be made out of that. We are using that knowledge to diversify our sources. That's one. Second, as you said, there is, I would say, stated, unstated desire to have more from US, though there is no formal trade policy on that. But we are also finding, given the economic reasons, some of the US cargoes are starting to become more economical to us here. Either the ships are bigger or the cost of their cost of production is cheaper. So naturally, some of that flows in when we take the economic decisions around it. The third thing which is very important for us is, and it's some way similar to what Dipali was mentioning, what do we do as an organization? Yes. How do we strengthen ourselves? How do we get our costs lower? How do we get our efficiencies? In the context of refining, it's very important to get the flexibility going. You know, I have the Mumbai refinery a few kilometers from here. It was designed for Mumbai high crude earlier, but now I need to run it on different crudes. As a result, I need to know what I need to change. How will I make it run more efficiently? So that's, irrespective of what happens on the outside world, getting the internal strength going is super critical, and we are very focused on that.
Well, yeah, and I understand that it is a much more complex issue than being captured in a few headlines on the news. But you talked about energy security in the context of diversification. You said that you can process crude from 180 different sources need be. But at this point in time, what are you anticipating in the market as far as the supply and price dynamics are concerned?
Yeah. I think if you look at the crude prices, which, as you can imagine, we probably look at it a dozen times a day, they have been very range bound. Even today morning, it was 63. The Brent was 63. Yeah. It did go up to 70 a few weeks ago.
Are you looking more closely at the Henry Hub now, sir?
Yes and no. Both go in tandem. Henry Hub's more suitable for the gas markets. And it's in public domain. I can speak about it. HPCL has signed gas-based deals on a Henry Hub. It's more applicable for getting LNG into India. But there is adequate amount of crude in the market, and it's only the question of matching the right supply with what you can run a lot more economically. But having said that, we literally track all those movements every day. We track what's happening. We have a trading desk. We are enhancing our capabilities on that so that we learn to pick up those crudes a lot more efficiently. So a lot of operational efficiencies going, trying to bring in both the science and art into this and trying to tide over those things. Having said that, I think not only for me as an oil marketing company, but a lot of the peer companies have given very strong performance. If you see the quarterly results, they have been blockbusters. Most of the shares are 52-week high. So I think many of the investors here believe that we know what we are doing. So that's why they have given faith in us.
Let me get Dr. Sinha into the conversation as well. Sir, renewable energy globally at this point in time, particularly as far as the US markets are concerned, facing some uncertainty and headwinds, but not so much here in India. We're on track to being able to achieve the targets that we've set out. What, as you look at the environment today, are the risk factors as well as the opportunities that you're positioning yourself for at Tata Power?
Thank you, Shreen. Always a pleasure to be part of the discussion. Thank you, Mr. Shetty. I think India has a very different roadmap compared to many other parts of the world. For us in India, we fortunately have a lot of places where there is good wind speed, and that's why there's a lot of wind capacity that comes up. Most of our places in the country have more than 300 days of sunshine, and that's why you have a whole lot of solar plants which is coming up. Now, India's transition, energy transition, is something which started just 10 years back. And it's a great opportunity for India to make a roadmap which is very different than what has happened in the world, because most of the other places, they already had stagnated. They had already set up a huge capacity, and there was no room for them to move to a new way of producing energy. And I think in India, we have been very fortunate that the type of capacity additions that we have seen, in fact, last decade, we used to have something like 5 to 6 gigawatt of capacity additions. Last few years, it went to 10, 12. Now we are seeing something like 30 gigawatt last year, and this will continue to increase. So I think it's a great opportunity for India. It is not only good for environment, but it is good for business, because the cost of producing is very low. The challenge is that this is intermittent. This is only few hours. You have few sun hours and you have few wind hours. So what do you do during the phase that you don't have? And that's where some of the other storage technologies are coming in. We have battery storage, we have pump storage, and some of the other new technologies on smart grids which are there. So I think for India to transition to the clean energy is much easier compared to many other parts of the world where they are struggling with it, because what do they do with their existing assets over there? And I think the way we look at it in the country and the way we look at it in Tata Power, that this is the beginning, this is the tip of the iceberg, this is the beginning of a whole renaissance in the way the power sector is going through for the next 10, 20 years. And we feel blessed, and we feel that this is an opportunity.
Will the renaissance be powered by the need for a bailout for discoms, which is being rumored and talked about today? Will that power and trigger the renaissance that you speak of, sir?
So that is always been there. So the discoms have been like that for last 30 years. It's not something that has happened in last 5 years or 10 years. But now at least there is a sense that this needs to change. Of course, there have been 2 bailouts which have happened, or 3 bailouts which have happened earlier. But hopefully this time there would be preconditions, and the preconditions are that they would go for public-private partnership or privatization exercise. So hopefully this should be the last bailout, and thereafter they should be on self-sustaining basis. So
what's the sense that you get on how close we are to that decision being taken?
I think we are very close to that. Mr. Shetty would be knowing that the total outstanding of all the discoms is something like 7 lakh crores, and it keeps on adding by 60-70,000 crores every year. So this cannot continue for very long, and people cannot put it under the carpet. So this change has to happen. I don't think there is any other options with the state governments as well as the state discoms, and this is a good opportunity for us. I always keep on saying that distribution is an area that is about consumers, reaching out to consumer, giving better service, and Honorable Finance Minister was talking about customer service. Distribution companies do not give customer service. That's the last thing in their mind. And if we can transform this, and we have done it in many places, Mumbai, Delhi, and Odisha, and some of the states, if we can do that, it will be absolutely a game changer.
Well, I'll talk about your ambition to power up other states like UP, etc. in just a second, but let me get Mr. Dinesh into the conversation as well. The Finance Minister was talking about supply chain resilience, also talking about the opportunities. The logistics sector in India has seen a significant change, a massive explosion over the last few years as well. As you look at the pathway for growth from here on, Mr. Dinesh, are you more optimistic about where we are, or do you have some specific concerns that you believe need to be addressed today? What is going on in the boardroom?
Thank you, Shireen, and thank you again, Shetty, for bringing me here. I think if I look at the logistics sector, today it is occupying, I would call it the topmost priority, and exactly for the reasons you mentioned, which is supply chain resilience. While we may be discussing about specific issues happening between one or two countries today, I think the horse has left the stable in terms of making sure that globally every supply chain is integrated. So whether we like it or not, I think we are going to see Indian logistics sector continuing to grow at a much faster pace. But I think the real transition which I'm seeing happening as we speak is the efficiency which is coming into the sector. And that's where I think there are two aspects to it. One is the visibility which is being created across the supply chain, because the cost in the sector is not the transportation or the warehousing, but is a lack of visibility of what is being held in stock, when can it be supplied, and where is the gaps in terms of the supply chain. The second is in terms of converting it into what I would call digital solutions. And I think Indian companies are definitely standouts in terms of that. And I believe going forward, you will see a significant pace of growth for this sector and therefore for the logistics companies as well, based on that.
You know, so if I could just ask you to take forward what we heard there from the finance minister. She listed out 5 pillars that the government is focused on: energy reliance, technology reliance. What would those pillars be for your company at this point in time as a leader that you intend to prioritize to drive growth as well as chart out the uncertain times?
So I think technology reliance is absolutely important, I would call it. That's going to be a big differentiator for any Indian supply chain company to showcase. And second is, how do we leverage the infrastructure build-out which has happened? And if I can say that there are two elements to it. One is from the government side, where the visibility, they've just opened the Gati Shakti data availability for companies to actually start tracking. And the second is, how do we actually make our customers get the maximum visibility and they get the maximum value? The last bit is I would call it working with the small-scale sector, because India is still a very fragmented logistics sector, and if the large companies don't find ways to partner with them and make them more efficient, you will still see logistics costs being high. So these are the 3 pillars on which all of us are working.
Partner or consolidate?
Partner.
Partner.
I don't think consolidation is a solution which is going to work in that sector, because the return on capital employed metric which you apply will never apply across the transport sector, for example.
Okay, so partner, not consolidate. Upasana, let me come to you now. What would you consider as the biggest opportunities, and what are the uncertainties that you're preparing for as you look at the mix today?
Thanks for asking that, Shireen, and you're completely, blazing today. Thank you very much to the SBI team and Mr. Shetty for having me here. I think that attending this session is some sort of a university for me. I have a lot to learn from the august members here on the panel. But in terms of uncertainty you spoke about, and how we are preparing to cope with it, I would say that, ma'am spoke about technology, and just for everybody's knowledge, I run a fintech company called MobiQuick. So I think we've been grappling with uncertainty from day one. I think uncertainty is not a one-time incident or episode for us, and I would say it's a quarterly or biannual event, because unlike other markets, India fintech is very regulated, and of course the government, the Reserve Bank has been very industry friendly in rolling out regulations. But unlike other markets, we don't wait for something to be a well-established product before the regulation comes in. Regulation is also sort of from Series A, it's now coming to seed stage and getting started right there. And so what that means is that you plan for something, but before you know it, you have to innovate with far more, guardrails that you need to take care of. So agility, risk discipline, compliance to regulation, and customer friendly, it's a balancing act. And given that, starting from payments, we are now trying to do inclusion in terms of distribution of financial products. So that means more licenses, some from SEBI, some from IDA, and others from RBI. So I think that living with uncertainty is sort of part of the muscle now. Last 15-16 years that I've been building this, I think that not just for founders or CXOs at fintechs, even the leadership team has to learn very quickly how to grapple with change and with the changing scenario, how to come out on top. I can give you a very simple example. We started out as a wallet company when we just had 1 or 2 competitors. They all got started. We were all growing fantastically because digital payments was just getting started. And then, of course, we got the open rails of UPI, and it's an amazing DPI, an opportunity for everyone to scale up. But of course, it was also looked upon by various global players as an opportunity to get into the Indian market without having to be regulated in the form of getting any license, because running a UPI app does not require a license. You build the app, you test it with NPCI, and there you go. And nothing wrong with that. So in the recent few years, that's been the struggle. About a year ago, we got listed. So we are a very small, young listed fintech. There's talk about stakeholders trying to do the right thing on the bottom line, but there's also pressure on growth. So I want to tell you that the problem that we were working on last 6-7 months, and I can say that now because we recently, gave our latest results. In the last 6 months, we are the top 3 fastest growing UPI app. And this is despite the fact that we don't have a backer like some of the American trillion-dollar companies. So we don't have insane marketing budgets. We have huge pressure to turn EBITDA profitable ASAP basis. So yeah, I think that's sort of the uncertain times that we live and operate and build for.
And congratulations on listing. It has been a year, and of course, we've just seen you announce your numbers. But Upasana, would you then say, we had the finance minister here respond to a question as far as F&O is concerned, and I think the market will heave a sigh of relief because the message from the finance minister seemed to suggest that the government is not looking at any kind of a ban as far as F&O is concerned. It's up to the market, as she said, to take the calls that they wish to take. But that was a regulatory risk for brokerages. Many of your peers, for instance. Is that the #1 risk factor for you, or does it continue to be the #1 risk factor for you today?
Yeah, I think regulatory risk continues to be the #1 risk for any fintech company, because so we recently got the broking license. We haven't launched it, so we have the opportunity to build in a different way and hopefully a far more customer-centric and first-time investor user-centric way. But that is the #1 risk. I can tell you that we spoke about how we started out as a wallet. At one point in time, the KYC requirement for a wallet used to be different. Sometime in 2017 or 18, the same regulations that apply to banks and NBFCs for KYC got implemented in terms of full KYC for us. Now that came out of nowhere. Nobody planned for it. There were no budgets of doing full KYC. So those kind of things happen. But it's a systemic thing. It will hit everybody in the industry at the same time.
Yeah. That's a issue as well. But let me get a quick pulse check here, because from everything that I've heard on this panel, despite all the uncertainties that we've been talking about, each one of you is optimistic and confident about the road ahead. Yes, if you can raise your hands if you feel more confident and optimistic about 2026 and going forward, as opposed to being pessimistic. Those of you who are optimistic, you can raise your hands, please. Everyone. So consensus, unanimous. So Anisha, what are we basing this optimism and this confidence on at this point in time as far as India Inc. is concerned? Because it's very different if you were to compare it to CEO sentiment outside of India.
Shireen, I would say economic opportunity, the resilience that Indian companies have shown, and the ability for Indian companies to be able to start competing in the world. So if you look at economic activity first, I would go and take a bet that India will grow at 8 to 10% a year for the next 20 years. And that is based on demographics, on the infrastructure that we have, both physical and digital, and the reforms, but more importantly, the commitment to more reforms that the government has shown. And we are seeing that in results. So if you look at resilience, yes, we've had a tough quarter, but you've seen our results recently, and as we look across our businesses, our farm business has grown profits 54% year over year. Mahindra Finance 45%, Tech Mahindra 35%, our Growth Gems 22%, and our auto business 14%. We've had some transition risk, which we'll catch up on, but that is what we are seeing in terms of growth. And today, Indian companies are ready to compete with the best in the world, with R&D in India, with quality, and the ability to have strong management teams that can take on risks, as many of the panelists have said. The world has changed, but our management teams are ready to take on that changed world.
You know, since you speak about taking on the world, Anish, and I know that exports have been part of the priorities that you want to focus on, does that continue to be the commitment for you, given the uncertainty, or are you pulling back at this point in time from the export prioritization that was something that you were very keen on?
Our auto exports are up 40%, and we continue to do a lot more. We are still small, and we need to do more in markets around the world. We are setting targets for ourselves to get 10, 15, 20% market share in certain markets around the world because of the products we have. And that's again a reflection of the kind of products that Indian companies can build.
So when you talk about becoming world class and world competitive as far as the global pecking order is concerned, what would you prioritize? Would it continue to be tractor and the auto segment that will be the focus area for you, that will be the export engine growth area for you?
We have multiple businesses, so auto and farm have been the larger businesses, but our growth gems now are rapidly increasing. We're looking at our aerostructures business growing about 20 times from where it is. And that will become a strong global business. We're looking at a few other businesses, holidays in particular, where we've got 100 resorts in India. We have 35 resorts in Europe right now. And we will look at going more global from a holidays perspective as well. So whether it's services, Tech Mahindra, of course, is global today. Whether it's services or whether it's auto and farm, I think we will do a lot across the world.
So is there a number that you want to leave us with over the next 5 years in terms of CapEx as well as R&D spends? Because you talked about the need for greater innovation, greater Indian-driven innovation.
So the number that we have talked about for our businesses right now is in the range of 30 to 40,000 crores. And we feel that we will do a lot more than that.
You'll do a lot more than that?
That was for a 3-year period, so that's not quite till 2030, but we'll do a lot more.
Anish, we're also here talking about the leadership framework in the times that we live in. And so from an innovation perspective, from a disruption perspective, has the organizational matrix changed? Is it likely to be rewired given what you intend to prioritize, but also given the global headwinds that you foresee?
It has changed tremendously. Organizations have to be a lot more agile in the world today. Leaders cannot rely on their teams alone to look at technology. Each leader has to be a tech leader in themselves. And they've got to work together in much more of a collaborative manner. So these are some of the changes that we've seen across the organization.
And what do you believe could be some of the other changes that you will need to make to ensure that the organization is future ready?
Constant learning, because you talked about jobs and AI. This is not a new phenomena. Many of us grew up in an age where there was no computer. And that was a big change at that point in time. Then the web came, and then we've had multiple other advances in technology. Jobs have changed. There are many jobs that were being done before that are automated today. And the same thing will happen with AI. The difference is the acceleration. And for that, organizations have to be able to create a learning mechanism to be able to take certain people whose jobs may have been replaced by agents, to be able to give them other jobs, to be able to coach them, teach them. And the openness to learning is an important aspect. So that is a big step forward that both organizations and its people have to take.
So are you going to be changing the way that you hire at Mahindra? How you hire, how much you hire? Do you foresee that changing?
How much we hire, we expect it to go up as we grow. How we hire, yes, because we are looking for folks who are keen to learn, who are a lot more agile in how they operate. But it's not as much in folks who we hire, it's folks who we have today. And how do we give that security to folks that we are there with you and we will grow together?
In an agentic world, Mr. Sethi, the finance minister was talking about people on the ground at branches needing to learn the language so that they can communicate better with the people that they service. In an agentic world, does it make it easier for you to be able to do that?
Definitely. We are already working. We have launched a program called Spark. It's a platform where it's not only the knowledge platform, I think the skill-based platform. You can even build that language-related issues also. It's a fairly large organization. We recruit from different parts of the country. And somebody from UP, Bihar work in Karnataka and Tamil Nadu. You can't expect them to immediately learn. I think some tools, if AI tools are available, definitely is going to be helpful for them. But one thing from the conversation, any adoption of technology, particularly impacting the employees, requires a great amount of change management. It's not only that we roll out a technology, we prepare them for that, both physically in terms of the skills and mentally in terms of adopting to the changed environment. That's also a critical piece which we are working in SBI, that while we popularize digital tools, we are also preparing the people that how do we use these tools, how it will improve your efficiency and also customer centricity.
We've been talking about opportunities. Let me end by asking each one of you on the key risks that you foresee for your businesses today and how you intend to mitigate those risks. Anish, I'll start with you. The finance minister talked about currency, for instance, and the currency fluctuation as a possible risk. Inflation at this point in time, of course, in India, relatively benign, and globally also we've seen rates coming off. What would you say are some of the key risks that you're sort of preparing yourself for?
The key risk that we are seeing is, from a geopolitical standpoint, access to certain materials being switched off and finding solutions for them. The bigger risk we actually see is that risk we don't know today, as we've seen that things keep coming up from left field on a regular basis.
But on the mineral side, you're talking about rare earth magnets, you're now talking about export controls and so on and so forth. As we talk about self-reliant India, to be self-reliant in minerals, etc., will perhaps take much longer. So what could the way in the interim be?
There are multiple solutions in the interim, but self-reliance is not going to be that far away. For rare earths, for example, in 3 to 5 years, we should have the ability to have our own permanent magnets being made from rare earths. And it's not just rare earths. There are many other aspects of the supply chain that we've got to be self-reliant on. But the other aspect I would add as well is we've got to think about what is our strength as a country. And what are our rare earths that we can hold the world hostage to at some point in time.
What are those? What are our rare earths that we can hold the world hostage to?
We have to develop some of them. I think we have some capabilities, and they may not necessarily be in minerals alone, but it's about how we create products, how we create services, and make them indispensable to the world. That's what we need to start thinking about. To me, that is what self-reliance is.
Being indispensable to the world. Mr. Kaushal, what are the key risks outside of Russia that you're worried about today?
So I would say I'm already living a key risk on geopolitics, which Anish mentioned. But outside of that, I think there are 2 or 3 key risks to our business. If I just look on the business side, exchange rate is a big risk for us because we import 85% of crude in India. Pricing is a key risk for us because India is a very price-sensitive market, and all our products which end up sort of being at the cusp of tolerance levels for people is very low for any price increases, or even political spectrum, the tolerance is low. So pricing risks are there. So I think those are on the business side. But there is also a bigger risk I see or a different category of risk I see. See, HPCL is a legacy organization. We are 50 years state-owned there. There is a need for all of us to change with the times. I'm sure Mr. Shetty feels the same need. And as the CEO, you always think about, is my organization changing enough and fast enough to catch those? Am I getting the right talent? You mentioned earlier about hiring the right talent, changing or grooming them differently. We get a lot of good talent at entry levels, some of the best IITs and some of the best IIMs and NITs, etc. But am I grooming them to be the right leaders for the future? And most importantly, am I grooming my leaders to adapt to this environment? Because if the leaders are not adapted, then that stifles us. So the human side of it, especially in an organization like ours, which is a very legacy organization, state-owned, I think that becomes an important risk, which I'm sure it can be overcome, but I think it keeps you awake on some nights.
Yes, I'm sure it does, and I think that would be something that each one of you as leaders is dealing with as a challenge. Dipali, outside of the US tariffs, what would the other risks be?
So, post-COVID, the world hasn't been the same. I mean, let's accept it. When the business was steady state, today, post-COVID, you've had everything, the Red Sea disruption to all the other disruptions. And so the predictability of businesses are not the same. So I think for us as businesses, I think the resilience and being on top of the cost is a very key thing, and being competitive as a country, because the opportunity for India is really, it's opening up all doors. India is again a huge opportunity, so I think being competitive is very important. But I think the biggest underlying is talent. And when you're deploying people, I think the biggest thing is about people, and how are you going to repurpose and repivot your teams and look at the people ahead. Because today, when we are sitting here, most of us are baby boomers. When you're talking with the millennials and the Gen Z, you're talking about the youngest population in the country. And you're talking about lot of different priorities and purposes that the new generation has. So I think for me, as we develop our India market, while we are developing our global markets, the important thing is going to be talent. India being as a competitive, being a competitive as a company, and of course, and how do you manage the unpredictability of businesses as well?
Yes, I think that continues to be the #1 risk for most businesses. Dr. Sinha, the key risks that you're preparing yourself for?
In the sector I work, I think the biggest risk is the supply chain. We talk of batteries, lithium is there. We talk of polysilicon, it comes from one country. We talk of very many materials which are used in the production of whatever we use. It all comes from one country. While we will create the resilience by having our own supply chain, there is also another opportunity of disruption. And why only today the chemistry of lithium ion has to be there? Why can't we have it disruption of other chemistries. Why can't we have sodium? Why can't we have manganese and all that?
We were listening to a Nobel laureate in chemistry last
Yes.
night. Dr. Sinha, has that inspired you on what you could possibly change to change the chemistry of some of these things? I mean, how far are we from being able to actually come up with some solutions here in India to address these problems?
So I think there's a lot of work that is happening, and there's a lot of work right through in cutting edge areas that is taking place. So you will have superconductors, you will have nuclear fusion, you will have alternate to polysilicon, new organic material. So I think the world has also understood that the normal way or the earlier way of doing things is not the only way. That is one of the ways. But if we stretch ourselves, if we push ourselves, there are many alternate ways, and if we put money in the right places, I think we'll find.
So nuclear, is that one of the alternate ways that you're going to put your money in?
Yeah, absolutely.
Absolutely. Upasana, outside of the regulatory risk, because you already said that that's number one risk, what are some of the other key risks that you're getting ready for?
So I think one of the key risks, not just for us, but all the other players in the sector, as you know, you spoke about year of the IPO, many more fintechs are coming. And so I think as we get there, we realize that, you know, all these years we've been focused on growth mindset. And now it is growth and innovation also, but also protect, defensibility, risk management. And, you know, all the talented engineers that we have in our country, you know, let's face it, they're not all applying it towards rightful purposes. So for all the amazing techies trying to build the next gen, there is an equal number of people trying to apply it towards fraud and cyber. And, you know, so these are becoming very important risks, especially for all fintechs. And I would say all the banks and financial institutions also, given the onus on digital processes. So I think this is one area where I think that you know, I'll be the first one to admit that maybe we have not been investing enough, especially as fintech startups. And now that realization is coming to most of us that we need to do more, because you keep investing in growth, and at some point you will find that, oh, I have to also protect. I can't have leaky buckets, etc. So I think that is one area where, as a country, you know, we have so many jamtaras in India, I can't tell you. We need to do a lot more to save, you know, the Indian consumers' money from those people.
Yes, absolutely. I would imagine that you agree with what Upasana just said, sir.
Absolutely,
both in terms of, I mean, digital arrest has now become the buzzword. So how is SBI planning and preparing for this digital future and to ensure the safety of your consumers?
No, I echo what Upasana said. It's not only for the fintechs, even the mainstream banks are hugely exposed to this cyber risk. And cyber risk, as the digital adoption is exploding, we have two kinds of risks. One is how do you protect your digital assets, your own assets. And in an interconnected world where my customers are integrated with me, corporate customers and many other people are interconnected. So how do you protect your digital assets from cyber risk is an important element, and simultaneously protecting your own individual customers. The customer protection becomes a very critical factor. So today we run one of the largest compliance and risk teams in the country, and right up to the branch level. We also have the largest teams involved in the proactive risk management. I take pride in saying that for every digital fraud we talk about, so much is prevented through the PRM. In the last 6 to 8 months alone, we protected customers to the extent of 13,500 crores. This is the proactive risk management activity we do. So, but it's a as Upasana again mentioned, as we improve ourselves, the other actors are also much faster adopting, and we need to really work on. And this is one area where we are adopting AI in a big way in the fraud risk management. So just to simply answer your question, I think cybersecurity is one of the major risks the financial services pay.
And the biggest opportunity is to get Anisha onto
to borrow from
to
me.
borrowing from SBI. Ladies and gentlemen, with that, we are going to have to close this conversation. As you can see, there is an air of confidence here within the leaders that we've spoken to. Each one of them very cognizant of the fact that they have to focus on meaningful growth. They have to focus on meaningful profitability, which also takes people and purpose forward. But at the same time, they're mindful of the risks and they are prepared and ready to navigate the uncharted waters. Many, many thanks to each of our panelists for joining us here this evening. Thank you very much for your time and we wish you the very best of luck. Thank you very much, ladies and gentlemen, for joining us here this evening.
Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. Finance Minister Nirmala Sitharaman confirms exclusively to CNBC-TV18 that work is already underway on public sector bank consolidation and discussions are ongoing. Adds that India needs a lot of big world-class banks to meet the growing needs of a fast-expanding economy. The Finance Minister clarifies that the government is not here to shut the door on F&O, but to remove the roadblocks. Adds that it is the investors' responsibility to understand risks involved with F&O sector. SBI Chairman C.S. Shetty bats for higher FII limit in government-owned banks. Says 20% investment cap in PSU banks put them at a disadvantage. Adds that differentiation between private and PSU banks on the FII component is not really helping them in terms of recognizing their true value. That's an exclusive. Mahindra & Mahindra sells its 3.5% stake in RBL Bank for 678 crore rupees. Its exit comes weeks before Middle East banking giant Emirates NBD's open offer to acquire a majority stake in RBL Bank. Mahindra Group CEO Anisha calls a stake sale a one-off treasury action. HPCL says they will abide by international law as US piles up pressure on India to stop purchases from sanctioned Russian entities. Calls the oil world diverse, says there is adequate amount of crude in the market and it's only a question of matching the right supply. The United States Supreme Court expresses skepticism on the legality of Trump's tariffs, observes that the imposition of taxes on Americans has always been a core power of the US Congress, observes that no other president except Donald Trump has made use of these emergency powers to impose tariffs since it became a law in 1977. Birla Opus CEO Rakshit Hargave resigns 18 months after Grasim Industries launched its paints division. Will join Britannia as its new CEO from December 15th. Hargave's exit sparks a relief rally among other paint stocks. Grasim Industries slumps 6% today.
मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा for our education. Still I couldn't make into these coachings.
Physics Wala's 3,480 crore rupee IPO opens for subscription on November 11, sets a price span in the range of 103 to 109 rupees a share. Co-founder Alak Pandey tells CNBC-TV18 they plan to expand to 500 offline centers in 3 years, says their pricing reflects a vision for free and affordable education. 121 constituencies in Bihar go to polls in the first phase amid tight security. Over 1,300 candidates in the fray. Voter turnout stands at over 60%. Chief Minister Nitish Kumar, RJD Supremo Lalu Prasad and opposition's CM candidate Tejasvi Yadav cast their vote in Patna. The US government shutdown enters the 37th day, is the longest in the country's history. The government orders a 10% reduction in flights at 40 major airports. Analysts say the shutdown may cost the economy $15 billion a week. Typhoon Kalmaigi makes landfall in Vietnam after leaving a trail of destruction in Philippines. Over 100 confirmed dead and nearly 130 people missing. This is the nation's deadliest natural disaster of the year. Straight to the day's market action. Dalal Street remained weak amid a broad-based decline. Broader markets underperformed the blue chips. The Nifty, however, managed to hold on to the 25,500 levels while it was a down day for the market. Here's some news that could provide a solace to the markets. Finance Minister Nirmala Sitharaman has clarified that the government is not here to shut the door on F&O. She was speaking at the SBI banking conclave in Mumbai today. She said that the government's job is to remove the F&O roadblocks and that it is the investors' responsibility to understand the risks.
उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है. जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी. सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं. मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूं, क्योंकि पैसा उनका है.
Finance Minister Nirmala Sitharaman also confirmed to CNBC-TV18 that work has commenced on PSU bank consolidation and talks are on with the RBI.
I know that you've previously said that India needs not just world-class banks, it also needs world-sized banks. So, ma'am, is the government actively looking at further consolidation in the Indian banking sector? And is the government also actively looking at enhancing the FDI limit as far as public sector banks are concerned to 49%? Thank you very much.
No, I repeat that line. India needs a lot of big banks, world-class banks. And for that, of course, we will have to sit and talk with the Reserve Bank and also with the banks themselves to see how they want to take it forward. And also discuss with the RBI about how they have an idea of taking or idea of building larger banks. So there's a lot of work to do prior to my saying, yes, I've taken a call or government is looking at this way or that way. And in that, work has already commenced. We are discussing with RBI, we are discussing with banks. It's not by creating from among those which exist today just by amalgamation. That can also be one of the route. But you need an ecosystem and also an environment in which more banks can operate and operate to grow. So that environment is actually well established in India, but I need it to be a bit more dynamic. So some work is happening on it.
Moving on, SBI Chairman C.S. Shetty batted for higher FII limit in government-owned banks. Speaking to CNBC-TV18 as part of a panel at the SBI conclave, Shetty said that 20% investment cap in PSU banks has put them at a disadvantage. He added that the differentiation between private and PSU banks on the FII component is not really helping the public sector banks in terms of recognizing their value.
I personally believe this differentiation between public sector and private sector banks, particularly in terms of what should be the FII component, I think is not really helping in terms of recognizing the true value of the public sector bank. Most of the FIIs look for the free, space available for them. And just compare a 10% free space available versus 74% which is looked at. So I believe that without compromising anything in terms of ability to have enough commitment from public sector banks, from the government, we are not looking at the dilution, right?
Yeah.
It is only free float. It's already available in the market.
HPCS Vikas Kaushal said that the company will abide by international law as US piles up pressure on India to stop purchases from sanctioned Russian entities. In a first public reaction to the sanctions, he said that the company is diversifying its sources of crude oil. He added that oil from the US is becoming more economical.
Responsible citizen, we have to comply with all sanctions. So we will abide by international law so we don't pick up sanctioned cargoes. Having said that, oil world is very diverse globally. There are multiple sources and organizations like ours are expanding the sources where we have looked at. And this does not happen over like, oh, I buy a cargo and run it on my refineries. Thankfully, this has been done over the years. So in our refineries, we can process about 180 different crudes. So literally every crude which is available in the world, we can process it. We have the properties, we know what can be made out of that. We are using that knowledge to diversify our sources. HPCL has signed gas-based deals on a Henry Hub. It's more applicable for getting LNG into India. But there is adequate amount of crude in the market, and it's only the question of matching the right supply with what you can run a lot more economically.
Speaking at the same panel, Dipali Goenka, MD and CEO at Wellspun Living, has hinted that US tariffs will not hurt the company's growth. She said that it was their time under the sun.
These indeed are very tough times, indeed. I mean, if you look at even the numbers, you can look at the export numbers to United States of America from May, fell by 37%, 8 billion in May to 5 billion now. So indeed, and you know the thing that I have seen, and I can talk about India and I can talk about Wellspun. We have our time in the sun now. The time when the world couldn't believe that we could make the best towels or the best textiles or the jewelry or anything else to wear. There is that belief and faith in the products that we make. These are challenging times indeed. But I think the important things that we believe are diversify smartly, operate efficiently, lead responsibly.
Tata Power's MD and CEO Praveer Sinha believes the centre is close to making a decision on a bailout package for state electricity distribution companies. Remember, CNBC-TV18 had reported that the government is considering multiple reform measures, including privatisation, partial stake sale and possible market listing of discoms. Sinha added that he hopes this will be the last bailout for power discoms.
So the discoms have been like that for last 30 years. It's not something that has happened in last 5 years or 10 years. But now at least there is a sense that this needs to change. Of course, there have been 2 bailouts which have happened, or 3 bailouts which have happened earlier. But hopefully this time there would be preconditions, and the preconditions are that they would go for public-private partnership or privatization exercise. So hopefully this should be the last bailout, and thereafter they should be on self-sustaining basis. So
What's the sense that you get on how close we are to that decision being taken?
I think we are very close to that. Mr. Shetty would be knowing that the total outstanding of all the discoms is something like 7 lakh crores, and it keeps on adding by 70,000 crores every year. So this cannot continue for very long, and people cannot put it under the carpet.
MobiKwik co-founder and CFO Upasana Taku has said that India's fintech space is very regulated, unlike other markets. Speaking to Shireen Bhan at the SBI conclave, Taku added that the regulatory risks continue to be #1 for any fintech company.
In the last 6 months, we are the top 3 fastest growing UPI app. And this is despite the fact that we don't have a backer like some of the American trillion-dollar companies. So we don't have insane marketing budgets. We have huge pressure to turn EBITDA profitable ASAP basis. So yeah, I think that's sort of the uncertain times that we live and operate and build for. Yeah, I think regulatory risk continues to be the #1 risk for any fintech company.
State Bank of India's strong second quarter performance propelled the public sector bank past the $100 billion market cap milestone as the stock hit record highs. SBI is the 6th Indian company to enter the coveted $100 billion market cap club. Robust credit growth and festive spending also pushed the value of SBI's total business past the 100 trillion rupee mark. Speaking to CNBC-TV18's Shireen Bhan, SBI Chairman C.S. Shetty said that the bank aims to be one of the top 10 in the world in the next 5 years.
Top 10 by when? Top 10 in the world by when, Mr. Shetty? What's the timeline you're working with?
So there's no specific timeline, I think, but ideally we should be there even before 2030.
Even before 2030, so that's literally 5 years away. So that's an ambitious and an audacious task that you put forward for.
Since you mentioned audacious, I'll tell you how SBI thinks. In 2018 is the year where SBI posted loss for the first time in the history. And we had a conference in Calcutta. The conference theme was, how do you reach 100 billion market capitalization? Rupees.
In the year that you posted a loss.
Loss. Yes. This is the audacity, I think, which we pursue.
The US Supreme Court has expressed skepticism about President Donald Trump's tariffs in an ongoing case examining the legality of the sanctions. Both conservative and liberal justices questioned the solicitor representing the Trump administration about the scope of the president's authority to impose sanctions. If the tariffs are invalidated, the US government could owe tens of billions of dollars of refunds to businesses that have paid them. Here's a report.
U.S. Supreme Court justices raised doubts Wednesday over the legality of President Donald Trump's sweeping tariffs. Conservative and liberal justices alike sharply questioned U.S. Solicitor General B. John Sauer, who defended the legal rationale employed to impose the tariffs. Trump invoked the International Emergency Economic Powers Act, or IEEPA, a law that lets a president regulate commerce in a national emergency. Conservative Justice Amy Coney Barrett questioned Sauer's claim that IEEPA's language granting presidents emergency power to regulate importation encompasses tariffs.
Can you point to any other place in the code or any other time in history where that phrase, together regulate importation, has been used to confer tariff-imposing authority?
Liberal Justice Ketanji Brown Jackson said IEEPA was intended to limit presidential authority, not expand it.
It's pretty clear that Congress was trying to constrain the emergency powers of the president in IEEPA. So it seems a little inconsistent to say that we have to interpret a statute that was designed to constrain presidential authority, consistent with an understanding that Congress wanted the president to have essentially unlimited authority.
U.S. Treasury Secretary Scott Bessent said he thinks the administration is winning the argument.
I think it went very well. I think the Solicitor General made a very powerful case for the need for the president to have the IEEPA powers, and I believe that the other side, in a way, fell flat on their face, but that'll be up to SCOTUS.
The Supreme Court typically takes months to issue rulings after hearing arguments, but the Trump administration has asked it to act swiftly in this case.
Mahindra & Mahindra has sold its entire stake in RBL Bank via a block deal. In an exchange filing, the company said that it offloaded stake worth 678 crore rupees, representing around 62.5% gain on its investments. Speaking to Shireen Bhan at the SBI conclave, Mahindra Group MD and CEO Anish Shah said that the RBL Bank stake sale was a one-off treasury action.
Speaking about meeting financial targets, and I want to digress for just a second before we get back to talking about the uncertain world that we live in. Your stake sale in RBL Bank, Anish, that's created quite the headlines. I mean, a neat 62% profit that you made over what you invested in RBL Bank, and it kind of puts to rest any possibility of what you intended to do with that stake. But is this kind of treasury business, investing that you're looking at actively now from here on the back of the gains that you made?
So Shireen, we were joking that if we had a rupee for every time there was a discussion on RBL Bank, we would have had more gains than we actually made in RBL Bank. So no, this was a one-off treasury action where we actually saw significant value, but we're actually creating a lot more value in our businesses, as you've seen.
So you're not going to be investing like you did in RBL Bank in other companies at this point in time?
We are not.
That was a one-off.
And from one block deal to another, sources have told CNBC-TV18 that Singtel might sell less than 1% stake in Bharti Airtel via a block deal. The size of the deal is likely to be around 10,300 crore rupees. The floor price of the deal has been set at 2,030 rupees per share, and this is a discount of slightly over 3% to the current market price. Britannia has appointed Rakshit Hargave as its new Chief Executive Officer. Hargave will take over from the 15th of December. Hargave resigned from his position as CEO of Birla Opus yesterday. He will succeed Rajneet Kohli, who quit Britannia in May. Meanwhile, Grasim has said that the day-to-day operations of Birla Opus will now be overseen by Aditya Birla Group veteran Himanshu Kapania. EdTech services company PhysicsWallah has set its price band for its upcoming 3,400 crore rupee initial public offering. The band has been set between 103 to 109 rupees per share. The public issue will open for subscription from the 11th of November. Speaking to CNBC-TV18, company CEO Alak Pandey recounted this journey as an entrepreneur, from starting a YouTube channel to prepping for a Dalal Street debut.
अब मैंने स्टार्ट किया था अपने होम टाउन प्रयागराज से. Why I did it, मैं जब क्लास 12 में था तो मेरे को भी बड़ा मन था कि मैं आईटी का एग्ज़ाम लिखूं और उसके लिए कोचिंग जाऊं. पर वहाँ की जो फीस होती थी 1.5 लाख रुपए 2 लाख रुपए, वो मैं अफोर्ड नहीं कर सकता था. मेरे पापा को पास जो घर था वो भी हमें सेल करना पड़ा फॉर आवर एजुकेशन. इसलिए आई कुडंट मेक इनटू दीज कोचिंग्स. तो मेरे अंदर हमेशा रह गया था कि मेरे साथ फेयर नहीं हुआ है, मेरी गलती नहीं है कि मेरे पास पैसा नहीं है, मुझे फेयर अपॉर्चुनिटी नहीं मिली है एग्जाम लिखने की, और वो हमेशा अंदर रह गया था सिंस क्लास 12th। जब यूट्यूब पे आया पढ़ाने तब मुझे मेरे जैसे बहुत से बच्चे इंडिया में दिखे जो टैलेंटेड हैं, बट उनको फेयर अपॉर्चुनिटी मिल नहीं रही है बिकॉज दे कैन नॉट अफोर्ड 2 लाख की कोचिंग, 1.5 लाख की कोचिंग। तो मुझे ऐसा लगा यार मुझे फ्री में पूरे इंडिया को पढ़ाना चाहिए।
You know, when you started, Byju's was the poster child of EdTech. It was already a well-established company. Its peak valuation, I think, was more than $20 billion. It raised top dollar from the top funds. I mean, what were your learnings from the way Byju conducted its business and then the eventual downfall?
What these players were targeting, I don't want to take any name. He is a fantastic teacher, first of all. But what these players were targeting is top 3% of India, जो इतनी फीस दे सकता है, 80,000 रुपए, 60,000 रुपए। और इस 80,000 रुपए के कोर्स को बेचने के लिए आपको 40,000 रुपए की मार्केटिंग कॉस्ट लगेगी हमेशा, क्योंकि इट्स अ हाई आरपू कोर्स। किसी के पास कोई सोशल मीडिया नहीं था, कोई फ्री नहीं पढ़ा रहा था। हम उनसे बहुत डिफरेंट है, हमारा कोर्स उनसे 1/20th कॉस्ट पे बैठा हुआ है। हमारे पास नीचे वाली 97% वाली जनता है, जो कि बहुत बड़ा टाइम है अगर इन्वेस्टर अपॉर्चुनिटी से आप देखो, और मेरी नजर से देखो तो बहुत बड़ी जिम्मेदारी है कि आपको एक बच्चे को वहां पढ़ाना है। सो वी आर वेरी डिफरेंट फ्रॉम दीज प्लेयर।
Physics Wala is the first company in the consumer internet reached $300 million of revenue in just 5 years. Like, you pick any consumer internet company, average time they took to reach $300 million of revenue is 5 years.
And coming up next on India Business Hour, the US government shutdown enters the 37th day, is the longest in the country's history. More details in a bit. And you can also catch all CNBC TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Do subscribe to CNBC TV18 Access for exclusive stories and special shows like the Editor's Playbook and many others.